The RICS surveyors, there's unexpectedly been a drop in house prices in August. It's a fall in house prices in August, the first time we've seen that since January 2024. So that's certainly going to be something we'll watch in terms of some of those house builders, Barrett Redrow, Bellway, Taylor Wimpey, etc. And we'll also watch autos on tariff news out of Mexico, Guy.
We take house prices fairly seriously in this country. Okay, here we go. Time for the session this Thursday. Quiet start, busy afternoon, I suspect, probably in prospect. Let's show you the opening trade. This is the picture at the moment. FTSE 100, flat as a pancake, waiting for some action to come through there. Yesterday, the IBEX was one of the standout stories with Inditex rising rapidly. Probably a more quiet session in prospect there, but keep an eye on Iberdrola and what's happening with that story. Stock 600 is now up a little bit, not by much. Again, this kind of narrative, there's a lot coming later on in the session. We digested a lot yesterday, but today we've got CPI coming through. You've got claims numbers you're going to be watching quite carefully a little bit later on as well. There's a few ex-dividends in the market as well. Just be aware of that when you look at what is happening with some of the London trades as well. So the CAC 40 is now up by 0.2%. The London market is up by 0.3%. The IBEX is rallying, but not like yesterday. The DAX is clearly having a quiet day. It's already open, and we are up by 0.1%. Valerie, what's happening in sectors?
It looks fairly positive in the first few minutes of trade when it comes to the sectors picture. We have 17 in the green, only 3 in the red at the moment. Technology, surprisingly, one of the ones in the red. This comes after Oracle's more than 30% surge in the trade yesterday, maybe not lifting stocks, tech stocks, at least in Europe, as much as maybe we thought that they could. At the top of the basket is energy. We also have food and beverage and consumer products. This is all ahead, of course, of the US CPI print coming out later today, which, of course, could jolt equity markets one way or the other, whether it's hot or cold.
Yeah, absolutely. So certainly the CPI print will be in focus here. Food and beverage prices perhaps in focus, as food, beverage and tobacco is the best performing sector this morning. Carlsberg and Tate & Lyle at the top of the pile there. I'm reading Tate & Lyle's ADR's got an outperform from BNP Exane, so we'll certainly watch that. So maybe it's another day where some upgrades and downgrades might cut through as we wait for CPI.
I think tobacco prices weirdly had quite a big impact on the PPI data yesterday. I'm trying to remember. I went through it in terms of the details, but tobacco prices are one of the areas that did stand out. SAP's rolling over again. It's really interesting to see how SAP's reacted to all of this data coming out, this news coming out of Oracle. It's softer. It's one of the biggest weights on the market to the downside. What is interesting is that we've got a big bifurcation within the pharma sector this morning. Novartis and Roche are the 2 biggest points gainers for this market. In fact, the Swiss market's having a relatively good day today. Novartis, Nestle, and Roche are the 3 biggest points gainers on the stock 600. Novo is where the weakness is this morning, and that is where the market is lagging a little bit. So that's interesting. But Inditex is up another 2% today.
I'm just looking at the bottom of the performance list, and basic resources, the worst performing sector. And I remember days when you used to get positive news out of China around somebody paying off somebody's debts, and that would lift mining names here in London. But that doesn't seem to be the case today. Basic resources, the worst performing sector, something like Anglo-American down by 0.9%. I suppose M&A is back in the 4 in that sector, and maybe that's the biggest story.
Iron ore's rolled over. So iron ore's been a really big theme of late. It's been quite strong. So iron ore numbers are coming softer this morning. We're down by 0.9%. So that's maybe feeding through into that narrative. Remember, iron ore year to date is a little softer. Copper is still up massively. So that's maybe one of the features of that landscape. But
maybe in China they don't buy property anymore, they buy luxury handbags.
Luxury goods. Yeah, we're seeing a decent performance with luxury this morning, carrying one of the biggest stocks on the move, up nearly 3%, 2.7% as I speak. So perhaps a little bit of a Is it or not China changing these kind of markets? Well, let's bring this question to Beata Amanthi, the head of European equity strategy at Citi. Beata, thank you for joining us this morning. Is the European outperformance, the equity outperformance versus the U.S., has that run its course?
Good morning. I don't think it has, but it's the nature of the market is changing, right? So it's not the non-brainer. Well, it was for us at the beginning of the year called to be overweight just the entire index versus the US. It's more about themes than it is about the regions. So we think in the current macro environment, we could see the continuation of the broadening of the markets. Because what is interesting, really, year to date, or actually since the trough in the correction, we've seen very little differentiation when it comes to the regions, but there has been a huge differentiation when it comes to the sector. So we think this is going to continue, and there are some themes running in Europe that still have legs and are not priced in.
Now, will Beata run us through what are those themes that you still think have legs? Is it a sector-specific story in your mind?
So first of all, we need to think what is going to happen to the macro environment. If indeed we are going to have the soft landing underpinned by the cuts from the Fed, we are going to see the dynamics that we've been seeing so far in Europe. So what is interesting, in the US, growth and large caps have been working. The same for the emerging markets. In Europe, it's been year to date, it's been small mid caps over large caps, and cyclicals and value. We think this is going to continue. We still argue that the fiscal story, especially the infrastructure spend, this is our top theme, has not been priced in, and it deserves more upgrades to the EPS from the analysts, and therefore more higher performance and even re-rating, because historically the relationship between valuations and growth tells you higher growth deserves higher valuations.
And Beata, where does that leave the financial sector? I'm thinking about banks in Europe in particular. I was reading a piece by John Authers this morning that was reminding me that this year we've seen the European banking sector trade above book value for the first time since 2010. No small achievement, given what was happening back in 2010, 2011. How keen on the banking sector are you, given what's in store for rates in the US and here in Europe?
So we continue to be overweight banks, and banks is an interesting sector because, of course, it's up over 40% this year. So you could think from price performance, it's run its course. But actually, it is the sector that is still trading at single-digit PE. And when I look at the earnings revision indices that we run, so the direction of the analyst forecasts, week after week, European banks are getting its EPS upgraded. So this is what is underpinning the rally. And also, well, we've discussed themes. There are many more things we could be thinking about when it comes for Europe. And second order beneficiary, and actually one of the biggest beneficiaries out there for all of these themes is bank sector.
And another sector that I know that stood out to me in your notes, Beata, I think you're underweight on the retail sector. Inditex had a good day yesterday. What are you thinking about when it comes to retail and where you want to position within that?
So actually, we've just overnight upgraded retailing to overweight. We are underweight luxury goods. So we have this pair trade between more affordable consumer versus more expensive consumer. So what is happening with retailing? It is quite encouraging to see actually the earnings profile improving. It's not at the top of the ranks, but it is enough already to get it borderline upgraded to the overweight. So that's what we've done today. Well, overnight.
Beata, what did you make of Oracle going up by 30% yesterday? I'm not on a specific story or a specific equity, but why should I invest in Europe when the AI trade is so strong in the United States and delivering 30% on a stock like Oracle? This isn't a small stock. This isn't a penny stock. This is Oracle.
Of course. I agree with you. This is why we argue you buy cyclicality outside of the US, but you are still buying AI and growth sectors in the US. However, since around July, we've also are more upbeat about the outlook for AI out of Asia, especially China. So we've upgraded China to overweight in our emerging market country allocation. And we argue that actually AI in Asia is cheaper, and the growth, the EPS growth, is even stronger. So everything is broadening. AI theme remains. Other themes are there, but AI theme is also broadened.
But is the AI trade kind of isolated? It's on its own. It's not related to the real economy. The rest of the stock market is related to the real economy. Are these two different buckets now that don't relate to each other? Because it feels like AI is immune to anything that is related to what is happening in the real economy. And there are plenty of different things happening in the real economy that would make you worry, but you don't worry because the AI trade is immune to all of that.
Of course. So I think we are at the juncture, coming back to the macro environment we discussed at the beginning. So we are between this soft landing underpinned by the Fed cuts, or between further weakness in the economy that could continue and get to the point that investors turn away from this broadening trade into cyclicals, while still buying tech, into moving into the theme of growth is defensive and just coming back to that. That's the risk. But if indeed global economy continues to be resilient, we are not seeing as much effects of tariffs yet. There are signs that they are getting absorbed by the consumer in the US. We are on a good track to continue to see this broadening theme. Now, of course, the valuations are a cap, right? Everything, especially in the US, is expensive. So we need to see the continuation of upgrades to the EPS story. They are still doing well. The upgrades continue, but they are not. We are not seeing these exponential upgrades we've been seeing a year or two ago.
Beata, when it comes to tariffs and the wider trade war, I note that you're underweight the auto sector in Europe. What would give you some hints that perhaps this weakness in European autos has run its course?
So what worries us is that European autos are still paying higher tariffs, right? So the third quarter probably, when we watch these very short-term earnings indicators, earnings revisions or earnings momentum, perhaps they stopped falling, but there are no signs of minimal improvements yet. This is what I really would like to see to get more upbeat about them.
Beata, thank you very much. Thanks for joining us. Beata Manthe, Head of European Equity Strategy at Citi. Let's have a look at the core six, shall we?
We shall. We'll do it right now. Here we go. These are the numbers that you see on your screen in front of you. There's an awful lot of red out there. Tech is down, defence is down, luxury is down, pharma is mixed, I would say. Novo Nordisk doesn't tell the full story for that sector. And the safer end of the market is over on the right-hand side of your screen. As you can see, Nestle may have had a bad run of late, but today it is up by 0.5%. Let's figure out what other names we need to be watching. Louise is here with all the details.
Starting off with Covestro, the German listed companies. There was a report that there might be some remedies to ADNOC's bid to buy Covestro, and this is the stock is soaring as a result, up almost 7% into the green on the back of that report this morning. Next up, we're looking at Playtech, the gaming software maker listed in the UK. They had some results this morning. First half results really boosting the stock, up almost 10%. So investors really happy about that. They're expanding their investment into Brazil in particular, and their numbers came in quite strong, so up almost, over 9% now. Moving on also to Fever-Tree, the posh tonics maker in the UK, also had their results this morning. First half results up over 7%. They say they're seeing good progress, particularly with their partnership in the US with Moores. So things are looking up for them. They're confident of hitting their goals for the year. Moving on to auto, as we've been speaking about this morning, starting with Tradeline first, also in the UK, the ticket seller. Shares really soaring into the green, up over 12% this morning. They're saying that their first half of numbers came in strong on the back of a lot of leisure travel, but it'll be interesting to see a bit of a lag when they report about the current strikes and the impact that has been having. And finally, finishing on the auto sector that we've been talking about this morning. So potential tariffs from Mexico. Not really weighing on stocks at the moment. I mean, little move. So Stellantis only slightly up into the green. So we'll have to see how that plays out for the rest of the day.
Yes, I think they wouldn't apply to cars coming from Europe, would they? But certainly the European, well, the whole auto space being reshaped by the tariff narrative. So we'll certainly keep an eye on that. Louise, thank you. Louise Moon from our breaking news team. Checking in on the housing market next. Coming up, we will have a look at those UK home builders after house prices fell unexpectedly in August. More on that next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bercecci in Vienna, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Joanna Bercecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. You're watching the opening trade. We are 17 minutes into the session. The DAX is the standout story. It's flat as a pancake right now. A little bit of weakness coming through from the German market. Some of the defense names are softer today, names like Rheinmetall. Elsewhere, there is some strength, not a great deal, but as you can see, we are seeing some strength coming through into the London market.
We are. Let's talk about the London market, shall we? In the shape of UK house builders. UK home builders are on the move this morning after a survey showed the most widespread fall in house prices last month since early 2024. Let's speak now to Bloomberg's Sam Umstead. Now, there's nothing like a conversation about house prices to get people animated in London. So we'll do that. Sam, what do you make of the data out from RICS this morning?
Well, I think there's 2 sides of this. So the house prices part of it, so house prices being seen to fall by the most since early January. A lot of the house price reports we've had out from Nationwide, Halifax, been quite mixed recently. Activity remains quite subdued. And in particular, it's turned into a kind of buyer's market. So that's what's putting that downward pressure on prices. I think the more interesting part of the RICS report today is rents. So rents in the UK already up by 30% over the course of the last 4 years, so a huge increase. That impacts on first-time buyers. That's partly why activity has been quite subdued. And now, so this was driven in part by some legislation changes which tried to sort of push the power back into the hands of renters. Then it was interest rates going up. Most landlords use interest-only mortgages, so the economics become less good. And now we've got a budget coming up, where there's a lot of speculation that rental income will have national insurance added to it as well. And so you've got this extra push that may well result in more landlords leaving the market, more supply coming out, and rents going up even more.
How far through the rates reset story are we in terms of people rolling off 5-year mortgages that they must have taken out during the pandemic when interest rates were super low? That process feels like it's still continuing. Is that something that's just continuing to chip away at the market?
I think that is part of it. So I think what's starting to happen is rates have reached this point, and if you look at the swap rates and then you look also at the average mortgage rates, they've reached this kind of plateau over the course of the last sort of 6 weeks, 2 months or so, and then they've started to edge a little bit higher again in the last few weeks. We actually have seen some of the mortgage lenders raising their rates again in the last few weeks because they also see that rates from the Bank of England are not going to come down, particularly soon. So, I think that's a part of it. And then that's also causing people to think more about refinancing. Can they just stick with what they've got for a little bit longer? The budget causes more uncertainty there as well because you don't know whether there may be some, beyond the rental side of things.
There's also there's talk of change in taxation around housing.
Yes, exactly. Yeah, quite a substantial one, in terms of stamp duty. I think people are still calculating what that may or may not mean for them. So all of these things are kind of keeping the market quite subdued at the moment.
All right, thanks for joining us. That was Bloomberg's Sam Unstead on the latest on the UK housing market. Let's turn to an exclusive interview now. UBS's CEO Sergio Ermotti says that consumers will feel the impact of Donald Trump's import tariffs and that it's unclear if there is an inflationary aspect of levies in the U.S. He spoke exclusively to Bloomberg's David Ingles in Hong Kong earlier today.
It's fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
The bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change, and then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. 5%, comfortably about 5% GDP is quite a strong momentum. And of course, also China may be impacted by high tariffs, but on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. In 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But what's going on, for example, in this region, diversification, it's a very important topic. So you see Asian becoming much more, developing more into a diversified play. Same is going on for in Europe. The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs.
When you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their CapEx spending, and just their broad expectations of how things will play out?
Well, I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology-driven. There is a clear boom and prospect for growth. We see it here in Hong Kong with the booming IPO market. This is something that we saw only in the best times.
Right.
But in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. It's keeping all of us very focused on making sure that we are not becoming complacent.
Right, and there's this renewed, let's put it, a healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this new regime?
Well, I don't remember in my career times in which competition wasn't fierce. Look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that wants to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.
The UBS CEO, Sergio Ermotti, of course, speaking exclusively with Bloomberg earlier today whilst in Asia. And Val, I was interested in the comments he was making about two different economies happening right now. In Asia, it seemed, and also in the United States, talking about the traditional economy and then talking about the AI economy. And it does make you wonder, well, firstly, did anybody say that in 1999? I don't know, we'll have to go back and dig our notes up.
You guys might remember.
Well, we might, yes. Yeah, just about harsh, I know. I'm taking the higher ground. So we, that goes through my mind. But then you also wonder how much the structural pickup in that AI story can offset any cyclical negativity.
Yeah, or the fact that maybe you just have AI just vacuuming up all of the investment out there to the expense of the rest of the economy. Is that something we're going to see develop? And in that kind of scenario, how does the Fed set policy? How does any central bank set policy when you've got one industry going crazy and the rest of the economy
is
being
AI
hurt
also
by
short-term inflationary, long-term deflationary, in as much as short-term demand for
rush for resources,
concrete resources, chips, you name it, are all going to be water. All these things, electricity, are incredibly in high demand at the moment.
Yes.
What effect does that have in terms of the short-term picture too?
Yeah, we talked about that with a rates strategist earlier on this week, didn't we? And that technology has in the past been deflationary, but let's see whether it plays out that way this time around. Coming up on the programme, we check in on markets, of course, as we look ahead to the ECB rate decision, the US CPI print, still to come, of course. Ian Steely is going to be joining us, JP Morgan Asset Management. He'll give us his thoughts on the data and the central banking decisions still to come later on today. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome back to the opening trade. We're 30 minutes into today's session. Let's have a check on how these markets are faring. The broad European benchmark, the Eurostoxx 600, is trading relatively flat, just up less than 0.1%. When it comes to the DAX, we're seeing some underperformance there, down 0.2%. But we are seeing some outperformance today in the FTSE, up nearly 0.5%. There is still risk events on the horizon to deal with, the ECB and the inflation data out of the U.S. later today. Guy?
Looking forward to lunch. Val, let me take you through into some of the internals. We definitely have more up than down. The market, therefore, positive, you could argue. That doesn't take into account weightings, but 324 up, 249 down. Volume seems to be consistently negative at the moment. Now, we've been having a little look into this, and apparently the 100-day captures some of the volatility we saw around tariffs, and as a result of which, where we are now is negative to that. So I'm just wondering if we need a slightly different benchmark in terms of assessing where volume is. I think the average volume is about -20. So today we're a little light, but not by much. Maybe things pick up a little bit later on today. Let's take a look at some of the 52-week highs. Fresnillo seems to be a consistent performer. We're up another 2.21%. The gold trade goes from strength to strength, which is odd considering equities go from strength to strength. But we'll park that one for the time being. Banks are actually reasonably well bid today. HSBC is one of the standouts. Going through, as you can see, 1,000. We're up by 0.7%. Banks are bid. We were talking about this a little bit earlier on with Beata Manthe. And ISS, this is a janitorial company, let's call it that way, just for cleaning services, etc., for around the world. I'm sure you've seen probably a mop or a bucket with the name ISS on it, but it signed a big deal with the Defence Department, I think, down in Australia. That's given it another leg higher. Stock is up by 4.25% at a 52-week high, Anna.
You can trade all sorts, can't you? Let's talk about some of the other stories that we need to know this morning. We'll start with trade. Mexico plans to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. The move would align the country more closely with the United States. This as President Claudia Sheinbaum prepares for talks over North America's free trade deal. U.S. conservative activist Charlie Kirk has been shot dead at an event in Utah. A search is underway for the killer after a suspect was released by the FBI. President Trump called Charlie a patriot who devoted his life to the cause of open debate. Donald Trump, Joe Biden and Barack Obama have all publicly condemned the killing. And Bloomberg has learned that Poland has asked allies for additional air defense systems and counter-drone technology. This after the NATO member shot down Russian drones that crossed into its territory. The EU has called the event a, quote, serious violation of European airspace and vows to ramp up sanctions against Russia. Val.
Well, let's move on to talk about the ECB. One of the main catalysts for European markets later today will publish its latest interest rate decision at 1:15 London time. Let's get more on what to expect from Bloomberg Lizzie Burden, who is on the ground at the ECB in Frankfurt. Lizzie?
Hey Val, well, I can't tell you much when it comes to what's going to happen on the move itself, because an uncontentious hold is what's expected here. Not that exciting, because the Governing Council just wants more clarity when it comes to the economic impact of Donald Trump's trade war. And in Christine Lagarde's words, the euro area economy is in a good place. You've got inflation at 2.1%, second quarter GDP revised up, unemployment at a historic low, and all of that quieting the concerns of the doves on the Governing Council. Economists say that they're done with cutting, and markets pricing less than a 1 in 3 chance of another cut this year. Now, let's see whether Christine Lagarde hints at whether the next move is a cut or a hike. We look to the forecasts, because this is the first set of forecasts since they agreed this trade deal between Brussels and Washington, and 15% tariffs is the midpoint between the base scenario and the severe scenario that the ECB set out. And yes, having a trade deal at all will likely alleviate the uncertainty, but tariffs nonetheless likely to weigh on demand. So you could see the forecast revised up in the short term, but down in the longer term. You could also get some fireworks at the press conference on the question of French politics, because, of course, Christine Lagarde was once the French finance minister. The question being, would the ECB intervene if the oats-bundt spread were to widen? I'm sure that she will say it's not her job to close spreads, and it's not her job to comment on individual member states' politics, though they should be fiscally responsible. But it may come up in a conversation about the euro, because, of course, the single currency has managed to shrug off a lot of the French political risk. But it's also a question of when the euro is climbing towards $1.20 because of this expected divergence between the ECB and the Fed may be cutting by a half point next week. That weighs on the deflationary side of the ledger. And you mentioned CPI, Val. One more point here. That number is going to drop right between the decision and the press conference here. So it may be that rather than looking to Frankfurt, the euro looks for its next move out of the US.
Lizzie, great stuff. It's going to be exciting. Looking forward to it. Lizzie Burden at the ECB in Frankfurt. Joining us now to talk about all of this is Ian Steely, International CIO for Fixed Income at JP Morgan Asset Management. Good morning.
Morning.
What's going to move things more today? Is it going to be the CPI number? Is it going to be the ECB? What is the bond market listening to right now?
Or it could be absolutely nothing. That's
definitely.
So, I mean, I think probably I think Lizzie summed it up very well. You've got an ECB and President Lagarde who's going to look for the market to come out as it goes in. Would probably be her base case. CPI is the one that maybe it could do. We obviously saw the weaker PPI print yesterday. I think we now know that maybe a little bit of surprise to the upside is probably not going to do very much for pricing. If it weakens a bit, the 50 basis points, does that come onto the table? Does seem a bit of a long shot at the moment, but again, I think that's probably the direction the market is going for. And if you get a weaker number, it basically opens the door to at least have those discussions, albeit just for a couple of days.
Let me take a step back. Are bonds a better investment than equities at the moment?
I think on a risk-adjusted basis, definitely. I think you're still in an environment, though, where actually generally I think risk probably does pretty well, because I think economies they're sub-trend, maybe they're slowing a little bit, but reasonably fine. And you've now got the largest central bank in the world who looks like they're going to be easing policy over the next few meetings. That should be good for all risk assets, bonds, equities. I think it's a good environment for asset price growth.
Ian, at least when it comes to the fixed income world, the wildly popular trade has been to be in steepeners, to be short the back end, long the front end. Do you see a risk that trade gets massively stopped out? And are we already starting to see signals of it? That 10-year auction in the U.S. was taken down decently with demand. We have the 30-year today. Perhaps people use that as a liquidity event to close out these positions. What's your thought on the steepening trades?
I still think over longer term you want to be in the steepening trade. And I think we also need to go back and look over history. We're still not at particularly high levels from a steepening standpoint versus where we've been during typical rate cutting cycles. It's just we've all been lulled into this sort of false sense of security of the zero interest rate policy and the inverted yield curve. So I think taking a step back, actually, it doesn't look too abnormal. We could see periods of indigestion in that, given that everyone does like it and a lot of people are in it. I do think we sort of bounced off 5% on the long bond. People obviously see that as an attractive entry point. I think more importantly to me is we are seeing generally yields coming down across the curve in the US because actually the Fed is credibly looking to cut rates. They're not doing it based on pressure on the political standpoint at the moment. We are seeing a weakening in the labour market. It does feel like rates can come down. To get a really big steepening in the curve, you're either going to need to see proper deterioration in the jobs market and a concern about recession. The 2-year is then going to move a lot lower than it is at the moment, or we get concerns that actually they're cutting too much. They shouldn't be doing that, and then that's going to be a case of a long bond to move higher. But I think at the moment the market is acting reasonably based on the information it has.
How aggressive do you think the Fed could shift to become? Are you considering a 50 basis point move, or is it just telegraphing a steady stream of 25 basis points cuts until they get below neutral?
I think the latter is the more likely, the 25 basis points. I do wonder if we get a weak CPI print today, whether the market kind of romances the idea of the 50 basis points. I think everyone's looking at what happened last year. There seems to be
exactly a year ago.
Exactly
right?
a year ago, there was a very timely news article that came out during the Fed blackout period that indicated that's maybe what they wanted to do. We've not heard anything. It does feel like we're running out of time. 25 basis points over the next few meetings would make a lot more sense to me.
I do like this idea of to romance an idea in financial markets as a verb. I think that's lovely, Ian. I'm just going to start referencing that. So where's the bar for CPI to change the market's thinking today, do you think?
I think...
Or is it not possible, actually, because of everything that's been said about jobs?
Yeah, no, I think on the high side, so 0.3 is expected. If we're going to be hitting 0.4, I don't think that really makes a huge difference. Even a 0.5, I'm not sure, because we've heard from Powell over the last few weeks, at Jackson Hole in particular, they see inflation as transitory. In this case, we're coming back to that word again, but they see it as a bit of a hump, and ultimately it should be a one-off hike that comes back down again. I think actually the bar would be if we have a lower print, and we're sort of 0.2 is maybe a low 0.2. Again, it doesn't seem realistic based on what we know. But if that's the case, then again, it's that idea of does the Fed really need to do a lot more than they're currently being priced?
Yeah, I mean, bond markets don't like inflation. When you're looking out for this nemesis, Ian, what do you think in terms of that transitory conversation? Because some say, yes, it'll just be a one-time, very mechanical increase in prices, and actually that might be over a long period because of the way companies have been stocking up before the tariffs came in. But others say, actually, this will trigger all kinds of secondary inflation impacts. Do you think that story could still be revived in 2026?
I think I look at a couple of things. So definitely looking at long-term inflation expectations, they're remaining reasonably well anchored. So the market perception at the moment is more of that one-time boost that comes back down again. The other thing that I think a lot of people are focusing on, and they're remembering 2022 and the fact that inflation wasn't transitory, we are in such a different environment compared to where we were then. If you remember that, we had, effectively, employers couldn't get the employment they needed. They were basically jacking up wages to try to get the staff coming out of COVID. People had excess savings. That's not the case. And I think importantly, what we're really focusing on at the moment to make sure that long-term inflation expectation is anchored is wages. And at the moment in the US, wages are still trending down. Now, if we started to see them tick back up again and start to show that there was maybe a lack of supply of labour and people were having to raise wages up, that might be more of a concern. But we're not seeing that come through at the moment.
The idea that we're going to see rate cuts based on labour market weakness, now normally that would be really straightforward. Labour market weakens, you want to cut rates because the labour market can accelerate, all of that good stuff that we've known in the past. Do we understand the current labour market? Do we understand what is happening with deportations? Do we understand what's happening with the generational shift? This feels like a really odd labour market to be making big decisions on. I'm just wondering kind of if everybody's got their arms around some of the kind of the obvious odd things that are happening at the moment.
I think that's a fair comment. I think it's evident that the level that keeps the labour market static is probably less than what we've previously known or believed it to be. The question is, if you look at the moment, 29,000 on average over the last 3 months or so, that's low. We could be having negative prints over the next couple of months. Who knows? I mean, that is an environment the Fed don't want. And we're not in a position where the Fed's got rates at 2 or 3%. they're at 4.25 to 4.5. They have the flexibility to do these sort of maintenance cuts, as they describe it, just to make sure that this doesn't snowball and have a bigger impact. And I think that's where they are at the moment. That does, all the labour data that we look at does show it slowing, though.
Right.
So,
but not very quickly. Like if you look at the wage number, you look at the unemployment number, it's slowing, but it's not.
No, it's not falling off a cliff.
No.
But it can do.
Yes.
And that's what the Fed want to make sure doesn't happen. And when you've got rates above what they believe to be their long-run neutral, they have the flexibility to do that.
Okay, Ian, thank you very much. Thanks for joining us. Good to speak to you this morning. Ian Steely, International CIO of Fixed Income at JP Morgan Asset Management. Perfect person to preview the CPI print later on today and, of course, look ahead to the ECB. Coming up, we'll get back to some of the geopolitical conversations of the week. We'll speak to Livia Paggi, Managing Director for Strategy and Risk Advisory at JS Held on geopolitical risk after Russian drones were shot down in Polish airspace. That's next. This is Bloomberg.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we move to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Welcome back to the opening trade. 46 minutes into the session. The DAX is underperforming. The FTSE 100 is outperforming. That's the picture we have at the moment. We're waiting for the big news, which is expected to come later in the form of the CPI print out of the United States. Claims looks reasonably stable in terms of what we're expecting from economists there. The ECB, yeah, you're going to want to watch that. Of course you're going to want to watch that. Christine Lagarde on deck a little bit later on. Geopolitics is also having an impact as well on these markets. Poland has reportedly asked allies for additional air defense systems and counter-drone technology to better protect its land from Russian incursions. The request came after the NATO member shot down drones that crossed into its territory. For more now, we're joined by Bloomberg's Oliver Crook. In terms of how this unfolded, Ollie. How much do we know about the cooperation between NATO members as a result of the incursions we've seen over the last few days?
There was a great deal of cooperation between NATO members. We understand that this involved, a sort of operation that sprawled a lot of different kit and hardware, a lot of different nations. The Poles with their F-16s. We understand it involved Dutch F-35s as well as German Patriot defense systems. There were also Italian intelligence craft that were also part of this operation to bring down a number of drones. The number of air violations we were told by Donald Tusk was 19 yesterday over Poland, and a number of those going down in various places across Poland, and some of them as far as more than 250 kilometers from the Ukrainian borders into Poland. So of course this has prompted an extreme response from the Poles, who we had Donald Tusk speaking a little bit earlier in front of a number of F-16s, saying taking sort of how seriously they were taking it, illustrating that by calling on Article 4 of the NATO treaty, which is to call of consultations among NATO allies to figure out how to respond. We've had the Poles also asking, getting requests from other allies to get more air defense sent to Poland. We understand that that's been, met with acquiescence. We have a number of nations that are apparently sending that kit over right now. And the Russians, for their part, have stayed relatively silent in terms of what this actually was. There was some sort of commentary about it from Russian military officials kind of early on. That sort of disappeared. Then we heard from the Kremlin spokesperson, who basically refused to give any kind of comment on what this actually meant, what it was, who it was designed for. But for the NATO alliance, they're going to be watching this very closely in terms of what their response is going to be. Donald Trump, for his part, has said very little about this. He sort of acknowledged that it happened yesterday. Of course, the news flow in the United States probably has taken control, but it will be interesting to see if there are these consultations called among NATO allies, whether Trump will be involved, and how this will fit into the Trump calculus with how to deal with Russia.
Oliver, thank you very much. Bloomberg's Oliver Crook joining us there from Berlin. Joining us now to discuss this further, Livia Paggi, who is Managing Director of Strategy and Risk Advisory at JS Health. Livia, can you shed any light, and maybe we will never know exactly, on what was intended yesterday by Russia? What was the purpose of those drones coming into Polish airspace? Do we have a sense of that yet?
Well, we don't have a clear sense simply because the Russians have not accepted or commented on exactly what was happening. But what I think we can say is that it fits broadly with Russia's modus operandi of testing NATO, testing the NATO alliance, testing whether Trump is serious about looking for a peace deal, and really testing the unity of the West in terms of supporting Ukraine. So although it doesn't constitute necessarily as a full-on attack on a NATO country, it could be certainly interpreted as a provocation.
Livia, you're just mentioning there that this was just a threat to test the NATO alliance, to test the NATO unity. What do you make then of the White House's response to this?
I mean, the White House, they've immediately said that they would increase tariffs. They'll go after Russia. But the reality is that we saw that we had this big meeting in Alaska to discuss peace negotiations. There was huge coverage of it. We got Putin meeting Trump. But the reality is that not yet. We have not seen any clear, concrete steps coming out of that meeting, which makes us realize that fundamentally we are probably not near a resolution to this conflict.
Libya, if this was a test, did Europe pass? Did NATO pass? What will Vladimir Putin have made of the results of this test?
I mean, certainly what's interesting is already on the Polish side, they were very alarmed. Obviously, Poland has, as well as the other Baltic countries, are much more concerned as they are on the eastern flank, directly on the front line, dealing with Russia. And obviously, their rhetoric was much more alarming. Immediately triggered Article 4, which calls for consultations and to discuss what's actually happening and what the strategy is going forward. Whereas you saw Rutte The head of NATO was trying to be much more measured and not overly alarmist and trying to de-escalate. And I think what that shows Putin is that NATO and Europe are very wary of escalating the situation and are not necessarily ready to send in boots on the ground in Ukraine to defend Ukraine. And we've seen statements in the past on Germany that they're not willing to do so. But there is actually a division among European states on what level of intervention are they willing to make to defend Ukraine.
We were talking earlier about the reaction from the White House, Livia. How do you think Russia will perceive the fact that we haven't heard very much from President Trump himself about this? Clearly, our colleague Oliver pointing out, the news agenda in the United States moved on pretty quickly, and other things perhaps seemed more pressing in the moment. But what would it mean if we don't see very much comment from President Trump on this?
I think Putin is going to interpreting as what he already knows about Trump, which is that Trump does look for resolutions, but is extremely volatile, ranches up rhetoric, then brings it down, and is ultimately someone who Putin can control in the sense that there's an unpredictability with him, and that's exactly been Putin's strategy all along, is to take advantage when the U.S. is distracted, to take advantage when Trump is distracted, and ultimately take advantage of the domestic instability in the U.S. as well.
Olivia, we just had a headline crossing the terminal that Ryanair, the airline company, is saying that Europe needs a strong response to Russia's prodding. What do you think that, at least when it comes to businesses, what do they want to see out of this, coming out of Europe's response?
I mean, I think European businesses, in addition to obviously the Ukrainian people and the domestic situation in Ukraine, I think European businesses are the ones that have suffered the most from this conflict. I mean, we've seen it from energy companies, we've seen it for inflation of oil and gas prices, businesses. We've advised numerous clients and investors who have had assets seized in Russia, who are struggling enormously to navigate sanctions because their supply chains are directly or indirectly controlled. So I think fundamentally European businesses are desperate to see a resolution to this conflict and continue to do business as usual.
All right, that was Livia Paggi, Managing Director of Strategy and Risk Advisory at JS Held, joining us on that latest political development in Poland. But let's take a look at the risk events on the horizon as we close out this hour of programming. At 1:15, we have the ECB rate decision. Right smack in between that, we have the 1:30 data drop out of the U.S. that includes CPI and initial jobless claims. 15 minutes later is the ECB press conference. And then later this evening, we have the big Treasury bond auction, $22 billion of 30-year duration into the market.
I thought it was interesting. Ian Steely saying even if we got 0.5%, and the expectation is 0.3, isn't it, on core CPI, even if we got 0.5, he didn't think that would really reset the markets thinking about rate cuts, because we focused so much on the labour market, and Powell has.
Yeah, maybe not so much on the expectation of September cut. I think that's definitely nailed in. But you have to start to think that would cause maybe some issues when it comes to their communication of a pivot next week, right? They maybe not want to hint to the market that they're in for an aggressive pace of cuts if they get a really hot CPI print today.
Does the equity market want 50 or 25? That's the question. And will today's number open the door to 50? Potentially. People are talking about 75 now, but that's definitely out there. That's definitely not on the list. But you do wonder, does a weak number today kind of continue that debate into the meeting? And as that pricing changes a little bit, maybe at the margin, maybe it becomes a little bit more of a reality. Maybe that's, in theory, good for equities. I don't know.
Maybe.
Slowing economy sounds great.
What does AI want?
What does AI want?
We can ask. We'll ask it later. Maybe they take a leaf. Maybe the Fed next week take a leaf out of the ECB book and tries to be deliberately, uninformative, which is what the ECB has been saying.
That would be a hard thing for them to do because they released their SEP, their Summary of Economic Projection, which includes the dot plot. We've already had this dovish shift at Jackson Hole, so it's going to be hard for them to prevent fireworks.
That is informative, whether they want it to be or not. Right, we must give you some timings. ECB rate decision 1:15 UK time, of course, followed by President Lagarde's news conference half an hour later. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. Traders brace for a pivotal U.S. inflation report that could upend bets on a series of Fed cuts after a surprise drop in producer prices. Here in Europe, the ECB is set to keep rates on hold today. Policymakers weighing the impact of Donald Trump's tariffs and renewed political turmoil in France. Plus, police search for the killer of conservative activist and Trump ally Charlie Kirk, who was shot dead yesterday at a university event. So we'll have full roundup with people on the ground of all of our main stories. We also talk about oil with the IEA report. But first thing is first, let's talk about the markets. Now, it's very clear that global stocks saw a little bit of muted gains yesterday, and that's certainly being held back by some of the major bets after Thursday's highly anticipated U.S. inflation data. That's today. Yesterday, we had PPI, and of course, we cast ourselves back to Friday with that jobs report. S&P futures getting 0.1% to look out for any move in U.S. 10-year yield 40530. We'll speak to the IEA oil director right now, Brent at 67.47. Now let's also look at the European markets map. Again, a lot of the focus will be on the ECB and then the following press conference from Christine Lagarde. Of course, if you look at expectations of central banks in general, what the ECB will probably do is field a lot of questions on what the Fed will do next. Expectations that the Fed will start resuming its monetary easing cycle this month have soared in recent weeks. The IEA report coming out, IEA boosting estimates for record oil surplus in 2026. We'll be joined by Troll Mazzoni very, very shortly. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we'll discuss what's moving the markets a little bit later with Sharon Bell from Goldman Sachs. Away from the markets, let's also talk about the two big political stories dominating the news agenda. First of all, we'll discuss the fallout from Russian drones crossing into Polish territory with our Oliver Crook. But let's start with our Rosalind Matheson on the latest in a spate of political violence in the U.S. So a search is continuing for the killer of a U.S. conservative activist, Charlie Kirk, after he was shot at an event in Utah. The 31-year-old was speaking outdoors when he was killed. Kirk's shooting is the latest in a spate of political violence in the U.S. that's drawing an outpouring of condemnation from Republicans and Democrats alike. Well, President Trump has ordered U.S. flags to be lowered to half-staff until Sunday evening in Kirk's honor.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
We're now joined by Roz Matheson. Roz, this is a shocking death. Why was Charlie Kirk also so important to President Trump?
Well, he was very loyal to Donald Trump, including repeating his claims about the 2020 election and that it was stolen. And in a way, he stood by Trump when other Republicans kind of edged away in that intervening period when Trump was arguably a little bit in the political wilderness. And Donald Trump remembers that. And of course, using his organization as it grew to really mobilize younger people, not just those on college campuses, but also people in high schools, towards conservative values and conservative political views, and really became famous for his willingness to debate anybody. People who disagreed with him, he'd argue with them and take them on, be they at college or politicians, and therefore not just preaching to the converted, but trying to bring in other people to the conservative movement. And you can say arguably that contributed to some extent towards Donald Trump's electoral success in 2024 because of that grassroots mobilization, millions of followers on social media, his podcast, reach that you just can't get these days from TV ads or newspaper ads. And so certainly potentially playing a role there, and possibly would have played a key role in the midterms as well. So the question is now, with his killing, what happens to his organization, and does it mobilize further?
Roz, what are the wider political repercussions of this killing?
Well, obviously, you can see politicians of all stripes condemning this, Republicans, Democrats alike, and saying this is reflecting a society that's increasingly divided and polarized, and that this kind of violence is not a solution to that. And the question is, does this death, though, become politicized in some fashion? Does Donald Trump use this as a moment to crack down even further on campuses and what's happening at universities? Of course, he's been very critical of institutions like Harvard, saying they haven't done enough to stamp out anti-Semitic views on campuses. Does the discourse around that harden further? And as I was saying, does it impact in some fashion the campaigning for the midterm elections? Because again, these elections are increasingly coming at a grassroots level. It's mobilizing people on the ground, not through TV ads and other things. And does that sustain, and does this harden that campaigning? And do you see perhaps people mobilizing further in terms of conservative youth in America in the wake of this? And that could be a real impact potentially in elections to come.
Roz, thank you so much. Roz Matheson there, of course, on the shocking news. Bloomberg has also learned that Poland has asked allies for additional air defense systems and counter-drone technology to better protect its land from Russian incursions. Now, the request came after the NATO member shot down drones that crossed into its territory. For more, we're joined by Bloomberg's Oliver Crook. Ollie, so will Poland now be given air defense weapons?
Yeah, it will likely be getting more support from a number of NATO allies. We've heard as much from a number of Polish officials over the last sort of 24 hours, saying that actually a lot of this stuff will be arriving over the next couple of dozen of hours, so presumably now reaching Polish territory. And we should say that the operation itself that took down a number of these drones, 19 apparently, there were air infractions on the sovereignty of Polish airspace, and a number of those drones were taken down by joint efforts across NATO, right? So there were F-16s from Poland, there were F-35s from the Netherlands, there were German Patriot missiles. There were also Italian surveillance and intelligence crafts involved in all of this, and taking what was a really sort of unprecedented move to have so many violations of Polish airspace since the beginning of war in Ukraine. And we should say this is the first time on the record, really, that a NATO member has shot things out of the sky over its own territory. The Poles taking this very seriously. They are asking to bring in Article 4 of the NATO treaty, which is consultations among NATO members when some of of their sovereignty or independence feels threatened. Those conversations will be ongoing. As far as the Russians are concerned, they've said very little about this. We've heard early commentary from some of the Russian military that sort of indicated this could have been an accident, but then we heard from the Dmitry Peskov, the Kremlin spokesperson, who basically refused to give any sort of comment on that. So what we're watching over the next 24 hours, we've had a very sort of brief and bizarre acknowledgement of the event by President Donald Trump, but really there will be a lot of focus on A, how NATO should respond to this, and B, what the sort of calculus will be after this sort of incursion into Polish airspace, and does that change at all the equation for President Donald Trump and his view of dealing with Russia when NATO now being put under extreme pressure, and by the European perspective, deliberately so?
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on the situation in Poland. Now, the International Energy Agency says a record oil surplus projected for next year is looking even bigger as OPEC Plus continues to revive production and the group's rivals grow. The IEA estimates that world output will exceed consumption by an average of 3.33 million barrels per day in 2026. Now, for more, we're joined by Toril Bozzoni, head of Oil Industry and Markets Division at the International Energy Agency. Toril, as always, thank you so much for coming on. There seem to be, in general, away from this report, just two radically different views on the market, that it's tighter than believed or that we're headed for a glut. Why is there such a divergence, first of all?
Good morning. So what we're seeing in the market today is that demand growth is slowing. I think that now 3/4 of the year gone, we're seeing oil demand around 700,000 barrels a day. And on the other hand, we're seeing record oil supply, not just from the unwinding of OPEC cuts that have added about 1.5 million barrels a day since the first quarter through September, but we're also seeing record production in the United States, in Brazil, in Guyana and Canada. So it's this mismatch between the very strong supply numbers and weaker demand. But what this supply glut so far has largely been absorbed by the market. Crude demand is also at record high in the third quarter due to refinery throughputs, but also direct crude burn. And the surplus in the market has largely been absorbed in inventories where they're having a less of an impact on the market, in particular in China for crude oil, but also in gas liquids in the United States. So we're not seeing the surplus piling up in tanks in key markets as of yet, but this is something that we think will shift towards the end of the year.
So Toril, so why aren't prices already weakening given this oversupply?
So prices have been trending lower. We're now near a 3-year low. But there's obviously different factors pushing and pulling the market, as we're saying. On the one hand, we have the surplus emerging in the markets that has so far been absorbed by Chinese stockpiling and inventories elsewhere. But we're also seeing the risk to supply from increased sanctions on Russia and Iran. We're seeing increased tensions in the Middle East at the moment between Israel, Iran, and now with an attack on Qatar. We're also seeing new sanctions on Russia and attacks on infrastructure there. So this is sort of supporting the market at the current moment.
Is OPEC Plus making a mistake, a big mistake, actually, by increasing production further?
As we've seen, the market has been able to absorb the increase in production from the OPEC Plus countries so far. And inventories are tight in OECD countries. Crude oil stocks are below the 5-year average. So obviously there is a room for the market to absorb this additional barrels. Then moving forward, it would all depend on the strength of oil demand growth and also at the continued stockpiling by some of the consuming countries.
So when you look at actually what happens next, how much of this, oil surplus, and you were trying to explain some of the dynamics, but how much of the oil surplus will likely be scooped up by China, for example, for strategic reserves going forward?
As we say now, that the oil surplus that we're seeing in our balances of 3 million barrels a day, as we say, it's untenable. There isn't the capacity or the ability for the market to absorb such an increase. China has capacity to continue building oil stocks. We saw from February to August this year about 100 million barrels of crude oil being absorbed by China. So if they continued to purchase oil at the current rate, that will help absorb some of the surplus, but it will be nowhere near the 3 million barrels a day that we are projecting. So there will have to be some adjustments on the supply or demand side to make the market rebalance.
But, Joel, do you think China ultimately could put actually a floor under prices?
So we are seeing that both China but other consuming countries are quite sensitive to the prices. So when the prices fall, they are increasing demand, not for end-use consumptions, but for storage. So that is, to a sense, a floor. But with the extent of the increase today, we could also see adjustments on the supply side. Prices fall to a lower level. We're seeing U.S. producers in particular adjusting their strategies and growth forecast in response to this well-supplied market and to the lower prices. So you can also see adjustments on this side.
Joel, going forward, do you think this is also the beginning of the end for OPEC's mission of supply management?
We don't think so. Of course, we're seeing now very proactive market management by the OPEC Plus Alliance, and they're meeting on a monthly basis to assess the market situation. Now there's a reset. We have completed the unwinding of the first tranche of production cuts of 2.2 million barrels a day. Now this is the start of the second tranche of 1.65 million barrels a day, but OPEC has only committed to the first increase of 137,000 barrels a day increase in the target from October. The actual increase would be less than what we're seeing, as some countries are already overproducing vis-a-vis their targets by about 1 million barrels a day, and we're seeing other countries are now reaching capacity constraints. So we don't think it's the end of the market management, but it's a different strategy than we've seen over the past few years when non-OPEC Plus countries have been taking all the growth in supply. Now, in moving forward, we're seeing the growth in production being split between OPEC countries and non-OPEC countries.
Tora, as always, thank you so much for joining us. Tora Bozoni, their head of Oil Industry and Market Division at the International Energy Agency. Now, coming up, some of our interview with the Chief Executive of Citi, Jane Fraser, on the outlook for the U.S. economy. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
you've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing, and they work together as a package. I think the most important piece for a corporate, clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about.
Yeah.
And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
Well, that, of course, was Jane Fraser, the Chief Executive of Citigroup, speaking exclusively to Jumana Versace. Now, joining us is Sharon Bell, Senior European Equity Strategist at Goldman Sachs. Sharon, thank you so much for coming in.
Thank you.
I mean, it's all about the Fed. Everything's been repriced. I know we have CPI today. We had that labour market. How do you think that's translating into European equities?
Yeah, so, I mean, equity markets generally have been very strong recently, haven't they? And I think even though you've got that weak labour market data that we've seen in the US, it's caused investors to kind of price in a little bit more for the Fed. With growth being slow but no recession in the US or in Europe, and rates coming down in the US, that's not a bad environment.
So where do you see the biggest value? I mean, there's a lot of talk, of course, in defense in Europe, but also a lot of question marks about growth and the ability to deal with inflation.
Yeah, so, I mean, I think for Europe, actually, inflation is probably less of a worry. I mean, we've had energy prices on the softer side this year. You don't necessarily see that feed through immediately to people's bills that they pay, but I do think that will feed through over time. And you don't have the tariff impact in Europe that you've got in the US. So US inflation will probably, I mean, we'll get more information today, but US inflation will probably run a little bit hotter in these next few months than European inflation. But we do think the ECB has probably finished its rate cutting cycle now, it having cut earlier, obviously, than the Fed did.
Sharon, do you think, I mean, the ECB does seem to be in that position. Is it because they were just faster at cutting, or is it just because of the economy, which is maybe less complex in other parts of the world?
I just think the US economy has been stronger up until now. It was particularly strong at the second half of last year, growing at about a 3% pace. So the Fed wasn't really in a position to be cutting aggressively through that period of time. Also, lots of uncertainty about the tariffs, how big they would be, what the pass-through would be, etc., the impact on inflation. I think we don't have zero uncertainty now, but we have a little bit more clarity on all those things. And the labour market is slowing in the US, which means the Fed can cut. Whereas I think the ECB was facing a weaker growth environment earlier last year and into early this year and could cut, therefore.
So how do you look at, when you look at Europe as a whole, there's a lot of political turmoil, certainly in France, but also other countries where you're seeing noise. Again, does that translate into equities, or are equities just like on a world of their own?
A world of their own. I mean, European equities did really well in the first quarter, but since then have been flatter. And I do think some of the concerns about Europe are showing through there in its sort of relative weaker performance since the first quarter. And some of those concerns are fiscal. You mentioned France, UK is another. There are fiscally vulnerable sovereigns in Europe. And in France, we've had political uncertainty rise again recently. And yes, that does feed through into a slightly higher risk premium for Europe. And of course, French domestic stocks, when there was more the announcement of the confidence vote rather than the result, but on the announcement, they certainly were hit.
How much does German fiscal spending help?
Yeah, so there are fiscally vulnerable sovereigns, but there are those in a better fiscal place, Germany's being the obvious one. And Germany is turning on those fiscal taps, really as we speak. I think the sort of plans were put forward in the first quarter, but we're expecting to see some impact on GDP, particularly next year in 2026. So absolutely, Germany's got more fiscal firepower, debt ratios in Germany are lower, and Germany hasn't grown. This is the problem. We haven't grown for the last few years. They need to spend fiscally on infrastructure. They need to spend on defence for lots of reasons, but they also need to spend on infrastructure. German infrastructure is weak at the moment, and growth has been weak, and they need to engineer some of that.
But are valuations still compelling?
Well, I mean, the market rose in the first quarter, flattish since then. Valuations have gone up in Europe. They've gone up everywhere. In the US, valuation is now very stretched versus history, well into the 90th, 95th percentile of its history. European valuations are also high, but probably more of the 70th percentile of history. So high, but not extreme. I do still see some value there, yes.
When you look at earning expectations, so are they, looking into the next quarter, going to be better than expected because they've come down a touch, or are earnings just going to improve?
They have come down a lot. And now, in fact, the consensus for this year is for 0, if not slightly negative earnings growth for Europe. At the outset of this year, the consensus expected 8% earnings growth this year for Europe. So
it's quite a change.
It is quite a change. And considering that the market rose quite a bit in the first quarter, especially. So you did have sort of earnings estimates down, markets up, which of course means valuations have moved up. I think the problem for European earnings is we in Europe make half of our earnings, if not more, in dollars, and the dollar has been coming down. And that's been the reason, really, for a lot of the downgrades, rather than specific economic damage. But that hasn't helped either.
But does that mean that returns will continue being modest in Europe compared to other parts of the world?
I do see modest returns on European equities. We've got 4-5% expected return over this next year. But then that's also true for the US, because the US is also on a high valuation. So yes, modest, but like most places, because you're already on high valuations.
So how do you build a portfolio? Is it diversification? Do you buy gold as a hedge?
Well, indeed, and many are. If you look at gold prices, they've shot up recently, and I think that reflects some of the uncertainties out there, and of course central bank buying as well of gold. But it is tricky. We do advocate very much diversification. We think you get lowish returns everywhere. Diversifying, though, allows you to move away from very concentrated dollar asset positions, which people have built up in the last 15 years.
Sharon, I mean, we have many questions on the geopolitical front about, the drones coming in from Russia that actually landed didn't land in Poland because they intercepted them. But is that priced in? I mean, if there's some uncertainty, what do you buy?
Yeah, I mean, we saw the Polish indices decline on the day, but most of the other European markets didn't. And I think, so it's tricky because there's so much uncertainty about it, political uncertainty with respect to it. So I think, obviously, if there is a escalation, that certainly is not priced in at the moment. I think it's just another little thing adding to some of these uncertainties out there.
And where's China in all of this, and the impact that China could have on European companies?
China, I see as a very clear threat. I mean, if you'd asked me about China even 5 years ago, I'd have seen it as a great growth opportunity for European companies. I mean, European companies have huge exposure to China. But the problem is China is increasingly exporting into Europe, and the trade data most recently showed that that's continuing. Exports from China into Europe are growing double-digit, and Europe is not growing double-digit. So this means China is taking market share. And again, I think this links back to the point we were talking about earlier on German fiscal. Germany, it's existential for Germany. Yeah. They haven't grown. They have this competition from China. They need to spend more on picking up their own domestic demand.
Sharon, thank you so much for joining us today. So nice to actually have you in the studio. Sharon Bell, Senior European Equity Strategist at Goldman Sachs. Coming up, it's, of course, Decision Day. At the ECB, we're live in Frankfurt next, and this is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Traders brace for a pivotal U.S. inflation report that could upend bets on a series of Fed cuts after a surprise drop in producer prices. Here in Europe, the ECB is set to keep rates on hold today. Policymakers weighing the impact of President Trump's tariffs and renewed political turmoil in France. Plus, police search for the killer of conservative activist and Trump ally Charlie Kirk, who was shot dead yesterday at a Utah university. Now back to one of our top stories, and the European Central Bank is expected to leave interest rates on hold at its meeting today. This as policymakers look for evidence that the economy can endure President Trump's tariffs and renewed political turmoil in France. Now for more, Bloomberg's Lizzie Burden joins us from Frankfurt. So Lizzie, a hold is on the cards. What's the ECB weighing up?
Well, Francine, just as the Federal Reserve's about to kick off the rate-cutting party, we expect the ECB, as you say, looks to be holding rates again today because they're waiting for clarity on the economic impact of Donald Trump's trade war and because, as Christine Lagarde has put it, the euro area economy is in a good place. You've got inflation at 2.1%, second quarter GDP revised up, unemployment at a historic low, and all of that quietening the concerns of the doves on the governing council. So markets pricing less than a 1 in 3 chance of another cut by the end of the year. What could be interesting is if Lagarde hints at whether the next move would be a cut or a hike. I don't expect she will, but we'll look at the forecasts for any clues because these are the first forecasts since that US-EU trade deal was struck, and 15% tariffs is right in the middle between the base forecast and the severe scenario that they had put out. And it may be that having a trade deal at all alleviates some of the uncertainty, but nonetheless, it's expected to weigh on demand that there are tariffs there at all. So you could see the forecast revised up in the short term, but down in the longer term. We may also get some fireworks when it comes to the press conference, because of course, as you'll know, Christine Lagarde was once the French finance minister, and so I'm sure she's going to be asked about the French fiscal situation, whether the ECB would be willing to intervene if the oat-bundt spread were to widen. As she has said before, it's not the ECB's job to close spreads, and I'm sure she'll say she doesn't want to comment on individual member states' politics. They should nonetheless be fiscally responsible. But another way it could come up is when they talk about the euro, because, of course, we've seen the euro shrugging off French politics,
But then we have this divergence expected to open up between the rate paths of the Fed and the ECB, and the euro climbing towards $1.20. So that may be where it comes up. But really, the euro may be moving more on US CPI today, Francine, than it does on what happens here in Frankfurt, because that print is going to drop right between the decision and the press conference later.
Lizzie, thank you so much. Lizzie Burden there in Frankfurt. Let's also talk to Lawrence Mutkin, head of EMEA rate strategy at BMO Capital Markets. Lawrence, so good to speak to you. Look, I mean, there's a consensus in the markets that Lagarde's press conference, but also the inflation data, won't really shift money market pricing or the ECB Fed divergence already embedded. Are they too complacent?
Yeah, I think a little bit. I mean, I think one of the things that's changed in the way that the ECB is communicating with people is that at the last meeting they slightly changed the language describing how they make their decisions, and as well as talking about the outlook for inflation, they also added a line about the risks surrounding the outlook for inflation. And I think not so much in the press conference maybe, but certainly in the new projections from the staff, you might see a bit more of a discussion about the risks around inflation. And I think there's a risk. I think there's a chance that publication will be more dovish than the last one. And if I look at where the market's pricing, it's kind of not pricing for that at all. Yeah. So I think although the change in tone from the publication and the press conference might be quite minor, I think the change in pricing in the bond market could still be, a decent-sized move.
So are you expecting the ECB president to just emphasize optionality?
I think she at the Q&A last time, somebody asked the question, I see you changed this thing a little bit, and she went, I'm glad you noticed, right? So I guess this is her opportunity to do so. And if you think, it's a reasonable way of making policy. If you think about what the risks are around the European inflation outlook, obviously they've all increased, right? We have the euro strengthened, we have the oil price went up, which kind of, I guess, goes the other way. Tariffs came somewhere in the middle, which if you look at the sensitivity analysis in the previous report, they think is kind of a downside for growth, but also for inflation. So it's all kind of pointing to me saying, the risks are getting more skewed.
No, not today.
Oh, you mean having, the risks are getting more skewed toward the downside for inflation and less skewed toward the upside.
So what are you expecting? You're expecting a rate cut? Another rate
definitely
cut?
not.
Definitely not.
Today, no.
No, not today.
Oh, you mean ever?
By the end of the year.
Oh.
Ever would be a bold call, Lawrence.
Yeah, you're right.
Brave as the economist.
Never give the timing. Look, the market is not priced for a 100% chance of a rate cut at all this cycle anymore. I guess all I would think is, I think that the probability of rate cuts and the trough in rates could be skewed for a more dovish outcome after this press conference.
How does she navigate the question on France? I guess there's not much more that she can say except from, policymakers are monitoring spreads.
Yeah, I think what you and Lizzie said about France is it's quite right. That's a question for her. For the market, it's quite which I know better. It's interesting how the market has responded to this latest ruction. If you look at what they're pricing, they're pricing a pretty benign outcome. Right? We're a double-A country. We, might be trading more like a single-A country, but this is single-A stuff. The US is a double-A country, but the UK is a double-A country. Double-A countries are all over the place. It's not like we're talking about a triple-B country. Are they going to go to? And we're not pricing for that, and the market doesn't expect it. And one of the reasons, of course, is because of this monetary transmission instrument that the ECB put into place. And if you look at it, I think this is what we've said in the market. There's like 4 conditions they have to meet. They're all a bit like grey around the edges, but every single one of them, it's quite easy to make the argument that France meets them. And so I think the market, it's pushed yields up because why wouldn't you? Volatility, you need a bit more risk premium, you need some positive carry. But it's been striking to me that the market's been fairly sanguine about not only the fall of the Prime Minister, but also these demonstrations.
And Lawrence, on the U.S. side, right? It's a big day actually on the U.S. because inflation, I guess, could undershoot following the soft PPI data that we had yesterday.
For sure.
In the U.S.
Yeah.
And that changes dynamics for euro-dollar.
I think it does. This is one of the big risks for the ECB to me is that the euro just keeps going up. and that has an immediate effect on the inflation forecasts and could push the trough in the inflation forecast in the last staff report was 1.6. If that came down to like below 1.5, I think that'd be a good argument saying let's have a. But yeah, so what is going to happen with the US? Ian Lingen is our US strategist, has long been calling for like 3 times 25 this year. I guess it's anyone's guess at 130, but I think a 0.3 probably leaves us on the month-on-month, probably leaves us still looking just for a quarter. Substantially lower 0.2 or 0.1, I don't really know. I think the point Ian makes, which I think is a good point, is the market at the moment is pricing some kind of skew of odds between the two, more skewed to 25. By the time of the announcement, whether it's through Wall Street Journal leaks or whatever, the market will know which one is coming. So the move is going to happen before the FOMC meeting, I guess.
Well put, Lawrence. Thank you so much for joining us. Lawrence Mutkin there, head of EMEA rate strategy at BMO Capital Markets. Now, let's also turn to an exclusive interview. UBS Chief Executive Sergio Armati says that consumers will feel the impact of Donald Trump's import tariffs and that it's unclear if there's an inflationary aspect of levies in the U.S.
The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs. And
is that still unclear at this point?
I think it's unclear.
Now, in other news, the UK's ambassador to Washington, Peter Mandelson, has been answering questions about his friendship with the late sex offender Jeffrey Epstein. This after the publication this week of a 2003 birthday book in which Mandelson called Epstein his best pal. In today's Big Take, Bloomberg News has obtained more than 100 previously unreported emails between the two men, casting new light on their relationship and showing that it was deeper than previously known. Mandelson has yet to respond to Bloomberg's further questions. We now have Bloomberg's Harry Wilson with us, who has been relentlessly working on this story. Harry, thank you for joining us. So talk us through these latest emails.
Well, it covers a period about 5 years between 2005 2010. But crucially, they have the years 06, 07, 08, when Epstein was under investigation, later charged, and then went to jail over his solicitation of sex from a minor. And what they show is that over this period, Peter Mandelson was in very regular contact with Epstein, was providing support to him in many ways, was basically acting as a very good friend to Epstein throughout this period. And even the day before he went to jail was saying, you know, I think the world of you, stay strong. It's quite an extraordinary sort of set of emails.
Harry, what further questions do these emails raise?
I think they raise questions about what exactly was Mandelson doing to help Epstein. We've obviously, in the emails, we see sort of various interactions where he seems to be sort of almost sort of kind of lobbying on his behalf and working a network to try and, I guess, sort of help out his friend in his sort of hour of need. And so I think there are very serious questions about, well, what exactly was he doing at that time? And you know, did he go just beyond sort of like moral support into something more?
And of course, these questions come at a crucial time for the Prime Minister. And of course, Mandelson himself, just days before the US president is due to arrive in the UK.
Yeah, I mean, the timing couldn't really be much worse for the government here. I mean, with Trump flying in next week, Epstein is obviously a huge touch point for the Trump administration. And to have the British ambassador to Washington himself embroiled in this and potentially facing questions over his own future, I mean, it really couldn't be much worse for them.
Have we had any response from Mandelson himself or the team around him?
Not as yet. Nothing.
What do you think? I mean, this is a very difficult question, but what do you think happens next?
I think the pressure is likely to grow. We'll have to see what other revelations come out. I mean, the one thing with this story is that there always seems to be a little bit more to it. And so I think there's a high likelihood something else could come out. And, the pressure is only going to increase from there.
Harry, thanks so much. Harry Wilson there with this really pretty incredible big take that you can read on the Bloomberg terminal, on our website, and elsewhere. Coming up, Poland says the UN Security Council will meet to discuss Russia's drone incursion. We'll speak to Russia's Natya Seskuria about NATO's response. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Wednesday, the Fed decides.
The real debate is going to be about the outlook.
The economy's slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
What made you go back to politics?
Putin. I'll be very frank with you. Had Russia not attacked Ukraine, I would not have run for president of Finland. This was built in the 1800s later when the Tsar took over the palace. And this is mirroring the Winter Palace in St. Petersburg, but it's called the Hall of Mirrors, so we have the mirrors on the side.
So do you ever get used to it, or do you sometimes just walk in and think, wow, this is...
Every morning, wow, this is.
Have a seat. Talk to me about resilience.
It's something I think we in Finland know something about, actually. It's one of our key words. It's sisu, which is resilience, perseverance, grit, stamina. So you never give up. You just have to keep on pushing and grinding through the tough stuff. And I think a lot of Finns have that ingrained into the system because remember, we're a poor country. You know, first we were under Sweden for 700 years, then under Russia for a little bit over 100. And when we gained independence in 1917, we were basically a poor developing country. And I think then this sort of idea of resilience, let's try to overcome, let's work hard, came very much a part of Finnish DNA. And I think I'm still part of that generation.
You can watch the full interview with the Finnish president tomorrow at 5:30 p.m. in the UK, 7 p.m. Eastern in the US. You can also watch it on Bloomberg, on the website, and on the terminal from 9 a.m. London time. Of course, it's the first of 6 episodes of the first season of Leaders with me, Francine Lacroix. I'll sit down with decision makers shaping our future to explore the personal stories behind their public personas. Now, Poland has asked allies for additional air defense systems as Prime Minister Donald Tusk slammed Russia's drone incursion as an act of aggression and said it amounted to an international provocation from Moscow. But will Europe rally around Poland, and what will this mean for Ukraine? Well, joining us now is Natya Seskuria, International Security Associate Fellow at RUSI. Natya, thank you for joining us. First of all, what do we know about these drones? Was it intentional, or was it casually that wasn't done on purpose?
Thank you very much, first of all, for having me. I think, first of all, this is obviously a major violation of NATO airspace. So far, what we know, we have limited information, obviously, about the purpose of this attack. However, it is quite clear to me that this is a large-scale provocation from Putin's side. And I think what Russia is trying to do here is to test NATO unity and also to see what would be the NATO response, because there are obviously certain questions raised about NATO's unity as a result of Donald Trump's ambiguity in terms of his commitment towards European security. So this seems to me as a provocation, Russian provocation, deliberate provocation.
But Nadia, what exactly is the point? Apart from testing the water, is it to show domestically that he's stronger? Does he want to go to war with NATO?
I think several things. This escalation suggests that Putin is firstly testing the limits of NATO, but most crucially, I think this shows that he's not interested in peace. He has no genuine interest in committing to any peaceful resolution of the conflict. So quite the contrary, I think Putin has become more confident as a result of recent developments. And this shows that he wants to signal that he's still willing to continue his war effort. And most importantly, Russia's ambitions extend well beyond Ukraine.
What does this latest situation mean for the relationship between Vladimir Putin and Donald Trump?
Well, that's quite a big question, because this development, I think, places Donald Trump in a bit of an awkward situation. While he has issued warnings that he would and threatened Russia with serious consequences, he has stopped short of imposing further sanctions, apart from the tariffs imposed on India. And it is highly likely that now European allies will push the US and Donald Trump administration to take action against Russia and at least commit to what he promised, in this case, further sanctions. But I think most importantly, this should go well beyond imposing sanctions, next round of sanctions on Russia, because this poses very serious questions about European security, about the security of NATO allies, and the response should be more than just words of concern or economic measures in this case.
But Nadia, I mean, this is what Poland is trying to do, right? They invoked yesterday Article 4 of the Alliance Treaty, which basically, first of all, triggers consultations, and then that could open a path towards coordinated action amongst the allies. Do you think we'll see some kind of action?
Yes, what we know so far is that Article 4 has been triggered. Article 4 has been triggered before in various occasions. However, this is, I would argue, more serious escalation than the previous cases. And the response that we should expect from NATO is to maybe consider further reinforcing the border defenses, deploying NATO allied forces to Poland, reinforcing the Eastern Front, because as we know, Baltic states, for example, are particularly concerned about their security as a result of Russia's ongoing aggression. And there were also some suggestions by Europeans that they should consider developing some sort of drone wall along the entire EU's eastern flank. I would say most controversial yet effective would be NATO to consider extending its air defense deeper into the western Ukraine. This obviously, the so-called imposition of no-fly zone, has been argued widely in 2022, but the argument against it was that this would further escalate the conflict. However, as we see, Russia is not shying away to escalate the conflict even further, and this incident is a clear demonstration of it. So this could be a demonstration from the NATO side that NATO is united, and they won't fall short of responding effectively, and they would push back on Russia's aggressive attempts to violate the NATO airspace.
But not yet. So do you think, and we've heard it actually, for example, from Germany's deputy defense minister, that it would actually be tricky for the allies to supply Poland with, advanced system like Patriots? Would that be a deterrent? And how likely is it to have the support of Donald Trump?
Well, I think the Donald Trump question is the main elephant in the room, because we have seen he posted quite ambiguous comments on his social media. We don't really know what this means, so we don't know what would be the US's response, whether this would change the tone for Donald Trump in terms of pushing back and imposing further sanctions and becoming tougher on Russia, and maybe leaving behind the illusion that Putin is committed to achieving some progress in this peace negotiations. So this remains the main question, I would argue. And the second question is the practical side of to what extent and how effectively and how quickly NATO can provide further support to Poland, and not just only Poland, all the allies on the Eastern Front, because they are just as exposed to Russian aggression as Poland is. And especially we need to take into consideration that Zapad military drills are about to kick off between Russia and Belarus. And Russia is very much known for using these military drills for potential military preparations for another escalation.
Yeah. Natia, thanks so much for joining us. Natia Siskoria, their International Security Associate Fellow at RUSI, and of course we'll be following this story very, very closely. Now, some other stories making news, and Sébastien Lecornu has taken over as French Prime Minister, pledging big changes as he tries to engage opposition parties in reining in the country's debt. Lecornu, who served as Defense Minister in the previous cabinet, became the country's 5th Prime Minister in 2 years. Mexico plans to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. Now, the Mexican economy minister says the levies are meant to protect local industry, as his country has become the top destination for Chinese cars. The move aligns Mexico more closely to U.S. trade policies, with President Claudia Sheinbaum preparing for talks over North America's free trade deal. And the buy now, pay later firm founded in Sweden rose 15% in its trading debut. That's after the company and some of its backers raised $1.37 billion in an initial public offering that signals the market for new listings has room to run. Oracle co-founder Larry Ellison also briefly surpassed Elon Musk to become the world's richest person. That's after a 36% jump in Oracle shares added $89 billion to his wealth, with the increase lifted his total net worth to more than $383 billion. This is according to Bloomberg Billionaire Index. It's the biggest one-day increase ever recorded. Also, don't forget the next episode of Bloomberg Tech Europe tomorrow with Tom McKenzie, featuring an exclusive interview with Demis Hassabis, the chief executive of Isomorphic Labs and Google DeepMind. Up next, Bloomberg Brief, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Countdown to CPI. Stocks steady after hitting records ahead of a key inflation data print. 3 rate cuts almost fully priced in now for this year. From tariff impacts to competition with China, don't miss our exclusive interview with UBS CEO Sergio Ermotti. And the search continues. A manhunt underway after the FBI releases someone who had been a person of interest in the killing of Trump ally Charlie Kirk. So let's get to those markets then. Futures are pointed higher, a little halo effect after Oracle surged 36% in yesterday's trading. Of course, Oracle not in the NASDAQ nor the NASDAQ 100, but that index did eke out the most fractional of gains to a record thanks to the halo effect that Oracle had. As we're saying, pricing now indicates that we're expecting almost 3, if not 3, cuts this year. Investors clearly pricing for the Fed to spur growth as opposed to deny inflation, if you like. So S&P futures, NASDAQ futures, all higher. Bloomberg dollar index just fractionally higher as well. If you look at yields, we're seeing a slight undoing of that curve steepening once again today. The long end just a moment ago was below 470, and we have the 2-year yield just a little bit higher, close to 355 as well. Of course, we're all just waiting for that 8:30 CPI print. I do want to also acknowledge that today is September 11th. It is the 24th anniversary of 9/11. We will be remembering all day long, as well as along with the exchanges, observing those moments of silence. All right, let's get to London now to look at some individual market movers. Here's Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check on Oracle, because that 36% surge of yesterday's session doesn't stop there, adding another 1.5% so far in pre-market trade. The surge yesterday was enough to catapult the co-founder, Larry Ellison, to be the world's richest man for a short amount of time, but one of the biggest jumps in wealth recorded from the Bloomberg Rich Index. The Wall Street Journal also reported yesterday that one of those splashy cloud agreements that it had signed was with OpenAI, totaling $300 billion, one of the largest signed in the cloud sphere. Moving on to Klarna, the IPO yesterday that surged as much as 43%. We are seeing it fall into the red in pre-market trade, just down less than 1%. This is the buy now, pay later company that had a splashy IPO yesterday, one of the biggest of the year, and valued the company at $17 billion. Perhaps a few days of good trading for this stock could show that the IPO market does have more room to run in the U.S. Lastly, let's end with the retail frenzy. Open Door Technologies absolutely surging in pre-market, up 28%. This comes after the co-founders will return to the board, and the company is hiring a new CEO taken from Shopify. But this stock really did light off a retail frenzy last time it moved this much. That's Open Door up 28%. Vonnie.
All right, Valerie, thank you so much, Valerie Teitel there. And later in the show, we'll push ahead to CPI with Seema Shah of Principal Asset Management. So, cooler than expected PPI, further cementing a Fed rate cut next week. Investors now turn to CPI, coming out, of course, at 8:30 a.m. Eastern Time. For more, let's bring in Ven Ram, cross-asset strategist for Bloomberg News. So, Ven, what exactly is at stake then in today's data?
Morning, Moni. I think there's plenty at stake. Very specifically, the Fed's dot plot is at stake. In June, if you remember, the Fed had outlined 2 rate cuts this year. Now the markets are leaning, as you were saying earlier, towards 3 rate cuts. They're not fully factored in 3 rate cuts yet, mind you. They're thinking 2 and a bit more. So I think that today's print is going to be crucial for that particular calculus. If the CPI print confirms what we got with the PPI print yesterday of prices actually falling, or even a slower rate of inflation than the markets have penciled in, I think that will cement hopes for 3 rate cuts from here. And that will mean that the Fed will be on a par with what the Taylor rule rate is saying, about 3.75 thereabouts, or perhaps even lower, depending on the inflation print that we get today.
Then, what if it doesn't? Each data point, it seems like, has been very confusing and has surprised the market. What if we get a surprise and hotter than expected inflation today?
Well, I think that's a great question. I think that if we get, say, a 3% inflation print, that will probably pull the market back from leaning towards 3 rate cuts. But the big picture in the economy, Vonnie, is one of a softening economy. Whether you look at the ISM manufacturing report, whether you look at the Jolts market report, whether you look at the non-farm payrolls report, the momentum definitely has shifted to a lower gear. And I think that will keep the Fed comfortable with 2 rate cuts that it had already penciled in based on the metrics that they had estimated earlier in the year. So I don't think we are going to be in a position where all the Fed rate cuts are derailed. It's specifically the third one is in question. And if the number points to an acceleration, as you say, then the third rate cut will be priced out of the market.
Then gold has been on a stunning run this year, but if in fact we're sort of getting some answers to our questions now and the rate cutting cycle begins, is that rise sustainable?
Well, I think that for the rate cuts, for the reason of further rate cuts and possibly a very dovish Fed chair succeeding Powell, I think that gold has got that momentum, and it is overvalued. It is overvalued specifically by 23% on my model that takes into account inflation, the dollar's value, and central bank purchases. Now, if you look at the central bank purchases and inflation, I think that gold has probably got the momentum to take it towards 3.8, 3.9 thereabouts. But I think some of the calls on gold have been very bullish, and some of it probably too outlandish in my opinion. $5,000. I don't think it's going to get there anytime soon. Over the longer term, very long term, that's possible, of course. But in the short term, I think that it may top out around 3.8, 3.9.
All right, we're topping 3,600 today. Venram, thank you so much. Over in Europe, meanwhile, the ECB widely expected to leave interest rates on hold at its meeting today. Bloomberg's Lizzie Burden joins us now from Frankfurt. So, Lizzie, a hold obviously on the cards. What exactly is the ECB weighing up? Has it achieved that soft landing?
Well, maybe, Vonnie, and it looks like that US CPI print that you were discussing with Ven could do more to move the euro than anything that happens in Frankfurt today, because it drops right between the decision and the press conference. And as you say, a hold is what is expected because, according to President Lagarde, the euro area economy is in a good place. We've got inflation at 2.1%. They've just revised Q2 GDP up. You've got unemployment at a historic low. And so it's quietened the concerns of the doves on the Governing Council, and economists don't see any more cuts. In fact, markets see a 1 in 3 chance, less than, of another cut this year. We may be actually seeing the next move being a hike. Let's see if Christine Lagarde gives any hints on that at the press conference. I expect she will be tight-lipped. But we could look to the forecasts for clues here, because this is the first set of forecasts since that US-EU trade deal was reached. And 15% tariffs are the midpoint between the base scenario and the severe scenario that they had set out. Yes, having a trade deal, Vonnie, alleviates some of the uncertainty, but nonetheless, tariffs are likely to weigh on demand. So you could see the forecasts revised up in the short term, but down over the longer term. Now, there may be also some fireworks in the press conference, because you'll know that President Lagarde was once the French finance minister, so I'm sure she'll be asked, would the ECB intervene if that oats bunch spread were to widen on the French political risk. I am sure she will say she doesn't want to wade into domestic politics. It's for member states to be fiscally responsible. But you'll recall she did once say it isn't the ECB's job to close spreads. But that conversation could come up again by talking about the euro. We know that it has barely budged off the French political risks, but it's been climbing towards $1.20 on the potential divergence between the Fed and the ECB, and that, of course, weighs on the disinflationary side of the ECB's ledger.
Lizzie Burton in Frankfurt, thank you so much. Turning to trade now, Mexico planning to impose as much as a 50% tariff on cars and other Chinese products to align more with US protectionism. For more, let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. So Brendan, the latest on these potential duties, is it just China, just cars?
Well, it's going to be more than just China. It's going to be a host of other countries that Mexico is going to impose this tariff on. This is really the Mexican government thinking ahead to 2026 when there's going to be a renegotiation of the USMCA agreement, and they are apparently trying to align themselves with what Canada and the US do with Chinese-made vehicles, and that's basically slap a prohibitive tariff on them and prevent those products from entering their markets. So the Canada, the U.S., and Mexico, those auto supply chains are very much that stretch across the three economies, and that Mexico doesn't want to be seen as being a backdoor for low-priced Chinese EVs that compete with those made north of the border. So this is just another example of how protectionism kind of feeds on itself, particularly among trading partners like Mexico, the U.S., and Canada.
Brendan, what exactly is going on with India? Officials there say a team of U.S. defense diplomats and Boeing executives are visiting.
Yeah, they're trying to keep that trade negotiation for an agreement on track. And one of the big issues for the U.S. is that India buys a lot of defense military gear from Russia, and the U.S. wants to sell more of that to India. It's been a topic of this conversations for months now, and so it would appear that as part of those negotiations, India will make some pledges to purchase American-made items, and some of those could be defense products, and that's. But there's a long way to go yet. President Trump and Modi have had a falling out of late. They sort of patched things up in recent days, but the two countries are really trying to hold this fragile ceasefire in the rhetoric together and try to get closer to a trade agreement that for a while there was at the lead of the pack, and now it's up in the air.
Well, and then moving to a third trade theater, if you like, China and the U.S. top envoys, including Defense Secretary Hegseth, held talks yesterday. Does that have any read-through to trade?
Yeah, exactly. I mean, the big goal here is for President Trump. It's a summit with his counterpart in China, President Xi, and the U.S. and China have this series of talks that they're meeting about every 3 months. They're trying to minimize the amount of disruption between the two economies while they de-risk from each other, and this is just one of those dialogues that have to happen for everything to line up for these two leaders to meet. There's some speculation it could happen before the end of the year, but we don't really know. There's still a lot to do diplomatically between now and then.
Brendan, thank you so much. That is Brendan Murray. Now back to the top story overnight. A manhunt still underway for the killer of Turning Point USA founder Charlie Kirk. Kirk was fatally shot during an event at a university in Utah. Kirk, an ally, of course, of President Donald Trump, who himself spoke yesterday after the incident.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
For more, we're joined by Bloomberg's Rosalind Matheson. Ros, how significant was Kirk to Trump? What might be the repercussions of Kirk's killing?
Well, he mattered quite a bit to Donald Trump. He was very loyal to Trump, even after 2020, and he repeated often Donald Trump's claims that the election was stolen. And arguably, when other Republicans edged away from Trump in those intervening years, and the sense that was Donald Trump not going to be able to mount a campaign for 2024, Kirk very much stood by him. And Donald Trump remembers that, and he mobilized the machinery of his organization as it grew. This is an organization that wasn't just about college campuses. It was also about coming into high schools and really energizing young people in America towards conservative values and conservative politics. And he had a lot of success there. He had millions of followers on social media, a big podcast, and he was famous for his willingness to debate anybody, those who disagreed with me. And so not just going into the echo chamber of those who already agreed with his views. And you can see Donald Trump has praised him repeatedly and saying at a grassroots level, he feels that he really helped him get elected to some extent in 2024. Of course, you know, again, in this era, does having TV ads, newspaper ads for politics really work, or is it back at that grassroots level? And that's where Kirk really mattered to Donald Trump, and possibly, you know, would have mattered quite a lot too in the next round, which is the midterms that are coming up.
Roz, it's been, what, 12 hours now since the shooting. What do we know about what authorities know at this point?
Well, we know that authorities were looking at 2 people, and they say they did detain some people initially on suspicion of being involved, and those people have been released. They don't seem to have any link to what's happening. So right now what we know is they're still searching for the person who was behind this, for the shooter. And there's no sense of who that person was or what their motivation may have been. But you can see quickly, again, this is going to start to feed into the political discourse in the US. Donald Trump, you know, saying that the radical left, as he calls it, has demonized Kirk and his beliefs and demonized his views, and therefore created an environment potentially for something like this to happen. And so you can see this is only going to feed into an even more hardened discourse in the US going forward.
Roz Matheson, thank you so much for joining us. Now, on to other top stories trending on the terminal this morning. Alibaba is leading a fundraising spree among Chinese tech giants driven by soaring capital demands and AI competition. The company is seeking to raise about $3.2 billion in an offering of zero-coupon convertible notes that's set to be the year's biggest. Used car seller and subprime lender Tricolor has filed to liquidate in bankruptcy. It didn't give a reason for its collapse in its filing. U.S. prosecutors are also looking into allegations of fraud by the company. South Korea's president said a U.S. immigration raid that led to the detention of more than 300 South Korean workers has unsettled companies pouring billions into the United States. The workers were dispatched on short-term stays to install equipment and got caught up in a raid last week at a battery plant under construction in Georgia. The workers have been released and are scheduled to fly back to South Korea. Coming up, we hear exclusively from UBS CEO Sergio Ermotti on why shrinking the bank is not an option. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Wednesday, the Fed decides.
The real debate is going to be about the outlook.
The economy's slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now to a Bloomberg exclusive. UBS CEO Sergio Ermotti spoke on President Trump's tariffs impacts and in a wide-ranging interview on lots of other topics with Bloomberg's David Inglis. Let's have a listen.
It's fair to say that also this time probably there is an exaggeration of the estimation, but is going faster than what we saw in the past. But I'm pretty convinced that we are still underestimating the impact it will have over the long term. I think that for us is all about really preparing for the future. The biggest focus we have right now is how to make our processes more efficient on the back end, but also how can we help our client advisors serving their clients in a more effective and efficient way, our analysts to be more responsive to market changes. And, you know, one point is very important. Technology will help humans being better. And in banking, we will continue to see the emotional part, the EQ part of the equation playing also a very important role.
You know, the bank has been around through many cycles. I want to get your sense of this current macro environment. I mean, we went into this year with some expectations around how the macro environment would change. And then we had this flurry of tariffs and this back and forth, and now questions around how much the Fed can, in fact, lower interest rates. What's your sense of the global economy, and where do you think we will be in 6 months' time? Are we going to be better off or worse off?
Well, look, you know, the issue is that I don't think we have seen really the true impact of tariffs playing out in the economies. Of course, when you look at Asia and China in particular, it's fairly robust. You know, 5%, you know, comfortably about 5% GDP is quite a strong momentum. And of course, also China may be impacted by high tariffs, but on the current assumptions, around 40%, considering also that the weighting of tariffs for exporter has changed. You know, in 2017 was probably around 20% of the exports were going to the U.S. Now we are closer to 14%. Of course, when you look at machinery, autos, and technology, there is between 40 and 80%. But you know what's going on, for example, in this region, diversification. It's a very important topic. So you see Asian becoming much more, you know, developing more into a diversified play. Same is going on for you know in Europe. The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs.
When you speak to your big corporate clients, do you get a sense that people are more conservative still in terms of their assumptions, their CapEx spending, and just their broad expectations of how things will play out?
Well, I think that there is still a level of uncertainty, although if you look at the world seems to be divided into two, the more traditional, let's call it, economy, and the one that is AI, technology-driven. There is a clear boom and prospects for growth. We see it here in Hong Kong with the booming IPO market. You know, this is something that we saw only in the best times.
Right.
And But in general, there is a constructive momentum, but the jury's out because the complexity is not only the economics, it's also the very complex geopolitical environment. It's keeping all of us very focused on making sure that we are not becoming complacent.
Right, and there's this renewed, let's put it, a healthy competition coming from some of your Chinese peers in the industry. Do you get a sense that the competition now is a bit more fierce, and how are you prepared to respond to all? How is UBS prepared to respond to this new regime?
Well, I don't remember in my career times in which competition wasn't fierce, look, I think that it's good to see that also Chinese securities firms and banks are broadening up their capabilities. We see us as a complementary player in that sense. So we are helping international investors that wants to invest in China and in Asia, and also the other way around. And this is very complementary with the rest of the industry and the competitive landscape.
That was our exclusive interview with UBS CEO Sergio Ermotti. Now let's take a look at where we stand markets-wise as we head towards the CPI print, also the ECB decision and news conference from President Christine Lagarde. Now we are seeing a positive inflection in futures, S&P futures there, as you can see in the green. The Nasdaq 100, it should be mentioned, did fractionally eke out a record yesterday. Of course, Oracle's 36% rise in the session helped things. Not that Oracle is a member of the Nasdaq, but at the same time, that halo effect was definitely in place. Now, as you can see, the markets are repricing to some extent after the PPI data yesterday showed perhaps more benign inflation for consumers, if not for producers and manufacturers, margins getting squeezed. But you are seeing the potential for a third rate cut this year now being priced in. Gold futures also coming off their high, down a good 0.7% right there. Still above 3,600, as you can see, though. And the 10-year yield there at 4.05, a tiny, tiny bit of curve flattening today. I do want to point out as well, European yields. Look at that French 10-year and Italian 10-year within a half basis point of each other. That German 10-year yield to 66. Time now for your front page news. And on the front page of major U.S. newspapers, the fatal shooting of conservative activist Charlie Kirk. The founder of Turning Point USA played a central role in organizing young voters and giving shape to the pro-Trump agenda. Charlie had just taken the stage at an event at Utah Valley University when he was shot in the neck. A search still underway for the killer. President Trump issued a social media post announcing Kirk's death. He called for flags to be lowered to half staff in honor of what he called a truly great American patriot. Former Democratic presidents Joe Biden and Barack Obama denounced the violence and offered sympathies to his family. Kirk was 31 years old and a married father of 2. This is Bloomberg.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, We are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Countdown to CPI. Stocks steady after hitting record highs ahead of a key inflation print. 3 rate cuts now almost fully priced in for this year. From deal flows to consumer resilience, don't miss our exclusive interview with Citi CEO Jane Fraser. And the search continues. A manhunt underway after the FBI releases someone who had been a person of interest in the killing of Trump ally Charlie Kirk. So let's take a look at those markets now. Futures pointing to slight gains at the open. Of course, the halo effect of Oracle's 36% rise impacting markets no doubt today too. Also perhaps the expectation for a more benign CPI print potentially after yesterday's PPI data yesterday. So again, we have Russell 2000 futures down 0.1%. However, the Russell just the laggard once again. Not happening with the dollar index, not too busy today. We've got a lot of events, a lot of catalysts coming up in the 8 o'clock hour, but we do see a tiny little bit of curve flattening again today with that 30-year yield below 470. That 2-year yield, though, still at 355. Let's get to some individual stocks to watch now over in London. Here's Valerie Titel. Valerie.
Good morning, Ivani. Let's start with a check on Oracle. After its 36% surge in the session yesterday, it is trading higher in pre-market, up another 1.5% for this database company. The Wall Street Journal reporting that one of the splashy customer arrangements it had made was with OpenAI, a $300 billion deal, Ivani, over the next 5 years, promising computing power equal to 2 times the output of the Hoover Dam. Let's move on to IPO action with Klarna, one of the biggest IPOs of the year, and those shares are trading in the red, down 1.8%. They are trading above their IPO price of $40 a share that valued the company at $17 billion. There was a frenzy yesterday in this share. Vonnie, it surged as much as 43%, closing up 15% by the end of the session for this buy now, pay later company. Lastly, let's check on Opendoor. This is the stock that ignited a meme stock frenzy earlier this year, up 27, nearly 28%. They named their founders to return to the board and named a new CEO that they are taking from Shopify. Bonnie.
Valerie, thank you so much. Valerie Titel there in London. So we're just 3 hours away now from CPI after a weaker than expected PPI report underpinning Fed rate cut hopes for next week. Joining us now is Seema Shah, Chief Global Strategist at Principal. Seema, what did you make of the PPI data? Because I know that you had thought that perhaps the inflation ogre wasn't exactly slayed just yet.
Hi. Yeah, I think the PPI print, it was an interesting one. If anything to us, though, it reinforced the notion that maybe rate cuts are certainly required. What you saw from the data just suggested that there is more, producers, retailers are having to eat some of those margins. Now, profit margins have been really, really strong, so it's not a concern at this point. But if you're seeing that pressure, then certainly there is that additional need for the Fed to cut. And of course, if it's unlikely to be reaching through to the PCE numbers, then there's very little to stop the Fed from cutting rates. But of course, we have to see what the CPI print holds today.
And also, it's not just really a question anymore of cutting by 25 basis points. It's whether the Fed decides to cut more and what kind of language comes out of next week's meeting to direct the market forward guidance, if you like. So I'm curious if you think that the Fed thinks it needs to do more than just give us, you know, a plain vanilla 25 cut.
I think it would be quite unusual for it to cut by 50 basis points. Typically, you only see that kind of move in something of an emergency situation when recession indicators are really flagging. We're not seeing that. Of course, the labour market data has been slowing. But if you look at the breadth of all the other economic activity indicators, it does suggest, yes, a slowing economy, but certainly nothing which is approaching recession. I think what we're more likely to see, particularly given that the inflation picture over the next 6 months is still quite cloudy, is that the Fed could indicate that we could see a sequence of cuts, certainly from our perspective. 3 cuts this year, September, October, and December is the most likely scenario.
You say inflation calm is unlikely to last. How does that manifest in markets, particularly if we get a hotter print today?
Well, I think the hurdle for a rate cut next week is very, very high. So even if you get a hot inflation print, it's probably not going to take that off the table. But I think from an investment perspective, we have to have some realism that the market is pricing in a lot of good news. I think for the next 3 months we could be okay, but at some point, the impact of tariffs is likely to start showing through in the data, particularly inflation data. The key thing for investors is going to be seeing, does that leak through to inflation expectations, in which case we could see a more challenging moment for the Fed. At the moment, though, given that there is a slowdown in the labour market, any kind of second round effects should be quite tame. But again, you know, this is very much up in the air in terms of trying to understand how producers, how importers are going to be responding to the tariffs. I don't think anyone has a very, very clear idea of how that's going to go.
Yeah, and to that end, Seema, why has the long end come down so much? So, you know, I get that the curve, you know, has lowered, but the long end below 470 seems just a little bit optimistic, no? Given all the other risks that were out there before we got this PPI data, including things like Fed independence, the fiscal situation, the potential for a shutdown.
Yeah, I would completely agree. I mean, clearly the market is responding to the fact that there is a lot of expectation for Fed cuts over the next, not just the next 3 months, but certainly over the next 12 months, even 18 months. I think that's what's pressuring that long end. But you're absolutely right. Those pressures, those additional pressures of fiscal concerns, potential longer-term inflation worries, and then, of course, Fed independence, those things are likely to keep coming back to pester the market. But right now, the focus is on rate cuts. I don't think the fiscal concerns are disappearing anytime soon, and we also have to watch what's going on globally. If there continue to be worries in Japan, in the UK, in France, well, you could see that percolating and then adding to some pressures in the US.
Seema, I'm curious if you think that this AI rally that's been boosted by the last couple of earnings reports can continue. I know we ask this question constantly, but we're right back at our highs for most of, you know, the AI-related stocks, or very close to them at least.
Yeah, we continue to have a positive view of these big tech companies. I mean, look, valuations, they are, of course, quite frothy, but they do continue to deliver on earnings. So, you know, from our perspective, this is a long-term trade for investors. There could be certainly some volatility around this, some concerns creeping in here and there. But ultimately, particularly if you're going into an economic slowdown, what investors really want are those companies with this strong balance sheet, the positive cash flow, pricing power, kind of reduced competitiveness. Those are all things that these big tech companies are presenting at this point. So we continue to like that, but we do acknowledge that there could be some volatility as you continue to see maybe some of the earnings numbers not displaying as much strength as we've had in the last 2 or 3 years.
Seema, we have to leave it there. Thank you so much. Seema Shah of Principal Asset Management. Now, let's get an update on the headlines overnight. Authorities still searching for the killer of prominent conservative Charlie Kirk, who was shot dead during an event at Utah University. President Trump spoke yesterday after the killing of Kirk, who Trump counted as an ally.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
For more, we're joined now by Bloomberg's Rosalind Matheson. Ros, what can you tell us about the latest in the search?
Well, as we were saying earlier, we know that they initially did detain someone who was later released, and the latest from the authorities is that, a suspect, the perpetrator of this, is still at large, and so we don't know anything about them, obviously, their background, their motivation or whatnot. It does seem to be, from what the authorities are saying, quite a professionally carried out operation, though. And obviously, in the backdrop of all of that is the question of, Kirk's role very much within the Republican machinery, someone who was really an accelerator for the Republican Party, for conservative views and politics, by energizing young people, both college students and even school students. And his business really, his group really expanded over the years. Millions of followers on social media, podcasts, lots of chapters on campuses, and his frequent appearances there. And so really an important part of the machinery for Donald Trump into his election recently, and also obviously coming into midterm elections in the US. And so there's a lot we don't know about what was behind this attack. You heard Donald Trump's comments a minute ago, saying that he feels that Kirk was demonized by what he calls the radical left. But we are in an environment as a whole in the US where discourse has gotten a lot harder, it's gotten a lot more complicated, and you have very strong views on all sides of the coin.
Roz, thank you so much for joining us. That is Roz Matheson there. Now, two other top stories trending on the terminal this morning. Alibaba is leading a fundraising spree among Chinese tech giants, driven by soaring capital demands and AI competition. The company is seeking to raise about $3.2 billion in an offering of zero-coupon convertible notes that's set to be the year's biggest. Used car seller and subprime lender Tricolor has filed to liquidate in bankruptcy. Didn't give a reason for its collapse in its filing. U.S. prosecutors are also looking to allegations of fraud by that company. South Korea's president said a U.S. immigration raid that led to the detention of more than 300 South Korean workers has unsettled companies pouring billions into the United States. The workers were dispatched on short-term stays to install equipment and got caught up in a raid last week at a battery plant under construction in Georgia. The workers have been released and are scheduled to fly back to South Korea. Coming up, we'll bring you our exclusive conversation with Citi CEO Jane Fraser. That's next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Okay.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Talks ongoing between Washington and Beijing. Defense Secretary Pete Hegseth's call with his Chinese counterpart potentially paving the way for a Trump-Xi meeting. For more, let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. So, Brendan, what do we know about these particular talks between the defense chiefs?
Yeah, I mean, this looks like one more step in the direction of a summit in coming months between President Trump and President Xi. A lot of diplomatic discussions have to take place, and both sides have to agree on the positions that each country is taking, especially when it comes to the defense issues around Taiwan and the naval movements in the South China Sea. So a lot of these issues, China will want to hear the U.S.'s perspective on, and vice versa. So this is laying the groundwork for something that Trump has wanted for months now, and that is he's already got the invitation to Beijing. But the actual summit date itself has not been agreed upon. So what we're seeing is the sort of diplomatic dance, if you will, to make sure that an eventual summit has all the elements, particularly that China, as the host of it, would want to put on display for the world.
And of course, there is an opportunity coming next month as well, right? The president could potentially sort of bump into Xi.
Yeah, exactly. There's a regional development meeting going on in Korea, I believe, where that could potentially happen. President Trump would likely make other stops in Asia if that were the case. So none of that has been publicly disclosed, but that's what the speculation is, that the president would go on to a place like Japan or some other allies and show that the U.S. is engaging with some of these big trading partners.
Let's move now to the report that Mexico is planning some tariffs on China and also some other Asian nations. What do we know about that, and whether it's to placate the United States in any way?
Well, Mexico's planning to put a big 50% tariff on Chinese-made vehicles, particularly electric vehicles. Those have been flooding into Mexico in recent years because they are blocked in other places like Canada and the U.S. and the European Union. So Mexico has been a big market for Chinese-made EVs like BYDs, and now with the USMCA renegotiation talks kicking off over the next several months, Mexico wants to be on the right side of President Trump on this, and not to be seen as allowing Chinese, very low-priced Chinese-made vehicles competing with American vehicles that are essentially built with supply chains that stretch from Canada across the U.S. and into Mexico.
Brendan, thank you so much. Brendan Murray covers all things trade for us. And I do want to mention a headline crossing the Bloomberg just a moment ago. Qatar will host an emergency Arab-Islamic summit on Israel's attack. Once again, Qatar has decided to host an emergency Arab-Islamic summit on Israel's attack. Now to a Bloomberg exclusive. Citi CEO Jane Fraser spoke with Bloomberg's Jumana Bersecci on her outlook for the U.S. economy. Have a listen.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing, and they work together as a package. I think the most important piece for a corporate: clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about.
Yeah.
And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
So Citi increasing, global bank, obviously establishing here, your presence over here as well. But at the same time, we talk about multiple geopolitical shocks. At the top of the show, we were speaking about the latest Russian incursion into Poland. We talk about geopolitical risk over here. We talk about tensions between U.S. and China. As a bank, how do you navigate all of those potential geopolitical sensitivities and the barriers that are going up around the world?
We're doing business in about 160 countries around the world. We have local banking licensed people on the ground in almost 100. And we've been in many of these countries for a very, very long time. So this isn't classic suitcase bankers fly in, fly out. There's a really deep knowledge of what's going on. And a lot of the services we provide are what help the economies and the companies do business every single day. So for us, there is a mission to make sure that we are operating with resiliency and with rigor to support our clients. And we tend to move activity around the world as clients ebb and flow in different geographies. So the Middle East is probably on a rip for the next decade or so in terms of how much investment and new industries, new clients coming in. Other areas will probably see some more diminished. Our people are globally minded. They move around the world as to where opportunities are. And it's a moment where Citi shines, where there is volatility. The clients need us.
Well, Middle East, a rip on the next decade. That's a good headline, Jane. I do want to bring it back to an article that Bloomberg published a couple of weeks ago that Citi had hired an external counsel to look into some allegations that were made against your global head of wealth, Andy Sieg. You've not commented yet on the outcome of these investigations. Are you satisfied with the outcome?
Look, I gave Andy a very clear mandate when he joined Citi, which was to transform our wealth business. And I'm very pleased with what he, the team, and the business have achieved in terms of transforming it. If you look at our investment revenues really since the beginning of the year, they've really outperformed. They've been very strong. We have a terrific team, and I'm very comfortable with the direction that we're going.
Citi CEO Jane Fraser is speaking exclusively to Bloomberg's Jumana Bersetti. Some breaking news now. The UK ambassador to the United States, Peter Mandelson, will leave his role effective immediately. This is according to a minister, Stephen Doughty, who was speaking in the House of Commons. Once again, UK ambassador to the United States, Peter Mandelson, is going to leave his role with immediate effect. This, of course, after a scandal involving Peter Mandelson and Jeffrey Epstein and the communication between them. Once again, the US ambassador from the UK, Peter Mandelson, is leaving his role with immediate effect. Coming up, the ECB decision and CPI on deck will get you all set up for your trading day. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today, and boy, are there a lot of catalysts, particularly the 8 a.m. hour. ECB rate decision coming at 8:15 Eastern Time. That, of course, followed 30 minutes later by President Lagarde's news conference, 8:45 Eastern. But in the middle, it's that all-important U.S. CPI print. That's at 8:30 Eastern. Plus, we get initial jobless claims data. We'll be watching those very closely, too. And then some more quarterly reports. We get Kroger before the bell and Adobe after the market close. Let's look at some micro movers now. Open Door co-founders Keith Raboy and Eric Wu will rejoin the board, and naming Shopify's Kaz Najatian as CEO. Oracle extending gains after its eye-watering surge in yesterday's session, another 1%. Adobe rising ahead of earnings after the market close, up 2.4% there. So let's take a look at the overall picture because, you know, there's a lot of good news to be priced in out there, and we see futures doing just that. In fact, the NASDAQ 100 just notched a record very, very slightly yesterday. Oracle also helping things out, not the NASDAQ, it's not a component, but it did have a halo effect on all of the AI stocks. We have the euro just slightly weaker versus the US dollar. A lot of catalysts there, of course, not much happening for the dollar before the CPI print, but we do have the press conference at the ECB expected to stay on hold, in fact. Let's take a look at yields because not that much movement, but it is a little bit instructive that we're seeing the 30-year yield below 470, so tiny little bit of a curve flattening. I mean, very, you know, on the margin, but still, it's worth noting. And we do still have the 2-year yield at 354.36. Traders trying to price in a third rate decrease this year. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We definitely see more lingering inflation.
That reaction function is definitely more tilted towards the weakness in the labor market as opposed to potential upside, risks from inflation.
I don't think the Fed really set us up for 50.
Given the inflation backdrop, it'll be pretty much premature to start cutting aggressively at this point.
We still have a lot of additional inflation from tariffs in front of us.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, it's CPI day. Investors are positioning for another soft inflation print as 3 days of gains sends equities to fresh record highs. President Trump is still pushing for the Federal Reserve to go big. The data drops at 8:30 Eastern Time.
And we have lowered the bar so much that people are looking at CPI that probably is going to come in yet again above that 2%, above 3%, possibly increasing from last month on an annualized basis. And yet people are talking about, well, it's cooling down, and so everything is great to cut rates. It highlights how everyone is focusing on the labor market and focusing on looking through inflation, which raises the question, what would it take for inflation to get the market's attention?
Muted tariff pass-through so far. Muted so far. Does that open the door for this Fed to be a little bit more aggressive next week?
It sounds like it, especially when the Federal Reserve Chairman, Jay Powell, said at Jackson Hole that it's going to be one-time price adjustments, not at the same time, which means basically we can look through any sort of hot CPI print. Now, on the heels of the PPI, President of the United States is calling for 50 without actually saying 50. He said yesterday, no inflation too late, aka Jay Powell, must lower the rate big right now. What does big mean? He's not calling for 25, he's calling for a jumbo rate cut.
50 and then again and again and again and maybe well into 2026 with comments like this from the C-suite on Wall Street. James Fraser speaking to Jemana Besechi over in Dubai, saying our client base now is really starting to act with confidence. Put that together with the language coming from David Solomon over at Goldman Sachs, who doesn't look at this market and see any restrictiveness from this Federal Reserve whatsoever.
And when you take a look at profitability of S&P 500 companies and the fact that they've increased their EPS projections in double-digit levels, the fact that Jim Zelter yesterday from Apollo was on and said that he still sees that inflationary pressure coming back. You put this together, you've asked the question, and I think it's an important one, is the Fed cutting to spur some sort of reacceleration or cutting into a reacceleration that could allow inflation to be stickier? Watch for the long end of the yield curve. Right now, it's pretty quiet, so not exactly expressing those concerns.
Jane Fraser said that their client base is now starting to act with confidence. She talked about the cloud that is now basically evaporating in terms of policy uncertainty. Said corporates are now on the front foot because they have policy clarity when it comes to tax, when it comes to tariffs, and also this welcoming of what is going on in Washington in terms of deregulation.
The data, 8:30 Eastern Time, futures this morning firmer by 1/10% on the S&P 500. Coming up this hour, we'll catch up with Steve Chevron of Federated with stocks at all-time highs, Valdemar Zlezak of KKR on Oracle's monster rally, and Joe Davis of Vanguard counting us down to CPI data. We begin this hour with stocks sitting at record highs ahead of today's inflation print. Steve Chevron of Federated writing the following: while everyone is looking for a mini recession to come, we think it already happened. Weak data in the rearview mirror is primarily how the Fed views the world and will lead them to a cut next week. Steve, welcome to the program, sir, and good morning to you. Do you believe then the worst of the data is behind us?
I think it is. I mean, I think the data that we've been getting is showing it's new information about old news. We know the earlier part of this year was weaker, the immediate aftermath of Liberation Day, John. We saw it. We had a negative GDP print. We had what I think once they take the revisions and break them down into monthly numbers will show a string of negative jobs months. We know that earnings estimates fell. We know that confidence fell. And we also know that that's reversing itself. We know that confidence has since rebounded. So have earnings estimates. We see that the market's acting with early cycle. The Fed's looking in the rearview mirror. It's going to lead them to cut. We think they're going to do the right thing for the wrong reason. They need to cut because there are parts of the economy that have been in recession. Housing, autos, shipping, low and middle American consumers have been in that position. And so it is both true at the same time, in our view, that the economy is set to reaccelerate. And it is also true that it's appropriate to cut. And we've said all along that we think that 6 cuts between now and the end of next year is not only what is appropriate, but what is likely.
So, Steve, let's talk about market outcomes. The Federal Reserve is going to cut interest rates. As you're looking for a pickup in the U.S. economy, where do you want to place your bets in the market at the moment?
I think you've gotten a preview over the last month or so, right? I mean, you're starting to see early cyclicals start to perform, right? Whether it's some of the home builders, whether it's the banks, whether it's even some of the shipping companies, whether it's the consumer play. Again, remember, if you're a consumer that has debt, you have been under pressure for high rates for 2 or 3 years here. You get a little bit of relief, and that's going to help. And then also look at small caps. You saw small caps outperform by 6.5% last month. That really is the nexus between rate sensitivity and cyclicality. And we think the economy is going to turn up a bit, and we think rates are going to come down.
You said we've gotten a preview over the past couple of weeks, and I think that we have, and it's come in the form of gold, reaching all-time highs. And it raises the question, has the U.S. tacitly accepted a 3% inflation target by cutting rates into what seems like a persistently elevated inflation backdrop with a lot of concerns about it remaining in place for the next couple of months?
No, I don't think so, Lisa. Yes, headline inflation numbers are somewhere between 2.5% and 3% right now. But again, and this is the difference between looking through the windshield and, the cracked rear view mirror that I think the Fed has gotten itself caught into. And if you look in the windshield, here's what you see. You see an economy that has added at best 35,000 jobs on average over the next 3 months. That is not a recipe for wage inflation. Services are 60% of CPI. You have home prices that are negative 4 months in a row nationally. That's not common. That's not common. And again, that's a third of CPI. So, all right, I get it. The inflation rate over the last 12 months is between 2.5% and 3%. But our job as professional investors or market forecasters or economists or policymakers is to look at where that's going. And if home prices are coming down and wage inflation or the ingredients for wage inflation are not there, then at some point you got to make the call that inflation is heading lower. If you wait for it to get to 2 before you start to remove restrictive policy, then you're going to find yourself very much behind the curve, and you're going to have a much deeper slowdown than you would otherwise have to have. We're not talking about getting the easy policy. We're talking about going from 200 basis points of restrictive policy down to something closer to neutral. I don't think that's accepting a 3% inflation target.
The picture that you're painting suggests that we could see bonds and stocks rally at the same time, that we could see even the long bonds rally if what the Fed is trying to do is not necessarily be behind the curve as much as they may already be. Is that what you're saying, that you could actually see another kind of Goldilocks scenario in the next 12 months?
I think that environment is more bullish for stocks than it is for bonds, at least on the long end. I think, in our view, what is most likely to happen is, kind of 2-year yields are likely to come down to where the federal funds rate is headed. We think that's 3%. Now, if you want to argue and say it's 3.25 or 3.5, that's fine, but somewhere near neutral. So the 2-year yield, we think, has some real material downside. The 10-year yield at, essentially 4%, we think that's about where it belongs. In our view, a kind of 2.5% inflation rate, a 3% federal funds rate, with about, let's call it 100 basis points of term premium, is about right. So we think the long end of the curve has actually done most of its rallying. What we think you'll see instead is short bonds will rally. We think equities can continue to rally. But that long end, I think, probably has a little less opportunity.
Steve, we heard from Jane Fraser today, speaking to one of our colleagues, and talking about the fact that clients now have confidence because there's more clarity in Washington. When it comes to things like tariffs, that's actually being debated in the courts. What if IEEPA gets struck down? Will that upend how you feel about potentially where the market is right now?
Yeah, so one, our view is that it probably won't get struck down, particularly because the administration has made such a case about the national security implications. But, so that's our base case view. If they were struck down, I think the most apparent negative impact would be on the long end of the bond curve. Whether or not you like tariffs, that's up to you. But what's clear is that the tariff revenue is the offset to the one big beautiful bill in terms of revenue. If all of a sudden, $4 trillion of revenue over 10 years goes away, that's going to push long bond rates up. So again, it doesn't matter how we got here. From a bond market perspective, tariffs going away would be a negative, particularly on the long end of the curve. But remember, there are other remedies. And so I expect that what you would see if IEEPA was struck down, as an example, is that the administration would pivot to other authorities to at least kind of implement a 10 or 15% across the board tariff for some period of time. They would then move into sectoral tariffs. So I think if what you're waiting for is tariffs are going away, I don't think that's going to happen. I think this is a core tenet for the administration. They view it on national security grounds, and it might be messier, but they're going to be in place. And I think the level, which is really what the market is most interested in, is what's the overall level of this, has been established at 15%, and I think it would be recreated at something close to 15%. So is there uncertainty around tariffs? Sure. But is there the kind of uncertainty that existed in April that caused the economy to freeze? And I think that's behind us.
And looking forward, you note that next year there's the World Cup, there's a 250th anniversary. What kind of economic impact do you see from just those two events in 2026?
I think there's a lot of economic impact coming from a number of things, right? So first off, monetary easing likely starts next week. And we're not talking about 25 or 50. I really don't care about 20 or 50. What we're talking about is it 5 cuts or 6 cuts over the next 18 months. That's the bigger question. And it's somewhere in that range unless we get really surprised by the data. That's stimulative, or at least it's less restrictive. Then you have the stimulus of the one big beautiful bill that hits in January. We have not changed withholding tables so far, which means you're probably looking at bigger than expected tax return seasons. And back to school has been good so far in terms of spending. It's up 3.8%. So the consumer is holding in, but there's more stimulus to come in terms of tax returns next year. And then, you have these major economic events, and it does lead to tourism, and it does lead to infrastructure. And so, can you quantify it? At this point, it's probably premature. But when you start to take a look at the totality of monetary policy that's less restrictive, tax relief on both corporates and individuals, and then some of these other economic catalysts that can start to kick in, you get a picture of a 2016 that looks pretty robust, 2026 that looks pretty robust for the United States.
Hi, Steve. Appreciate the update. Steve Chevron there at Federated Hermes. Constructive on this equity market to address your point head on, cutting interest rates into a pickup in economic growth.
But one that's warranted. And that's what he sort of highlighted, and it's something we've been struggling with. This is a multi-cylinder economy that's quite complicated, and which aspect the Fed can potentially affect is the one that they need to. That, according to Steve Chevron.
Stocks are positive this morning by close to 0.2% on the S&P 500. The data about 2 hours and 18 minutes away. With an update on stories elsewhere with your Bloomberg Brief. Here's the latest with Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you and good morning. A search is underway for the killer of conservative activist Charlie Kirk. Kirk, the founder of Turning Point USA, was shot as he was speaking to an outdoor crowd at Utah Valley University. The 31-year-old was a close ally of President Trump, who posted about the incident on social media and ordered American flags to be lowered to half staff until Sunday. The Trump administration is appealing the ruling blocking the president from firing Fed Governor Lisa Cook. The government is asking an appeals court to overturn the ruling, which said that the president did not have cause to fire Cook under the Federal Reserve Act. Any ruling against Trump by the appeals court would likely be challenged quickly at the Supreme Court. Hundreds of South Korean workers detained in a Georgia raid will fly home this afternoon after the two countries' top diplomats met in Washington and agreed to resolve the dispute. President Donald Trump agreed to South Korean demands that the workers would not be handcuffed. According to Yonhap News, the U.S. will also consider a new visa category to prevent future problems. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate it. More from Bonnie in about 30 minutes' time. Up next on the programme, a manhunt underway.
I'm filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence.
Up next, we'll get you the latest with Bloomberg's Tyler Kendall from New York City this morning. Good morning.
Is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Busy morning coming up for financial markets. It starts with this at 8:15 Eastern Time, an ECB rate decision. Then later at 8:30 Eastern Time, 2 points of data for you. Jobless claims and US CPI, the main event later this morning. Going into that, your scores look like this. Equities at all-time highs on the S&P 500. 3-day winning streak. Equities firmer by 0.2%. In the bond market, yields just about unchanged on a 2-year this morning at 3.54. Let's take it down to Washington. Under surveillance this morning, a manhunt underway.
I am filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence. It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree.
So here's the latest this morning. Authorities expanding their search for the killer of conservative activist Charlie Kirk. The latest from the nation's capital is Bloomberg's Tyler Kendall. Hey, Tyler.
Hey, John, good morning. The suspect is still at large, and we know that the FBI is working closely with state and local law enforcement on the investigation. Officials say that around 12:20 p.m. Mountain Time yesterday, a single shot was fired from a building about 200 yards away from where Kirk was addressing this crowd at Utah Valley University. And officials say that the shot appears to have come from a rooftop. Closed-circuit surveillance footage shows a person dressed in dark clothing on that rooftop, and that person is believed to be the suspect. Other than that, no other details have really been released, including what type of weapon may have been used or whether or not it was recovered. Utah officials do say that they took 2 people into custody, but after questioning, they were released. About 3,000 people were in attendance at this event, alongside 6 local police officers and Kirk's own security detail. Utah's Governor Spencer Cox, in a statement, said that this was a targeted attack and called it a political assassination. Of course, Cook, a very prominent conservative activist and a very close ally of President Trump, who you heard just there. He was one of the first to confirm that Kirk had been killed. John, the president has ordered flags to half staff across the country until at least this weekend, September 14th.
Tyler Kendall in Washington, D.C. Tyler, thank you. Lisa, I think we were all gripped by these developments yesterday, just utterly heartbreaking.
It's devastating, especially for a democracy where people hearken back to the words attributed to Voltaire, you know, regardless of what you think about a person's beliefs, I defend your right. I defend to my death your right to say it. And why have we gotten so far away from that type of rhetoric and debate in this country? The political violence, deeply upsetting to us this morning.
And it's been pervasive in this country. This is a second summer of this. And what we should be seeing is what we are seeing is both sides coming out and condemning this. And it needs to be condemned to the sharpest degree, and there needs to be really a seismic shift, I think, in this country for political discourse.
There is a manhunt underway. Any developments this morning, of course, this morning, we'll share with you on this story. Let's get you the latest elsewhere in Washington, D.C. with Tobin Marcus of Wolf Research. Tobin, welcome to the program, sir. I want to talk about trade, of all things, if we can move on from such a delicate subject. Transshipping has been a massive focus for this administration. Now there are some signs that Mexico is falling into line. Tobin, what do you make of the latest?
Yeah, I mean, there's been talk about Mexico imposing tariffs on China as a way of securing more favorable tariff treatment from the U.S. going back to before Liberation Day, there was talk about the Fortress North America strategy and Mexico's possible cooperation with our efforts to pressure China on tariffs as a way of getting themselves better treatment. Thus far, that hasn't materialized, but it certainly makes sense that that's something that they're looking at. You know, I think there are reasons for them to be interested in that domestically, and we've seen the same thing on the European side as well. They have their own concerns about trade with China, even separate from their efforts to appease the U.S. So, you know, I think the developments there are encouraging about the long-term future of what USMCA renegotiation looks like, but we probably have a ways to go.
Well, where's Canada in all of this? Because we see Mexico taking action. We know the Treasury Secretary said he would welcome if Canada followed suit.
Yeah, there's been a little bit less concern. Like it's been a less intense focus on the Canadian side, just because that's been less the story. Sort of Mexico as a nearshoring destination, as a Chinese FDI destination, has been one of the sort of major narratives in response to the imposition of the original tariffs on China during Trump 1.0. So I think that has been an area of greater focus. But, you know, to your point, the administration has indicated we'd like to see similar action from the Canadians. That's been a little bit more fraught in general with their kind of retaliation against U.S. metals tariffs in the first instance this spring. But, you know, I think that if it's on the table for Mexico, it's probably going to end up being on the table for Canada as well.
Well, if Mexico is appeasing the White House with this move, what will they get back because of it?
So there's definitely still hope that they will get some relief from the metals tariffs. There's been talk for months about the possibility of getting some kind of quota system in place for steel as opposed to the current steel tariffs. We are net exporters of steel to Mexico, so I think there's reason to be hopeful there, although of course it has not come through yet. And then I think they're looking just to have USMCA preserved going forward as a concept. I think we've seen some commitment from the White House to the notion that USMCA should be seen as a regional competitive strategy, that this is something that we're invested in. The sort of modifications of the auto tariffs over time, for example, show some appreciation of the importance of those supply chains across North America, even as the U.S. tariff posture keeps shifting. So, I think they do still need to appease the U.S. for the sake of getting the USMCA renegotiation is next year in a good place, even if they're not getting massive immediate relief in the near term.
Tobin, do you get the sense that there's been a sort of rethink of tariffs on the global stage? I'm looking, for example, at Mexico's plans to raise tariffs by 50% on Chinese cars, steels, and textiles in order to get some sort of better treatment from the U.S. And then it shows, okay, this is also going to raise $3.8 billion for the Mexican government. How much of the revenue side of things playing more into the discussion internationally when they talk about potential tariffs in response to the U.S., maybe to placate the U.S., maybe to counter the U.S.?
I think for most other countries, the tariffs that they're contemplating aren't going to reach the level that they make the revenue sort of the linchpin of their fiscal situations. But obviously, we are seeing fiscal pressures across both developed and developing economies globally. So any little bit of revenue certainly will be seen as helpful for a lot of countries. But I think in the first instance, they are, looking at, on the one hand, mollifying the U.S., and on the other hand, kind of playing whack-a-mole with global trade flows. If you're pushing cheap Chinese exports out of the U.S., that creates sort of even more overcapacity problems on global markets, which has been driving a lot of the conversation on the European side.
Tobin, just quickly, do you think IEEPA is going to withstand the Supreme Court, or is it going to be struck down?
My base case is that the Supreme Court will reverse the two lower court rulings and uphold the tariffs under IEEPA. I think it's a close call for the Supreme Court. I'm at about a 40% chance that they strike it down, which I do think is significantly lower than the consensus seems to be forming in the 60 or 65% range. And I think that, this court is going to be pretty apprehensive certainly about second guessing what constitutes an emergency. We've heard some talk that maybe they'll distinguish between the IEEPA reciprocal tariffs and the IEEPA fentanyl trafficking tariffs. That would put them in the business of saying what is and is not an emergency, which I think they really don't want to do. But I think they're going to be nervous about upending the entire tariff regime that's been built up under IEEPA and sort of throwing themselves into the middle of the political process that way. But I think it's a close enough call. Investors need to be planning for both possibilities. And if they do get struck down, I don't think it's a huge disaster for bond markets. It's a one-time cost to refund about $100 billion worth of tariffs in all likelihood. But going forward, I think they'll recreate something very similar to what we have in place now, and the sort of long-term finances of the U.S. are not going to be changed.
Tobin, appreciate it. Tobin Marcus of Wolf Research actually wanted some time. We've run out of time to follow up on something he's calling for next year, which is the most underappreciated thing he thinks is going to happen here is the stimulus that the tax bill offers the economy through 26.
This is what a lot of people are talking about, the reacceleration in the U.S. economy, and the reason why people think that the Fed can cut rates even with a reacceleration poised to happen.
Up next on the program, we'll catch up with Valdemar Slezak of KKR on what Oracle's surge means for AI. Plus, we'll touch base with Yahira with your morning movers. Klarna pulling back after strong trading debuts yesterday from New York. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Live from New York City, welcome to the program. 3 days of gains on the S&P 500, adding some weight to the rally this morning, up by 0.2 on the S&P. Record high on the Nasdaq 100, up by 0.25 so far this morning. In the bond market, the yield curve looks like this: 2-year, 10-year, and 30-year bond yields just a tiny little bit lower this morning. At the front end of the curve, 354.36 on 10s, just north of 4%, 2 hours away from CPI data in America. That's the cross-asset price action. Let's get you some movers, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Oracle shares are still climbing today, up over 1% after they had their best day yesterday since 1992 with that 36% surge in that stock over a very bullish outlook, one that involves a deal with OpenAI, according to the Wall Street Journal, that could be worth up to $300 billion over 5 years. And that major rally yesterday also delivered the biggest one-day wealth jump ever, briefly making co-founder Larry Ellison the richest man in the world. And we stick with tech and move on to Alibaba. ADRs are rising nearly 3% after the company unveiled plans to raise just over $3 billion in a convertible bond sale to fund its AI ambitions. And this is part of a bigger trend we've seen with Chinese tech companies as the competition in AI heats up. And for Baba, it plans to use the funds to scale up data centers and invest heavily in AI because, remember, Baba said earlier this year that it would spend more than $50 billion over the next 3 years on AI infrastructure. And we end on Klarna. The buy now, pay later firm had a strong debut yesterday, surging 15% after raising $1.37 billion. But as you can see today, it is giving up some of those gains, down 2.3%. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, our top story, a manhunt underway. Police still searching for the shooter responsible for killing conservative activist Charlie Kirk yesterday. According to the FBI, a person of interest was taken into custody, but later released. Revving up trade talks, Mexico planning to impose tariffs of as much as 50% on cars and other products made by China and several other Asian countries. The move coming ahead of expected talks over North America's free trade agreement. And finally, President Donald Trump keeping up the pressure on Fed Governor Lisa Cook, the DOJ quickly appealing a judge's decision to keep Cook on the FOMC ahead of next week's interest rate decision.
It seems like a two-pronged effort to try to pack the FOMC, if you want to use Supreme Court language, which I know you absolutely despise. But one thing that I find interesting is the likelihood that we could see a person come on the board, Stephen Myron, at the same time that Lisa Cook could be taken off the Board of Governors. And it's sort of this perfect storm that people are looking at to possibly talk about a bigger rate cut than just 25 basis points.
This is obviously, though, going right to the Supreme Court, at least when it comes to Lisa Cook, because if what we see with the judge's order that stays, the president is going to go right to the Supreme Court. And actually, they can even say, if the federal court is taking too long, that they want the Supreme Court to hear this sooner. We heard yesterday from the White House, this ruling will not be the last say on this matter, and it won't be. I think for investors, it's just whether or not she's going to show up next week And right now, according to the recent ruling, she will be there at the FOMC. And to your point, Steve Myron, if he gets his vote on Monday, he will also be there.
You know why I'm irked by the comparisons to the Supreme Court? Because when people talk about the FOMC and say the president might have a majority, I think it's absolutely ridiculous. A majority of what? Who? Who's doing the president's bidding on the FOMC? Governor Waller? Governor Bowman? I don't think so.
There's also an equivalency of the Supreme Court as a branch of the government in sort of comparing it to the FOMC, which supposedly has a dual mandate, and that is the guiding light. And there's a real question here. On one hand, you've got the Constitution as the guiding light. On the other hand, you've got inflation. On one hand, price stability versus the employment picture, which is your guiding light, and that should be relatively objective. So it becomes a sort of controversial feeling, which I understand, but yet we hear it all the time, and I just parroted it.
We'll get more data a little bit later this morning, about 2 hours away, 8:30 Eastern Time. Let's turn to tech. Oracle shares higher in the pre-market after gaining the most since 1992 on an aggressive outlook. Vladimir Zazak, the global head of digital infrastructure at KKR, writing the following: "We're living through the largest build-out since the interstate highway system, a $10 to $15 trillion wave to rewire the global economy around power, compute, and connectivity." Vladimir joins us now for more. Good morning, sir.
Good morning.
It's good to see you. Thanks for being here. Let's talk about these demand numbers. The demand we're seeing is real.
Yes.
Yet there is still this conversation about a monster misallocation of resources coming together. Where do you stand on that?
It is a really the right question to ask. We don't see it, honestly. I think if you look at the fundamental spend relative to any other indicators from a bubble stand perspective, right? I mean, often comparisons are drawn to the dot-com bubble and, other housing bubble, et cetera. It doesn't appear so. And all of that compute that is ultimately being procured is getting consumed and deployed. I think the question that you're sort of leading into is there ultimately a business case for AI to be made? And I think there are a lot of great data points that would suggest adoption is increasing, use cases are increasing, AI is enabling a tremendous amount across the economy and society, generally speaking. But there isn't a killer app, so to speak, that would suggest that the ROI may be justifiable.
I think the issue for many people as well who experienced the dot-com bubble, the bust, and the boom that followed really afterwards, it took a long time to find out who the winners were. And to begin with, you had to have everyone throwing money at the wall to see what sticks. And if we go through this process now, there are risks involved in that. How do you navigate some of those risks at the moment?
It is again, another excellent question, which you would expect on a morning show from you guys. But I think, our approach at KKR has really been pretty simple and disciplined, right? I think we clearly are one of the leaders in digital infrastructure and in the power ecosystem, totality about $65 billion of capital that we've invested in that over the last few years. We have seen the convergence of those two mega themes, which is really interesting. I think we talked about this on the previous show, and I think it's now really applicable. You're seeing data centers are no longer about racks, it's about watts and megawatts of power compute, right? They're AI factories. And I think that convergence is really in place. So I think for us, we've been focusing on core and core plus markets for most of our compute. This is where ultimately data is being generated and processed by users. We focus on high quality customers. We do not chase yield on very speculative business models. I think we focus on fungibility in the use of these assets. It may have been enterprise 5 years ago, today it's cloud, tomorrow AI, whatever may come next. And we ultimately are not making bets on field of dreams sites. It's really trying to focus on things that if there's a contract, high quality counterparty, we start building and deploying capital against that. That may be, all of that seems logical, but I'm not sure that's universally adopted in the industry, and I think we differentiate ourselves in that approach.
I guess that one of the fears, and John was alluding to it, is this idea that everyone gets incredibly leveraged to a couple of key names and makes really big bets for a long-term development at a time where we don't have a great deal of visibility into how this is going to be adapted, how this is going to be really transforming the economy, and frankly, the way that we live our everyday lives. So how do you hedge that concentration risk at a time where what you offer is the balance sheet to really deploy to these big blue chip players?
Yeah, I think you're right. It is almost a barbell strategy. I think if you look at the market and if you look at the performance in the haves and the have-nots, it's been sort of that barbell view. and certainly the Mag 7 are such an incredible driver of the growth. 30% of the US spend on sort of AI is driven by those three names. $700 billion capex, 35% year over year. That's, by the way, $700 billion is equivalent to the entire spend for the fiber build out in the 90s. And we're now spending that on an annual basis, which is sort of incredible to think about the quantum of dollars. And so I think if you look at certainly the Mag 7, all of those names, pristine balance sheets, incredibly free cash flow generative, right? I think we are looking at certainly trading multiples and PE ratios and spend, but they're not overspending relative to the free cash flow that they're generating from either their existing core businesses or the convergence of AI integrated within their sort of existing business models. So you're right, you have a customer concentration, but the customer concentration is in fact with the highest quality names that you would probably want to do if you're investing in infrastructure from our point of view.
Where is the concentration in investment when it comes to data centers versus energy production? And this is another sort of key question at a time where people are building data centers as quickly as they can, with a question around DeepSeek and whether we can do this more efficiently with smaller data centers and less energy. And then we don't have the energy to actually fuel those data centers that are getting built. So where do you sort of stack up on sort of the dissonance between the development of those two?
And this is why it's such a wonderful time to really be alive and doing what we're doing. And certainly, an infrastructure investor wouldn't think about being in such a growth, industry. But it's really incredible. I think if you look at a couple of stats, we certainly have had stagnated sort of demand growth in the U.S. and the power industry for the best 20 years. That is now at a massive inflection point. Globally, the expectation is that data centers will consume something like 10% of global power in the next 10 years. By the way, that's equivalent to India by 2030. So if data centers were a country, it would be third after China and US. So certainly power consumption is decreasing. There are a couple of dueling factors. You do have efficiency, which is certainly driven by chip manufacturing, by algorithms, which is incredible. That's ultimately driving the cost of the delivery of the compute. So just in 18 months, if you think about the tokens which are being used for AI, I think of it, training for a marathon we talked about earlier, it's calories for AI. Token price has decreased 280x over the last 18 months, which means the adoption is increasing. If you look at about token usage, has increased 4,500%. So certainly usage is increasing. I think if you just go back to your question, I think most of the capital today is being spent on data centers, and then there is an increased capex being put in grid and certainly power generation. So we're starting to see that trend line actually converging. But in terms of growth on an adjusted basis, it's really been those two that are probably the biggest drivers of the capex.
Is deregulation and getting rid of some of the red tape that comes when you have to make these AI data centers actually keeping up, though, with that capex spend you're seeing?
It is really interesting because sort of from a policy perspective, there's two dueling factors that are the collision course. One is win the AI race globally, and the second is protect the ratepayers, which, in the US over the last 5 years, we've seen about 25% increase in power prices. And I think there are a couple of things that are happening, and including, I think, elimination of some of the red tape and streamlining of approvals. And I think those are great things by the administration to help enable the build out of this infrastructure. You can't just turn power on overnight. It's a 4 or 5 year cycle to build this infrastructure. And I think that is a great step towards that. Now, we're even cutting through the red tape. That is helping solve things 3, 4, 5 years from now. We have a gap in the next 24, 36 months. So what can be done? I think we can optimize the grid. There is dynamic line rating. There is investment in superconducting cables, which minimizes the loss. There are all sorts of innovative solutions, like the one we just deployed in Texas, where you co-locate a data center with a power plant. You have a way to effectively augment and draw electrons from the power plant. You have a way to support the grid in cases of emergency. And I think innovative solutions like that will help bridge us into the next phase when we see this massive development cycle of most likely natural gas power plants. And of course, at some point, we'll talk about nuclear. And nuclear will be 5, 10 years from now. I think that's the long game from a carbon efficiency and just the general efficiency of power generation.
There's a feeling on Wall Street right now, they're scared of this. They're saying maybe it's gotten over its skis. You travel to Silicon Valley, and there's just absolute abject euphoria. Can you bridge that gap, the idea that everyone's trying to poke holes? over in New York and in San Francisco, people are just running around saying we can't invest enough?
It is interesting. I do spend time on the West Coast quite frequently, and it's incredibly energizing when I'm there and coming back, and you sort of have this wet blanket put on you in terms of all the skepticism. But I do think that there is a bridge there. I think there is now, a bridge in understanding of, certainly I think the technology mindset of, move fast and break things has to come and somehow be bridged in terms of building of this infrastructure, which is really a very different investment cycle, very different risk cycle, and a very different cost of capital cycle. And so I do think that we're helping bridge that gap in saying, this is incredibly obviously exciting, but you have to obviously capitalize this in an efficient way. And by the way, the quantum of dollars that we're just discussing, whether it's 10 or $15 trillion, the annual spend, requires all sorts of different innovative, creative, and sort of holistic solutions to help build out this infrastructure. I mean, Oracle's earnings yesterday, which we touched on earlier this morning, were just terrific. It's incredible to see that. So you have $500 billion of backlog, and then the news this morning, that's another $300 billion of backlog. The numbers are starting to sort of seem silly. We're moving from billions to trillions. And, that amount of infrastructure will require many, many gigawatts of power, many, many gigawatts of compute. And that's why you see, power companies move up on that news. You see the chip manufacturers move up on the news. You see data centers move up on the news because it just suggests that we're still in very early innings of that investment cycle that is taking place.
You'll have to forgive any skepticism around this table. We want you back soon, okay? It's good to see you.
I love it. Thank you.
Thanks for dropping by. We appreciate it. Vladimir Zelek there of KKR. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. UBS CEO Sergio Armotti says the impact of global tariffs on the U.S. economy and Federal Reserve monetary policy remains unclear. Armotti told Bloomberg, quote, "In the U.S., we still believe that growth will be there, but the inflation question and how it plays out into the central bank's policies remains open." UK Prime Minister Keir Starmer has removed Peter Mandelson as Britain's ambassador to the United States after new revelations about his ties to disgraced financier Jeffrey Epstein. Mandelson referred to Epstein as his, quote, best pal in a book of tributes to the convicted sex trafficker. Bloomberg also reported that Mandelson told Epstein, quote, "I think the world of you," after his arrest. Used car seller and subprime lender Tricolor filed to liquidate in bankruptcy as prosecutors are looking into fraud allegations. The company didn't give a reason for its collapse in the filing, but Tricolor's Chapter 7 bankruptcy petition claimed liabilities between $1 billion and $10 billion and assets in the same range. And that's your Bloomberg brief. John.
Vonnie, thank you. Appreciate it. More from Vonnie in the next hour in about 30 minutes' time. Up next on the program, counting down to CPI.
Here we are over 4 years into inflation being above the Fed's target for a long time. Businesses kind of getting used to inflation being high. Consumers might be getting used to inflation being high.
Up next on the program, Joe Davis of Vanguard, live from New York City this morning. Good morning.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're we're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Equities all-time highs on the S&P 500, record highs on the Nasdaq 100. The run continues. Equities up this morning by 0.2% on the S&P. Similar move on the Nasdaq this morning. Under surveillance this morning, counting down to CPI.
We still have a lot of additional inflation from tariffs in front of us. Here we are over 4 years into inflation being above the Fed's target for a long time. Businesses kind of getting used to inflation being high. Consumers might be getting used to inflation being high. It would be premature to cut 75 basis points for sure, and even 50 basis points. I don't know, from my judgment, that it balances the risk between slow growth and inflation.
So here's the latest this morning. Investors are waiting today's CPI print after a cooler than expected read on producer prices. Joe Davis, the global chief economist at Vanguard, writing the following. Consumer prices are likely to absorb tariff pressure more slowly than initially expected, with inflation peaking in 2026 and largely subsiding within months, not years. Joe joins us now for more. Joe, good morning, sir. Just frame that view a little bit more. Give us some more detail if you can. Why is the runway this time going to be a lot longer instead of the pass-through, the immediate pass-through that some people imagined?
Well, again, just the tariff rates have been delayed. The effects are not dead. They've just been delayed. They're starting to pass through the system now. And so, even these questions of what the Federal Reserve is going to do, we're in a little bit of a unusual territory where we're likely going to have inflation year over year rising, yet you're going to have a Fed very likely easing this month. And so that's the cross currents we're going to be talking about. And it comes down to the labor market.
Joe, do you think the Federal Reserve and the way Chairman Powell set things up in Jackson Hole, this is a Federal Reserve that's prepared to ignore those hotter prints further down the road?
I think for a time. Again, we're at stall speed in the labor market. We do not have a recession, but the fact is you have hirings that have just flatlined. I think that's a legacy of the policy uncertainty, particularly from the tariffs 4 or 5 months ago. We were actually head-scratching why we weren't seeing more of a labor market slowdown, but clearly we're not head-scratching anymore, and neither is the market. So I think the Federal Reserve, this is around risk management. At the end of the day, I think they're going to lean dovish and assume that the tariffs are more of a one-off price increase and not something of a longer-term trend.
If that's the case, and you think that that's maybe incorrect, Joe, longer term with respect to inflation, is 3% the new 2% when it comes to the Fed, and do market participants have to kind of think of things that way?
I wouldn't put it that way. There's always a prospect for a policy mistake. We're not in that territory yet. I think, what would be more concerning to me is if we have the labor market, not just kind of flatlining from here, but not downturning. In other words, hiring and firings don't continue to worsen. If that were the case, and yet they were then very aggressive in the easing, let's say 50 basis points at a meeting, another 50 basis points, that would then concern me. And I think we would see a modest visceral reaction in the bond market, but that is certainly not our baseline. And I think the Fed's going to have to be attentive to that at the back half of the year. And again, clarity on the tariffs and how much is being passed through will be a factor along with the labor market.
How much do you feel like the upper income cohort of consumers has been powering both the spending and the inflation and can continue to, even with a recession among lower income individuals when it comes to a loss of jobs, when it comes to inflationary impacts, et cetera, in a way that could allow things to not feel great, for inflation to remain persistent, but not exactly terrible, falling off a cliff? I guess that's the dynamic people keep talking about that warrants Fed rate cuts, but doesn't necessitate a recession.
No, in fact, I think it's a really good point. Sometimes it's not talked about enough. You know, you have the upper income households, as well as businesses, particularly in the large cap space, really powering growth. We have seen it at times before, but it's actually pretty strong. And given what the equity markets and financial markets are doing, it's tough to see that stalling at any near term. So I think, again, we're going to have this. We're going to have these cross currents. You look at some measures, it seems consistent with a recession and a stall. Yet you look at other measures, it's, hey, why is the Federal Reserve easing? I think in the balance, the Federal Reserve will look at the labor market for now, but they have to keep one eye on inflation where it may be 6 months from now.
We just had a whole conversation with KKR about the build out of data centers because of AI. How does the Fed grapple with that?
Well, I think they have to start talking respectfully more about productivity and what are the odds of the sort of trend in growth. And then with that, inflation, if it's productivity, over the next 3 or 4 years. I mean, we've done a lot of work on this, as you well know, and it's eye-opening. The prospects of the sort of Federal Reserve consensus forecast for economic growth for the next 3 or 5 years is very low, actually. And it's been an eye-opening insight from us, from our data-driven framework. So I think the Federal Reserve has to start talking in the Jackson Hole type of settings. How much productivity could it be lifting, knowing that this is a scenario that may not occur? The Federal Reserve started really talking about this in the mid-90s, late 90s, and I think we're going to start entering that territory of how strong could it be, and could we have growth without high inflation or easy inflation pressures? And that's, I think, the world that we may start entering.
Thoughtful stuff, Joe. Appreciate it. Joe Davis there of Vanguard, going into the CPI print later on this morning ahead of the Federal Reserve, about a week away. Looking ahead to next week, a GDP forecast shaping up as follows for 26, 1.6%. is for 26. These are the Fed's forecasts. 2027, 1.8%. This speaks to what Joe's talking about. One handle, that's the Federal Reserve forecast for the next 2 years.
This is not exactly some sort of runaway, incredible expansion that would necessitate restrictive rates, right? On the flip side, he also is projecting 3.1% core inflation at the end of this year. So not exactly that 2% level either. The Holy Grail keeps being placed on the big tech players, and the idea of this incredible surge in productivity.
And going into next year, it's not even just that. Steve Chiverone talking about the fact that there's going to be an economic boom potentially around things like the World Cup. Potentially, we have a Federal Reserve that's really underpricing a number of events that are going into 2026.
Stocks are positive this morning. Record highs yesterday, adding some weight to the move this morning. Up next on the program, we'll catch up with Evan Brown of UBS Asset Management, former White House official Ashley Davis, Thomas Show of KBW, and Aditya Bave of Bank of America.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We definitely see more lingering inflation.
That reaction function is definitely more tilted towards the weakness in the labor market as opposed to potential upside, risks from inflation.
I don't think the Fed really set us up for 50.
Given the inflation backdrop, it'll be pretty much premature to start cutting aggressively at this point.
We still have a lot of additional inflation from tariffs in front of us.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. Good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs on the S&P and on the NASDAQ coming into Thursday. Adding some weight to the move this morning. On the S&P 500 up by 0.2. 6-day winning streak on the NASDAQ. We add to it again this morning. We're up by 0.3. In the bond market, unchanged right now. The calm before CPI. The 2-year going nowhere. 354.78. As for CPI, inflation data 90 minutes away. Together with jobless claims, sandwiched between an ECB decision and a Lagarde news conference.
So how much does CPI matter? And I say this at a time when a lot of people used to say that inflation was the most important gauge for a Federal Reserve, depending on when they potentially could cut rates. Suddenly people are saying, even if it comes in at 3.1% year over year, which is what's sort of expected, not a big deal, because ultimately it is a one-time price shock that the Fed is going to look through in favor of really placing emphasis on a labor market that clearly is not very strong.
So as you know, next week's a 3-part story. Decision, statement, forecast, news conference. Decision is done. A lot of people just think they'll cut rates. CPI matters for the forecast, and it matters for the guidance you get in the news conference. Does it open the door for the chairman to be a little bit more aggressive about what he can offer, about what they'll do next? Or are they on the back foot still worried? And I'm talking about the committee. Can he form a consensus around the inflation story? I think that's going to be a little bit more difficult compared to, say, a consensus around the labor market.
And how much will the market care? Because ultimately he is a lame duck Fed Fed chair, I should say. And this, to me, really raises the question of how much he can give guidance, especially given some of his flipping and flopping when it comes to some of the previous discussions of where the emphasis would be placed on the unemployment rate, say, versus just the headline numbers figure. And that's flipped around as well.
And what Steve Chivarone said is, to your point, it's baked in next week. I think potentially there's some that's considering maybe they would go 50. Even Governor Waller was saying I would need to see how bad it is in terms of the weakening of the latest labor market report. But Steve Chivarone was saying the real debate between this year and next year, is it 5 cuts or 6 cuts? Is it 4? Maybe they have to go bigger. And then to Lisa's point, we're going to have a whole different Fed next year and a different mantra. It is not going to be, the Powell Fed. It is going to be completely different.
You mentioned Steve at Federated. Put it together with Mike Wilson over at Morgan Stanley. There is a theory out there, and this is the bull case, that the worst of the data is actually behind us, and that what we're going to see in the months to come is an improvement, a pickup, a re-acceleration, if you will. That's why they're so bullish going into 2026, because you layer on top the rate cuts, the stimulus that people think that you get from the bill that's just been passed down in Washington, D.C., and you look to a better 2026.
You know, I can get behind that for one reason alone, is because every day we have $200, $300, $400 billion announcements about investments from big tech names, and we haven't even seen the beginning of this, and you start looking at that tangible aspect. The Fed chair is now Mark Zuckerberg. It is not necessarily Jay Powell, and so you start looking at that, and it's what people can get behind rather than this sort of intangible what's going on that people are looking at in the economy.
Jane Fraser told Jumana, not everything is rosy, though we still don't think we're going to have a recession. What clients are telling us, they are acting with confidence because now they have clarity out of Washington. Taxes, tariffs, and deregulation.
I like the idea of Mark Zuckerberg anchoring pay in America, don't you? That works for me.
Does it?
Yeah.
Well, I mean, I think
based on some of those contracts we've seen.
That's true.
Absolutely.
So you're basically looking for $100 million
Why
pay.
not?
That would be a problem, though, for inflation. We might be looking at inflation somewhat above 3%.
I'm not sure Mike would be on board. But,
It could raise some other issues.
You can only ask.
He's going to be your personal Fed chair.
Coming up this hour, Evan Brown of UBS with stocks rallying ahead of CPI data. Former White House official Ashley Davis joins us on the political assassination of Charlie Kirk as that rocks the United States. And Aditya Bave of Bank of America Securities with an update call on Fed rate cuts. We begin this hour with stocks hitting another record high as we await today's inflation read. Evan Brown of UBS writing the following. The Fed is highly likely to cut rates in September, leaning more against downside risk to employment than upside risk to inflation. Evan joins us now for more. Evan, good morning. It's good to see you.
Good morning. Great to see you.
Just walk us through how you think people should set up going into this print this morning, get into next week and beyond.
Yeah, I mean, I think in general, the way the market has been going is how you broadly want to be positioned, which is overweight equities, have a, neutral to slightly overweight position in bonds if you can, particularly in the front end, just for insurance, right? I mean, we are still seeing a weakening in the labor market. The Fed is, like I said, focused on the downside risk to employment. And so you have that support there in case things go wrong and kind of bad news turns into bad news for the equity market.
Well, let's define bad news. So a lot of people in markets, as you know, interested in change. Is the change positive or negative? Will the change be positive from here, even if the numbers aren't great?
Yeah, I mean, what we're doing is looking at the second derivative, to your point. So are things getting less bad? And I think in the labor market, this is a key question because, we've seen some softness, but you can make the argument that really the peak softness happened just after Liberation Day. June maybe being the low point for employment. And now as there's more confidence, more clarity on what's happening on the policy side, that you're going to see some pickup. And we see that jobless claims remain low. A lot of other indicators we track, including corporate commentary, have been a lot more upbeat. So we want to be open-minded on both scenarios, that there's this deterioration in the data that we haven't seen yet but might, or if we kind of inflect higher here.
I guess that I'm still thinking about what Steve Chiverone said. If the bad data is behind us, or at least it's improving from here, did stocks ever price in the bad data? Or could we just not price that in then, not price that in the future, prices to the moon?
Yeah, I mean, stocks are looking past
Past,
what we've
present,
seen.
future.
Yeah, exactly. I mean, I think you and I talked about this several weeks ago when I was on, this apparent disconnect between the bond market and the stock market, where the stock market just wants to look past the weakness in the data, and the bond market has been pricing in a weaker scenario, and that's only gotten more extreme, that disconnect, with stocks going higher and with bonds rallying in response to the weaker labor market. I think that is the right play. I think that makes sense. And one of the reasons is that it's not just the bond market pricing in a weaker data right now, but they're also pricing in a structurally more dovish Fed when we get the new Fed chair appointment, when there's potentially a new additional governor who joins, who's more dovish in nature than what we're seeing with the Powell Fed, such that if you really get that rebound in activity and inflation stays stickier for longer, is the Fed necessarily going to respond with less dovish or more hawkish policy, and I'm not so sure that they will. They'll be willing to let the economy run hotter for longer. For now, the equity market likes that.
Well, right now, I wonder how much the equity market and the bond market are actually tied together at all. I'm thinking still about Oracle and what came out, and this idea of a 34% rally in one day, adding more than $200 billion of market cap. That's more than a Disney, almost two Disneys, in one day to one company on the heels of what seems to be an investment cycle that has legs. Is the pain trade still higher in equities regardless of what happens in the underlying economy?
I do think the pain trade is still higher because, actually, interestingly, we track a broad amount of measures of sentiment and positioning. And even as the market has continued to go higher, actually some measures like AAII have been coming down. Like there's the positive sentiment is being outweighed with more people actually thinking that stocks will go down. And so, there's still this underlying skepticism, which we don't normally see. Normally, as we see the market go up, people get more optimistic. But we're actually seeing more concern, more, conversation of, is this a bubble and whatnot? Maybe I should be paring back. I don't want to jump right in here at these valuations. That is all the recipe for a pain trade that goes higher.
So what do people do in terms of the hedge?
Yeah, so I think on the growth side, the natural hedge is bonds, but critically more towards the front end, which we've seen. The long bond is kind of broken, not just in the U.S. but globally, given fiscal deficits and concerns about just it's hard for politicians to do fiscal consolidation. We're seeing that UK, Japan, and France certainly, and in the U.S. as well. So, but on the front end of the bond market, I think that's a key hedge. And then gold has just been a really, really important hedge on this idea that you've got the fiscal concerns, you've got concerns about, a Fed that may be a little bit more politicized, and this idea that things run hotter and the Fed's not quite responding. At some point, that might start weighing on the equity market, might start putting more upward pressure on long-term bond yields as well. And so gold is playing a critical role in hedging portfolios.
When you say politicized Fed, do you mean what is going on with Governor Cook, with Steve Myron? But we know what those individuals have and in a position. So doesn't the market have at least that level of transparency with what is actually happening with individuals that sit on the FOMC?
Yeah, so we have what we have seen so far, which in itself is not overly alarming in terms of Fed independence risk. I mean, yeah, we know that Lisa Cook is generally dovish and Steve Myron is going to be very dovish, but either way, we're going to get a cut next week, and that's the case. I think the risk, which I think a number of steps need to happen to get us there, is if you get a situation where the Fed Board of Governors, which has leaned more Trump-appointed, starts, being influenced in terms of the certification and renewal of reserve bank presidents, because those have been the ones, and there are 5 of those voting on the 12-person FOMC, who have tended to be leaning more in the hawkish or less dovish direction. I don't think that's base case at all. I think we can trust that Chris Waller and Bowman are going to be focused on maintaining Fed independence, but that is kind of the risk where you get more concerned about that scenario.
Evan Brown of UBS, it's good to see you. Bullish on stocks, bearish on the dollar, and likes a little bit of gold, and he's not alone, based on the performance this year.
A lot of people are looking at inflation remaining just above that 2% level, Fed being dovish in spite of some of that inflationary pressure, leading to maybe a depreciation of the dollar, but the stocks to the moon story isn't over, and that's what we keep hearing. And the wet blanket of New York City and the skepticism only gives people more confidence in that, so that's what we keep hearing this morning.
How'd you throw New York City into this? Where's that coming from?
I keep thinking about Valdemar Slezak, and he came on and he said, he'd been traveling a lot, right? And in New York, everyone's like, this is a bubble, it's terrible. And then he goes to San Francisco, and we're like, oh my God, it's going to change our world. And it's sort of squaring that circle. And, we're living in the wet blanket.
Right to be skeptical of these things now?
100%. I think that inherent skepticism is the reason why Evan's talking about the pain trade being higher, right? How much are we really imagining a world in which a robot is telling us what to do? I know that you think that I'm not going to listen to the robot.
You're not.
But I'm definitely going to be very nice to that robot so that when I am lesser, they treat me
You'll
nicely.
reprogram it so it says what you want to hear.
Yeah. You are great. What would you like?
You are great, I can tell you.
Aww.
Okay. Let's get you an update on stories worldwide. Let's get to your Bloomberg brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. A search is underway for the killer of conservative activist Charlie Kirk. Kirk, the founder of Turning Point USA, was shot as he was speaking to an outdoor crowd at Utah Valley University. The 31-year-old was a close ally of President Trump, who posted about the incident on social media and ordered American flags to be lowered to half staff until Sunday. President Trump's pick for a Federal Reserve governor is facing his final hurdle. A full Senate vote on the confirmation of Stephen Miron could come as soon as Monday. The move sets Miron up to be seated on the Board of Governors before next week's FOMC meeting, potentially. OPEC Plus is boosting output and continuing to revive production, according to the IEA. This as record oil supplies are projected for next year and maybe even looking bigger. The IEA anticipates a massive global surplus of roughly 4 million barrels a day in the first half of 2026, with supply set to exceed demand substantially. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, political violence rattles the US.
I am filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence.
Up next, we'll catch up with the former White House official, Ashley Davis.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It is the last big data point before the Federal Reserve meeting next week. It's CPI. It's later this morning, 8:30 Eastern Time. We get jobless claims too, so another read on the labour market, and then a view from the ECB in Frankfurt, Germany. That decision drops at 8:15, and we'll have a news conference with the ECB President, Christine Lagarde, at 8:45 Eastern Time. So that's how we're set up. That's the schedule for today in financial markets. The scores look like this. Equity futures on the S&P 500, adding to yesterday's record high, up by 0.2% on the S&P. Similar move on the Nasdaq 100, higher by 0.26. And the surveillance this morning, political violence rattles the US.
I am filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence. It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree.
So here's the latest this morning. Investigators expanding their search for the killer of conservative activist Charlie Kirk. With the latest, here's Tyler Kendall. Tyler, shocking news yesterday evening.
Absolutely shocking, John, and the shooter is still at large. We've learned that the FBI is working closely with state and local law enforcement on the investigation after officials said that around 12:20 p.m. Mountain Time, a single shot was fired from a building about 200 yards away from where Charlie Kirk was addressing this crowd, and officials believe that that shot was fired from the rooftop of that building. Now, there was closed-circuit surveillance footage that was released that shows a figure in dark clothing believed to be the suspect, but at this point we haven't gotten any additional details, including what potential weapon was used and whether or not it was recovered. Utah officials did say that they took 2 people into custody yesterday, but released them after questioning. We know that there were more than 3,000 people at this event at Utah Valley University, alongside 6 local police officers and Kirk's own personal security detail that were on the scene. Now, we did hear from the Utah Governor Spencer Cox, who described this as a targeted and political assassination. Of course, Kirk was a prominent conservative activist, a very staunch ally of this White House, of President Trump, Vice President J.D. Vance. In fact, the president was one of the first to confirm that he had died. And it comes against this broader backdrop of heightened focus here in Washington when it comes to the rise in political violence. In fact, we just had House Speaker Mike Johnson last week point to a 55% spike in threats called in against members of Congress in just the last year alone. John, here at the White House, President Trump has ordered flags to half staff across the country through at least the weekend.
Heartbreaking. Tyler, thank you. Tyler Kendall in Washington, D.C. To extend this conversation, joining us now is the former White House official, Ashley Davis. Ashley, welcome to the program. A dark moment for this country. A lot of people have described it that way in the last 24 hours. How can law enforcement meet this dark moment?
Well, first of all, it's a sad day in this country, and also the anniversary of September 11th, 24 years. So there's 2 different sad days today. But the issue with Charlie that is a little bit different for most White Houses is that this is a personal friend to this administration and this family. Both sons of the president have been friends with him for years. And a lot of the White House staff, as well as staff in the various agencies and senators and House members on the Hill. So this is pretty personal, which is a little bit different. Also, from what I've been told, is this is bringing back tons of memories, almost the same type of setup for when President's life the assassination was attempted on his life. It's bringing back a lot of bad memories for the White House and White House staff. So it is a little bit different of a situation. Listen, there's been political violence that has spiked. I kind of not just blame it on this, but think a lot part of it is the fact that we have the 24-hour news cycle. We have all this social media and all this access to information that can be very, very polarizing. And the algorithms that, if you believe in one way, the algorithms will chase you that way and vice versa on the other side. So, but this has been, listen, my dad said to me, this is my son's day, like JFK. He'll remember where he was, just like my dad remembers where he was when JFK was assassinated. But it has to stop. This started with Steve Scalise. Obviously, Brett Kavanaugh had an attempt on his life, Gabby Giffords, the horrible murders in Minnesota, Nancy Pelosi's husband. I mean, this just goes on. And I don't know the answer to it. As Governor Cox said last night, how do we stop it? We don't know, except for trying to bring the rhetoric down.
Having been in the room, though, what kind of action do you think we could see almost immediately when it comes to either Homeland Security or law enforcement in this country?
I mean, I think I think there's going to be heightened alerts at with Homeland Security. But the problem is when you have a situation like he did yesterday with 3,000 people in open air areas, how do you control all of it? Charlie Kirk does not have the ability to bring a Secret Service level of security. Listen, on your show plenty of times after the president's assassination, I was pretty tough on what happened and the Secret Service not doing their job. But Charlie Cook and other politicians do not have that level of security at their access. So it's going to be, Charlie had, I think from what I understand, 8 security of his own. The local people have been, we're working with his security in regards to trying to make sure that something like this doesn't happen. But I just don't know how you secure places like this unless the death threats to you are so significant that you just try to do things inside, which is just a sad day for our country if that's what we have to do.
It's horrific. And understanding Washington, D.C., could this be a moment for change, for seismic shift in rhetoric and how politicians and as citizens speak to each other?
Listen, I hope so. I thought so as well after the president's assassination attempt. I think that lasted maybe a week that people stopped. You saw what happened potentially on the House floor yesterday with Republicans and Democrats fighting even over a moment of silence that was requested for Charlie on the House floor. So hopefully people reflect on it today. I actually thought that Speaker Johnson gave a good answer to what happened on the House floor yesterday. Was just everyone was in raw emotion. Hopefully everyone takes a step back today and comes back with better behavior on both sides of the aisle.
Other issues right now that Washington is obviously dealing with is, of course, what is going on geopolitically. And I'm focused on what is happening in terms of Belarus and Russia and Poland, saying that they are going to be concerned with what's going on with these Russian drones. Do you have insight on that and how this administration potentially could respond to what we saw this week?
There's 2 things. I actually have spent a lot of time in that area of the world, especially helping with the opposition candidates against Lukashenko in Belarus. And I think that what starts tomorrow is actually something that's very important, which is there's going to be military training in Belarus with Russia and Lukashenko's military. So that obviously is right on the board, right up against Poland. So there's going to be even heightened alert. But it was interesting today. I was looking at how NATO has been reacting, and the fact that they are implementing Article 4 instead of Article 5 in regards to these drones. And Article 5 means that it would be more potential military response. Right now, NATO is reviewing, so to speak, what happened with the drones. I think it lets down a lot of that tension. But it's something significant. And you saw the president's response, President Trump's response yesterday. You have the president getting a ton of pressure from Senate Republicans and Democrats on the Hill to pass 500% tariffs on Russia. So I think that time is running out in regards to Congress kind of waiting and giving the president the ability to negotiate this. But we'll see.
Ashley, thanks for making time for us this morning. Appreciate your input. Ashley Davis there, the former White House official, on the latest in Washington, D.C. and beyond. The Polish really rattled by the past few days.
Absolutely. They are rattled, and they're negotiating with NATO, trying to figure out what the response is to be, to her point, Article 4. Not just yet Article 5, but still a pretty strong moment.
If you are just joining us, welcome to the program. Stocks positive this morning by 0.2%. Up next, we'll catch up with Tom Basho of KPW on the outlook for financials. Plus, Yahira has your morning movers and a new name on Wall Street, losing steam.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
CPI 60 minutes away, the open and bow 2 hours away. Equity futures on the S&P 500 positive here by 0.2%. 3 days of gains on the S&P, 6 days of gains on the Nasdaq 100. Record highs here on the S&P and on the Nasdaq 100 too. In the bond market, 2-year, 10-year and 30-year bond yields still very close to the lows for the year. 354.57 on twos, down about 40 basis points since early August, just before we got that very weak payrolls report for the month of July. That was followed by another weak payrolls report, and it set us up for rate cuts for September and beyond, for 25 and 1 into 26, based on the views of many of you. On a 10-year bond yield this morning, just about unchanged, just north of 4%. Let's call it 4.05 so far this morning. That's the price action in stocks and bonds. Let's get you some morning movers as we count you down to the open and bow. Here's Yahira. Hey, Yahira.
Hi, John. It's a pretty quiet day heading into that CPI print, but worth noting, Oracle again, shares are higher, nearly 2% here in the pre-market after that 36% surge yesterday, marking its best day since 1992. It was also a big day for co-founder Larry Ellison, with Oracle's major rally giving him the biggest one-day wealth jump ever recorded, making Ellison briefly the world's richest man yesterday for a few hours, topping Elon Musk. Next up, we have Klarna. Shares are lower 2%, but the buy now, pay later firm had a strong debut yesterday, surging 15% after raising $1.37 billion. And even though we are seeing the IPO market warm up, Klarna is worth noting it is a 20-year-old company, underscoring this idea how companies are staying private for longer. And we end on Open Door Technologies. The online real estate firm is surging here in the pre-market after some big moves at the top. It has a new CEO who was formerly at Shopify, and its co-founder is back as chairman. Investors are clearly liking the shakeup after some drama last month when CEO Carrie Wheeler was forced to resign after some pressure from investors. John?
Yahira, thank you. More from Yahira in the next hour. On a radar this morning, a manhunt is underway after the assassination of conservative activist Charlie Kirk. President Trump calling his latest act of political violence a dark moment for America. Elsewhere, a full Senate vote on the confirmation of President Trump's Fed pick could come as soon as Monday. The move setting up Stephen Myron to be on the Board of Governors before next week's FOMC meeting.
How important is his voice? And I think this is actually a key question if he is on the Board of Governors next week, given the fact that his term expires, or would expire, should he be confirmed, early next year. Is he representative of what the next Fed leadership looks like, or is he a placeholder to rattle feathers on the Board of Governors? And ultimately, I think people are going to be asking this question next week.
Well, speaking of leadership, let's talk about the future leader of the Federal Reserve. This from the Wall Street Journal this morning. The Fed chair race gets a dark horse. In any other times, this wouldn't be a dark horse. This would be the front runner. Federal Reserve Governor Christopher Waller warned publicly that private sector hiring was near stall speed and flashing red back in July. And a colleague turned around to him and joked, "Come on, Chris, you're a better economist than that." And Chris has been proved right.
And a lot of people are coming to around the idea that he is a good economist, so he would have the market credibility behind him as well. So how much are some of the administration officials who are looking for the next Fed chair, I'm thinking of Scott Bessent in particular, going to be looking for someone with that credibility who also are skewed to cutting rates further?
Well, we know that the Treasury Secretary is in the middle of having these interviews, and he's going to give the top three to the president. The president already says, yeah, the top three kind of sound like what you all have been talking about. And Governor Waller is one of them, and also the Kevins. When it comes to Governor Waller, he has been absolutely vindicated. What Jay Powell said at the last FOMC meeting versus what he said 4 weeks later at Jackson Hole, where Lisa was completely different. And it was like Chris Waller actually wrote that speech for him.
How do you think the Kevins feel about being called the Kevins? You know, it's like the Kevins plus Chris.
Who gets the rose? Yeah. You know, is this going to be or sort
I
of...
imagine Walsh is pretty offended by that.
You think so?
Yeah, I don't think that guy wants to be a Kevin.
You think that like Kevin Hassett is like, you think that he's okay with it?
Should be happy he's just in the running, no?
Wow.
Wouldn't you be thrilled by that?
You know, I don't know. I guess that you always want to be an individual and recognized for who you are as a human being.
Exactly.
And so, Kevin's...
Let's do better.
We're going to do
Walsh and
Hassett.
There you
the
go.
Kevins.
Plus Waller. Kevin's is easier, isn't it? Okay. Here's the latest on New York. New York Governor Kathy Hochul stopping short of an endorsement for New York City mayoral candidate Zohran Mamdani. Hochul saying she would work with the Democratic Socialists despite their philosophical differences.
I don't want to raise income taxes on high net worth people. I'm a staunch capitalist. And so I need to know that people can have a certain philosophy, but you got to govern in reality. And the reality is that this is the financial center of the world.
I don't want to raise income taxes on high net worth people. The big headline in that interview.
Yeah, how much is she going to push back and stymie any goals should Zohran Mamdani win the mayoral race? And it seems like she's lining up to do so, given the fact that the state ultimately has the power over the purse in terms of taxes and how much you can raise them. A real question here of how you parse the fact that the issues that are being raised are relevant and important. It's the methods of how you go about it that really are the controversial ones, and that seemed to be the needle she was trying to thread.
And she hasn't endorsed anyone just yet, but we've heard from this heard this from her before in the past. She said, I can't lose any more people to Palm Beach, talking about the fact that taxes cannot continue to go up to New York, and you think you can attract high net worth individuals and talent, because guess what? At some point, they are just going to leave.
It's the financial capital of the world. You know, you've got to respect that. Let's stay on the financials. Citigroup CEO Jane Fraser telling Bloomberg she sees a pickup in activity with no U.S. recession on the horizon.
I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines, and M&A has been very, very active indeed.
Let's turn to Tom Michaud of KPW, a Stifel company, for more. Tom, welcome to the program. Good morning.
Good morning.
Before we talk about this, let's just talk about what day it is. You were headquartered in the World Trade Center, lost 67 people that day. I want to spend a few moments with you just to think about what that day still means to you today and how we ensure that this generation that's now coming onto Wall Street, who weren't alive that day, hadn't been born, how we make sure they don't forget either.
Correct. Thank you. Yes, we think it's very important to not forget. We said that day we were never going to forget. And there have been a lot of big pieces to what never forget means, because never forget means different things to different people. One of the things that we're doing is making sure that 9/11 isn't defined just by the people who flew airplanes into our building. Instead, I'm working with a group, 911day.org, which is a group that KBW helped found, to think about the resilience and the goodwill and the rebuild and honor the victims of that attack with that spirit. So we worked with Congress, and in 2009, we got Congress to pass a law making 9/11 a national day of service. And we think today there are going to be 33 million Americans who participate in the day of service to remember the victims of 9/11 and to remember the resilience and to remember the goodwill that it took to rebuild. There is one service project in particular that we support. We're going to be in 24 cities in America today. We're going to pack close to 9 million meals for those who are food insecure. We have over 800 corporate customers. It's our corporate partners in this. Next year, our aim is to try to double that for the 25th recognition and anniversary of 9/11, to continue to talk about what it took for America to rebuild after the attack. So you don't end up with 9/11 being 2 paragraphs in a history book. We're not going to let that happen.
You're contributing to a lasting legacy and making sure it's a positive one. So I think we're all right behind you, sir. And thank you for being with us today to talk about it. We need to talk about the broader business world too. We need to talk about what's happening with banking activity. Things are bouncing back. And you can see that and hear it in the words of Jane Fraser of Citi. Are you seeing that too?
So I've been a guest on your show many times over the last couple of years. The factors that were headwinds are now tailwinds. I'm about as optimistic on the fundamentals of the banking sector and financial services in general as I've been in several years. There's revenue growth, there's earnings per share growth. We're looking for 10% this year and next. The economy's okay enough, so that's all very bullish. And then there's the other stuff, which is rather than regulatory attention slowing down financial services, it's now resetting to where it typically is, which is one that's more supportive of growth. So the consolidation is going to restart in the industry. And the other thing is, I heard you talking earlier about how the market's at an all-time high, 6 straight days, I think, in the NASDAQ of records. The reality is you don't have the downside risk in the valuation for the financials. While the stocks have done well, they're still well far away from their historic norms. There still is a lot of valuation upside in the financials. And my experience is that when earnings estimates are going up, profitability is improving, the stocks tend to do well.
There's a lot to unpack there. I want to just hone in on the idea of the mergers and acquisitions. We have seen some of those announced in recent days, the PNC one coming just a couple days ago. Where are we in this process? How much more of that do you see in the next 6 months? So
my opinion is we are approaching the end game. There are 140 banks in America north of 10 billion in assets. 96% of the banks in America are below 10 billion are community banks. 96% of any number is almost all of it. There are very few banks above 10 billion. And I think the bigger banks are beginning to think about what the end game is going to look like, and they're being very strategic in thinking about these acquisitions. In the previous administration, it had an anti-M&A bias and wouldn't even give an answer to bank merger applications unless they were forced to. Now the administration's gone back to what historically had been the case, and they will give you an answer to a merger application. That's all the industry needed to restart the consolidation wave, and it's underway right now.
So what does it look like in the end? Is it just a couple of sort of the megas and then the sort of media megas and then everyone else?
To take the funnel real quickly, remember the non-banks. You were talking about Klarna earlier. Financial banks used to be half of the S&P 500 weighting in financials. Now they're a quarter of it. We think Ares is going to get added to the S&P 500 next. That's a very big $80 billion market cap company. So banks are a smaller piece of the financial services industry. They're competing with Klarna. They need to have the scale and the capacity to do that. Otherwise, the industry will evolve with 4 really big banks and then a lot of other ones that are much smaller. The best thing to do for the economy, in our opinion, is to allow these regional champions to get the scale to compete with the big 4 banks and then compete with non-banks. And I think our economy and Main Street America will be better served if that happens.
You sound incredibly optimistic about bank stocks right now. How hinged is that to a reacceleration in the underlying economy versus a secular shift?
Let me talk to you about the one thing that can stop it. The one thing that can stop it is credit quality. So this past week was the Barclays conference in New York. It was the last big channel check we get for the quarter. Everybody's saying the same thing. Credit quality continues to remain pristine. The industry is over-earning on credit at the moment. It shouldn't always be this way. So there will be a moment where credit costs go up. That shouldn't be the surprise. The surprise is for how long it's been essentially zero. So as long as we have a solid enough economy, then I think the bull story is very much intact. Usually, if we get a credit cycle, investors tend to sell bank stocks first and ask questions later. So the fact of the matter is we don't see a credit cycle on the horizon in the banking sector. So our view is that that is what's necessary, and 1.9% GDP growth is good enough to keep the fundamental story in play. And actually, the banks are talking about accelerating loan growth, which is a positive part of the story.
Can you just remind everyone, it's my favorite stat of yours, just remind us all of the top 10 mortgage providers in this country now, and how many banks are in the top 10 compared to, say, a decade plus ago?
So pre-global financial crisis, 8 of the top 10 mortgage originators were banks. Today, 3 of the top 10 are banks. Now, the question along that line, John, is did banks forget how to make mortgages? They were all primarily founded to make mortgages, and that is regulation. Because the response to every crisis is regulate the banks, which tied their hands, which is why the non-banks have so much market share. The right thing to do is to take the foot off the banks, let them compete with the non-banks, and I think you can do it without putting too much risk in the system, because the risk has just gone elsewhere, and it's gone outside the supervisory umbrella, and when we get the next cycle, we're going to find out if we were better off.
Thomas Show. Got to leave it there. It's good to see you, sir.
Thank you, Jonathan.
Thank you for being here. We appreciate it. Thomas Show there of KPW. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Boeing has reached a tentative agreement with striking hourly workers at its St. Louis area factories. The company says the 5-year contract offers expanded wages by an average of about 45% and provides a 24% average guaranteed wage increase. Workers will also receive a $4,000 ratification bonus. Union representatives are set to vote on the contract Friday. Mexico is planning to impose as much as a 50% tariff on cars and other Chinese products, aligning the country more closely with U.S. protectionism. The move comes as President Claudia Sheinbaum prepares for talks over North America's free trade deal. And Chipotle is venturing into Asia. The fast casual chain has plans to open locations in South Korea and Singapore next year. Chipotle's CEO says he expects international markets to become the next layer of growth beyond North America. And that's your Bloomberg Brief. John.
Hey, Vonnie, appreciate it. Up next on the program, don't fear the pause, fear the cuts.
Don't fear the pause, fear the cuts. They have to do a preemptive insurance rate cut. What they don't know is the trajectory of what the impact of labor market softness is going to be on consumption.
That conversation up next with Aditya Bave of Bank of America Securities from New York City. You're watching Bloomberg TV.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg. The economic data is about 42 minutes away. Stocks going into it doing okay, up by 0.2% on the S&P 500. On the Nasdaq, up by 1/3%. Under surveillance this morning. Don't fear the pause, fear the cuts.
Don't fear the pause, fear the cuts. When the Fed starts to cut rates, a lot depends on why they're cutting rates. They have to do a preemptive insurance rate cut. What they don't know is the trajectory of what the impact of labor market softness is going to be on consumption. And I think that's the linkage that they're trying to, give the market some sense of relief and comfort.
So here's the latest this morning. Investors preparing for the last major read on inflation before the Fed's rate decision next week. Aditya Bhavev, Bank of America Securities, saying there is now clearer evidence of deterioration in labor demand, and we are changing our Fed call to show 2 25 basis point cuts this year in both September and December. Aditya joins us now for more. Aditya, good morning.
Good morning. Thanks for having me on.
Thanks for being here. This is a change to a long-standing call. You were looking for no cuts in 2025.
Correct.
For a long time, you said there'd been a step down in payrolls growth, but measures of slack had stayed pretty stable. So let's start here. What's changed?
So what's changed is both the reaction function expressed by Chair Powell, which was more dovish than we were expecting, and some signs of weaker labor data. So payrolls have weakened more than we were expected. The unemployment rates moved up, although that was sort of expected. You can look at the ratio of vacancies to unemployed workers. That's ticked down a bit. So you take all of that in the context of the way Chair Powell is talking about the trade-off between concerns about higher inflation and concerns about a weakening labor market, and it does look like the Fed will cut. We still think they'll have to be quite cautious in cutting, so we only have 2 cuts in this cycle under Chair Powell, 25 in September and 25 in December.
The labor market and his approach to it seems to have changed as well. In the news conference a number of months ago, he appeared to anchor his view on the labor market around the unemployment rate. And now that's shifted to payrolls growth. Does that stack up for you? What's behind that?
It's hard to say what's behind his thinking, but I would say we are probably more concerned about labor supply, or we think probably a larger share of the shock that we're seeing in the labor market is a supply story than a demand story, than perhaps the Fed is conceding.
Do you think that the revisions, though, changed the view a little bit? Just the idea that there was that much less momentum when we saw a negative payrolls print in June for the first time since December of 2020?
The revisions are interesting. That's one way to think about it. The other way to think about it is that we grew 2.7% in terms of private domestic demand in that period where the revisions occurred. And there was only 70,000 in job growth per month in that period. So what does that tell you about productivity? Also, what does that tell you about the break-even rate? We might have already been in a world where break-even job growth was a lot lower and productivity is really surging.
This is a fascinating point, and it's the reason why a lot of people are saying maybe the weakness is behind us. Maybe the weak data already occurred, and we're heading to some sort of reacceleration. Do you think if the Fed cuts into that, it becomes a liability from an inflation perspective, or do you think that this is a new paradigm with a productivity overlay that we really are not counting enough?
We've been concerned about inflation for a while. Not necessarily the impact of changes to trade policy, but just underlying inflation. We think that's been stuck around 2.5% for a long time now, and the Fed is not willing to concede this. The Fed keeps saying that X of the tariff impact, we're definitely heading back towards 2%. We've made a lot of progress on the target. I just don't see it, to be honest. And I think, like you said, cutting into a potential reacceleration in the economy, which we are seeing in our consumer spending data as well, the BAC card data, spending by our credit and debit card consumers, everything aggregated and anonymized. We're seeing a pickup. We're seeing a reacceleration. And If you cut into that, then I think that creates some upside risk to inflation.
Is that why we wouldn't see, say, 50 basis points next week, even though some people are calling for it after the weakening labor market report?
It's quite unusual for the Fed to be cutting with 3% inflation, even 25, never mind 50.
Right.
All at once. The inflation report that we're about to get, the chairman said, a one-off, but not all at once. I think that's really interesting from this Fed chair, because not only is he telling us he's willing to cut rates at 3%, he's willing to cut rates again, even if inflation prints come in hotter over the next several months. I want to understand what that would do to your outlook for inflation in 26 if this Federal Reserve continues to dismiss hot prints and keeps cutting.
So we're thinking of the inflation trajectory as more of a plateau rather than a mountain. So to the extent that retailers do pass costs through, and there's a big open question around that, but to the extent that they do that, we think they'll be quite strategic, quite slow in doing that. So instead of getting this big spike and then coming back down to target, we think you basically go up into the low threes, and we're almost there already, and you stay there for maybe a year. The question is, what is the path back down like? We have the core PCE ending next year at around 2.6%. That would be with a lot of the tariff effects already rolling off. Is that acceptable for the Fed? And if it is acceptable for the Fed, if the Fed is implicitly raising its inflation target, there's nothing wrong with that, with 2.5–3% inflation from a macro perspective, but it does mean a higher neutral rate, because your neutral policy rate is a function of your inflation target. So then policy becomes even more accommodative, everything else being equal.
So the numbers would actually back up what you're saying, because we haven't had a 2% inflation rate going back more than 4 years. So it raises a question why the market doesn't seem particularly alarmed about this, and why you are seeing break-even rates continuing to be pretty quiet and still around that 2% level.
So here's a fun fact for you. Since the first quarter of 2021, we have never had core PCE inflation on a quarterly annualized basis sub 2% for even one quarter. We've only been below 2.5% a couple times, and that was all used cars. So we're basically stuck above 2.5%. I just don't see how you can look at it any other way.
Aditya, appreciate your take. Thank you, sir. Aditya Bava there of Bank of America, going into the CPI report in about 35 minutes' time, raising some big questions about what we might see from the Federal Reserve in September and beyond. And the beyond is the more interesting piece of this, 25 basis points. That or 50, I've got no idea. The guidance from there is the interesting piece of it all.
Do they still have a 2% target if it's if the inflation rate is 2.5% or even 3% for 10 years? I guess that if you look out and you say 5 years from now, if it still is above 2% and that's okay, if the labor market's intact, well, then what are we talking about in terms of a target?
Mohamed El-Erian has been talking about this for months, that basically they just need to come clean, that they're actually not targeting 2% anymore. They're basically just accepting it's going to be a 2 to 3% inflation rate.
Months, years. He's been talking about it for years.
You're right.
He said if you were going to set an inflation target of the Fed right now, it wouldn't be 2, it'd be 3. And basically, they've been playing the game as if it was a 3% target.
Yeah, and so we'll see their reaction to today's CPI.
Coming up on the programme, we'll catch up with Greg Battle of BNP, Pooja Kumra of TD Securities, Tiffany Wilding of PIMCO, and David Kelly.
A cidade estava sitiada.
Isso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro. People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now. It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI-enabled. That actually adds value to economic growth. And this, we think, could be time because you have a strong hardware power and you have a strong software power, as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We definitely see more lingering inflation.
That reaction function is definitely more tilted towards the weakness in the labor market as opposed to potential upside, risks from inflation.
I don't think the Fed really set us up for 50.
Given the inflation backdrop, it'll be pretty much premature to start cutting aggressively at this point.
We still have a lot of additional inflation from tariffs in front of us.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The main event, 30 minutes away. Going into it, your scores look like this. Live from New York City this morning. Good morning, good morning. Equity futures on the S&P 500, positive on the S&P this morning, a few tenths of 1%. Likewise on the Nasdaq 100. In the bond market, really well behaved over the last few weeks through September and through August too. Bond yields back down to about 355, up by a single basis point this morning. On 10, just north of 4% at 4.05. The data drops in about 29 minutes now. CPI just around the corner, together with U.S. jobless claims.
Yeah, which is going to take precedence at a time where very much the labor market has taken all of the oxygen out of the air. The CPI print, people are going to be talking about the headline number. We're going to be looking under the hood. It matters where any inflation came from. Is it that people are taking airplanes lots of places? Are they paying up for their hotel rooms when they go on vacation? Or is it coming from the basic staples that could potentially be tied to tariffs or other supply disruptions? The good side of things. That's going to matter to give a sense of whether this is discretionary or whether this is coming from another location.
This market has moved on so quickly from inflation prints in America. If you told me back in April, you're going to get inflation in September and nobody's going to care. They're all going to focus on the labor market and the Fed's going to cut rates even if it comes in hot. I've been like, what are you talking about? April 2nd just happened.
It seems like Team Transitory got back together subtly and then quickly and then all at once. And now it's this idea that inflation is no longer a concern. I personally am concerned just about vacation planning as well as eating out that has become incredibly expensive. These are the aspects, though, of life that people do care about. The inflation that does really affect the way people think about their spending power, about their income. And I think it does matter to understand whether the stagflation light was an overstatement or whether that still is a dynamic very much at play.
Chairman Powell in Jackson Hole, Wyoming, talking about a one-off inflation shock, but not all at once. So maybe in the next several months, we'll get a few more inflation reports that come in a little sticky, a little hot. He's setting up this Federal Reserve to basically look through it.
Exactly. You can just shrug it off and ignore the CPI prints if they're hot, because we already know that it does seem like they are anchoring, at least at this moment, towards the weakness in the labor market. we've been talking about how Governor Waller has been ahead of the curve when it comes to this Federal Reserve, and basically the one that pretty much seems like he wrote Jay Powell's speech at Jackson Hole. But it's also a moment of vindication potentially for this White House. Yesterday, after the PPI, that was a downside surprise, and many saying you're not seeing the excessive pressure on prices from tariffs that some were expecting. This White House is feeling vindicated and asking them to go bigger with a jumbo rate cut.
2 data points, 27 minutes away. Inflation data and jobless claims. Coming up this hour, Greg Bowdle of BNP Paribas as stocks trade at all-time highs. We'll speak to Pooja Kumra of TD Securities with an ECB rate decision just around the corner, and Tiffany Welding of PIMCO as we break down the latest inflation reading. We begin this hour with stocks edging higher as traders await a key CPI report before the Fed meeting begins. Greg Bowdle of BNP Paribas writing, risk of a shallow correction post the FOMC decision could set up a Q3 earnings season rally. Greg joins us now for more. Greg, good morning.
Good morning.
This is what a lot of people are thinking about, is that things start to pick up from here. We heard it from Steve Chevron of Federated. We've heard it from Mike Wilson of Morgan Stanley. That going into year end, you could have some kind of economic acceleration into 26. Are you that bullish?
Yeah, I don't necessarily disagree with that. One of the things we have to think about with things like the CPI is that equities are a nominal asset. So when we think about earnings growth, it is in nominal terms. So if you have the Fed willing to run the economy a little bit hotter, that can be bullish for earnings.
How hot are they going to run things next year? Are they going to stop at 3? When they talk about taking rates down to neutral, do you think they stop at 3 for the Federal Reserve?
It very much remains to be seen, but I think the market's going to trade off the narrative that we have a dovish Fed who is willing to run it hot into the back end of this year, and then those are going to be questions for next year, I think.
You mentioned shallow recession. Did that happen?
So what we mentioned was the idea of a shallow pullback specifically. So what we're talking about here is when we look at this year, it reminds me a lot of 2019. 2019 was a really bullish year for equities, and a big part of that was the Fed started a cutting cycle in July 2019. But when you actually look at the price action, it was very well priced going into the event, and the softest patch that we had that year was immediately after the Fed started cutting rates. So it was a kind of buy the rumor, sell the fact type move. So we think there's a risk here that, this September rate cut is very well priced now. Fed can deliver that, and the market can take a breather.
Which is the idea of don't fear the pause, fear the cut, because this has already been priced in. It raises a question of which stocks have actually gotten the greatest benefit from the idea of an easing Fed. Do you believe that the cyclicals can really be the leaders going forward if there is a rate cutting cycle in the face of a labor market that definitely has slowed down, regardless of what you think in terms of the long-term implications?
Yeah, that's our view, that there can be this rotation, but I do think we have to be a little bit cognizant about which cyclicals we're looking at. Because you can look at things like the small and mid caps that are generally seen as rate cutting beneficiaries, cyclical part of the market. But they've massively outperformed things like the industrials over the last 6 weeks or so. So we think where there could be a catch-up trade is some of the industrial cyclicals. Some of these potential beneficiaries from some of the CapEx measures in the One Big Beautiful Bill. It's worth looking at the ISM readings as well that we've seen this month. The new orders specifically picking up there. So if you have a Fed who's willing to run things a little bit hotter and you have new orders pick up, we think the kind of industrial, cyclical, old economy parts of the market that do trade at less inflated PEs are potentially interesting.
If you're interested in that sector, though, does it worry you that manufacturing jobs have actually been coming in soft?
Yeah, I think it has a cause for concern, and I think the data is very hard to read at the moment. There have been a lot of revisions. Depending which bits of data you look at, they are pulling in different directions. So that's why I think it's a very difficult kind of market for the data to try and navigate. But I think that it looks increasingly like the Fed is willing to cut or do a series of cuts, which I think for us puts the risk reward on the idea that this could be a soft patch that reaccelerates into next year. So this could be a good time to...
I noticed you put a probability on a 25 or 50. I just want to go there because the administration is pushing for this 50 basis point. You only say it's 10% chance. What kind of CPI print could we see today? Like how soft could it be today that maybe actually you would change your probability?
Yeah, so that probability is more what the market is implying. So if you look at what is implied for the September cut, it looks exactly like what we saw in 2019 going into that cut. So the market is basically pricing this base case that you get 25 bips, and it's more of a tail that you could get 50. So our view is that we'll get 25. So that's why I think there's maybe a little bit of room for disappointment. It's not a particularly very bearish call, but it's just more this idea that we've really kind of bought the rumor, sell the fact, and we can just drift lower into what's a seasonally soft patch.
That's one way of looking at it. What if we get a really soft print at 8:30 Eastern time, based on the odds you just gave? Shouldn't that set us up for a bigger move on a weaker inflation print than a larger one.
Yeah, so I think one of the things that we've been talking about from a volatility perspective is that even if we think probabilistically we're more likely to get a shallow correction, the tail risk for the market is actually fatter, we think, on the upside. So when we think about the options market, the part of the options surface that we think is most underpriced is the right tail. You know, if we have a very big and very volatile move, I think that's more likely to be on the upside than the downside. We mentioned things like Russell that have outperformed a lot, the small and mid caps. There's still quite a big short interest in the futures there. So if you were to get a very soft print today and the market read that as driving 50 basis points cuts, that's where the kind of risk of a more volatile
Can I just follow up on that, the right tail risk? I'm surprised by that, given the experience of April, May, and beyond. Haven't we been conditioned that upside risk is a massive factor in 2025?
Yeah, but part of that is just how the market trades. You do tend to have rallies, even quite large rallies, happen in a less volatile manner. So you can see the market trending up, say, 25 pips a day, and you can get quite a big move over 1 month, 2 months, 3 months, but it comes across a less volatile backdrop. When you see the market sell off, you know, it tends to be, you know, more volatile, up, down, up to, down to, up to, down to. So the way the option surface is looking at the moment, the downside is very elevated relative to the upside. So I think if you're interested in playing that idea that things become more dislocated on the downside, on the upside, and the Fed runs things too hot, the upside optionality is the way to play it.
Then give Greg a call. Greg, it's good to see you.
Thank you.
As always, there's the pitch. Greg Battle there of BNP Paribas.
Evan Brown agreed with him that the idea of the pain trade being to the upside more than to the downside, and we keep hearing this. Amy Silverman also talking about that, with the idea that people are persistently pessimistic on Wall Street. It seems like, I guess, since 2008, everyone's waiting for the next big short, and it never happens. And so people are sitting here waiting and thinking maybe this is it, and yet here we are.
Well, based on the price action of the last few months, I would have thought the FOMO was real. No? Missed out on that kind of rally. Do you want to miss out on the upside if everyone's going around like Greg Battle talking about upside risk?
Sure, you could make that argument. At the same time, if everybody is super pessimistic and prepared to miss that rally, you start to wonder exactly how things are priced. It just highlights how difficult it's been to price in both the resilience and creativity of corporate executives in order to deal with all of the potential incoming data, the resilience of consumers, and just how powerful the AI story has been in the investment cycle.
Super powerful, based on a move from Oracle in yesterday's session. Equities up again this morning by 0.2%. With an update on stories worldwide with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. A search is underway for the killer of conservative activist Charlie Kirk. Kirk, the founder of Turning Point USA, was shot as he was speaking to an outdoor crowd at Utah Valley University. The 31-year-old was a close ally of President Donald Trump, who posted about the incident on social media and ordered American flags to be lowered to half-staff until Sunday. UK Prime Minister Keir Starmer has removed Peter Mandelson as Britain's ambassador to the United States after new revelations about Mandelson's ties to disgraced financier Jeffrey Epstein. Mandelson referred to Epstein as his, quote, best pal in a book of tributes to the convicted sex trafficker. Bloomberg also reported that Mandelson told Epstein, quote, I think the world of you, after Epstein's arrest. Former Vice President Kamala Harris says it was, quote, reckless to let President Biden and his wife, First Lady Jill Biden, decide whether he should have sought re-election at age 80. In her forthcoming memoir, 107 Days, Harris says the stakes were too high and the decision shouldn't have been left to an individual's ego. Harris's book is set to be released on September 23rd. And that's your Bloomberg Brief. John.
Vonnie, we appreciate it. Thank you. Up next on the programme, Pooja Kumar of TD Securities with an ECB rate decision. Coming up next from New York City this morning. Good morning.
is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
We're likely going to have inflation year over year rising, yet you're going to have a Fed very likely easing this month. And so that's the cross currents we're going to be talking about. And it comes down to the labor market. We're at stall speed in the labor market. We do not have a recession, but the fact is you have hirings that have just flatlined.
The range of views on this economy is so wide. That was Joe Davis, the global chief economist at Vanguard, talking up the labor market being at stall speed, on the precipice perhaps of recession if you listen to Neil Dutta of Renmag, and then others just looking for a re-acceleration. That call on re-acceleration coming almost exclusively from the equity market bulls, but still super wide range.
Well, it's also coming from people who are seeing mergers and acquisitions, who are looking at the industrial sectors of the United States. It's almost as though you look at housing and you look at certain pockets of consumers and you say, oof, this doesn't look good. And then you look at the rest of the economy and you say, actually, there's something else happening here. And those two are in direct conflict with one another.
8:15 Eastern Time, just got an ECB rate decision, unchanged as expected. The price action going into it and the numbers we get in 15 minutes time. Jobless claims and CPI look like this. We're firmer by 0.2% on the S&P, on the Nasdaq up by 0.3. In the bond market, yields just a little bit higher across the curve stateside. And in the FX market, euro-dollar unmoved off the back of this. Euro-dollar 116.84. Let's head over to Frankfurt, Germany, and get you a breakdown of this decision. Bloomberg's Lizzie Burden joins us now for more. Good morning, Lizzie.
Hey, John. Well, this hold was very much expected by economists, by markets as well. The question is whether the ECB is done with cutting, as economists expect, or whether there's another insurance cut in the ECB's back pocket, as markets had expected. So for clues, we're looking at the forecasts here. I'm waiting for the longer-term forecast, but this is crucial because it's the first batch of forecasts since that US-EU trade deal. And, of course, 15% tariffs are higher than had been in the baseline scenario, but not as bad as the severe scenario. They say that they see 2025 inflation at 2.1%. In the previous forecast, they had seen 2%. But what we really are interested in here is the number for 2027. They see GDP growth at 1.3% in that year. Previously, they had seen 1.3%, so exactly the same. But they're raising the inflation forecast for 2025-26 and cutting it for 2027. Now, that's what I was looking for here, because perhaps you could take that as the ECB saying mission accomplished, no more cuts here. Now, crucially, we need to see how hawkish Lagarde is at the press conference. In previous recent press conferences, it has been noted that Lagarde has been more hawkish than the rest of the governing council, or at least what is on paper here. Maybe there is a disparity there. Does she emphasize the uncertainty that this trade deal alleviates, or does she emphasize that 15% is above the base case? I'll be listening for that. There is also the big question of French politics, of course, because once upon a time, Madame Lagarde, as you know, was the French finance minister. Will she say that the ECB would intervene if the oats-bundt spread were to widen? Highly unlikely. I don't think she'll want to wade into domestic French politics. But just looking at the euro reaction here, There's absolutely none. And frankly, it may be that CPI print coming in just a few minutes' time does more for the euro than what's happening here in Frankfurt.
We're not here to close spreads. Feels like a lifetime ago. Lizzie, thank you. Lizzie Burden with the latest in Frankfurt, Germany. Some very mild marginal movement on euro dollar. Negative on the session now by about 0.2%. No predetermined path at the ECB, determined to stabilize inflation around 2%.
Yeah, and it seems like, based on the projections, to Lizzie's point, it looks like not mission accomplished, but it may take some idea of a rate hike off the table for some next year, which was some people were speculating with the ECB. This idea that they increase the inflation expectations for next year but decrease them for the following one really highlights where they see things going and how they do see this as sort of a one-time shock.
Let's get over to Pooja Kumar of TD Securities for more on this story. Pooja, welcome to the programme. The ECB not pre-committing to a particular rate path. This was widely expected, Pooja. They're forecasting inflation ultimately to stabilise around 2% out in 26, out in 27. Pooja, when you look at things, could that story be disrupted by the trade variations that we've seen already so far this year?
Yeah, as in when it comes to forecast, decision, everything seems pretty much as what we had expected. So far, from an ECB perspective, they are basically, it's no longer about tinkering the policy for the disinflation process in Europe area. It's basically about the uncertainties. And when it comes to tariffs, so far, Europe has actually done a pretty good job. We are not seeing the kind of disruptions in terms of growth, PMIs. But I think, can that domestic resilience actually continue when the global resilience is actually being a little more shaky right now? So I think that's where the ECB needs to address whether they are done or there's more to go just because of the global uncertainty, and if the domestic consumption can be as strong as what they are expecting going forward.
Well, Pooja, as you know, there was a very simple story being told after April 2nd and the massive tariffs we saw from the president, particularly the massive tariffs on China, is that China would do very little to address its overcapacity. And because the walls were going up in America, Europe would have to eat it. And that this shock was actually a disinflationary shock for the Europeans when people thought it might be, I stress might be, an inflationary shock for the US economy. Pooja, is that no longer the case looking out to 26?
I think it's definitely the case, and this is something that even the ECB minutes from July have pointed out. We are already seeing signs of good dumping in Europe, along with low oil prices, higher euro USD. All is basically giving you the kind of inflation forecast that ECB is looking right now. But I think at this stage, they are looking at it as a just one-time shock, and they do not want to be very reactive, just because, even we are the middle range of the neutral, and they don't want to remove all the capacity of easing just because of, sudden, just small little jumps in the system. But this is one of the risks that is being highlighted.
How much does this act as a detriment to growth? And I say this at a time where the economic growth forecasts in Europe are some 1.2% for this year. That's higher than expected. And next year coming in at about 1%, below where previously was expected. Pooja, how much is this no longer a tailwind that the ECB could potentially consider easing, even if they aren't going to necessarily hike?
I mean, there's always a risk, but I think one thing that has changed in the European narrative from the 2018 story that we have lived with tariffs in China is that Germany is ready to spend. They are not holding themselves back, and that's visible in the PMI services. So I think at least the ECB wants to be patient for the next couple of months as how this defense and infrastructure spending plays up. You note that infrastructure spending has a good multiplier for growth, unlike a consumption-driven expenditure. So I think that's where there are positives in the system that we should not ignore, and I think that's what ECB wants to dwell on. But, they can buy another 4-5 months, but after that, if they don't see the German growth picking up, I think the case for easing is still there.
Pooja, this is a forgettable decision. We'll see what actually happens in the news conference. But right now, we're looking through, and this is pretty much exactly in line. How jealous is the Bank of England and the Fed that this is sort of something that can fade into the background and sort of be a non-event?
Sorry, I didn't catch you.
Just how unique is this position of the ECB, where they're in a somewhat of a non-controversial position versus, say, the Federal Reserve next week grappling with inflation and slowing growth, while also the Bank of England dealing with the deficit and the overhang there?
No, definitely. I think ECB has definitely got it easy. I think it's more, I think even Fed, when it comes to labor market, they are getting signs. They have a dual mandate. They know how to go with policy forward. But I think for BOE, it's much more tricky when inflation is just so sticky. And even growth, it's actually one of the best performing G4 economies right now. So I think for BOE, it's more of a painful decision that how long can they be actually restrictive? Which is something, you know, when trouble comes to an economy, it comes very quickly. And I think that's what even central banks are right now a bit scared of, because everyone wants a soft landing, right? And ECB did manage to create it, so well done them.
Pooja, appreciate it. Pooja Kumra of TD Securities reacting to the ECB decision just moments ago. Let's go through the forecast from the ECB. So this is inflation excluding energy and food. They expect an average of 2.4% in 25, 1.9% in 26, and 1.8% in 27. If that's mission accomplished, allow me to share with you their outlook for growth. The economy is projected to grow by 1.2% in 2025. The growth projection for 26 is now slightly lower at 1%. The projection for 27 is unchanged at 1.3%. If that's mission accomplished, 2% inflation and a one handle on growth, then Europe's got a lot to do.
Well, and frankly, this highlights how the ECB is a single mandate bank. It is inflation, and it is focused on that, and it might be mission accomplished on that level. It hasn't really changed the trajectory for the European continent, which is a reason why so many people come on and they're saying, yeah, you can increase your exposure to Europe, but all in.
What happened to all that excitement about German stimulus over in Europe? And we're looking at one handles on GDP for growth,
well, this
the continent.
Yeah, this is the whole thing. What would it look like without that? And this is the reason why people aren't that worried about absorbing the debt, given how little there has been sold so far and how much there is to do.
I imagine the ECB president, in about 20 minutes' time when that news conference starts in Frankfurt, Germany, is going to stress the risks around that outlook from the ECB. If you're not pre-committing to a path, I don't think you're celebrating either. And given the risks surrounding the trade story, particularly what it could mean for the continent too, I don't think the disinflationary risk from Chinese overcapacity has gone away. And that could be something they have to confront in the years to come.
What I want to see is the emphasis. Is it on the disinflationary impact coming from China or the inflationary impact coming from tariffs? And that will determine where the risks are. Is it to a potential hike or is it to a potential cut? Should there be disinflation and growth that is at this pace?
Look what we're hearing from Mexico as we wake up this morning. Mexico looking to put the walls up to Chinese imports to please the United States and ultimately come to a deal with them next year.
Especially when it comes to things like autos. China absolutely flooding Mexico the way it has been flooding Europe, to your point. It has been surpassing some of these companies like Tesla when it comes to growth in Europe because they are just so cheap.
We'll get to the inflation story in just a moment. CPI just around the corner. Tiffany Wilding of PIMCO joins us. David Kelly of JP Morgan Asset Management. The inflation data just minutes away.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Inflation data just around a corner. Equity futures, your scores going into it look like this. Positive by 0.2% on the S&P, up by 0.3% on the Nasdaq 100. On the Russell, up by 0.3%. Also, the small caps, very sensitive to what happens here at the front end of the curve. 2s, 10s, and 30s look like this. Your 2-year bond yield so far this morning at 355.19. Yields higher by about a basis point. With your inflation data, let's cross over to Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got a hotter than expected reading as CPI on a month-over-month basis rises 0.4%. 0.3 as expected for the core. The year-over-year rate goes to 2.9% from 2.7%, and the core rate goes to 3.1%, stays at 3.1%, we should say. The other number out just now, initial jobless claims, big jump there, 263,000 last week. Don't have the previous revised number, but the unrevised number was 237. So a significant movement there. In terms of continuing claims, 1,939,000. That's a drop from 1,940,000. But remember, those are a week behind, so they're still reflecting lower rates of unemployment insurance filings for the month for the previous week. In terms of what we got here, index for energy was up 0.7%. There have been concerns about the fact that AI power plants are raising prices to try to pay for all the power that the AI people need. Food increased 0.5%. That's going to be a political problem for the president. Food at home up 0.6%. Airline fares, used cars, trucks, apparel, new vehicles all rose. I'll get you those figures in just a moment. But the index overall for services is something that we are concerned about. And services, less energy, the core services rate was up 0.3%. That's a little bit of a decline from 0.4 last month, which scared overall economists. But still, this number is nothing to write home about for the Fed. Probably not enough to dissuade them from, or to persuade them to do 50 basis points or dissuade them from 25. But it is still a higher number than forecast.
Mike McKee, I'll get to the markets. We'll come back to you in just a moment. Stay close. So we've got a bit of tension here. Small upside surprise on headline CPI, but a big upside surprise. The wrong kind of upside surprise on jobless claims. What wins out, you decide. I don't have a view, but the chairman does. The chairman of the Federal Reserve has told you that the labour market is the thing that he's focused on right now. So push that view through the bond market at the moment, and we're trading on claims. Yields are down at the front end of the curve by 6 basis points, 348. The dollar's weaker, euro dollar back through 117. Equities positive, Bramo, by 0.25%.
Yeah, if you take a look at the 4-week moving average of initial jobless claims, they came in at the highest pace going back to June, but the fastest pace of increase in that metric going back to December of 2020. To the extent that we saw downward revisions, the labor market very much front and center for the market. What I would suggest is this is a market that is gaming out a longer-term weakness in the labor market that suppresses yields across the curve. This isn't just the front end. And I think that that is telling you something.
Mike McKee, you've got a second look. What do you see?
Well, right now we're looking at new car prices up by 6%, according to this. Or, no, that's used car prices. I'm sorry. New car prices up by 0.7%. So big rise in new car prices, but an even bigger rise in used car prices. That's been in the wholesale data for a while. Apparel prices were flat after falling 0.3% last month. So maybe a little bit of the tariff impact is hitting there. Remember yesterday, retail and wholesale margins compressed, suggesting that some of that is being absorbed by middle people. Gasoline prices were down 6.6% now on a year-over-year basis, down 0.7% in terms of down 1.7%. I'm sorry, in terms of the month-over-month numbers, and that didn't keep us from getting a much higher rate of inflation for the headline.
Mike McKee, appreciate the update. Michael, thank you. Joining us now is Tiffany Welding of PIMCO. Tiffany, welcome to the program. Is there a stagflationary-like mix coming together here on the data that you see?
Yeah, so I think we're getting what we expected on inflation. We're getting some pass-through of tariffs. It looks like it's predominantly the firming categories are in goods, and otherwise things look a little bit better. I think the more concerning news from the data this morning is the jump in claims. It's been relatively contained despite the labor market, really slowing to a halt over the last year, and now the jump today looks a little bit more concerning, like we're moving out of just a period of very little activity or very little hiring or firing, to potentially some more separations. And that's going to be super concerning, I think, for the Federal Reserve. I agree with Mike McKee. I think overall the data this morning, I think, confirms a 25 basis point cut. There's probably going to be discussion around 50, although that's not our base case. And I think there's reasons, if you continue to see this kind of momentum on the labor market, to get several more cuts in the back half of the year.
Tiffany, what I find interesting about the market reaction is that, yes, they're picking up on this idea that claims came in the wrong kind of upside surprise, as John was saying, and that the trailing average is picking up at a remarkable and alarming speed. But that longer term, we're seeing the 10-year yield now break below 4% for the first time this year. I mean, we're looking at a 10-year that is also responding. Are you changing your longer-term trajectory for U.S. growth prospects in the heels of some of these labor market revisions and the sort of negativity that we're seeing from the claims?
Well, I think that, just the fact that the U.S. Treasury market continues to be a hedge for macroeconomic risks, for riskier asset volatility, I think is why you're seeing movements, in the longer end of the interest rate curve. I think when we look at, sort of valuations, we think kind of intermediate sector looks attractive here, does still provide risk, against downside protection, and it's something that, that we've been very focused on. So it's not surprising necessarily to me that you're seeing it in longer dated interest rates. I think overall on the economy side, we are really entering this kind of period of weakness, potential weakness. We'll see some fiscal supports that are offsetting the tariff effects, but they don't kick in until, the beginning of 2026, call it February, March, when consumers are starting to get really big refunds from retroactive tax cuts. But until then, we're really kind of in this period of weakness. And to us, the question is, some of these smaller and mid-sized businesses that are really having to shoulder the effects of tariffs, maybe they're not getting as much benefit from the one big beautiful bill tax cuts, can they really hold on here without firing people? And it seems like, maybe there's more concern around that, as we're watching the data.
Tiffany Welding of PIMCO. Tiffany, great to catch up with you. I know you've got to catch up with clients too, so thanks for making time for us this morning. Let's move in the bond market. This data is good for bonds. It's questionable for equities. Equity futures just about unchanged. We'll see if this move sticks, but at the front end of the curve, we're down 6 basis points. And as Lisa pointed out, we're down across the curve. And this is largely because of the way the Federal Reserve Chair set things up. Coming into September, he basically told us the following, that you could have a one-off effect on inflation, but not all at once. And the labour market data was concerning, Kim, which is why we're seeing yields down this morning, because there's much more emphasis on what we're seeing on claims.
And it seems like the idea that you're seeing a pickup in layoffs, to Tiffany's point, raises the question of how companies are adapting to some of the higher input costs. I was looking at some of the specifics here in the CPI print. Airline fares up 5.9% on the monthly basis. So again, it talks about the K-shaped economy and how the Fed is trying to cater to people who cannot afford to pay that. Those who can are.
David Kelly of JP Morgan Asset Management standing by. David, you've been looking at the data. Just want your first reaction, please.
I think both with regard to the CPI and with regard to the claims, everyone should sort of take a deep breath and not overreact to them. On claims, key thing to think about is last week was a week that contained a Monday bank holiday, or a bank holiday you call it in the UK, but a Monday holiday, Labour Day. The unemployment claims data are notoriously bad in a week that contains a public holiday. They just have never figured out how to seasonally adjust that properly. So I think that's an overshoot on claims, and I would not be surprised to see that number come down next week. Now, it still fits into a mosaic of a slowing labor market, and I don't deny that. I think the economy is gradually grinding to a halt here, but I think that overstates the deterioration in the labor market. And then similarly on inflation, these numbers are very close to in line with what we thought. The big surprises were probably an increase in motor vehicle repair costs, 2.4% month over month. And then, as Issa was just saying, a 5.9% increase in airline fares. But remember, they fell very sharply over the course of the summer as airline travel was down. Now it's picking up again in this K-shaped economy. So overall, the economy is still moving forward slowly. Inflation's gradually going up. The economy is gradually slowing down. That's what we thought tariffs are going to do. It's going to slow growth and it's going to add to inflation. But I don't think it's nearly as dramatic as either of these numbers suggest this morning.
Well, David, let's just stay on the labour market story, because that seems to be what the market is moving on, at least initially. You think the claims data maybe overstates the weakness. Do you think the step down in payrolls growth overstates the weakness too?
No, I mean, we saw the big down revision yesterday or earlier this week. That was not a surprise. No, I mean, there's weakness. The thing is, as Jay Powell has pointed out, it's a very curious kind of labor market because we're having a huge reduction in labor supply at the same time. So this does not speak of significant, labor market weakness. I mean, it's still a tight market. It's still hard to find good people. But I do think it reflects the fact that businesses don't want to hire here. I don't think there's a huge ongoing jump in layoffs, but it's getting harder and harder to find a job because businesses are just frozen because they don't know what the playing field is going to be with regard to tariffs going forward. And I think that is, that's the biggest thing that I think people are ignoring here.
David, a lot of people are hoping that things pick up in 2026, that the growth story gets better, fueled by the rate cuts we're about to see. Speaking of things maybe that we underappreciate, something you've been talking about for a while, this tax bill, the kind of stimulatory effect it might have in 26. Could you just sort of outline that for us this morning?
Absolutely, really important. All these new tax cuts, getting rid of the tax on tips over time, increasing standard deduction and so forth, the SALT tax break, all of them were made retroactive to January 1, 2025. But the IRS has not changed withholding schedules. That means that there's going to be basically a full year's worth of refunds on all of those tax breaks kick in the first few weeks of 2026 or first few months of 2026. That is the equivalent of big stimulus checks. Last year, the average income tax refund was about $3,200. This next year, in 2026, we think it's going to be over $4,000, with 70% of households receiving that. That is like one big stimulus check, one big lump of sugar put into the economy early next year. So if we can get to the first quarter without slipping into recession, there is, there'll be some stimulus there. But I do think that between now and then, the economy is going to be slowing in the fourth quarter.
David, appreciate it. David Kelly there of JP Morgan Asset Management. The data coming in a bit hotter than expected on CPI, but the claims numbers not pretty. Now, David thinks maybe that overstates the weakness in this labour market, but at the moment, this bond market's trading on it. Yields are lower across the curve. 2s out to 30s. We're down about 6 basis points on 2s. We're down 4 on 10s. The questionable story, what does that data mean for the equity market? Equity futures positive by about 0.1%. Up next, an ECB president, Christine Lagarde, taking over the news conference in Frankfurt, Germany. From New York City, you're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from New York City, welcome back to the program. We want to pause now for a moment of silence being held throughout the city of New York in remembrance of the September 11th terror attacks. At this time, 24 years ago, hijacked American Airlines Flight 11 struck the North Tower of the World Trade Center.
Right, quick, march.
We'll bring you the next moment of silence at 9:03 Eastern Time. In the meantime, I want to take you to Frankfurt, Germany, where ECB President Christine Lagarde is giving a news conference. Let's listen in.
Inflation is currently at around our 2% medium-term target, and our assessment of the inflation outlook is broadly unchanged. The new ECB staff projections present a picture of inflation similar to that projected in June. They see headline inflation averaging 2.1% in 25, 1.7% in 26, and 1.9% in 27. For inflation, excluding energy and food, they expect an average of 2.4% in 25, 1.9% in 26, and 1.8% in 27. The economy is projected to grow by 1.2% in 25, revised up from the 0.9% expected in June. The growth projection for 26 is now slightly lower at 1%, while the projection for 27 is unchanged at 1.3%. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So looking at the economy grew by 0.7% in cumulative terms over the first half of the year on account of the resilience in domestic demand. The quarterly pattern showed stronger growth in the first quarter and weaker growth in the second quarter, partly reflecting an initial front-loading of international trade ahead of expected tariff increases, and then a reversal of that effect. Survey indicators suggest that both manufacturing and services continue to grow, signaling some positive underlying momentum in the economy. Even if demand for labor is softening, the labor market remains a source of strength, with the unemployment rate at 6.2% in July. Over time, this should boost consumer spending, especially if, as foreseen in the staff projections, people save less of their income. Consumer spending and investment should benefit from our past interest rate cuts feeding through to financing conditions. Investment should also be underpinned by substantial government spending on infrastructure and defense. Higher tariffs, a stronger euro, and increased global competition are expected to hold growth back for the rest of the year. However, the effect of these headwinds uncertainty somewhat. The overall impact of the change in the global policy environment will only become clear over time. The Governing Council considers it crucial to urgently strengthen the euro area and its economy in the present geopolitical environment. Fiscal and structural policies should make the economy more productive, competitive, and resilient. 1 year on from the release of Mario Draghi's report on the future of European competitiveness, it remains essential to follow up on its recommendations with further concrete action and to accelerate implementation in line with the European Commission's roadmap. Governments should prioritize growth-enhancing structural reforms and strategic investment while ensuring sustainable public finance. It is critical to complete the Savings and Investment Union and the Banking Union to an ambitious timetable and to rapidly establish the legislative framework for the potential introduction of our digital euro. Looking now at inflation. Annual inflation remains close to our target edging up to 2.1% in August from 2% in July. Energy price inflation was minus 1.9% after minus 2.4% in July, while food price inflation declined to 3.2% from 3.3%. Inflation excluding energy and food stayed constant at 2.3%. Services inflation edged down to 3.1% from 3.2% in July, while goods inflation was unchanged at 0.8%. Indicators of underlying inflation remain consistent with our 2% medium-term target. Year-on-year growth in compensation per employee was 3.9% in the second quarter, down from 4% in the previous quarter and 4.8% in the second quarter of last year. Forward-looking indicators, including the ECB's wage tracker and surveys on wage expectations, suggest that wage growth will moderate further. Along with productivity gains, this will help keep a lead on domestic price pressures, even as profit recover from low levels. Looking ahead, the staff projections see food inflation dropping from 2.9% in 25 to 2.3% in 26 and 27. Energy price inflation is expected to remain volatile, but rise over the projection horizon, in part because of the start of the EU Emission Trading System 2 in 2027. Inflation excluding energy and food is expected to fall from 2.4% in 25 to 1.9% in 26 and 1.8% in 27, owing to the stronger euro and declining labor cost pressure. Most measures of longer-term inflation expectations continue to stand at around 2%, supporting the stabilization of inflation around our target. So moving now to the risk assessment. Thank you. Risks to economic growth have become more balanced. While recent trade agreements have reduced uncertainty, a renewed worsening of trade relations could further dampen exports and drag down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions, greater risk aversions, and weaker growth. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty. By contrast, higher than expected defense and infrastructure spending, together with productivity-enhancing reforms, would add to growth. An improvement in business confidence could stimulate private investment. Sentiment could also be lifted and activity spurred if geopolitical tensions diminished or if the remaining trade disputes were resolved faster than expected. The outlook for inflation remains more uncertain than usual as a result of the still volatile global trade policy environment. A stronger euro could bring inflation down further than expected. Moreover, inflation could turn out to be lower if higher tariffs lead to lower demand for euro area exports and induce countries with overcapacity to further increase their export to the euro area. Trade tensions could lead to greater volatility and risk aversion in financial markets, which would weigh on domestic demand and would thereby also lower inflation. By contrast, inflation could turn out to be higher if a fragmentation of global supply chains pushed up import prices and added to capacity constraints in the domestic economy. A boost in defense and infrastructure spending could also raise inflation over the medium term. Extreme weather events and the unfolding of climate crisis more broadly could drive up food prices by more than expected. So looking now at the financial and monetary conditions. Since our last meeting, short-term market rates have increased, while longer-term rates have remained broadly unchanged. However, our past interest rate cuts continued to lower corporate borrowing costs in July. The average interest rate on new loans to firms moved down to 3.5% in July from 3.6% in June. The cost of issuing market-based debt was unchanged at 3.5%. Loans to firms grew by 2.8%, slightly more strongly than in June, while the growth of corporate bond issuance rose to 4.1% from 3.4%. The average interest rate on new mortgages was again unchanged at 3.3% in July, while growth in mortgage lending picked up to 2.4% from 2.2%. So in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions. Thank you.
First question goes to Jana Rando of Bloomberg. Jana, please.
Wait, let me organize myself here.
Hello, good afternoon, and thank you for taking my questions. Madame Lagarde, economists believe the ECB's easing cycle is over, and with the outlook broadly unchanged, as you mentioned, would you say they're right? And would you say everybody on the Governing Council agrees on that assessment? And my second question is about inflation. You mentioned a whole bunch of inflation risks, and I am wondering, would you say they are balanced? Thank you.
Well, thank you so much for your two questions. Let me say this. The disinflationary process is over. And I'm referring here to the causes for inflation that we have experienced in the last few quarters. So, in anticipation of a possible questions, are we still in a good place? Well, we continue to be in a good place, okay? Now, why do I say that? Because inflation is where we want it to be. Latest reading, 2.1.
This is Bloomberg Television. I'm Bonnie Quinn in New York. Today marks the 24th anniversary of the 9/11 attacks. Memorials are being held to honor the victims, first responders, and all of those around the world impacted by the attacks. We go now to a moment of silence in observance of when United Flight 175 struck the South Tower of the World Trade Center.
Following the events of this tragic event, may God bless our nation and the whole world. Ave Christus Rex.
Gary Eugene Bird.
Joshua David Birnbaum.
George John Bishop.
Chris Romeo Besson.
You've been listening to a moment of silence at the 9/11 memorial. You can continue to follow the ceremony on your Bloomberg terminal at Live Go. We return now, though, to the European Central Bank news conference in Frankfurt.
What I have just formulated for you is something that was agreed unanimously around the table. On your second question, which deals with the risk to inflation, we don't actually narrow down the risk to inflation exclusively. We assess the risk on the activity, on growth. And that's where we say in our statement that risks are more balanced. But we don't nail down a risk diagnosis on inflation in isolation. But I'll be happy to come back to why we are more balanced. Maybe somebody else will ask that question. Who knows?
Next question goes to Annette Weisbach of CNBC. Annette, please.
Annette Weisbach, CNBC. Thank you for taking my question. I'll just follow up on that question. So why do you think risks are more balanced now, given the uncertainty still which we see elsewhere in the world? And of course, I need to ask you about France. We've seen, of course, that the political situation and the unstableness of the country has driven bond yields quite high. So how concerned are you about a déjà vu, which we had some years ago? Thank you. Not with France, but with other countries.
Gosh, I like it when you start speaking French. Déjà vu, huh?
School there, right?
Pretty good. So, more seriously, more balanced. I thought about it because I thought that one of you might have the question. You have to go back to where we were back in June, really, where we do the assessment of risk on the basis of the projections. And if you walk back to June, we had a highly uncertain situation. It was post-April 19, sure, but it was pre-July and certainly pre-August 21 when a deal was agreed and documented, however it was documented, but documented. And as a result of that, I think that two things have clearly moved out of our radar screen when it comes to downside risk. The first one is the risk of European retaliation. That was factored into our June projection, and that was considered as one of the risk in a trade war, as we had it at the time in terms of fear. The second thing is the uncertainty. So what we call, trade uncertainty, that has clearly diminished. And we can see that in the instruments that we use to measure uncertainty. It has not gone back yet to where it was pre-COVID. It's not the sort of normal level, and maybe there will not be a normal level. That's something that we really have to consider and take into account for future determination. It could well be that there was a reset in uncertainty around the world because of the trade situation, because of the geopolitical environment in which we operate. But the trade uncertainty has abated since June, when we had our last projection. So that's really what is at the root of this more balanced indication. It's not to say that risks have vanished. It's not to say that we are short of challenges. There are new risks, probably. There might be new ones. There will be new challenges, which really sort of anchors our determination to work meeting by meeting and to assess each and every time what the situation is. And we are post new strategy, and you will remember that one of the innovation in our new strategy is that we not only look at the baseline, but we look and discuss the risks around the baseline on the basis of work that is sometimes published, sometimes not published necessarily, which is sensitivity analysis. I see some of them saying, what, it's not published? There are certain things that we keep to ourselves, yes. We publish a lot, we share a lot, but sensitivity analysis, scenario analysis, and sometimes we do publish the scenarios, for instance, sometimes we don't, because we don't think it's absolutely relevant or helpful, but at least it informs our judgment. Oh, and you have the second question. Yeah, Look, I'm not going to comment on individual countries. I avoid that because we are the European Central Bank. We are not, narrowing our judgment on a particular country. But, I would say that I'm confident that the policymakers, that those who make decisions will take it to heart in that period of uncertainty to reduce uncertainty as much as possible. There is also a set of rules that is the fiscal governance, the fiscal framework, that is the internal rules of the European countries, and the member states have to adhere to it, have to deliver against it, and I'm sure that all governments, wherever located, will want to operate on the basis of that fiscal framework. Thank you.
Francesco Canepa of Reuters, please. Francesco.
Thank you very much and good afternoon. So you said that inflation is projected to be a target over the medium term, yet the projection for 2027 is at 1.9, so below 2 for the second year in a row. So where does below target start? And the second question is, again, about France in terms of the specific rules of TPI. How far are we from a disorderly and unwarranted move on the bond market? Thank you.
Call a spade, huh? Okay.
Always.
So, yeah, you're right. So, let's go to the inflation projections, if you will, because that's your first question. We have projections for 25, 26, 27. 25 and 26, we have increased by 0.1% our projection, right? So 26, our projection is now 2.1, and we've increased it by 0.1. In 26, we are now at 1.7. So in 27, we are at 1.9. And that's, first of all, it's a big 1.9. I hasten to add. But it's really on account of the exchange rate impact with the lag effect that it usually has, and this is factored into our projections. That explains to you the fat 1.9. I would also refer you, and I don't need to do that because you're very familiar, but we have indicated very clearly in our strategy that minimal deviation will not necessarily, if they remain minimal and not long-lasting, will not necessarily justify any particular movement. So, on the second question that you asked me, and this relates to France, I suppose. So I'm going to tell you the same thing. I'm not commenting on any particular country. But suffice to say that we always monitor market developments. And euro area sovereign bonds are orderly and are functioning smoothly with good liquidity. That's what we see, okay? But, our focus is, as you know, price stability, but we need financial stability for that, and it requires a well-functioning monetary policy transmission mechanism. And we believe that we have all the necessary tools, if needed, should that transmission not prove efficient throughout the entire euro area. Thank you.
The next question goes to Aude Kersulek of the French TV channel BFM Business. Aude, please.
Thank you for taking my questions. Do you consider that quantitative tightening significantly contributes to the monetary policy stance? And to what extent does it reinforce tighter financial conditions or not? And second question, do you consider that a widening of certain spreads over Germany will pose a serious threat to the transmission of monetary policy? And in such a case, could this trigger the use of the TPI even in case of major fiscal challenges for some countries?
Thank you for your two questions. So on the on your first question, in the situation where we are of this disinflationary process and having increased rates from minus 50 basis points to 400 basis points, the most efficient and primary tool that we use for monetary policy stance is the interest rates, as you will have seen. And we have cut interest rates by 200 basis points over the last 12 months or so. The fact that we are not reinvesting and that we are letting our portfolio on a runoff mode is proceeding smoothly. We had telegraphed it very carefully. It was anticipated, it was predictable, and I think that everyone who cares about those issues knows exactly how this proceeds and what very limited impact it has. That's a resolution that we have made, that we have explained very clearly to markets, and it proceeds accordingly. Now, as I said, we are always monitoring financial market developments. As I said as well, euro area sovereign bond markets are orderly and are functioning smoothly with good liquidity. If you observe the spreads, they have considerably tightened over the course of the last 2 years, and the spreads relative to bonds have a rather limited width between the other member states relative to the German bond. Thank you.
Next question goes to from the Bulgarian news agency BTA, Stas Stampolsky. Stas, please, here in the middle.
Hello, thank you for hearing me. You welcomed the Bulgarian governor Dimitar Radev as observer until 1st of January, when Bulgaria will become the next Eurozone member. How you see the benefits and the risks of Bulgaria to become part of the Eurozone regarding maybe inflation and deficit? And how you see the Bulgarian input in terms of the monetary policy decisions?
Well, thank you for your question, and you give me a chance to say something that I wanted to say in the first place, which is that on the occasion of this Governing Council meeting, we had a chance to welcome 2 new members around the table. The first one was the new governor of Austria, Martin Kocher. Forgive the pronunciation, I'm doing my best, but who has joined us to replace Mr. Holzmann. And the other person that we greeted at the table was indeed Dimitar Radev, the governor of the National Central Bank of Bulgaria. Now and I would like to welcome those of you from Bulgaria, because I know that there is a number of you who are present in the room, and I hope your colleagues will welcome you, but I certainly welcome you, and I know that you are spending a little bit of time with us, and it's very, very welcome, because it's wonderful to accept and to include a new member around the table of the Governing Council, and to have Bulgaria join the Euro area and share our currency, which is now yours as of January the 1st. So, having said that, you bring me back to a couple of decades, more than a couple of decades ago, when all of us moving into the euro from wherever we were, the Deutschmark, the franc, the lira, the pesos, we had this anxiety. You know, what was that change going to be about? Would it work? Would it function instantly? And surprise was to the upside, I can assure you. So it worked. It removed this nightmare of having to change from your local currency to another currency if you wanted to either travel, transact, or conduct any kind of business with other members of the European Union, part of the euro area. So exchange was facilitated. Why was that? Because of stability. And that's really as you know, it's the core of the mandate of the ECB, to provide stability, price stability. And the fact that inflation is very precisely targeted for the medium term, and that our monetary policy is aiming and taking all the necessary steps.
This is Bloomberg Television. I'm Bonnie Quinn in New York. The NASDAQ now observing a moment of silence, remembering the 9/11 attacks.
As we commemorate the 24th anniversary of the attacks of September 11th, 2001, please join me in a moment of silence.
You've been listening to a moment of silence at the NASDAQ, remembering the 9/11 attacks. And we'd like to go now to the New York Stock Exchange for a moment of silence there. Moments of silence there at the New York Stock Exchange and the NASDAQ, remembering the 9/11 attacks. We return now to the ECB news conference in Frankfurt.
Then certainly it's for the authorities to enforce the rule of strict conversion. And I very much hope that the authorities do that, because it's the rule, and it needs to be enforced. But we look forward to having you, and you will also, don't forget, being part of this market of 350 million people, your destination, whether it's for vacation or whether it is for investment, has a different face. The cost and the risk is in euro. Thank you.
And for the next question, we go to Olaf Storbeck of the Financial Times. Olaf, please.
Thanks a lot. My first question is on the burden of proof in your data-dependent framework. It felt to many that until June, the burden of proof was kind of that data needed to disappoint or to surprise in one way or another to prevent another rate cut, while now it feels that the burden of proof is data has to surprise to potentially justify another rate cut. Is this kind of a fair assessment from your point of view, or how would you look at that? And my second question is a conceptual question on bond spreads and kind of the European government bond market. So your communication on TPI is pretty clear and says you want to address disorderly, unwarranted market dynamics that undermine the transmission mechanism. How do you think about orderly and justified disruptions to bond spreads that may also undermine monetary policy transmission? I think the TPI doesn't really address this question, and I think it would be good to get some understanding of the government council's thinking on that one.
Well, thank you very much. I was not expecting less from you. But I tell you what resonates with me when I listen to your first question as to, whether it's the burden of proof is here or there to justify up or down or hold or bob. I think there were many governors around the table who, after a good discussion on the inflation outlook, the underlying inflation, the strength of transmission, and the risk, there was a good discussion on risks. After all that, many said, look, let us not over-engineer, please. And I think they have a point. So, you give me a chance to actually make another point which is slightly different. But we are very lucky so far, and I hope that stays the same, to have data of which the integrity is not challenged. So the data that we receive from the statistics offices of the member states that are compiled by Eurostat, despite the trauma that we have seen a few years ago out of Greece, but despite that one, which I think has been a lesson for all of us, I think the integrity of the data that we use is very high, and this is valued by all of us. But we take all of that, you know, the data that exist, the projection that we receive, the detailed analysis, the granular details in which we go down to understand underlying inflation, the assumptions that we make on the price of oil, on the price of gas, on price of commodities, the exchange rate, and we factor all that in. And it's on the basis of that mass of data that we try to organize as best as we can to see how it impacts inflation and how it helps us transmit our monetary policy stance that we decide. So I think that I would betray my governors on the Governing Council if I was to enter with you in that rather circumvoluted discussion about the burden of proof, which I was very familiar in my legal days, which was of a slightly different nature. So I think let's not over-engineer. Let's look at all the data. Let's look at all of them when they come, decide on a meeting-by-meeting basis, and make sure that we can continue to be in a good place with the decisions that we need to make at each meeting. Now, your second one, you're very familiar with TPI that you've just mentioned, and we have given a host of details and terms and conditions under which it operates. It's to be found on the press release that we issued back more than a year ago at the time when it came out. And you have to remember always that there is a set of criterias. There is a market assessment, and then there is the decision of the Governing Council. So it's in no way cast in stone, or it's not a straight jacket, and the discretion of the Governing Council always exists. Now, having said that, this is an explanation about TPI, because TPI was not discussed at all in the course of our Governing Council meeting.
The next question goes to Leonard Euxitidis of Handelsblatt. Leonidas, please.
Good afternoon, and thank you very much. Firstly, I would like to come back to the inflation outlook, please. Last week, Isabel Schnabel again explained in detail why she sees the balance of risk tilted to the upside. You said you didn't discuss so much about the topic today, but can you tell us, did more governors today share Isabel Schnabel's view compared to July? Could you share some brief insights with us? And secondly, in July, your communication was interpreted as more hawkish. Were you surprised by that? And do you feel comfortable with the fact that markets now less likely to factor in further interest rate cuts? Thank you very much.
That is 3 questions, so I will discount your third one.
Okay.
2 is already a stretch, but 3, no. You know, as I just said, particularly because we have now agreed on the strategy review, and that one of the changes that we have all agreed is to discuss around the baseline the risks. We had that good discussion of risks. Risks to growth, risks to inflation, we do not ever settle on risk to inflation as to whether it is to the upside, to the downside. We mention a number of factors that constitutes risk to the upside and risk to the downside. And this is all sort of highly technical and subtle, because depending on where you are and where you want to be, those risks to inflation, to the downside or to the upside are either good or bad. So you have to enter into, now I would go back to my previous questioner, that is a bit circumvoluted. But we do have those discussions, and we did have it yesterday and this morning, and it resulted in the risk paragraph that you have in the monetary policy statement, which starts with, and I will quote it for you if I find it right away, risk to economic growth have become more balanced. And I tried to explain why we came to this conclusion as compared with risk to the downside, which was incorporated in our June policy statement. It relates predominantly
So that is President of the ECB, Christine Lagarde, speaking in Frankfurt. We'll return to that news conference in just a moment, but we do want to bring you these opening numbers because we're higher once again today on the back of CPI data that perhaps wasn't as bad as feared, and on initial jobless claims that, although slightly worse than the estimate, were also perhaps not as bad as feared. So we have our rally continuing. The S&P 500 up 1/3 of 1%. The Nasdaq 100 up a full half of 1%. That halo effect from Oracle's 36% jump clearly impacting the Nasdaq today, although we know Oracle is not a member of that particular index. We even have the Russell 2000 higher, and I do want to mention the euro as well, trading above 117 after that ECB decision. Let's get to some stocks to watch, because we have Delta Airlines reaffirming its outlook for the quarter and full year after seeing a rebound in consumer confidence. Open Door Technologies, look at that, 31% higher, bounding higher after the co-founders rejoined the board and a Shopify executive was named CEO. And then Klarna shares, well, even they have turned around. That'll tell you the kind of market it is, because they were lower pre-market after rising 15% in yesterday's IPO. Oh, well, they've just turned again. Let's get back now to Frankfurt and ECB President, Madame Christine Lagarde.
Exactly what was felt by a very large majority of my governors around the table. And I think I've, as mentioned earlier, repeatedly said that we continue to be in a good place, which does not mean that we are on a predetermined path, because we have to decide meeting by meeting, because we are data dependent, and because we have to face the risks and challenges that are coming. Thank you.
So the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you very much for the opportunity. So my first question is on the resilience of the euro area economy. How far is this resilience one of the reasons for holding rates unchanged? And my second question, if I may, is still on the good place where the ECB is. Could we also think that it could be a pause in the direction of a rate cut, in the sense that is there a direction of travel, which is an expression you used in the past? Thank you.
Thank you so much. Thank you for your fidelity in attending and in remembering the words that I've used in the past. So you are right to refer to the resilience of the euro economy. And as an example of that, the fact that we had over the first half of 25, 0.7% growth is quite indicative of that resilience. Now, some would argue, no, you had a big front loading in the first quarter and a big payback in the second. And I would submit that this is not actually the case. There was front loading, but the high, unexpectedly high number that we had during the first quarter was partly front-loading, but was also partly investment and consumption. And if you look at the second quarter, which is higher than we had anticipated, if you take out Ireland, we tend to take out Ireland not because we don't like Ireland, but because sometimes it's a bit of an outlier for reasons that many of you understand. But if you take out Ireland, contribution of consumption and investment to growth was 0.2%. So good first half. We know that there are headwinds, and there will continue to be headwinds to growth. But I remind you that we have revised upward our growth projection for the whole of 25 from 0.9 to 1.2%. So yeah, it's a 30% increase when you think of it, right? But there will be headwinds. And that is reflected in the slight adjustment that we made for 26. We revised growth for 26 by 0.1, and we left 27 unchanged. And we believe that there will be positive for growth that result from the real disposable income that people have and will continue to have, from a very strong labor market. We project labor market to have a 6.1% unemployment rate, for instance. We also believe that the savings that are still very high at about 15% are likely, this is not a given, but there is a likelihood that those savings decline and will therefore help with additional consumption. Added to which, there will be significant investment, and public investment in particular, on the part of those countries that want to increase their military spending, increase their infrastructure spending. The Recovery and Resilience Fund continues to be disbursed until the end of 26, and the military expenses will pick up the baton from there, probably a little earlier than that actually, and will contribute to growth. So those are, essentially the reasons that we see on the upside. There are downside, as I said, there will be headwinds. No question about that. And you can include in that, more trepidation in trade, the strength of the exchange rate and what have you. And this is factored into our projections, by the way. I'm not going to characterize as pause, hold, direction of travel. I think all of that is swept away by the principles that we have agreed, which is to be data dependent, to decide meeting by meeting, to not have a predetermined path, and to really look at inflation outlook, meaning baseline.
Now we want to take you to a moment of silence in observance of when American Airlines Flight 77 struck the Pentagon.
That you, O Lord, would assuage the anguish of their bereavement and leave only the cherished memory of the loved and lost, and the solemn pride for those who have laid so costly a sacrifice upon the altar of freedom. For those of our day who have taken up the cause to secure our homeland, to wield the sword in righteousness, to protect our neighbors, grant prudence to execute justice with honor, always mindful we are under your divine gaze. Grant the blessing of wisdom and insight for our leaders, that they may be guided to do your will. Grant humility throughout our land, acknowledging your goodness to us. And finally, we offer supplications for those who currently are deployed, underway, or on duty for our nation. Surround them with the protection of the angels and a joyful reunion with faithful loved ones. In your most holy name.
And my father.
Amen.
Meredith's father. And
please join me for a moment of silence for that minute of impact 24 years ago today.
All right, you've been listening to a moment of silence at the Pentagon. President Donald Trump and First Lady Melania Trump in attendance, marking the 24th anniversary of the 9/11 attacks. You can continue to follow the ceremony on your Bloomberg terminal at Live Go. We return now, though, to the ECB news conference in Frankfurt.
Focus at the moment, as far as the US-Europe relationship is concerned, really focuses on trade and how much more we're going to learn of this trade situation and the repercussions that it will have, taking into account the overall spread of the tariff changes that have taken place and will continue to take place. Thank you very much.
Thank you. The next press conference is on 30 October, not in Frankfurt, but in Florence after our External Governing Council. Thank you very much.
And you've been watching the ECB news conference, but I do want to give you a check on stocks now. We're about 10 minutes into the trading session, and we are higher on the day after economic data didn't pan. So we have the S&P 500 up 0.3%, the NASDAQ 100 up about 0.25%. Now, the Russell 2000 is flying away with things. It's up 0.5% right there, those small caps, benefiting potentially from any interest rate cut that we might see next week and beyond. Let's take a look at yields, because we did see just a slight flattening of the curve and yields lower, and they're staying lower. The 30-year yield at 4.66. As you can see, the 2-year yield there at 3.50. The 2-10 spread is just at 50 basis points now. It had dipped below that for a few moments just a little earlier. Well, joining me at the desk is Evercore ISI Chief Equity Derivatives and Quant Strategist Julian Emanuel, the perfect guest for a day like today when we see the Mag 7, all the AI stocks rallying. But Julian, before we get there, I do want to acknowledge that it is, of course, the 24th anniversary of 9/11 and the attacks on that really awful, fateful day. You've never spoken publicly about where you were that day. Would you share it with us now?
Yeah, well, look, there are very few days and times in a person's life that shaped that person's life. And I was downtown that day as a trader and, you know, lost friends and colleagues that day. And so that has stayed with me. But there was really two things, I think, that I take away from that day. And the first, on a business level, you know, as tragic and horrific as it was, as huge a blow as it was to the United States of America and really the world, we remain resilient. Things bounce back. The markets opened a week later, and you know, look at the progress we've made in all walks of life since then. And then, of course, on a personal level, when I got home, the look of joy and relief on my wife's face, and having my 2 young sons there when so many others didn't return home, you know, is something that stayed with me.
And you've mentioned to me that you were about 500 yards away at the time working as a trader in Spear Leeds, Goldman Sachs.
Yeah, it's, you know, and it was difficult to return to the office, but again, life has to go on, and it does, and it did, and I think, you know, we're reminded about the resilience, again, given the tragic happenings in Utah just yesterday.
Absolutely. These things continue to keep coming, but there are a few days, as you mentioned, that get seared into the brains of Wall Streeters, and I definitely think that 9/11 obviously takes, you know, the icing on that. Do young traders ever ask you about that day and that time period?
All the time. All the time. You know, we talk about it. I started my career on a stock exchange floor, the American Stock Exchange, and so there is a difference and a novelty, but again, the camaraderie that's very particular to the financial business is something that people understand and share, and you know, part of developing in the business is learning the lessons and understanding the lessons of the past.
For sure, and we'll always remember, and it's hard to believe it is the 24th anniversary, but there are people still around that can remember and were there on the day, which in itself is a consolation, right, Julian?
Yeah.
Well, I guess let's talk about markets then, and this bull market that just keeps going. Julian, you told us we should be perhaps prepared for a little pullback. Did we already see that pullback, or are there more to come?
Well, so, I mean, if you think about the data we saw this morning, if we had seen that data 6 months ago, the markets would be plunging. Okay, you know, jobless claims breaking out of a multi-year sort of sideways channel, and you know, hot inflation data. And so in our mind, there's still a likelihood that you're going to get a pullback. And frankly, every great bull market, and this is a great AI-driven bull market, which we think ultimately goes to 7750 by the end of next year. But every one of these great bull markets tend to have moments that try and get investors to get off the ride, and we think there's still a possibility you get that before now and year end, but we'd use that as a buying opportunity.
Buy the dip. Well, Julian, I'm going to blow your mind right now because for the last 2 years, I have had this little note on my desk, literally August the 6th, 2023, where you put out a note on generative AI, and you said within 5 years, your base case was that there will be 67% AI adoption. We're just 2 years in, and would you say we're on track to meet your forecast?
We're absolutely on track. I mean, all credit to my team who developed the adoption curve those several years ago. We're really on track, and in fact, what we've seen anecdotally and the difference this year and why the rally has been so relentless off of that April low is that companies across industries are talking not only about how they use AI to control costs, but to drive revenue, and that's different and that's bigger.
Yeah, and Julian, I have to ask you because we have seen just a couple of stocks take most of the buying, let's say, or, see most of the buying through this, NVIDIA being one of the very large ones. But are you seeing just a little bit of rotation into other AI and AI adjacent stocks in the last few weeks?
Well, you are, but actually when you take the backdrop of it and you think about this bull market in the context of the late 1990s, what's remarkable about it is that market breadth in the late 1990s was actually poor. It was sort of all technology all the time. And in fact, when you look at the advanced declines today, they have been going up in lockstep with the averages, which tells you it may not be as headline fascinating as we are by the Mag 7, but the vast majority of stocks are also participating.
Now, the other thing that you do is you talk about the enablers, the adopters, and the adapters. And, in your research, you and your team basically find that, almost every industry, if not every industry, adapts and enables and adopts to some degree. Therefore, how do you choose which parts of the market you should be in at which particular time?
So what we like to do is look at the companies within the range of industries who've been very upfront about talking about AI. So until recently, it's been difficult to put numbers around, how much they're spending and what benefits they're deriving. So we put a lot of stock in, how many times they talk about it on a typical conference call, and we sort of adjust that for some industries. Obviously, technology talks about it more. On average, real estate talks about it less, but we adjust for that, and we also screen that further by thinking about companies who actually have reasonable valuations in a market that's very highly valued, basis their last 5 years of history, and most importantly, in an environment where when we think about 2026, earnings growth is just going to be an extremely important driver, where their earnings revisions trends are positive.
Now, how much does this story intersect with the interest rate story? Because it looks all but certain now that we're going to get at least 25 basis points next week. Beyond that, what do you see, and does that fuel the fire even more?
Well, it does, and we're in the camp that, like the market, you're going to get somewhere between 5 and 6 25 basis point cuts out to 2026. And the interesting thing about it, and the backdrop again of the late 1990s, where the Fed actually tried to pop the bubble that was really only beginning to form in the second half of 1999. We're not in that environment at all. We don't really see any combination of inflation or growth that would cause the Fed to turn around and hike rates. If anything, given the way the political winds are blowing, you might get more rate cuts than stickier inflation would expect. But that is part of the calculus that drives stocks higher and makes higher multiples something that we can have a little bit of nervousness, but we want to stay invested.
And a labor market that looks to be, getting incrementally more fragile as we get each incremental data point, and the fact that productivity is increasing partially, potentially because of AI. None of that concerns you?
No, well, the productivity part, again, is one of the positives. I think the labor market, from our perspective, is an evolutionary type thing. because clearly the data this morning was on the weak side. We don't think it's a red alarm flag. So we do think that when you think about what the Fed's going to do next week, there's still a question about whether they're cutting because they can or because they have to. But there's also this idea of the change in immigration policy affecting the labor balance, and we'll have to see how that evolves. But on balance, at the end of the day, you're still near generationally low levels at the unemployment rate.
You know, you talked about the 5-year period, which would bring us to, what, 2028? We're 2 years in. But I'm just curious, you know, is there a tipping point at which, sure, it's almost like the monetary policy transmission mechanism, right? The AI transmission mechanism, we're using it more in the economy, but it's time to move on stocks-wise.
Well, so we're going to be very attentive, again, to that overall level of adoption amongst the rest of industry and the trends that we see, because ultimately, if you get a stalled adoption rate, the hyperscalers will likely be under pressure. We don't see that as an overriding theme right now, but again, to the extent that we get closer to the middle of next year and think about 2027, when right now the projections for CapEx start to moderate, we'll be looking at that closely. But as I said, again, nothing for us to worry about in the here and now.
All right, Julian, see, when I saw that note, I knew it was one to keep on my desk. Julian, thank you so much, and thank you for sharing your remembrances of 9/11 as well. So generous of you. That is Evercore ISI Chief Equity Derivatives and Quant Strategist, Julian Emanuel. Time now for our top calls. Some of the analyst action in focus this morning. First up, Bank of America is cutting its rating on UPS and on FedEx, citing the end of the de minimis tariff exemption for small value packages. Next up, D.A. Davidson cutting its rating on Apple. It's citing the iPhone maker's lack of an AI strategy. The tech giant was also cut at Philips Securities. And finally, Chewy getting raised to a buy at Deutsche Bank following the company's earnings results. The firm says there's more opportunity for revenue growth in 2026 and beyond. August consumer prices then were mostly in line with estimates, but still above the Fed's target month over month at least, and year over year as well at 2.9%. Meanwhile, weekly jobless claims just hit their highest since 2021. Bloomberg International economics and policy correspondent Michael McKee joins me now to discuss the data. Michael, you know, many of these, numbers were in line with estimates, but yet when you dive in a little bit deeper, some things were troubling. Airfares, for example, and if you want to fix your car, it's going to get a little bit more expensive.
Services prices are the concern for much of the economics world right now because they're still going up, and they're not really related to tariffs. I mean, but given where we are, even the headline numbers are a bit of a concern. You look at the CPI and the core, and they're going in the wrong direction, and they're way above the 2% target. So at this point, clearly it's not a free pass for the Fed. Certainly doesn't justify anything in the range of a 50 basis point cut. And it puts into question what happens in October and December at their meetings after September. This is still not bad enough to keep them from cutting in September, but beyond that, we're going to have to see. Some of the things that move the most are things that are going to be political problems too for the White House. The president who has declared inflation has completely disappeared. Food at home, that's groceries, up 0.6%. Used cars were up 1%. You mentioned airfares up almost 6%. Airlines have cut capacity. They're raising prices again, and that may continue. Household furnishings, though, video and audio equipment, not too bad, and those are categories that are tariffed. Video and audio equipment going up, but furnishings is where everybody thought we would see a lot of tariff impact, and it hasn't happened yet. Does that happen? That's going to be the question. And as I mentioned, Bonnie, goods versus services, both of them are going up, but at this point, services prices still rising faster than goods, but you can see goods, the white there on the far right, they are going in the wrong direction as well. The trend is not your friend. So for the Fed, something to consider and something they're going to have to try to parse for us when they get to the Fed meeting, because they will probably cut rates, but then have to explain in the face of rising consumer prices why they did and whether they're going to continue.
On the initial jobless claims, it was a 28,000 job difference. So the number came in at 263. Economists were looking for 235. Sure, it's materially significant for each of those 28,000 people, but statistically, is it materially significant?
It would be important if the trend continues. We're going to have to see more than just 1 week, but it was a relatively large jump. And the problem is, once you start seeing that, you might see it continue and pick up steam. But the issue is that was the Labor Day holiday week, and it's hard to seasonally adjust that. So we're going to have to wait another week and see if we get the same level of job cuts or even more to know whether this is something we should be worried about or not.
You know, the balance of risks did seem to be tipping towards the labour market, and the Fed did seem to have some, ammunition to maybe talk about that next week. But after today, can we say the same thing?
And probably. The labor market has been weakening, and the Fed is concerned about that a little more than they are about inflation, because it's something we're going to have to ask them about, and I'll put it this way, because inflation, they believe, caused by tariffs is going to be a one-time rise in the price index for specific sectors. We'll see it, but then it won't continue. However, the worrisome thing here is if service prices still keep going up, then you've got an inflation problem that's not related to tariffs, and they're going to have to think about that, which is why I'm saying October and December, not done deals.
And of course, there'll be the continued expectation of, tariff questions, and also the Supreme Court taking it up on a fast-track decision-making process now. So, the Fed chair will have to take that into account at some point as well. Did the bond market overreact in anticipation of this data after PPI and in the run-up to PPI?
Oh, I think you're always going to get immediate overreactions, and we saw, although it's probably more related to the jobless claims, the initial overreaction with yields falling. And I think that'll come back a little bit. The market has to figure out probably less what the 25 basis point cut is than what the path is going forward, and if there's any change in what the terminal rate is. If that's the case, then you may see a repricing lower if the Fed brings down the terminal rate.
All right, Michael, thank you so much. Looking forward to that next week. That is, of course, Bloomberg's Michael McKee. And coming up in the next hour, Bloomberg's Romain Bostic is at Cantor Fitzgerald's headquarters for an exclusive interview with Brandon and Kyle Lutnick, sons of Commerce Secretary Howard Lutnick. This is Bloomberg Open Interest.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but Remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Of us. If we get out of here, it'll be a total miracle. I love you, darling. Take care of Caitlin, beautiful daughter. 3 minutes later, the tower fell. Out of the ash, we witnessed the awesome power of that incredible love. We've seen it rise again. Out of the wreckage, we watched unbelievable courage suddenly take form. And out of the darkness, we saw the timeless truth of American character shine for the world to see. In America, we take blows, but we never buckle. We bleed, but we do not bow. And we defy the fear, endure the flames, and emerge from the crucible of every hardship stronger, prouder, and greater than ever before. Last year, we were a dead country. Now we have the hottest country anywhere in the world. In New York, there were heroes like Chuck Costello, a 46-year-old elevator mechanic, and a member of the Knights of Columbus. He selflessly ran into the World Trade Center to free people trapped in the elevators. His body was not found until the following January, deep under the debris. While going through his belongings, Chuck's widow, Mary, a phenomenal woman, discovered a personal prayer written in his own words, "Help me to light the way for those in the dark, and when I enter the darkness, let me not panic, but patiently wait to remember the light." Beautiful words. When the time came, Chuck ran boldly into the darkness of hell on earth, and now he shines in the light of heaven above. We remember him this morning. That day we learned that the American heroic spirit was all around us. We saw it in the police officers, the great firefighters, the service members here at the Pentagon, and in the hearts of every American who answered history's call. One such hero was Army Sergeant First Class Steve Workman, who was on the edge of the impact zone when this incredible Pentagon was hit. He was right there. After leading hundreds of people to escape routes, Steve turned back and plunged into the inferno itself. Pushing through the debris, he came upon a severely burned Navy lieutenant, the only survivor from the Navy Command Center. Only one. The wounded lieutenant looked into Steve's soul and said, "Don't let me die." Steve replied, "I won't. I've got you. Just hang on." He wheeled the lieutenant out of the wreckage on the back of a maintenance cart before getting in the ambulance and taking him to Walter Reed Hospital. That man Steve saved, Lieutenant Kevin Schaefer, went on to join the elite team of CIA operatives who located Osama bin Laden. Steve, you're an American hero. We appreciate it. We appreciate what you've gone through. Please stand. Please stand. Where are you? Oh, good-looking man. You're a good-looking guy. You remember that day. You remember that day. Good. Thank you very much, Steve. That was something. That was something. In the years that followed, America's warriors avenged our fallen and sent an unmistakable message to every enemy around the world. If you attack the United States of America, we will hunt you down and we will find you. Go all over this sometimes magnificent earth. We will crush you without mercy and we will triumph without question. That's why we named the former Department of Defense the Department of War. It will be different. We won the First World War. We won the Second World War. We won everything before that and in between. And then we decided to change the name. Well, now we have it back to where we all want it. Everybody wanted it. Everybody is so happy to have it back. You will fail and America will win, win, win. The enemy will always fail. 24 years have passed since that Tuesday morning in September, and an entire generation of Americans have come of age in a totally different world. While they cannot remember the agony of that day, they are carrying on the legacy of those who lost. Around 8:30 a.m. on the morning of the attacks, Army Lieutenant Colonel Kip Taylor sent an email to his friends and family describing the joys of fatherhood and his excitement for the upcoming birth of his unborn son. He wrote, after you have kids, there are days that you just get going and you say, "Hi, honey, I'm home." What we do until that moment pales in comparison, but just that little statement, "Hi, honey," so American, so beautiful. But that's really the point of it all, isn't it? An hour after he sent that email, Flight 77 flew into Colonel Taylor's Pentagon office and claimed the life of a very proud father and true patriot. 6 weeks later, on October 25th, 2001, Colonel Taylor's son, Luke, was born. Luke then tragically lost his mom to cancer when he was just 2 years old, leaving him to be raised by his father's brother. As a young boy, Luke asked his uncle about the folded flag on the bookshelf, and when he learned about his dad's decades of devotion to the Army and the horrors of September 11th, that's when he learned. Luke carried that memory with him and joined the ROTC as a college freshman. He graduated just last year, and I'm pleased to say he is with us today as a second lieutenant and doing very well. He's rising quickly in the infantry, preparing for Army Ranger School. The spitting image of his dad, they say, Luke says that every time he puts on a uniform, he feels connected to his father and to our country. But it was a father he never knew. Luke, your parents are together in heaven, and they could not be prouder of the man that they have produced. They produced you. Those two great people produced you. Luke, please stand. Thank you. You look good, Luke. You look good. They're looking down on you. They're very proud. This morning, we recall the light of America's best and bravest and the love that they showed in their final moments. In their memory, we make a solemn pledge and a noble promise. We will honor always our great heroes. And you are our heroes. There's a group of people that don't want to talk about our heroes, but we will always talk about our heroes. And that's the way our country is, and that's the way the people feel. We will defend the nation they served, the values they upheld, and the freedom for which they died. We will support our troops, we will protect our families, and we will preserve the American way of life for every future generation. We will build taller, grow stronger, fight harder, and soar higher. And together we will go forward as one people with one heart, one fate, one flag, and one glorious destiny under Almighty God. May God bless the memories of those who died and the heroes who fought and the soldiers who still stand watch. May God bless the United States of America. Thank you very much. Thank you. Thank you.
And that was the president speaking at the Pentagon, of course, marking 9/11, the 24th anniversary of the terrorist attacks on September 11th. We do have a simulcast in progress, meaning we have our Romaine Bostic of Bloomberg Television speaking with Brandon Lutnick, chairman at Cantor Fitzgerald, and Kyle Lutnick, vice chairman at Cantor Fitzgerald right now. Let's join the conversation.
Combined $180 million promise that he kept and fulfilled for the families.
And we have a continued promise here today where any children or anyone related to anyone that was lost in the towers on that day have a standing job offer here at the firm. And we have 10 individuals here working at the firm today. And it's really incredible that we get to help them either continue their career here or launch their career into the financial services world.
24 years, and now this company that you now helm, as well as the charity, is at a bit of an inflection point. You've taken over for your father as the chairman and executive chairman of Cantor Fitzgerald. You've seen how much it's been built back up since 9/11. You know, what did you have, a couple hundred brokers back then coming out of that, and you have 2,000 now.
Today, across the three companies, Newmark, BGC, and Cantor, we have about 14,000 employees globally.
How much do you expect that to grow?
I expect it to grow, you know, for the time. You know, the joke that Kyle and I make is that we have no political aspirations, so we're going to be in our seats longer than our father was in his. You know, he was at Cantor for 40 years, ran the firm for 30. But it's really a testament, you know, to the leadership, you know, our dad built here and installed here. You know, these guys, you know, really take a lot of the weight off our shoulders, and we're, you know, super honored and glad to be a part of an incredible executive team.
This year, you've had a pretty good run when it comes to underwriting. Last time I checked, at least through August, you were the #1 underwriter for U.S. global IPOs. You've been involved in Bullish and eToro. I believe you have a couple others potentially that could price this week, like Gemini and Legence. What's driving that?
Our father always said when the market's cold is the perfect time to invest. And we've put a lot of time and energy into growing our investment bank under the leadership of Sage Kelly. And doing new offerings has really been sort of a good place for us, hitting the markets hard.
Yeah, we've doubled our investment bank size over the last 18 months. And again, I really give credit to the team we've built here. You know, we're a private investment bank, and that's very rare in Wall Street. So when we, you know, commit to an industry, we commit, you know, skate to where the puck is going. You know, I think, you know, our crypto efforts really shown that. It's our ability just to commit to the sector before everyone else, and you're just really seeing it pay off. And again, these guys are everything.
And you anticipate keeping this private?
I do.
What's the advantage of that?
The advantage is when you're a great company, there's no need to go public. You know, public is out raising money and a few other items. And I think for us at Cantor, we're really special, private, and we get to, you know, commit to something. We get to move fast. We get to be mobile and be efficient. Less bureaucracy. But again, we have an incredible leadership team, and you know, we run like a public one, but move like a private one.
And we should point out, I mean, right now you have 3 co-CEOs, one who heads equities, one who heads fixed income, and then, as you mentioned, Sage Kelly there with the investment banking business. Do you plan to keep that 3-tiered co-CEO structure?
There are 3 superstars, so I see no reason to change it.
Yeah.
SPAC deals. You have, Cantor Fitzgerald has always been a leader in that space, and we've seen a resurgence in SPAC deals. In fact, when you look at the number of IPOs we've had this year, more than half have been SPACs. What is actually driving that resurgence? Is that a regulatory easing, or is that just maybe just more risk appetite out there?
You know, Cantor has always been a big believer in SPACs. Before the SPAC boom in 2021, we were the #1 player in the space. During the boom, we fell down off of #1 because a lot of companies were going public. And now post-boom, we're back to being the #1 player in the space. It's always been an industry we've thought about and cared about, and always, you know, thought brought tremendous value. And you're seeing it again today. And I think what it allows is for us to be creative and thoughtful in how we help companies. And you've seen that with, you know, 21 Capital and BSCR, 2 Bitcoin treasuries, and hopefully a few more.
What's the health of the SPAC industry today relative to what it was after we came out of that boom in 2021, 2022, and things started to taper off?
I think it's very strong. Look, you know, I can't comment on how long an industry lasts, but I really believe in our franchise, and when you see it, you know, our SPACs tend to trade above 10, and that's because, you know, they believe that we're going to find the right companies and do it in the right way. And I think so far we've proven it, and I hope to keep growing. And again, our guys, our leadership, they do an incredible job of really seeing that through and executing at a very high level.
We do a really good job of attracting great talent here. And so again, it really is a testament to the leadership and our guys that are working the floors and the phones every single day, hitting it hard and getting us opportunities.
How hard is it to find talent? And I guess more importantly, how hard is it to sort of fend off your competitors from taking that talent as well? I know Sage Kelly has talked a lot about expanding the IB business and also maybe changing the pay structure or offering a pay structure, I should say, that's different than your competitors.
I think talent's always tough to find, but when you have the right culture and the right environment, it becomes a lot easier. I mean, again, this crowd today, these guys are not taking a day's pay, and they're giving it all to charity, and that shows something. That's 24 years ago. Some of these guys weren't born yet. We were young. To be honest, I don't really remember the day, but I wear this 9/11 bracelet every day. Been wearing it for over 10 years. It says honor and remember, and I think that's exactly what we're doing today. We're honoring those we lost and remembering them.
Part of the big issue, or the crux of why this day is so important to us is of the 658 loss, you had a lot of pairs of family members. You had brothers, you had fathers, sons, mothers, and aunts. All working here on that day, and our father would always say, you have a spectrum of friends. You've got, the friends that you go out with and they make you laugh really hard. You've got the other set of friends that you find are really intelligent, you can have good long conversations with. And we want to try to hire those types of people. And so that's sort of why the culture here is really incredible, is you want to show up and you want to work with people that you like and people that you get along with. And that's sort of the culture that we're trying to drive here.
I mean, how much do you interact with your father on a business basis?
Not at all.
No.
It's a little sad actually, because we used to see him 12 hours a day every single day, and now I see him for a weekend, but we still talk. I mean, he's even with everything going on, he's still an incredible father.
Has his connections to the Trump administration helped your business?
No,
not at all.
I mean, it's not supposed to help, right? Like we are a franchise regardless of his seat. We are a business that's built regardless of where he is. I mean, look, when you lose Howard Lutnick in the business, there's obviously a gaping hole, but we together, along with our executive team, are trying to fill that hole, and you see it today. I mean, we're having an awesome year, and honestly, we're hoping today's a record charity day.
Yeah, we feel good about that.
Have there been conversations, though, about how to avoid potential conflicts of interest, given your father's role at the Commerce Department? Any firewalls set up just to sort of make sure that everything sort of stays above board?
I mean, I think we are as perfect and ethically compliant as one can be, and our father's not a guy who takes risks. So I think from both sides we keep that very clean and sharp. But our father is, when you get called to serve for your country, you take the call, and we're incredibly proud of everything he's doing.
Very, very proud of him. Yeah.
When it comes to some of the policies coming out of Washington, there has been a deregulatory bent to that to a certain extent. And this is particularly evident in the world of digital assets and crypto. You've made a couple of big deals already. I think you mentioned 21 Capital just a second ago, Brandon. Obviously, the deal with Adam Back, which I believe should be coming to fruition by the end of this year. And of course, you've been either an underwriter or an advisor on several crypto-related IPOs and SPACs.
This administration really cares about America. And I think they're very, just like they are and we are very bullish on the digital asset industry. And you need to give these companies a regulatory framework to survive, to flourish. Under the past administration, that didn't really exist. And this administration, is smart, thoughtful, and caring, and they really believe in this industry. And so do we. So does Canner. And they're just giving them a place to thrive, and our job's to help them out.
Just yesterday, I think the OCC commissioner, the Office of Comptroller of the Currency, was at a CoinDesk event, and he kind of talked about this idea of trying to sort of remove some of the barriers between, I guess, the new digital world and more traditional banks and asset managers. The idea that there was sort of a regulatory friction in the middle of that. Are you confident that maybe we will see more of a melding of traditional finance and new finance?
I mean, you'd imagine. Look, I think the digital world can bring a lot to the traditional finance world. You talk about payments in seconds, frictionless. You talk about remittances. You talk about the tokenization of real world assets. Being able to trade 24/7. I mean, these are things that with the technology we have should happen, and I think this industry is going to be hugely successful. And again, big believers.
What is sort of the model, though, that you look for as you pursue digital assets? I mean, are you primarily looking at it as a buy and hold from a treasury perspective? Are you looking at it more as the underlying technology and what's that could sort of do in sort of reducing some of those frictions?
I mean, we're an investment bank, so our job is to meet great companies, meet great leadership, and help them accomplish their goals. That's really what I look for. But that's the same from healthcare to tech to FIG to industrial to digital, right? Like. We look for great leadership, we look for great teams, we look for great business models, we look for an incredible company, and our job is just to partner and stand next to them and help them accomplish their goals.
You mentioned the idea of remittances and really just the idea of the transfer of money. Stable coins have finally kind of made it into the spotlight. How involved are you there? And more importantly, where do you see it going? Do you think that it will broaden out beyond just some of the small players we have, and it will become much more institutionalized within corporate America and even maybe potentially within governments?
I mean, we hope so. Obviously, we have a very close relationship with the largest stablecoin in the world, Tether. They're an incredible company run by incredible guys, and everything they've been through, they deserve the world. I think the concept of stablecoins is clearly something that should exist across the world. I mean, you allow people in emerging markets to gain access to the U.S. dollar. It's dollarizing the world. It's dollar hegemony, and that is really incredible for the United States of America.
With regards to tokenization, Vlad Tenev over at Robinhood, he basically says this is the future one way or the other. How does that look paired up with traditional finance and the traditional way that we would buy a stock or a bond or other asset? Is that going to coexist side by side, or is that potentially a situation where tokenization would replace the more traditional system?
I mean, I think it's a bit strange and should be fixed that, if a huge event were to happen on a Saturday or a Sunday, Bitcoin would go up and down, but, the classic traditional stocks, you have to wait till Monday morning. That is something that should get fixed. So I agree in the tokenization of being able to trade 24/7, but again, that's not really our perfect stratosphere.
I do want to get your thoughts just on the state of New York City. Obviously, you have a big real estate business through Newmark. We're going through a big mayoral election here in New York that could reshape policies towards the real estate industry. Have you had a chance at all to meet with any of the front runners in this mayoral election?
I think we've kept a little bit of a distance so far, but we love Mayor Adams, we love Cuomo. Mamdani, we have not had the pleasure of meeting yet, but I think we have a lot of views that are different to Mamdani. We're a very pro-Israel group here, especially on 9/11. Talk about the terrorist attack, and talk about, if they had the chance to do it again, would they? And I think that's something that's really meaningful for us today to remember and never forget. And I haven't had the ability to speak to him, but
New York is really an incredible city. It's a very strong and resilient city, and I believe cities have live energy throughout them. They ebb and flow through different parts of their timeline and their growth. And New York is very strong and resilient, as we've seen through 9/11, as you can see on the trading floor behind us. And so whatever happens come November, New York will be fine.
You have faith long term in the office market here in New York City?
I'd buy and hold on New York for sure.
Buy and hold on New York. Just final question here, and this really has to do with the idea of where you see sort of the biggest risks going forward, not just for yourself, but really overall for markets, and how you see maybe Cantor fitting into that and maybe potentially addressing it.
I think the biggest risk, I don't honestly see too many risks, to be honest. This is an administration I really, really believe in. And when you have the smartest people in the room, the smartest businessmen in D.C., things get done. Obviously, we think the world of our father, but that whole administration, the president, he's really, made promises and stuck to them. And, I'm incredibly, incredibly bullish and incredibly appreciative for their service and all the work they've done. And even more appreciative for the guys behind me. So,
one of the biggest projects that we're thinking about is the data center space and the energy grid of America. And one of the biggest risks that I see is people moving too quickly and making rash decisions to try to get ahead of the curve early and often. And so, what I would say is take a second, breathe, and come and talk to some of the most intelligent people on Wall Street and see if you can get a second or third opinion before you make your move. There's so many variables and so many factors when making any decisions in any of these markets, and making sure you get your second and third opinion is crucial.
Kyle, Brandon, really appreciate you having us here at your headquarters in New York. Thanks to both of you, and wishing the best of luck here on the 24th anniversary of the 9/11 attacks and the charitable efforts that have grown out of that, a positive development.
And that was Romaine Bossick of Bloomberg Television sitting down with Brandon Lutnick, the chairman at Cantor Fitzgerald, and his brother Kyle Lutnick, the vice chairman at Cantor Fitzgerald. Cantor Fitzgerald, of course, every 9/11 holds a charity day to remember the 658 employees, as well as 61 Euro brokers, colleagues, and friends who perished in the 9/11 attacks on the World Trade Center. And of course, on Charity Day, they donate 100% of their revenues to support a wide variety of charities. There's a lot of celebrities who go to the trading floor to help process the trades. It's a New York tradition every year. Of course, a very sad tradition to mark the 24th anniversary. This is Bloomberg Intelligence. I'm Scarlett Fu with Nora Melinda. Paul Sweeney is off for the week. And of course, on this 24th anniversary of 9/11, we wanted to welcome in Carol Massar, co-host of Bloomberg Business Week, as I guess, we get reflective about how it's been. Certainly, New York has changed so much since 2001. I think about the financial district, all of downtown Manhattan, lower Manhattan, completely different from what it was in the early 2000s.
Yeah, I mean, listen, I was listening to the coverage on surveillance this morning, and it's, I know it's 24 years ago, but it feels like it was yesterday. And I was down at the New York Stock Exchange. It wasn't my normal post here at Bloomberg. Someone called in sick, and they're like, we need you to cover the exchange. And we were in early, and I was down there from, I don't know, 7, 8 a.m. in the morning. And I remember when the first plane hit, and I think we thought it was just this random accident. It just logically didn't make sense. And then, of course, as the second plane and what happened in Pennsylvania and the plane in at the Pentagon, you realized, okay, there was something more going on significantly. And I think we were just trying to figure out what was going on. Being at the exchange, we realized at that point we were under attack and that this was something more significant. And they started moving us down to kind of lower levels in the exchange, thinking it was safer perhaps. And also thinking that, okay, you think about America and American capitalism, the New York Stock Exchange could potentially be an extreme target. I don't know. It gets me very worked up and very upset. It's hard not to think about, we were sitting, I remember us all in the exchange in these lower, I don't know whether it was the basement of the exchange, still kind of at some point doing calls into Bloomberg when we could, but watching the monitors and seeing the buildings come down and realizing, okay, this is just a couple blocks away from us. And then being there for several hours and then walking out, and it was a rain of ash, and it was just gray outside, and you had to walk a couple blocks before you realized, okay, it's a really beautiful sunny day in New York, except for this.
How long were you locked up inside the stock exchange?
We got out about sometime after 11, I would say about 11:15, so it was at least a couple of hours since everything had begun, and we all then just, none of the subways, nothing was working. So we just walked from downtown, uptown. And as you did, you already started to have people posting at hospitals on signs of missing individuals. It was really surreal. It was just masses of people walking from downtown. And
And this is before everyone had cell phones so they could reach one another.
Yeah.
I mean, you're kind of just walking away from downtown.
I remember my own family. I think I emailed my husband, I think at one point or something. He thought I was fine. He's like, you're in Midtown, you're not worried. And then to find out kind of later to have an understanding, okay, you're downtown. But yeah, there were hours that you didn't talk to family or anything. And upsetting. And I was also thinking about it was a time when the world kind of came together in support of the United States. And then I'm looking at it kind of in contrast of where we are today. And there seems to be so much division.
Yeah, it was a shocking moment, and it's something that, like you said, I think it's difficult for us to talk about it without getting upset.
Yeah, and we all, you and I have been doing this a long, long time, and there were individuals that we used to either have on guests and folks that we knew who lost their lives.
And of course, in about 15 seconds, we're going to observe the moment of silence when the North Tower fell in lower Manhattan on this 24th anniversary of September 11th, the terrorist attacks that felled New York and the Pentagon. York City observing a moment of silence to mark the fall of the North Tower in Lower Manhattan. We are looking at live pictures right now of the ceremony taking place at Ground Zero. This is Bloomberg Intelligence. I'm Scarlett Fu here with Nora Melinda on this 24th anniversary of 9/11.
Again, we're speaking with Bloomberg Business Week co-anchor Carol Massar about your experience on 9/11. You were in lockdown. Talk to us a bit more about what it's like, 24 years later, and how, of course, it's still a very somber experience.
I mean, we all knew people that either worked in the towers, people that had become friends, I think of Keith Brewett and Woods, like there were analysts there just everywhere, like so many different firms of folks that we would have on pretty regularly. And, you do this long enough that these people become, yes, trusted sources and guests on shows, but they become friends. You get to know them really, really well. And to think about that they were no longer there. It just touched so many different lives. We had Bloomberg individuals who lost their lives as well. But I also thought about this morning, I don't know how old you are, but there's a generation who didn't really, they were either very, very young, and so that this isn't something that they necessarily grew up with, unless they unfortunately lost parents as a result. So it's just like this moment in time. I remember the next day, I finally got home. You walked all the way up to Midtown on 9/11. There were ferries that were getting us over to New Jersey. I lived in New Jersey, and that's how you got out of Manhattan, because nothing was crossing the bridges or the tunnels. The next day, my husband's also a news person, and I got up and there was no trains working, we typically had like car service to bring us in the morning. And he said, you got to get to work, like we got to figure out. And he went with me on the train because nobody was on there. It was just, here it was like 4 in the morning or 5 in the morning, something crazy. But I just remember New York City being still. Like there weren't the cabs racing around.
Well, the stock market was closed for the rest of the week, right?
Stock market was closed, but just the city just kind of stopped because there wasn't the back and forth, certainly on the bridges and the tunnels. So it was just a really weird thing. And you looked at, I don't know, you just looked at everybody differently. And because I think we never thought on U.S. soil that there could be any kind of terrorist incident of this magnitude. It's a moment in time. Like, how can you forget? And you go down to 9/11. It took a long time for that rebuild. I think the memorial says it so well. For any of us, I used to work downtown at the World Financial Center across the way, and those 2 big buildings were just there forever, the World Trade Tower. So it's just, it's good to see the rebuild. It's good to see the footprints of those buildings as a reminder of what was.
It must have been hard for you to go back to Lower Manhattan to revisit that place.
It was really, really difficult. I didn't do it for a long time because you really couldn't commute through that way. Yep. And then I remember the first times I started going back down there, it had been such a part of my life, either through commuting or when I worked there before, just to realize it was a very, very different place, or then to initially see the devastation. I lived just across from Lower Manhattan, and the smoke from what was the World Trade Towers that existed for a very, very long time. The lights, because of getting rid of the rubble, for a while continuing to look for individuals.
The rescue effort,
the rescue efforts. Like that was just, it's just in my memory forever. So.
I was telling Nora earlier that I was living in Hong Kong at the time.
You were, that's
But
right.
I had just flown back into Hong Kong on the morning of 9/11. So in my passport, I have a stamp that says September 11, 2001.
Do you really?
Yeah. And I was at home watching TV, and my friend called and said, turn on the television, something happened in New York. And right around then, they interrupted programming anyway. And you saw the pictures of a plane crashing into a tower. And my friend was saying, this is really weird because no one does that. So I don't know what's going on. And then I went to the Bloomberg terminal because I could log in from home. And I saw a headline cross saying, second tower attacked by plane. And on the TV screen, there was only one plane hitting a tower. So the terminal was ahead of the TV coverage. And then a few minutes later, you saw the second plane come across.
Right.
So, I was reading the headlines and then seeing
and
it
then to see it
show up on television.
It's just jarring. And I just think about that initial, I think, like I said, like we thought it was a small plane. It was just something like really
a passenger plane that
bad accident, like crazy.
Helicopter.
And then to realize it was something that was much more planned and coordinated and
Nefarious.
it was more than one. Really upsetting. And just a different moment in time, I think, for the U.S. history as a country and realizing how vulnerable we could be.
Yeah. I mean, Nora, you grew up in the aftermath of all this, which is, the security theater that takes place at the airports. I mean, you can't envision a time where you go straight up to a gate and just walk onto a plane.
You don't. Yeah, you've never seen that.
Telling me, you watch the movies where people are going to say goodbye to their loved one. They're running all the way up to the front gate, right where they're about to take off for a plane. That's obviously not what we have now. That's not the environment that we live in. So you definitely see the effects and how everything has kind of,
the security of it all, right?
It all.
Yeah, and I think most of us feel, for the most part, okay, whatever we need to do to stay secure because of what happened.
Absolutely.
I didn't think about that, right? It was just, I remember seeing family off to Europe and like going all the way,
No one stopped
to the
you,
gate.
and
Nobody.
unless you were checking in luggage, anyone could wander anywhere in the airport.
Yeah.
There's just this freedom of movement that didn't exist after 9/11.
I wanted to just say one more thing that, like, after, as the event unfolded and all of us who were covering the event in the coming days, I just remember having to read these lists from different companies and how many people had lost their lives. And it was just something we did, but it was difficult.
Carol Massar, co-host of Bloomberg Business Week, on this 24th anniversary of the September 11th terrorist attacks.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News with this Bloomberg Business Flash. We're brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Another day, more records. S&P 500, 46 points higher. That's up 0.7%, 65.78 on the index. The NASDAQ right now up 132 points. That's a rise of 0.6%. And the Dow, it's kind of the laggard, well, in terms of records. The Dow Jones Industrial Average actually up 569 points. That is up 1.25% right now. And it's all about the data this morning. Inflation rising as expected. This keeps the Fed on track to cut interest rates next week. The core consumer price index rising 0.3% from July. The Treasury yields are lower as a result of that. The 2-year right now down 5 basis points, 3.49. The 10-year down 5 basis points, 3.99. Of course, the Fed meeting comes next week. Seema Shah, Principal Global Investor, says don't expect a jumbo rate cut from the Fed next week. And after yesterday's surge,
quite unusual for it to cut by 50 basis points. Typically, you only see that kind of move in something of an emergency situation when recession indicators are really flagging. We're not seeing that.
And after yesterday's surge, back to shares of Oracle right now. They are lower in today's trading, down 4.5%. Oxford Industries shares, they're climbing. This is the owner of, anybody? Tommy Bahama, the apparel brand, maintaining its annual earnings per share outlook despite anticipating higher tariff hit. As shares right now, they are up 26%. And as if the headquarters on Park Avenue was not impressive enough, J.P. Morgan Chase working out plans for what could be the biggest office building in London.
Wow. Really? They have a huge space in Dallas. They have this brand new headquarters in Midtown Manhattan, and now we're talking about something in London. Where are they at with that?
Just in the planning stages at this point. So
the blueprints are coming together.
TBD.
We check the markets for you and everything else all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Scarlett.
All right, John Tucker, thank you so much. This is Bloomberg Intelligence. I'm Scarlett Fu with Nora Melinda. Paul Sweeney is off for the day. In addition to it being an important day marking the 24th anniversary of 9/11, there was also some data that everyone was looking ahead to, and they got it at 8:30 a.m. CPI, Nora, came out, and it was largely in line with what everyone anticipated.
Right. Relatively tame reading that we saw here. And of course, this also was combined with more signs of job cooling. And of course, we're seeing a rally in bonds. This is all on the speculation that the Fed could potentially slash rates for the first time this year. What is that, next week? Next Wednesday?
It is next week. Next Tuesday,
Time
the
is
meeting
flying.
begins, and the decision comes out on Wednesday. So let's bring in Lauren Seidel-Baker. She's an economist at ITR Economics to give us her read on what this data means for markets and for positioning. So, Lauren, as we said, pretty much inflation coming in as expected, but this was a high-stakes report. What did this report answer in terms of questions or doubts or perhaps hopes for what the Fed will do next?
Hopes. I think it keeps hope alive. In fact, in my mind, this really locks us into a rate cut. I'm personally in the camp of 25 basis points. We could see 50. Really, it's the overall path that matters more than any one individual meeting. But generally, what this also does is it keeps inflation on the table. We are not anywhere near the Fed's target of 2% inflation. This has proven much stickier. And after a couple months of kind of waffling at a low point, this could even mark the turn up in resurgent inflation in the second half of this year. That's something that we at ITR Economics have been concerned about for quite some time. A lot of factors coming to bear on pricing pressures. So for the moment, focus very clearly on the labor side of the dual mandate, but don't count inflation out quite yet.
So don't count inflation out quite yet. When you were looking back at this CPI report that we got today, where were you seeing some of the stickiness?
So most of the stickiness, it is in the bigger categories. So as we talk about tariffs, I know those get the headlines of how much of this increase is tariffs, could potentially be that one-time price adjustment. At the end of the day, tariffs just take much more time to flow through our economic mechanism. Our estimates is that it takes between 9 and 18 months to see those full impacts, partially because a lot of the bigger categories in something like the CPI, the largest individual driver here is shelter costs. That is not being hit by imports, at least on an immediate basis. So we are still seeing some of those more pervasive, more persistent pressures. I think tariffs are still an upside risk. I don't think we have seen the end of that story quite yet. But for the consumer who's feeling all these pressures, higher home prices, right, still relatively high mortgage rates, those shelter costs especially are something that it's just really straining. And we're also seeing more of those non-discretionary buckets see price increase. Inflation really squeezes the bottom kind of income earning cohort here. They just get hit more by this. So something of a bifurcated consumer at the moment. Not any one individual will experience this inflation in the way that the CPI report comes out.
Yeah, that's a really important point to remember here. So we have the inflation picture, which came in largely as expected, although shows inflation is persistent. And then the other side of the data that we got was on jobs. Initial jobless claims rising, 263,000 filed in the last week. What does this say about the labor market? I mean, it comes on the heels of that big jobs revision and the August jobs report that was disappointing by all counts.
It was. And we do have to keep this in context, right? Total employment in the United States is still at a record high, and that number is still rising. So this is not the bottom falling out from the labor market, but this is showing that some cracks at least have been forming. A lot of these revisions are very backward looking. So the one we got just earlier this week, that was data through March. Employment itself tends to be a bit of a lagging economic indicator. It doesn't tell us what comes next. It tells us kind of where we've been. So I do want to keep all of that in context when we talk about that broad economic scale. But certainly we are starting to see some lower levels here. One metric I follow very closely is the ratio between job seekers and job openings. We did just see that creep above a 1-to-1 ratio very recently. So all told, the labor availability might feel a little better for companies, especially compared to, say, 2022, when we had 2 job openings out there for every 1 job seeker. But we're just seeing these reduced levels. Companies are not going out and hiring with all of this uncertainty they're facing. And on the other side, those job seeker numbers are a little bit depressed as we think of negative net migration to the United States this year. Just some factors like that pulling that labor availability out of the system.
So, Lauren, we've talked labor, we've talked inflation. Where do you feel that the Fed's focus should be right now, especially as we think about the dual mandate, which, of course, is achieving maximum employment and maintaining price stability?
This is a really hard one at the moment. These two forces are very much offsetting. I do not envy the shoes that those individuals have to fill. But at the moment, I still see the labor market in something of balance. Yes, we're seeing some cracks forming. Like I said, really my focus is on those who are out of work, tend to be staying out of work longer these days, so harder to find that replacement job. But my forecasts are for inflation really to come rearing its ugly head back. Again, not just for tariff reasons. Both fiscal and monetary policy have really been in the works for years now. We see higher energy costs. We see certainly those persistent labor costs. So I'm personally more worried about the inflation side, but that's a hard game, and we can only really see in hindsight what would have been correct.
Absolutely, and this is all backwards-looking data when it comes down to it, because it'll have happened. In the 30 seconds we have left, Lauren, in terms of the upcoming data before the FOMC meeting begins, what do you expect would have the most impact? Is it going to be retail sales coming out on the 16th?
Retail sales, we'll be watching PPI tomorrow. I don't think there's anything big enough. It would have to be a huge result to skew one way or the other. And at the end of the day, one data point never makes a trend. So I think the writing is basically in stone at this point. Again, expecting probably a 25 basis point cut next week.
All right, Lauren Seidel-Baker, economist and senior consulting speaker at ITR Economics. Thank you so much for joining us. And of course, this is Bloomberg Intelligence, Scarlett Fu and Nora Melinda. Coming up, we've got Bloomberg Intelligence Consumer Hardline Senior Analyst Lindsay Dutch on CVS and Ulta and whether they can spur growth by connecting wellness with beauty. That's not a new one, is it?
No, I'm excited for this one.
All right, and keep it right here on Bloomberg Intelligence, right here on Bloomberg Radio. We have the S&P 500 at a record high, gaining 0.7%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence Radio. I'm Nora Melinda here with Scarlett Fu. I'm here in for Paul Sweeney, who is off today. We have lots to discuss today. We're looking at markets that are in the green. S&P 500 up about 0.6% here. Dow Jones up more than 1%. NASDAQ up about 0.5%. I want to move on to a conversation in the consumer space. Let's talk about CVS and Ulta and how they can spur growth by connecting wellness with beauty. We're joined by Lindsay Dutch. She's Bloomberg Intelligence Consumer Hardline Senior Analyst, and we have a lot to dig into here, Lindsay. Tell us what's going on in this space and how CVS and Ulta could potentially connect beauty and wellness.
Hi, Nora. Thanks for having me. The wellness market is huge, $400 to $500 billion at least. That's 4 to 5 times the beauty market alone. Beauty is closer to $100 billion opportunity. But in our survey, we found that 70% of people prefer to shop beauty and wellness together. So we think that the opportunity for retailers, both big and small, to sort of break into this wellness category and gain share is to bring the two categories together with marketing in the store and really get people to shop across both.
Let me ask an obvious question, Lindsay. What is the difference between wellness and beauty? Is wellness products or is wellness services?
So in this, in this conversation, we were really thinking about products, but the wellness market is very difficult to define. So we're thinking about, people are leaning into, preventative routines. They're thinking about longevity. They're trying to improve their sleep, their digestion. They also want to look better. They want to feel better. So it's really across all, aspects of, mind, body, and wellness, but products that you would be like taking off the shelf from like a CVS or a Walmart type of product.
So my question here then is, if it's products, are these products that are regulated in any way?
So some of them are not. I mean, if you think about maybe your social feed, you probably see a lot of, influencers, touting products. There's a big focus on gut health recently that I've seen, a lot of people are buying into, that idea and thinking about that and buying products for that. And the bottom line is when they shop for things that make them feel better on the inside, they're also shopping for things that make them look better on the outside.
What's interesting, as I'm reading through your research report here, one of your points says beauty enthusiasts also like to shop wellness products, and you're mentioning how a lot of people want to pour into themselves on the inside as well as the outside. Can you talk a bit about, influencer culture and how this could potentially also be adding to this push? You mentioned CVS, Ulta, Walmart. What does this look like right now? What's the landscape?
Okay, so if we take a step back, so we think, some of the biggest players in this space, it would not be surprising to you. You're talking about an Amazon, you're talking about Walmart, CVS, Dollar General, I think also has a big, hold in this space. But then there's a lot of smaller retailers that are also looking to get into this space. So Ulta Beauty, for example, they have about 700 SKUs that are devoted to wellness. That's a small portion of the 20,000 plus SKUs that they carry in their store, but they're really trying to push into this market. They think that wellness could be $1 billion opportunity for them. But I think retailers, both big and small, can find an opportunity in this big market. Also because the growth in the market, exceeds lots of other categories, including beauty. If we think about sort of the influencer angle that you talked about, the survey is really interesting because, people say, a large amount of people said that they prefer an expert opinion, and I think that's why they like to shop at places like CVS. The pharmacist is right there. You can get their opinion. But then they also said 34% said that they value a celebrity or an influencer backing a product. So there's sort of like two different things going on, and there's a lot of misinformation in the social media world. So we're sort of seeing consumers lean into both, that social viral product and then also wanting an expert to weigh in.
Somehow I feel like we might see a scenario where CVS or Ulta will now have an influencer at the store to actually provide advice. Lindsay, when it comes to products related to wellness that these stores can stock, what would they give up shelf space for? Meaning, what would they remove from their stores in order to make available products that relate to longevity, sleep, nutrition, mindfulness?
I don't think they are necessarily removing things. I think, they might just be doing sort of an end cap. Ulta has been working really hard to make their wellness section a lot bigger, and they go through their brand negotiations very often, especially with emerging brands. So you might be sort of swapping one emerging for another in a different category. I also think that for wellness, wellness really lends itself well to online. And obviously online is an endless aisle. You can carry as many products as you want. And the reason for that is really that wellness products are often in a 30-day supply. So that's something that if you start taking a vitamin or any type of supplement, creatine, whatever, you're going to, want to take that every single day and you don't want to run out. So I think online subscribe and save models are going to be really important in this space, so that people can replenish.
Subscription model. I mean, the things that stores love, brands love, and consumers, shudder in fear when they see their monthly bill.
No, can't do it.
Lindsay, thank you so much. Lindsay Dutch, Bloomberg Intelligence Consumer Hardlines Senior Analyst, talking a little bit about CVS, Ulta, perhaps jumpstarting growth by connecting wellness with beauty. Do you have any things that you subscribe to every month?
I mean, for me, it's Netflix. But no, when it comes to
wellness, inner beauty there.
No.
That's a form of wellness, you can argue.
Sure, I'll take it. I would say with the fitness apps, I'll have subscriptions for that, but that's about it.
All right, we wanted to wrap up this hour of Bloomberg Intelligence. Of course, coming up, we have more Bloomberg Intelligence. Keep it right here and check out Bloomberg Radio on Sirius XM channel 121.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
This is Bloomberg Intelligence. Good morning on the 24th anniversary of 9/11 here in our Bloomberg Interactive's broker studio in our headquarters in New York City. I'm Scarlett Fu with Nora Melinda. Coming up on this second hour of the program, we've got Ava Benny Morrison, our Bloomberg legal reporter, on our big take. The Epstein email trove has a lot of details that we can't wait to get to tell you about. It's kind of mind-numbing, in fact. David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, to discuss his outlook on these markets, the S&P at a record high. And Jen Bartashis, Bloomberg Intelligence senior analyst covering retail, staples, and packaged foods, takes a look at Kroger earnings on this inflation day. And Jeffrey Langbaum, he is a Bloomberg Intelligence senior U.S. REIT analyst on the latest in real estate, including apartment REITs. John Tucker is up next with our Bloomberg Business Flash. John.
And another day, more records. The S&P 500, 45 points higher. That's up 0.7%, adding to its record close yesterday. 65.77 on the index. Same for the NASDAQ, 125 points higher. That is up 0.6% right now. And then the Dow Jones Industrial Average, 565 points higher. That is up 1.25%. So it does look like the deal is sealed for a rate cut next week. CPI showing inflation still above the Fed's 2% target, but it's actually not spinning out of control, at least according to this morning's report. At the same time, jobless claims figures, they came in the highest in almost 4 years, and this all, again, pushing stocks higher. Treasury yields are lower, and Amanda Gotti at PNC Bank, she sees a long runway ahead for stocks, especially AI-related stocks.
It's neither exuberance or irrational or exuberance. I think it's just simply a function of this market, this environment struggling to price and assign a forward P valuation on the power of all things AI.
Right now, the best performing stock at the S&P 500, that belongs to Centene, up over 12%. Christine's going to be along in just a moment to take a deeper dive into that. A Kroger stock higher, another earnings beat there. The grocer also raising their outlook. They say people are eating more at home, so they have to buy groceries. Oh, well, you're the exception.
No, I'm lazy, so I just end up ordering.
How's this for the alternative?
I found my match.
Well, yeah. How's this for an alternative investment?
Tell me.
Pokemon cards. Pokemon cards, according to
You're not collecting
let me pronounce it correctly. According to the analytics firm Card Ladder, they've racked up a jaw-dropping 3,800% return in the past 2 decades. Of course, it depends on the number of factors on these cards, including the rarity, the perceived quality of the artwork, and ratings by third-party authenticators. Some collectors tell the Journal Pokemon cards have an advantage over baseball cards because the characters are fictional. Pikachu isn't going to miss a season because
you don't know who any of these characters are, right?
Yes, I do.
I'm just going to
My
call
kids
them
have them.
Pokemon from now on.
Pokemon? Okay, whatever. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Pokemon. Did you have Pokemon? Did your kids do it?
My brother was really into it. My cousins were really into it, so I know how to pronounce it at least.
Make sure he doesn't throw them away.
Clearly. All right, John Tucker with our Bloomberg Business Flash. Christina Aquino is here with our stocks on the move today. Christine, you know about Pokemon.
I know about Pokemon. I used to go Pokemon hunting with
see?
the Pokemon Go app. It was a great way to get a walk.
There you go. John Tucker?
We'll take John Tucker with us someday.
Maybe not.
All right. Let's talk about the stocks on the move. We're going to start with Oracle, which was a big mover yesterday.
Absolutely, Scarlett. So it's taking a bit of a breather today. Oracle, ORCL, shares are down more than 3%, but let's put that into context, right? We did get that record surge yesterday, up nearly 36%. It added $89 billion to Larry Ellison's coffers in one day, put him right above Elon Musk to be the world's richest person, so not too shabby. Now, the thing to really focus on, according to Bloomberg Intelligence, now that the dust is settling a little bit, is really that backlog order size, $455 billion. That exceeds the orders for Microsoft, AWS, Google Cloud, and it really highlights that Oracle has positioned itself uniquely by focusing on training, AI training workloads, rather than some of its rivals who are focusing on provisioning clouds. And so basically, it's focused on fine-tuning LLMs with enterprise data. That's what gives it the edge in capturing those training workloads, according to Bloomberg Intelligence, and potentially some longevity in the market.
You're also looking at Centene. What's going on there?
Absolutely. Top performer today. So ticker CNC. Shares are currently up more than 12%. And so the health insurer getting some good news because it gave positive views of its Medicare star ratings, and it said that it expects costs to improve in its Medicaid business. So remember, right, the Medicare system, it has a star rating system. The higher stars you have for the plans that you provide, the more incentives that you get from the government. That's basically how it works. And so a lot of health insurers want to have customers up in those higher rated plans so that they can get more incentives. And Centene also reaffirming its adjusted EPS forecast for the full year, $1.75 per share versus an estimate of $1.64. So also some good news there.
I've been caught in many conversations with elderly people about how many stars the program has. They're very, very concerned about it. All right, let's talk about UPS.
UPS not doing too shabby today. Shares are up 0.4%, but earlier it was down more than 2%, and that is because it was cut to underperform at Bank of America, and the analysts there are citing the end to the de minimis exemption. So for those who don't know, de minimis, that was an exemption that applied to small packages shipped directly to U.S. consumers from retailers abroad. If they were under a certain size, under a certain value, they didn't need a customs declaration and duties. That exemption ended at the end of August. And so now a lot of analysts are thinking these will be, shares like UPS, FedEx also suffering, will be the ones that really suffer. Interestingly, it's not a widespread view yet that UPS is, an automatic sell because of this news. It's actually just, the bulk of analysts still divided whether the stock is buy or hold, but not certainly not good news, the end of that exemption for this company.
Well, thanks so much to Christina Aquino for breaking down some of those stocks for us. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen.
All right, we're looking at a stock market at a record high, if at least you look at the S&P 500. And within the S&P 500, there are 5 groups that are now gaining at least 1%, including the financials. And one of those names, Citi, is currently up about 1.1%. The CEO of Citigroup, Jane Fraser, sat down in an exclusive interview with Bloomberg's Jumana Barsacci, who commented on the bank's expansion in the Middle East region. And they focused on growth opportunities in the wealth business and also discussed some M&A. Take a listen.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing, and they work together as a package. I think the most important piece for a corporate, clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those 3 fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about.
Yeah.
And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but
can that momentum continue into the end of the year, just in terms of, you know, what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labor market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
That was Citigroup CEO Jane Fraser in an exclusive interview with Bloomberg's Giammatta Versace, talking in the Middle East region. And of course, we're keeping an eye on that stock, up by more than 1%. Nora, if you look at the most read news stories on the Bloomberg terminal today, number 5, Jeffrey Epstein emails detail financiers' crimes and Ghislaine Maxwell's key role. So that's something I've been, fixated on. I opened it up, and it was so detailed that I want to sit down and read it more carefully later on.
Oh, most definitely. I'm just looking at the graphics at the top alone. It's so interesting. There's so much to dig into here.
All right, so let's do a little bit of that and give people a taste of what they might be missing if they aren't reading the story. Ava Benny Morrison is Bloomberg's legal reporter, and this is our actually big take on the Bloomberg terminal. You guys went through a lot of emails to come up with all this. What was the big takeaway for you?
The big takeaway for this story in particular was that Ghislaine Maxwell and Jeffrey Epstein were closer than either had publicly admitted. And we got a new insight and an understanding into the nature of their relationship. We spent several weeks combing through more than 18,000 emails that Bloomberg obtained from Epstein's personal inbox. And it really takes us inside the life and the mind of this man who just seems to pop up every few months or so in the press with new revelations, new connections, and is causing a bit of a firestorm in Washington, D.C. at the moment.
So, Ava, remind us of where we are right now with Ghislaine Maxwell, right? She is looking to take some time off. She wants to carve out some of her sentence, right? Reduce her sentence at the current moment?
Yes, that certainly seems what she's angling for. She was convicted a few years ago with enabling Jeffrey Epstein's sex trafficking. They were very close, and she's currently serving 20 years in prison for that. But she became relevant, I guess, to some extent, very recently when she offered to sit down with top DOJ officials and tell them whatever she knew about Epstein's connections and who he associated with. She did that in July in a interview that was then released publicly, and she has since been moved to a slightly cushier prison. But her lawyers and the DOJ, certainly dispute any suggestion that that was a quid pro quo or a deal. But her lawyers have made clear that they would welcome any relief from the Trump administration.
So how credible is she then as someone who talks about what she knows about Jeffrey Epstein to federal investigators?
Our reporting in these emails certainly add to the questions surrounding her credibility and the truthfulness of her statements that she made in this interview. She was at one point charged with perjury for lying under oath about what she knew about Jeffrey Epstein's sexual abuse. And we found that there were some discrepancies and some serious questions about statements she made regarding her relationship with Epstein, what she knew about his legal troubles in the mid-2000s. So I think that this reporting certainly adds to some concerns around that.
And, through your reporting, you're saying that the emails demonstrate that she did have a deep knowledge of the legal jeopardy that Epstein was facing, and that she showed how she helped him strategize over even the most consequential details here. But one thing I wanted to talk about is who else is involved here? I mean, I do know that there were a lot of names that were floated, a lot of prominent individuals. Where does that stand today?
Absolutely. Jeffrey Epstein has had a reputation for a long time for rubbing shoulders with influential and high-profile people, from Hollywood actors to academics to Wall Street power brokers. And these emails certainly add to that. We've seen the names of until very recently, the UK ambassador to the US, Peter Mandelson, big names on Wall Street. They're tech billionaires as well. And one interesting part of those relationships is how Maxwell helped Epstein nurture them, offering to organise visits to his private island in the Caribbean and seats on board his private jets.
So we spent a lot of time talking about Ghislaine Maxwell and her role in our understanding who Jeffrey Epstein is. What did these emails reveal about Jeffrey Epstein himself?
It shows a new level of callousness that he took towards young women. That was something that was quite striking to me. You can see how he interacted with the many young women that he had in his orbit, from his assistants to his on-again, off-again girlfriends, to women who have been characterized years later as recruiters of other young women. He could be quite dismissive, quite manipulative in his language, dismissing them for not engaging in quote-unquote fun sex things over their exercise routine. So that was really, I think, telling and insightful.
So Republicans have blocked the Senate vote to release Epstein's files. And of course, this is something that people have been talking about for quite some time, really advocating for the release here.
They've been obsessed with it.
Obsessed to say the least. What's the latest with that?
There is still a groundswell of support to release these Epstein files, and you're right. Those calls have only grown louder in recent months. And we saw last week a press conference with some of Epstein's victims and the victims' attorneys, who are also calling for release of the files, but a more careful approach to it, redacting victim information. There's stuff that, some of these attorneys who have been working on this case for more than 20 years haven't even seen. So, while the Trump administration has said that's the end of the release of the DOJ files, we expect to see, a few more documents come out through the congressional process.
What will you be watching for next, Ava, in this ongoing developing story where it feels like we can't get enough details on this?
One thing that we didn't get was a response from Ghislaine Maxwell or her lawyers about how they explain these contradicting statements. So I'm keeping an ear out for any response from the White House and from the DOJ about how they view her emails and her statements, and what happens to her next, whether she does have any luck with a pardon or commutation.
So what are you looking forward to next in this story? For Ghislaine Maxwell here, is there any sort of luck or any sort of expectation that she's able to reduce her sentence here?
We'll have to wait and see. I think it would be a very difficult decision to make. It'd be a very controversial one, pardoning someone who's been convicted of sex trafficking, especially in the Jeffrey Epstein case, which is so notorious and involves, more than 1,000 victims, the DOJ has said. So she's certainly got an uphill battle, but we'll wait and see.
All right, thank you so much. Ava Benny Morrison of Bloomberg News, a legal reporter here on our big take today about the Epstein email trove. Details a lot of Maxwell's secrets, Ghislaine Maxwell's secrets. We have some breaking news. Hyundai, the Korean automaker, is delaying its Georgia battery plant construction after the ICE raid at its factory in Georgia. So again, the CEO saying that the Hyundai LG plant needs new workers to resume construction, and they plan to resume that in about 2 to 3 months. This is Bloomberg Intelligence on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Another day of records. 9 of the 11 major industry groups in the S&P 500 pushing higher right now as we do hit another record with the S&P 500 and the NASDAQ for that matter. Healthcare, best performing industry group, best performing individual stock in the S&P 500. Centene, the health insurer, delivering positive views of its Medicare star ratings and also expects cost improvements in its Medicaid business. When that improves and it gets more stars, they get bonuses. So the records we're seeing for the S&P 500 and the NASDAQ also come from the data. Looks like a Fed rate cut is pretty much a done deal for next week's Fed meeting after we saw the consumer price index coming in on expectations, at least for the core. At the same time, initial jobless claims, they jumped to the highest in almost 4 years. Right now, the S&P 500, 50 points higher. That's up 0.8%, 6582 on the index. The NASDAQ right now, NASDAQ Composite Index up 148 points, and that's a rise of 0.7%. The Dow up 558 points. 2-year yields 4 basis points lower. That's at 350. The 10-year down about 3 basis points, 4.01%. But just north of Manhattan, it's a mega mansion sales boom in Greenwich, Connecticut. 25 homes with a price tag of over $10 million have been sold this year, according to data from the Realtor Compass.
Remember before the pandemic, Connecticut was seeing an exodus of people?
Who knew?
And now it's like
That
a hotbed of
could have
activity.
been your opportunity.
Clearly, I missed it. I missed the boat. Not so unusual.
Probably 10 million. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Nora and Scarlett.
John Tucker, thank you so much. And you set us up perfectly when it comes to the equity market to bring in our next guest. David Kudla is founder and CEO and chief investment strategist at Mainstay Capital Management. John Tucker talked about the record highs that we see in the S&P 500 and the NASDAQ. David, you point out in your notes that we have a data confidence crisis. How do we have a data confidence crisis and are trading at record highs? How me merge the two here?
Well, this is one of those times when we have to reiterate that phrase, the economy is not the stock market and the stock market is not the economy. Clearly when we look at PPI, we look at this revision in jobs over the past year and over the past 2 years, all the jobs that weren't really created, right? That's the data crisis that we have. And it points to the economy feels like it should be in trouble right now. But at the same time, we had 3.3% GDP in the second quarter. We have 3.1% GDP now for the third quarter, the Atlanta Fed. So we have some conflicting hard numbers, soft numbers in looking at ISM and PMI. We go to the stock market and we had, we have very robust earnings season for the second quarter. Originally, it was going to come in at 4.9%. That was the estimate on June 30th. We're in double digits for earnings growth for the S&P 500. We've got 7% earnings growth forecasted for the third quarter. We'll beat that again. And as we saw with Oracle, the mega scalers, the hyperscalers, the second derivative plays on AI, these companies are coming out with just incredible guidance, these hockey stick projections, and that's what the market's trading on. Good earnings and continued good earnings and a Fed rate cut that we know that's coming now next week. It's either going to be 25 or maybe even 50 basis points, and the market loves that liquidity injection.
Well, David, as you mentioned, we are seeing a real strength here in the equity market with equities climbing to new records intraday here, especially after we got that CPI report earlier this morning. What's your takeaway about the CPI report, given the fact that a lot of the market is expecting the Fed to cut next month, or next week, rather? Right.
Well, CPI for the most part came in at expectations. And we know, we've been expecting inflation to rise a little bit. So that's in the cards. But at the same time, with the dual mandate that the Fed has, we felt earlier this year that Fed Chair Powell was focused more on the inflation part that affects their dual mandate. We think now he's turning more towards jobs and the concern there with what we had in jobless claims today, what we've had in jobs numbers over. The labor market is clearly weakening. Monetary policy, given where we are with the data now, and the Fed says they're data-driven, that they need to cut. And maybe they should be cutting 50 basis points next week.
David, do we have an everything rally right now? You look at equities, they're higher. You look at bonds, they're higher. You look at gold, it has been climbing to record highs. You look at Bitcoin. I mean, everything that's risk-related is gaining, and things that are safe haven related are gaining as well.
Yeah, we have an everything rally, and it's just all the liquidity that's still out there. And that we believe is really all the liquidity that was created during the pandemic. That money continues to keep looking for a home. Money seeks the best return. And so what is gaining? Assets are gaining in price. So we see gold going up, silver going up, Bitcoin going up, hitting a new high recently, and the stock market. And so all that liquidity, we're at financial conditions right now that were as easy as they were with a lot of the accommodation done during the pandemic, and we're going to cut rates going into that. So there's really easy financial conditions out there, easy money out there, and that's what's helping to drive the stock market higher.
Well, talking about this everything rally, I'm looking at the Russell here, up 1.2% today. Do you see any opportunity in small and mid-cap companies right now?
We do. We've been talking a lot about that in our investment committee. One of the frustrating things for if there's such a thing as a small cap bug, or the people that really want to go towards small cap stocks, is we've had so many head fakes over the year, and the Russell 2000 is shining again now, right? Recently, the Russell 2000 has done well. The prospect for that, lowering interest rates, right? The rate cuts that are coming. But we see so many head fakes. And really, we believe, the best opportunity is AI related. Come back to our favorites in IT and technology, these mega cap tech stocks, the second derivative plays. But can small cap finally have a sustained rally if the Fed is cutting rates? Yeah, small cap can, but small cap has really struggled for a lot of years. That ratio of the price of large cap versus small cap, keeps setting record highs. Recently, here small caps done better on the prospect of rate cuts, so we could get a rally here in small caps for a while.
Yeah, but you worry that once you actually get the rate cut, it's buy on rumor, sell on news, that all the benefits of a potential rate cut will have been priced in already. So when you look at small caps, I guess one of the issues that comes up is that, the head fakes come because the profit numbers, the earnings numbers don't back up the rally in their shares. When would that turn, David?
Yeah, that's a good point. The Russell 2000 has a problem in that 40% of the stocks in the Russell 2000 aren't profitable. And what's happening in the small cap sector? What happens to that index? When companies do well, they grow into the mid-cap space. Also, we have a lot more companies that are staying private or going private. So small cap companies that, because of the increased M&A, are being taken out of the public sector back to private. So that index kind of gets hit from a lot of sides, and why it has a problem. But these companies that are not profitable, certainly with easier monetary conditions, that'll help. I don't know that 25 basis points or even 50 basis points saves a non-profitable company, but it certainly helps.
Well, thanks to David Kudla for joining us. He is founder, CEO, and chief investment strategist at Mainstay Capital Markets. Now let's move over into the airlines industry. We are about to be joined here by George Ferguson. He's Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst. George, we always love speaking with you. What's the latest right now with Delta?
Well, so Delta came out with an 8K this morning, right where they disclosed to the marketplace that they're going to speak at the Laguna conference. I think it's Morgan Stanley's Laguna's conference And they said that their revenue numbers would be at the high end of the original range they gave. So that's a good sign, I guess, that fares have come in the current quarter, at least not worse than what Delta thought, right? And again, maybe ooched a little bit to the higher end of their expectations. We didn't see any change to EPS, though, guidance or any other guidance. So makes you wonder if some of the expenses aren't a little bit higher. So I thought it was okay news, but this was no sort of raised guidance because the quarter's been going much better than they expected.
Okay, so it was encouraging, but it was not an all clear, like, let's increase our guidance and tell you that things are notably better. What's interesting is that the CEO, Ed Bastian, spoke at the Economic Club of Washington earlier this week and gave a little more color about what he's seen. And his takeaway was that the lower income customers remain challenged, but they're seeing a lot more enthusiasm from business travelers and premium customers. And this is where Delta has really staked its claim on that segment of the market.
Agreed. I mean, we saw a CPI number this morning, right, that has airfares in it. It was up about 3% year over year, and I think the sequential was up 4-ish to 5, if I remember correctly. So, I mean, those were decently strong numbers for airfare growth. But I still suspect we have the same trend going on inside the business that we saw in 2Q, and that is, as you said, I think the high-end consumer continues to travel and want more amenities, want better seating as they travel. So if you're American, United, Delta, you're well positioned to capture that and subsidize what I think is probably still weakness at the lower end of the business. I think as we get into 3Q, we'll hear that. If you're a basic economy flyer, you're managing other increased costs in your budget, and so you may be not flying or flying less, trading down a bit.
George, is corporate travel back?
So at the end of 2Q, I think what we heard was that corporate travel was starting to surpass 2019 levels. So we definitely know corporate travel has returned slower than leisure, and I think frankly it's probably very structural and will continue this way. I think there are industries like consultants that traditionally sat at their customers' offices to do their work. I think now we've gotten a lot more comfortable with video conferencing and things like that. I think you'll miss some of that old demand for corporate that had supported airfares.
Mm-hmm.
I think it has become much more of a leisure business. But 3Q is going to be a wash on that because 3Q is really a leisure story typically for the airlines. We'll find out more, I think, in 4Q.
All right, George, always appreciate your joining us. George Ferguson, Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst on Delta, narrowing its revenue guidance to the upper half of its initial range. We'll keep an eye on the airline sector there. This is Bloomberg Intelligence with Nora Melinda and Scarlett Fu. We are looking at an S&P 500 near session highs, up 0.8%. This is Bloomberg Radio. Keep it right here.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 and the NASDAQ, again, pushing into record territory. You have 10 of the 11 major industry groups in the S&P 500 up right now, and it's being led by healthcare. Today, communication services, that's actually the worst performing group. And after its surge yesterday, you have shares of Oracle. Right now, they are down 2.7%. Again, the major average is higher. Treasury yields, they are lower after the data this morning. We're learning the consumer price index when you strip out volatile food and energy costs. Inflation rising 0.3% last month. And then you had jobless claims, also up, reflecting weakness in the jobs market. While the data seemed to seal the deal for a Fed rate cut when the Fed meets next week, Steve Chiavarone at Federated Global argues the Fed still risks acting too little too late.
If home prices are coming down and wage inflation or the ingredients for wage inflation are not there, then at some point you got to make the call that inflation is heading lower. If you wait for it to get to 2 before you start to remove restrictive policy, then you're going to find yourself very much behind the curve.
Right now, the S&P 500, 49 points higher. That's up 0.75%, 65.81 at the index. The Dow up 564 points. The NASDAQ right now, the NASDAQ 100 up 149 points, and that is a rise of 0.6%. 2-year yield down 3 basis points. That's at 351. The 10-year down 3 basis points at 4.01%. Just an update on that plant in Georgia, construction on the Georgia battery plant that was raided by U.S. immigration authorities being delayed as the companies involved grapple with worker shortages. Hyundai's CEO says the work's being set back by 2 to 3 months. The South Korean car manufacturer building a plant with the battery maker LG. This is huge news in South Korea. Front pages all over. And the people there, I think it's safe to say, were actually really outraged at this raid on the factory.
On the one hand, all these companies, these foreign companies, are trying to prove to the administration that they are going to move jobs to the U.S., they're going to invest in the U.S., and then they try to do that, and they're finding that it's difficult to get the work visas for folks to get the factory started and to be able to train up talent locally.
Well, these were the experts that were brought in to get the plant up and running. So anyway, the saga continues. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Nora and Scarlett.
Well, the saga definitely does continue, Tucker. Thank you so much for breaking all this down for us. Let's move over to talk a little bit about food. I love to talk about food here, and we're talking about the grocery industry.
My stomach is growling, so
mine is too. So this is very timely here. But apparently, we're seeing through Kroger's results here that it's attracting value-seeking customers who are now opting to eat at home as opposed to potentially ordering out. I don't know that I can include myself in that segment, but clearly the street likes what Kroger has to say here. We're seeing shares that are up as much as 4.2% in trading today, now trading about 1.5% higher. It's really been a great year for Kroger. They're up about 11% year to date, but we are joined by somebody who's able to break this down more in depth for us. That's Jennifer Bartashis. She is Bloomberg Intelligence Senior Analyst of Retail Staples and Packaged Food, here to break down these earnings for us. Jen, talk to us about what you're seeing from this report. Are people apparently cooking more?
Well, it would appear so, especially with middle and lower income consumers. They're being a little bit more careful about where they're spending. And this is something we usually see when there's any kind of threat of inflation. People sort of retrench and they cook more at home. And it's also complemented by, a growth in awareness about health and wellness, whether it's GLP-1 drug related or whether it's just self-induced. People are trying to live healthier lives, and that's generally easier when you prepare your own food.
So when you look at comparable sales, Kroger's saying that for the full year, now it sees comparable sales gaining 3.4% versus a previous guide of 3.25%. So kind of a marginal move higher. Jen, what does Kroger's future look like overall? Because not so long ago, it was trying to get through this deal with Albertsons, this $24.6 billion deal that it later abandoned and is now, stuck in a legal mire.
Yeah, it's, Kroger, I think, is at the point where they're retrenching and they're reevaluating their core business and they're figuring out what is the best way to move forward. And I think there's some really encouraging signs in the business of how they're approaching that. The first thing, and they've talked about this a little bit over the last couple quarters, is they're really taking a hard look at their e-commerce business and all of the investment that they had lined up for the Ocado automated fulfillment centers that they were building. So we're expecting to hear a lot more detail on that next quarter. But they're also talking about really looking at non-core assets. And so to us, that means things like the Fred Meyer jewelry business. It means the Vitacost.com business. So that approach to becoming leaner and more efficient and more cost effective is really a positive trajectory for the company.
And just jumping in here with a headline that just crossed the Bloomberg, it's at hothead, which means it's one of those that we deem really important. Gold has just surpassed its inflation-adjusted record high set in 1980. Wow. So, Nora, we talked about that everything rally, whether it's risky assets or whether it's safe haven assets. Absolutely. You see that reflected in gold prices. Gold futures right now higher at the moment. And, we continue to see this plowing into safe haven assets.
Absolutely. We are seeing that across the board. So this is definitely something to look at. Jen, back to you. I want to talk a bit more about the e-commerce aspect that Kroger has going on here. So essentially, do they have online ordering so that they're able to deliver groceries to consumers, or how does this work?
They do. So they offer the ability to order online, and then they fill that order in one of two ways. They either fill it from one of these highly automated fulfillment centers, which is Ocado driven, and those are the ones with all the robots that do all the work that you see images of, or and which is much more common in the network, they fill those orders in stores. So somebody walks around the store, fills the orders, and people either pick it up or it is delivered from the store to their house. So they have these, both of these models that are working well. What's interesting is that Kroger said today, for the first time ever, delivery sales in terms of e-commerce outpace those for the curbside pickup. And so that just shows how much the consumer has shifted to where they would much rather have things brought to them than to stop at a store, even if it's only to stop at the curb outside the store to pick up their order. So there's definitely some interesting trends moving there. And I think Kroger's just looking to stay in tune with where the customer is moving.
Right. I mean, they certainly want to cater to the customer and the changing preferences of this customer. I'm curious about the profitability of this strategy. Does e-commerce, are the profit margins in delivery higher?
No, generally speaking, they're lower. And so that's why it becomes so important to be able to be super cost efficient when you're filling orders. When you're talking about groceries, historically, grocery as an industry is a very low margin industry to begin with. But when people all used to go to the grocery store, you were doing the fulfillment and you're doing the last mile delivery yourself. You took it, you put it in your cart, you paid for it, you took it home. That is the most profitable transaction that a grocery store happens. The second most profitable is when you go to the store and pick it up. So that curbside pickup. And then the least profitable is when they have to bring it to you, because now the retailer is absorbing the cost of that last mile delivery and getting it to your house. So that's why there's such a focus on looking at the operations, looking for ways to cut costs, to help move that needle of profitability to where it will be neutral, or similar to what it would be for an in-store shopping experience.
Unless they start to charge people for that. I think about DoorDash and Uber Eats and all those services where, the delivery charge is almost half of what the actual product costs.
Yeah, the delivery charges help, but the other thing that's probably the more important part that's a little less visible to the public is the revenue that they generate from ad sales. And so that's when you're online and you get special offers for a certain brand of cereal or a certain type of soup. That advertising sales are driven through their retail media networks. And that is a very, very high margin, very profitable business. So the bigger that online e-commerce becomes, the more effective they are at managing that advertising business. That helps offset the profitability and the drain on the delivery costs as well.
Makes a lot of sense. Jen Bartashis, Bloomberg Intelligence Senior Analyst for Retail Staples and Packaged Foods on the latest from Kroger. This is Bloomberg Intelligence with Nora Melinda and Scarlett Fu. We are keeping an eye on the stock market, up 0.7% on this Thursday. Keep it here on Bloomberg Radio in New York.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence Radio. I'm Nora Melinda, filling in for Paul Sweeney. Scarlett Fu had to step away to run to TV, but we have a lot going on as we are rounding out this hour. We're going to break down what's going on in the real estate market. Of course, this is an area that people are always focused on, especially as it pertains to real estate investment trusts. That's a place where you're seeing so many different segments really having some different moves here. And we're going to be joined by one person who is all over this, Jeffrey Langbaum. He is Bloomberg Intelligence Senior U.S. REIT Analyst. And we want to kind of discuss and break down what's the latest with real estate. Jeff, what did you take away from these earnings? As I'm looking at the REIT index here in the S&P 500, it's only up about 1.9% this year, so nothing to run home about. But what were you really seeing through these reports this earnings season?
Yeah, thanks, Nora. Thanks for having me on. I mean, one of the things we're thinking a lot about is what the future looks like. You know, the earnings that come out, are less important than the outlook. And one of the sectors we're looking a lot at is rental residential. We're in a cycle now where rent growth has been slowing, impacted by some heavy supply, but the opportunity exists for rent growth to accelerate into 2026. And one of the things we just put out a piece about is the comparison between the cost to rent and the cost to own. And owning a home is still significantly higher than renting. And the REITs that play in the rental residential space are poised to benefit from that, both on the apartment side and on the single family rental side. And so I think that as we look forward to next year, we could see rental growth accelerate for those guys.
So are you seeing any bifurcation at all between multifamily REITs versus single family rentals?
Well, single family rentals have had faster growth over the past year as multifamily growth slowed on the rental side, on the rental revenue side. And frankly, there's less competitive supply for single family rentals than there is for multifamily rentals. The growth rate may slow a little bit for single family just because their comps are a little bit harder as multifamily rents start to rise a little bit. But for the most part, I think they both are poised to benefit from this, attractive rental environment compared to the cost to buy homes, as mortgage rates remain elevated, sticky elevated high, and there's just not enough inventory, and renters are winning from that.
Well, Jeff, of course we know that we are working with a United States that is short a lot of housing here, and if you rewind about 1 to 2 years ago, there was a conversation about flipping some of these multifamily properties or office properties, into multifamily properties. Is that something that's still being discussed?
It's definitely being discussed, and it's happening, and it's going to happen more. It's not yet nearly as significant as I think the logic would tell you it should be, both in terms of how much housing is needed and how much unused office space there is. So there will be more of it, but it's definitely starting to happen. And New York City is an interesting place to look at on that. Right now there is excess inventory of office space, but the excess inventory and the availability is really at the lower end, and that's the stuff that's going to get turned into residential. The higher end office space is full, and there's not availability, and so tenants that want large blocks of high-end new space are really having to pay up for it if they can even find it at all. And interestingly enough, we're starting to see signs of new development of New York office buildings.
So you mentioned the new development here in New York for office buildings. Talk to me just regionally what the activity is looking like when we think about leasing, office leasing.
So leasing is different than building. And on the leasing side, again, New York really is one market where the leasing activity has been the most robust. If you look across the country, San Francisco is a kind of the two markets kind of get paired together as almost like the opposites of like how office markets have responded post-COVID. People came back to the office faster in New York. The demand came back faster in New York. San Francisco's a little bit behind, but we're starting to hear signs. AI is causing some ramp up demand there for office space. Leasing is starting to pick up as well as a result of that. And then you look around to some other markets, they all have their local nuances. DC is a market where, kind of in the Northern Virginia, you've got tech and defense, really driving demand and driving leasing, and in the district itself, maybe a little bit slower. So, and if you look around suburbs, probably not nearly as significant demand as urban centers. But it's really going to differ market by market.
Well, definitely something to keep tabs on as we're looking at the health of the real estate market and office more broadly. Thanks to Jeffrey Langbaum. He is all over it, Bloomberg Intelligence Senior U.S. REIT Analyst. As we're looking at the hour kind of coming to a close here, we see markets that are still in the green. Of course, we were seeing us hitting intraday records here, so we're really seeing green all across the board here. But it's really just been a stellar session thus far. We'll see how it continues here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access to the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. And we're also just looking at some other assets here that are in focus here, especially as we look at treasury yields. They are obviously in focus. The 10-year treasury yield is trading about 4% right now, a bit lower. The VIX, of course, we know that's Wall Street's fear gauge. It's about at the 15 handle here, so lots to keep an eye on. But if you look at the small cap Russell right here, that index is up about 1.3%. Lots to look at here. This is Bloomberg Radio.
A sitcom star from decades ago has died.
Her agent says Polly Holliday, who played Flo Castleberry on the 1970s and 80s CBS sitcom Alice, has died.
Mel, would you like to do something for me?
Yeah, what?
Kiss my grits!
The Alabama-born actress won a Golden Globe Award and 4 Emmy nominations and went on to appear in movies including Gremlins, The Parent Trap, and Mrs. Doubtfire. Holliday was the last surviving star of Alice. Her agent says she died at her home in New York City at the age of 88.
To Flo!
To Flo.
Oh, thanks, everybody.
Deborah Rodriguez, CBS News.
Some 300 Korean workers detained in a Georgia auto plant raid last week are on their way back to South Korea right now. Seoul warns the detentions could impact Korean investment in the U.S. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
America tries to make sense of it. Welcome to the Thursday edition as the aftermath of Charlie Kirk's assassination rolls into the 24th anniversary of the September 11th terror attacks. Today we talk it out with Frank Luntz, the CEO of FIL. He'll be here in just a moment, and we'll bring you some new polling with Cliff Young at Ipsos as well. Analysis of this political inflection point with our panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us alongside Republican strategist Greta Joins from Brownstein Hyatt. And it's all after a look at Wall Street. We start with the Thursday trade now. Charlie Pellet and his view of the markets live from New York. Charlie, what do you have?
Thank you very much, Joe Matthew. Best level of the day right now on the S&P 500 index. The Dow, the S&P, NASDAQ all up by 0.7% or better. S&P right now up 52, higher by 0.8%. That relatively tame inflation reading combined with more signs of job cooling, spurring a rally amid speculation that the Fed will be slashing rates next week for the first time this year. So again, the S&P at a record 65.84, up 0.8%. Dow Industrials up 581, looking at a record there, 46,073 on the Dow, up 1.3%. NASDAQ Composite Index up now by 0.7%. The 10-year 4.00%, with the 2-year that's currently yielding 3.50%. Gold retreating by 0.1%, 36.36 the ounce, and West Texas Intermediate Crude 62.45 a barrel. WTI right now down by 1.9%. This morning's reading on consumer prices was in line with expectations. Initial jobless claims, though, jumped to the highest in almost 4 years. David Kelly is Chief Global Strategist at JP Morgan Asset Management.
Overall, the economy is still moving forward slowly. Inflation's gradually going up. The economy is gradually slowing down. That's what we thought tariffs are going to do. It's going to slow growth and it's going to add to inflation. But I don't think it's nearly as dramatic as either of these numbers suggest this morning.
David Kelly of JP Morgan Asset Management interviewed on surveillance. Construction work on that Georgia battery plant that was raided by U.S. immigration authorities is being delayed as the companies involved grapple with worker shortages. And Delta Airlines more optimistic for its third quarter revenue after business and premium customers led a rebound in travel this summer. We are seeing Delta shares, though, tumbling right now by 4.4% among rivals. JetBlue up by 0.4%, and also Allegiant up by 0.3%. Those smaller rivals joined Delta earlier this year in calling out improved revenue trends in the quarter. Recapping, S&P right now up by 0.8%. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet watching Wall Street, and we'll get back to Charlie a little bit later on this hour to see how things are progressing. It's obviously a good day on the markets for a number of reasons here. We'll chew on the data a bit more later as we also address our political realities today live in Washington. Thank you for joining us on the Thursday edition here on Bloomberg Radio, on Satellite Radio Channel 121, and of course on YouTube. Search Bloomberg Business News Live. If you'd like to watch the radio on TV, you can also catch us live on Bloomberg Originals. Just posted about 10 minutes ago a photo from the FBI in Salt Lake City. This tweet reads, "We're seeking the public's help identifying this person of interest in connection with the fatal shooting of Charlie Kirk at Utah Valley University. 1-800-CALL-FBI with a full frontal photo of this individual wearing a hat and sunglasses, appears to be climbing a set of stairs here. This just breaking now with, of course, a shooter who is still at large in a political world that has been left in tatters today for so many reasons. We heard from the President of the United States last evening, and of course, this was after we spoke on the late edition of Balance of Power when we had just learned of the assassination of Charlie Kirk. There has been a great outpouring, and we went through a lot of this together last evening. You've heard it throughout the day here today on Bloomberg. Condemnation of political violence. We have also heard some of the blame game being played already. Let's bring you into the Oval Office. It was a 4-minute video that President Trump posted online last night. Listen.
I am filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence. It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
It is unclear if we'll hear the president speak. He did talk to reporters when he was over at the Pentagon on this 11th of September. He's on his way to New York later, where he's going to at least scheduled to attend the New York Yankees game, and there may be more from the president there. But he said more than what we just played for you. After referring to Charlie Kirk as a martyr, the president said radical left political violence has hurt too many innocent people, even though we don't know who the shooter is. Let's update what we have right now from the White House before we talk to Frank Luntz. Bloomberg Washington correspondent Tyler Kendall has been handling this delicate story and joins us from the North Lawn of the White House. Tyler, do we suspect we'll hear from President Trump in New York or on his way?
We very likely will, Joe. He did come and speak with us reporters. As you mentioned, I was at the Pentagon earlier today, and at the top of his remarks there commemorating the victims of the 9/11 attacks 24 years ago, President Trump did say that he does intend to award Charlie Kirk with the Presidential Medal of Freedom. He said that there will be a ceremony announced shortly, and then he also went on to tell us that he does intend to speak with Kirk's family later on this afternoon. When asked about any updates that he's been getting when it comes to the investigation into the shooter who still remains at large, he said that a, quote, virtual manhunt right now is currently underway. We do know that the FBI is working very closely with local and state officials. As you well know, and you covered this all last night, it is that officials say there was a single shot fired from the roof of a building about 200 yards away from where Kirk was addressing the crowd. And there's a few different developments that we got today. Moments ago, of course, you mentioning how the FBI has posted this picture of the suspect. But we also are learning that it does appear that officials were able to recover the rifle they believed killed Kirk. Earlier today, the special agent in charge said that they found a high-powered bolt-action rifle in the wooded area near the attack. We also know that officials are currently analyzing a palm print, a footprint, as well as a footwear impression that was found at the scene. But Joe, as you well know, this was a very crowded area. More than 3,000 people were there to see Kirk speak. So a lot of still big open questions when it comes to this investigation.
Yeah, Tyler, thank you so much. And if we do hear the president, Tyler will bring us the news here on Balance of Power, live from the White House, our Washington correspondent, Tyler Kendall. I want to be clear here and not overpromise. This is Bloomberg Radio, of course. We're typically glued to policy here, the connection between Washington and Wall Street, and we're not going to solve this crime here on the air. There are other channels that are attempting to do that. We're going to do everything we can to avoid speculation, bring you facts as we hear them, and in the case of this program, explore the politics with a number of pain points to bump into here behind all of it. That's why we wanted to get on the line with Frank Luntz. It was the first call that we made after our morning meeting. The politics and communications consultant, the CEO of FIL, and a man who understands the nuances of the conversation on both sides of the aisle. Frank Luntz, welcome back to Bloomberg. It's really great to have you in an important conversation that I know we're in for. I don't know how this builds on the conversations we've had before, Frank. I remember talking to you after the attempted assassination of Donald Trump and the gut-wrenching summer that this country went through leading up to an election that has now left us in a place where a lot of people don't have hope today, Frank. And those of us old enough to remember living through 9/11, the confluence of these two events has been making things feel a bit dark today. How are you feeling?
This is absolutely, your emotions and what you're saying are absolutely appropriate. And at some point, we need to come together as a country and say, enough. I'm getting texts from Democratic and Republican senators, Republican and Democratic House members. I'm hearing from the people in power and the frustration and the anger that they have towards people who make political statements, who seek to use this to forward an agenda is simply atrocious. The first thing you think about is the loss of the family. The second thing you think about is the loss to the country. It doesn't matter whether you agree or disagree. In fact, it is completely irrelevant. What is relevant is that in the last 48 hours, we had a woman stabbed to death on a train, and there were 100 people who just watched it happen. We had shootings in Colorado, more shootings of young people, and we had this horrible tragedy. And I'm asking Americans to start to say, wait a minute, these aren't random circumstances, that we have to consider the impact of what's happening, and we have to say to ourselves, enough. And that's the word that I'm going to leave this answer to your question with, enough. Enough political violence, enough destroying each other. I posted on my X account the speech of Bobby Kennedy in 1968, moments after the assassination of Martin Luther King. And the level of hate that I received, or that video received, is atrocious. What kind of country have we become? What kind of people are we? Now, I know that probably a third of that are bots being put forward by the Chinese or the Russians, so don't believe it. These are not actual people. But for those who seek political gain off of this assassination, shame on you. And shame on the country if it doesn't speak up and speak out to say, stop it right now.
Well done. Enough indeed. My good friend and producer, James Mahoney, went back to listen to our conversation, Frank, the day after Election Day. You were with us here on Bloomberg, and I remember it really well. We were going to pull that tape, but there's no need to do that because you're here with us right now. I just want to read it back to you. This is what you said. When I asked you, what did we learn about our nation last night? Frank Luntz said, there's some things that are more important than an election. It's the next generation. And what are they learning? They're learning that it's okay to tear your opponent apart, that there's no bounds to negativity. They need to learn there are right and wrong ways to approach politics. You went on to say, I'm afraid that what we now learned is the wrong thing, which is anything goes at any time for any reason. Frank, people and young people especially were looking at this video within 5 minutes of this assassination happening. Is the corrosion generational?
The video was horrific. And I was teaching while this happened. And someone was going to show me the video. And fortunately, my students pulled it away from me and said, don't look at it. You don't want to see it. Well, unfortunately, I saw it, and I couldn't believe what I saw. And this is not Hollywood. This is not entertainment. This is a human being who was gunned down while participating in his constitutional rights to share his point of view with students who were there voluntarily. And that I really hope that we can, over the next 24, 48, 72 hours, sit down and discuss what is missing at home, why we seem to have lost the values of civility and decency and respect. I'm hoping that we will look at what's missing in our education system, because our kids are not being taught to celebrate each other, they're being taught to condemn each other. I hope that we have a discussion about social media and its role in in forwarding and endorsing and pushing out this kind of messaging that makes it potentially acceptable to behave in such an inhumane way. And in the end, I want us to look at ourselves, as I have been doing over the last 24 hours, and the things that I have said and I have done that could in any way perpetrate this and promote this. We have to stop, look at who we've become, and we should be a better union. And that's what we should be focusing on. Not what happened, but where we go from here.
We're spending time with Frank Luntz today on Balance of Power. I wonder your thoughts about what the president said last night. Radical left political violence has hurt too many innocent people and taken too many lives. The framing of this from one side to the other. Frank, the worry is that this could get darker, that the blame game could grow intense. We heard from Representative Derek Van Orden of Wisconsin telling reporters, he walked up to a group of reporters on the Hill and said, every one of you is responsible for Charlie Kirk's death. You are responsible for this because you're echoing the horrifically horrible political violent rhetoric produced by the Democratic Party. How does that make you feel when you hear that?
I want everyone, everywhere, from every community and every corner of the country to look at this and to make something reasonable come out of this horrific action. If we learn how to discuss without demonizing, if we learn how to debate without dehumanizing, and this sounds too much like a speech, and I don't even like my own language right now, but this is what it is. If we can be better people, and the reason why I always do your show, and I've got a commitment that I have to get to momentarily, I always do your show, always, because you have never asked an offensive question. You have never asked a question that's political or divisive or toxic. You have never behaved this way. And I want your viewers and your listeners to know that this is a place to come for the truth. And in fact, that's a great way to kind of wrap this up. The truth matters, but we don't know where to go to get it. The truth is essential to a democracy, but we don't know who's telling it. Let us commit today, at this moment, that we only speak the truth, even if it hurts us, that we only speak the truth, even if it helps somebody else. Because in the end, we will be a stronger country and we will grow from this horrible moment if we affirm the importance of the truth. And if we don't, then this is only the beginning.
This is why we called you, Frank, and I just appreciate your honesty and candor today. And thank you for always doing the show. It means a lot to me and to all of us at Bloomberg. FIL.
It's an honor.
Inc. Well, it's our honor to have Frank Luntz with us on this day of days. And so I hope you let that sink in a little bit. We're going to try, as always, on this program, and I don't always succeed at this either. We try to create a bit of a safe space for people on both sides of the aisle, whether you're a Democrat or Republican, to come here and say something. We might poke you a little bit or ask you to justify it, but we try not to get into the corrosive and toxic form of politics, which is why we've been on the air here for a couple of years, and we'll continue to do our best at that. It's 9/11, and we've got some tough news to digest, and we've got some very smart people and insightful, nuanced people to help us do it. A little bit later on, we'll talk to Cliff Young. He's here from Ipsos with some really interesting research, actual polling data on political extremism and political violence. You might be surprised how much people agree on this, as a matter of fact, and we'll talk with our political panel a bit later on today as well. Jeannie Shanzano is with us. Greta Joins is with us, too. And our dear friend Charlie is also with us. He's live in New York with a look at Wall Street. We're going to do that first and get to the Thursday trade with Charlie Pellet. Hey, Charlie.
Thank you very much. 9/11, always a tough day on Wall Street. Brings back a lot of memories. The Dow, the S&P, NASDAQ, all advancing right now. Up 54, 65, 86. We're looking at a gain of 0.8%. We did get that relatively tame inflation reading combined with more signs of job cooling that is spurring the rally that we're seeing right now. Amid speculation of the Fed will be slashing interest rates for the first time this year.
Fed, of course, meets next week. Right now, the S&P, as I mentioned, up 0.8%, the Dow up 1.3%, NASDAQ up 0.7%, the 10-year 3.99% on the 10-year, with the 2-year currently yielding 3.51%. Gold just about flat on the day right now at $36.38 the ounce. West Texas Intermediate crude down 2%. WTI 62.42 a barrel, and Bitcoin up 0.7% of 114,000 now 454 on Bitcoin. Centene Corp shares surging after the insurer gave upbeat views of its Medicare quality ratings. Shares of Centene up now by 11%. Novo Nordisk's new CEO wants workers back to the office as the Ozempic maker struggles to catch up with Eli Lilly. Shares of Novo Nordisk, they're down 0.8%. Eli Lilly up 0.6%. And just getting some comments out of Lockheed that does see about $200 million in tariff costs for this year. Lockheed Martin right now advancing by 1.5%. And just an update on the Charlie Kirk killing. Federal investigators have recovered what they believe is the rifle used to kill Charlie Kirk. They have also released a photo now of a person said to be of interest in the slaying. Balance of Power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
Thank you so much, Charlie Pellet. He'll have a lot more in about 15 minutes as we work our way through each hour. We check in with Charlie to keep tabs on markets. And so far, it's been a pretty impressive move today. Once again, people start calling the top. Just hold your breath for a moment as we consider the aftermath of the assassination of Charlie Kirk. We're going to be talking about this a lot today on the program, as we just were with Frank Luntz, one of the first people and certainly the first lawmaker I had a chance to speak with after this news broke last night was Senator Mike Rounds, the Republican from South Dakota, was coming on to talk about any number of issues, but not this one. And we got into the prospect of political violence and what some believe is the real need for additional security for members of Congress. Here were his thoughts.
It is an opportunity for us to once again tell the rest of America and the rest of the world that we can have differing points of view and not be violent about it. And so anything that any of us can do to offer as an example the way that we should treat one another with respect, that's a positive thing. I think that's what Charlie Kirk would have wanted to have had happen. And most certainly that's something that I think we should continue to carry on, which is peacefully discuss, have your differing points of view, argue it, debate it. It's healthy for America, but our founding fathers wanted that to be done in such a fashion that we could still be one strong, unified nation, even if we have differing points of view. And there's nothing wrong with having differing points of view.
Well, I appreciate your point of view on that, Senator. We were looking at some polling from Ipsos from back in July that asked voters about political extremism and threats to our democracy. This poll with Reuters showed 27% of Americans ranked political extremism as the most important problem facing the U.S. How about you?
I can just tell you from personal experience here in Washington, we work across some of the most polarized areas in terms of ideas and ideologies. But if you talk to members of the Senate, Republican and Democrat alike, we get along with one another. We have visits with one another. We go to lunch together. We have a prayer breakfast together. We have Bible studies together. We are not enemies. We may have different points of view, but that doesn't get across very often. And so the example that we should be able to offer is one of unity in terms of making America better than what it is today. Our founding fathers said that they wanted to create a more perfect union. They didn't say our union was perfect to begin with. They wanted it more perfect. Well, that's what we should be focused on here. And sometimes in the middle of our strong emotions here, we forget to finish with that particular part of the message, which is regardless of our points of view, we're Americans first. And we treat each other with respect and with dignity. And here in the Capitol, in the offices that we have, I can tell you personally and that behind closed doors, Republicans and Democrats alike get along. We respect one another. We consider each other as colleagues and friends. And we would hope that across America, whether it's a coffee clutch or whether it's a political meeting, a city council meeting, or a state legislative body, that we remember that we are all Americans and that we have a whole lot more in common than we'll ever disagree on.
Mike Rounds. Really poetic. Didn't know I was going to ask him that, and I had no idea what his answer would be. I never saw that side of Mike Rounds before. But that's got to be the most important message anybody can hear. Because if you're not here in Washington, you may not realize that, yes, these guys and gals work out together in the gym on Capitol Hill in the morning. They might have their private quarters, but they come together a lot. A lot of them are friends. They play on softball teams together. Sometimes they're targeted together. Now, I mentioned that research with Ipsos when I was talking to the senator. That came courtesy of Cliff Young, who is back with us right now, Ipsos U.S. Public Affairs President, and Professor, Texas A&M University's Bush School of Government and Public Service. The agenda when it comes to political extremism. Cliff, welcome back. I'm really happy you're here.
It's great to be here.
You ran these numbers again to find that that priority is, in fact, even more urgent.
Yes, indeed. Even before yesterday, political extremism was the #1 issue in America. It's outstripped the economy, which was very important over the last couple years. Indeed, it was the issue that Trump won on in 2024, last year. But right now, it's extremism. And historically speaking, it's been a Democratic issue. But what we're finding today, it's actually an issue that Republicans and Democrats are fairly even on when it comes to their worry. Now, it's a whole host of different things they're worried about when it comes to political extremism, the friction, the polarization, and even the violence in the past. So that definitely, and without a doubt, is the #1 issue today in America.
Fascinating. You find as well nativism, an animating force in America today. What are you learning when you talk to voters about this? This is really what's driving.
So driving most, I would make the argument that it's driving most of our politics today, right? And nativism, what is nativism? It's favoring native-born over foreign-born. Those that have a more restrictive view of it tend to be Republicans. Those that have a less restrictive view tend to be Democrats. And that is the conflict today. We see it across America, right? And it cuts ultimately to identity, who we are an American. And a lot of the vitriol that we see today in politics is around this specific issue of who really is an American and who isn't.
What do you think about what Mike Brown said? You've been in Washington for a minute. There does seem to be a real misunderstanding. And it's the fault in many cases of the filter, right? And yes, that's the media, but that's also social media. The clips that get out there, the ones that go viral are the angry ones. If you want to make headlines, you go on the floor, you drop a bomb, and you say horrible things about the guy you just worked out with in the gym. Maybe that's not the case. Maybe they don't get along. But the fact of the matter is, the contrast that you see across the country is born of a perverted vision of Washington, is it not?
Well, I think it's a function of distance. Social, cultural, political, right? I mean, indeed, we are very polarized, and we have been over the last few decades, and it's only gotten worse. But this polarization, as I said before, is cultural, it's geographic. As an example, we see it play out in these sort of ecosystems, virtual ecosystems that can be very, very hateful at times. But ultimately, the problem of distance is a problem of empathy, the inability to put oneself in the other one's shoes. And I think that's what the senator was hammering home, that at the end of the day, we might disagree on many things, but we can sort of model the other one's life. We can understand where they're coming from. But for many, that's very difficult when they just engage in ultimately the virtual or social world.
It's a version of road rage when you don't have to actually talk to people face to face. You act like a different person.
Well, it's much easier to criticize online 100%. And social media than it is face to face, ultimately. The last point I would make there, which I think it's very interesting the way he framed it, leadership matters in a world that's fractured, where we don't engage. I don't know my senator or my local town leader or the local dog catcher like I used to. I just walk down the street. I know them mostly virtually. And often, and we know this based upon public opinion data, often I'll follow their lead. It's called queuing. I'll follow Trump's lead. I'll follow Biden's lead because I'll give him the benefit of the doubt and I trust him. And when leadership calms things and says, we work together, this has a salutary effect. But when leadership and leaders basically throw barbs back on the other side. This is problematic because the average American doesn't necessarily have, as you said before, you were alluding to, have contact with the other side.
Yes, right. And so here we are on this 24th anniversary of 9/11, and you're going to hear a lot of people talk about the unity that we all felt in this country. There was an American flag on every house. Does this feel like the opposite?
Yeah, we're in a difficult place right now. I think this assassination of Charlie Kirk obviously is devastating. It really weighs heavy on the body politic.
Yeah.
And a body politic that was already strained. A widespread belief that the system was broken, it no longer worked for the average person. He was for many, a shining glimmer of hope for something different. 9/11 at the time rallied the troops, moved public opinion immensely. I think Bush gained 30 or 40 points in the end. But ultimately, we're in a place where people no longer trust the system.
Interesting to think that this president of the United States is also headed to a Yankees game this evening, and we'll see what kind of unity he can strike while he's there. Cliff Young, great analysis and great insights from our friend at Ipsos. Thank you, Cliff, for being part of our conversation. The panel's next on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Stocks and bonds rise as this morning's data seal a September Fed rate cut. S&P up 51 now to 65.82. We're looking at a record there, up by about 0.8%. The Dow up 585, up 1.3%. S&P is off session highs, but still holding close to a record. We've got NASDAQ up 0.6% right now. Our Mag 7 index pushing higher by 0.8%. The 10-year after this morning's data, 4.00%. The 2-year, 3.51%. Gold down $5 the ounce, down 0.2%, 36.34 right now. And West Texas Intermediate crude is down 1.9%, 62.46 a barrel. Bitcoin at 114,577, up by about 0.8%. Again, S&P 500 index up 0.8%. This morning's reading on consumer prices was in line with expectations, while initial jobless claims jumped for the highest in almost 4 years. As for the economic backdrop, Tiffany Wilding is economist at PIMCO, and she was interviewed this morning on surveillance.
You know, we are really entering this kind of period of weakness, potential weakness. We'll see some fiscal supports that are offsetting the tariff effects, but they don't kick in until, the beginning of 2026, call it February, March, when consumers are starting to get really big refunds from retroactive tax cuts. But until then, we're really kind of in this period of weakness.
Tiffany Wilding of PIMCO. Apple hit with a pair of downgrades today in the latest sign of caution toward the iPhone maker, which has sharply underperformed its large cap tech peers this year. Apple shares, they're trading higher by about 0.8%. And Oracle retreating after yesterday's 36% surge. Oracle right now lower by 4.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. And once again, here he is, your host, Joe Matthew.
Okay, Charlie, great to have you with us. As always, Charlie will be back coming up top of the hour around 1 o'clock as we welcome our global television audience to the Thursday edition of Balance of Power with the latest on Wall Street. It has been a boffo session so far. A lot of breakouts following that Oracle earnings report on the AI front. It's really been something to watch. We are, of course, consumed with politics on this program, and today in Washington, it does feel a bit different coming off the news last evening on the assassination of Charlie Kirk, now moving into the stages, of course, that we walk through each year on the 11th of September. There was a ceremony held, as we do each year at the Pentagon. President Trump attended that ceremony, and he's going to be making his way to New York a little bit later on today to attend the New York Yankees game. Of course, recalling former President George W. Bush's triumphant night at Yankee Stadium, when the nation felt like it was in a very different place than it is today. The unity that followed 9/11 is something that many wish they could duplicate, as we've heard more than once. And following this assassination yesterday, I think to many it seems even further out of reach. There'll be much more news to follow, and we'll update things with the help of Bloomberg and CBS News along the way throughout the day here on Bloomberg. We're focused on seeking context and perspective. There's a briefing held last evening, and it was stark to listen to on Bloomberg Radio. Doug Krisner was on the air, and I was driving home from the late edition of Balance of Power when the governor of Utah, Spencer Cox, started speaking. And I think you might remember the headline that I'm referring to. Let's listen to the governor before we bring in our panel. Here's Spencer Cox.
And I want to be very clear that this is a political assassination. We are celebrating 250 years of the founding of this great nation. That founding document, the Declaration of Independence, that this great experiment on which we embarked together 250 years ago, that we are endowed by our Creator with certain unalienable rights. The first one of those is life. And today, a life was taken. Charlie Kirk was first and foremost a husband and a dad to 2 young children. He was also very much politically involved.
And this is where we start with our panel. I'm glad to say that Jeannie is with us today. Bloomberg Politics contributor Jeannie Shanzano is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, joined as well by Republican strategist Greta Joins, Policy Director Brownstein Hyatt. Greta, welcome back to our conversation. It's great to see you. And Jeannie, I want to start with you here. With so many questions, most of them are pretty simple. I think people are asking this morning when you talk to somebody in the office. I got a couple of calls from friends earlier than usual today because they wanted to get me before I left the house. I was really happy to hear from them. Questions like, how did we get here? And how do we move on? Some folks are very worried, in some cases, about the rhetoric that we heard from President Trump last evening, some of the blame game that has followed. But Jeannie, they haven't even found the shooter yet. And I wonder what you think the proper conversation is to be having right now. What questions are you asking?
You know, I think the proper conversation is, of course, to extend our condolences to Charlie Kirk's very young family and to celebrate the work that he did. I am obviously a Democrat, but I know of Charlie Kirk's work very, very well because I am fortunate enough to spend much of my professional life on college campuses. And you can hardly have been on a college campus in the last 10 years without being introduced to Charlie Kirk in one form or another. And just today, Joe, I, like you, was hearing from people, and I heard from an alum who had started the Turning Point group on campus, and I had worked with her as a faculty member on that. And she is now working on the Hill, and she just recalled how life-changing Charlie Kirk and Turning Point were for her and other conservative students on campus. And so I think that's the proper conversation to have. And then I think the other proper conversation to have is about, you mentioned the rhetoric, and I think that is the rhetoric we use to respond to this. Because one thing I think we all have to be careful about, particularly those on my side of the aisle, is to say political violence is unacceptable, but. And remember, anything before a but is a lie. We should never be saying, but we disagreed with them or we found it offensive. It's got to be political violence is unacceptable. And the same goes with the other side of the aisle. And that is something I think we need to have a conversation about because rhetoric does seem to, according to the research, play some role in this. I don't think it plays a complete role or explains it completely, but it does play some role.
Greta Joins, what's going through your head here today as the national conversation gets started? I keep hearing that we're at a political inflection point. Do you worry this is an inflection point that leads to something worse or something better?
I don't know. I think as you talk to Republicans today, the anger is palpable. Charlie's enduring legacy was certainly his commitment to engaging with and discussing things with the other side. And I think what is so frustrating is here as a Republican is hearing from, those on the far left and certainly not my partner here on the panel today, really encouraging and mocking the tone and tenor of what Charlie did from when he was basically a teenager to the engagement and the movement that he started. And I think that as we move forward, his legacy, he would certainly want to be his family and his faith. And I think it's just, as Republicans, I think we're trying to reconcile that with how frustrating and vilified, I think we feel that Charlie was unfairly for many years. So I think that it is it's a challenging moment for the country, but I think that frankly, conservatives' feelings on this point, I think are valid.
Mm-hmm. There were a lot of progressives who felt vilified by some of Charlie Kirk's comments as well, which I'm not going to spend a lot of time exploring on the program here. Greta, I just wonder your thoughts on what we heard from Congressman Don Bacon today, Republican from Nebraska. He says he wishes President Trump would unite the country after this shooting, but, quote, he's a populist. He says populists dwell on anger. And I have to remind people, we had Democrats killed in Minnesota too, right? Does he have a point, Greta?
Frankly, I don't know Congressman Bacon well enough to sort of comment on like where his thoughts are and where his feelings are in this moment in time.
Just on the fact that Democrats have been targeted by political violence as well.
I think, the comments that we're hearing on both sides that political violence is a terrible thing are accurate. I think what has been challenging in particular in recent weeks for Republicans to see is certainly seeing individuals like Gavin Newsom post mocking pictures of the assassination attempt on President Trump. And, that I think the more insulated that we become from the seriousness of all of these conversations, and I think, really aggressively using terms like fascist and Nazi, and we are at war with our opponents, as we heard Senator Murphy say just a couple of days ago, I think that emboldens those who are attacking Charlie Kirk, who are attacking President Trump, and are certainly going after any political stripe out there. That is a challenging moment for sure.
Well, of course, Jeannie, we remember in June, the Minnesota Speaker of the House, Emerita Melissa Hortman, was killed in a shooting at her home along with her husband, Mark. Her fellow Democratic lawmaker, State Senator John Hoffman, and his wife were also shot and wounded. I could go through, of course, a list like this, but I recall the president's remarks last evening when he sent out that video from the Oval Office and referred to radical left political violence hurting too many innocent people. Are we going down a dangerous path here with blaming one side or the other?
I think so. And I think that Representative Bacon's words are well taken. And I, too, wish the president would not have said that last night. You mentioned the shootings of the state senators. We also had the horrific firebombing of Josh Shapiro, the governor of Pennsylvania's house, a Democrat, where he and his family were. We had the attempted kidnapping of Gretchen Whitmer, Democrat, Michigan governor. We had the Speaker of the House, Nancy Pelosi's husband, brutally beaten. We've had political violence increasing on both sides, and in every situation, it is deplorable. I would also just caution that when you look at the research on political violence and when you look at the history of political violence in this country, probably the most politically violent decade before now was in the 1960s. Rhetoric plays a role, and we are certainly at a different point with social media and our access to it, but that is not the primary or only factor. Another key factor, and probably the key factor in the drumming up of political violence, is the inability of people to get their government in Washington, D.C. to respond to their needs. And people don't want to talk about that. They want to talk about the rhetoric because it's much more enticing to talk about. But the reality is we have structural problems in the government which drive vast amounts of political violence in this country, and that needs to be addressed. And on Charlie Kirk, I will just say, to echo a bit of what Greta said, he was this person who loved to go on college campuses where we celebrate free speech and engage with everybody. And he did so with joy. And I'm always reminded he was joyful right before the horrific shooting yesterday. And I'm reminded of what the guys on Pod Save America said. The Democrats need to find some joy in their party because you can't have a party without fun and joy, Joe Matthew. And that is what Charlie Kirk brought to the party of the GOP. And that is why so many young people were attracted to him. And again, unless you are surrounded by young people, it's hard to know that. That doesn't mean all of them, because there's vast progressives and liberals who didn't like him. But Charlie Kirk had fun, most fun, more fun, just like his mentor, Rush Limbaugh, engaging with people who disagreed with him as he did those who agreed with him. So there was a joy to him that we should not forget. And Democrats want to emulate that on the left. They haven't been able to because there's only one Charlie Kirk, but that is something important to keep in mind about his prowess and what 31, 32 years old he was able to bring.
It's a really great point. I was talking to producer James about this. I'm not sure there is an equivalent on the left, which is why people have been looking to lawmakers in the Democratic Party to respond to this.
Jeannie Shanzano, great stuff, and Greta joins. Thank you so much for your honesty and your analysis. Our panel will be back in our second hour. As I mentioned, we'll welcome our global television audience to the conversation. Congressman Brian Stile will join us, along with Congresswoman Haley Stevens, up next, only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
Washington responds to a dark day in politics. Welcome to the Thursday edition as the aftermath of Charlie Kirk's assassination rolls into the 24th anniversary of the 9/11 attacks. I'm Joe Matthew in Washington. Glad you're with us on Bloomberg TV and radio. Over the next hour, we're going to bring you to the White House for the very latest, and we're going to talk it out with Congressman Brian Stile, the Republican from Wisconsin, will join us as well. Congresswoman Haley Stevens, the Democrat from Michigan. as we try to make sense of the last 24 hours. And we start, as always, with a look at Wall Street, his view on the markets. Charlie Pellet is at World Headquarters in New York. Charlie, what do you have?
I thank you very much, Joe Matthew. Indeed, looking at records right now on the S&P 500 index, the Dow, NASDAQ as well. NASDAQ 100 index pushing higher. We got that relatively tame inflation reading this morning, combined with more signs of job cooling. Bottom line, all adding up to speculation that the Fed will indeed be slashing rates for the first time this year when policymakers meet next week. So the S&P right now close to session highs 65.80. That is a gain of 48 points, up 0.7%. Dow Industrials up 567 now, up 1.2%. The NASDAQ Composite Index up 128 for NASDAQ, an advance right now of 0.6%. Our Mag 7 Index pushing higher by 0.8%, with the 10-year right now at 4.00%. The 2-year 3.51%. Gold lower, little change, down 0.1% right now. The precious metal 36.36 the ounce, and Bitcoin up 0.7% right now, 114,460 on Bitcoin. West Texas Intermediate crude oil, by the way, down 1.9%, 62.44 a barrel. A downgrade for UPS at B of A as small package tariffs inflict pain. Shares of UPS, so they're higher right now by 0.4%. Rival FedEx also gaining in today's session, up now by 1.4%. Recapping stocks higher, looking at a record, the S&P up 0.7% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie, thank you so much. We'll hear more from Charlie Pellet in about 20 minutes with his view on Wall Street here. The Thursday trade looking pretty good so far. As we talk politics here in Washington, welcome to the Thursday edition of Balance of Power on Bloomberg TV and radio. I'm Joe Matthew, tracking President Trump from Washington to New York today. He started his day on this 11th of September at the Pentagon. You saw it and heard it live here on Bloomberg earlier this morning. The ceremony at the Pentagon that takes place annually. He did make a few remarks to reporters there, but off camera, off microphone, we may well hear from the president later on as he travels to New York to attend the Yankees game this evening. Vice President Vance was at the World Trade Center site this morning along with other dignitaries. But the president did address the nation last evening, not live. He recorded a video from the Resolute desk in the Oval Office to condemn the assassination of Charlie Kirk. Here's part of what he said.
I am filled with grief and anger at the heinous assassination of Charlie Kirk. My administration will find each and every one of those who contributed to this atrocity and to other political violence. It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
The president went on to say a lot more, in fact, condemning what he referred to as the radical left for the assassination of Charlie Kirk, and said much more to reporters this morning. In fact, the president's going to be speaking with Kirk's family, and that's where we start with Bloomberg's Tyler Kendall, our Washington correspondent on the North Lawn of the White House. Tyler, what else can you tell us?
Yeah, Joe, a very solemn day here at the White House, which started with President Trump traveling to the Pentagon to deliver remarks remembering the lives of those lost in the 9/11 attacks 24 years ago. And he started his remarks by actually commemorating Charlie Kirk and announcing that he intends to award him with the Presidential Medal of Freedom. He said that that ceremony date would be announced shortly. He then came and he spoke briefly with us reporters who were there at the Pentagon, and as you mentioned, he confirmed that he will be speaking with Kirk's family later this afternoon. And when asked what sort of updates he's been getting on the search for the shooter, who still remains at large, he did call it a virtual manhunt, in his words, since we know that the FBI is working very closely alongside state and local officials in this investigation. We did get an update in the last hour, though, a pretty significant one, the FBI releasing photos of the suspected gunman, 2 photos from that were taken from the campus at Utah Valley University. We also learned a few other updates when it comes to the evidence as it's evolving in this case, including that it appears authorities think that they found the weapon that was used to kill Kirk. The special agent in charge saying that they found a high-powered bolt action rifle in the wooded area near the attack. Now, still a lot of different pieces that need to be pieced together here, Joe, because as you well know and covered last night, there were nearly 3,000 people in attendance at that event to hear Kirk speak.
All right, Tyler, thank you so much. Bloomberg's Tyler Kendall with the latest from the White House. And again, if we hear the president speak, we'll bring you his remarks. He'll be leaving the White House for New York a bit later. I just want to make, by the way, one quick correction to something that I mentioned. J.D. Vance changed his plans. Instead of attending the 9/11 ceremony this morning in Lower Manhattan, he is making his tracks to Utah, where he's going to be meeting with members of Kirk's family. We heard from the Speaker of the House earlier as well. We've been hearing from a number of members of Congress, so we should start with the Speaker. This is commentary from Mike Johnson on CNN last night. This news was only hours old. Here's what he said.
There are deranged people in society, and if they are encouraged along this way, they will do dangerous things, increasingly so. We see that. So I think that members of Congress have come to that recognition. I think many of them are nervous, of course. They're public figures. They're exposed all the time, everywhere. We have great security measures for members of Congress, but there's a desire on many people's parts to have more. These are the new realities. I think social media has been a toxin in politics. I think it has added to this vitriol. But at the end of the day, I think the call is that we've got to recognize once more that we are all fellow Americans. We should see one another as colleagues and fellow citizens and fellow countrymen and not as enemies.
Speaker of the House, as we turn to Brian Stile. The gentleman from Wisconsin joins us, Republican from the 1st District, who chairs the House Administration Committee. He's live on Capitol Hill today. Congressman, it's really good to see you. We were hoping that we could connect on this today because I think we have a pretty long history of candid conversations. And before I ask you about the security component, which, by the way, is critical to the chairman's committee here, I just wonder what the feeling is like. Everyone who's joined us today talks about the anger that's being felt today on Capitol Hill. Is that what you're feeling?
Yeah, as I received the news yesterday that Charlie Kirk had been shot and killed, it was both a moment where my heart sunk, but also a frustration of this type of political violence. President Trump was shot last summer at a political rally, and then you have Charlie Kirk shot and killed today. And so it's a frustration, but it is also a really sober moment, I think, for a lot of us that knew or interacted with him. He was just such a leader in the conservative movement, inspiring people to stand up and have the courage to stand up for their convictions, in particular on college campuses where he was when his life was ultimately taken.
Well, you know, it's interesting because we talk here on TV and radio. People listen to our conversations. They see you in committee hearings. I've seen you in a hearing room working with Democrats. I've also seen you in the wild at events that take place in Washington, fundraisers and other things that go on here after hours. Congressman, I've seen you interact with people on the other side of the aisle with ease. And part of the conversation that we've been having here on the program, Mike Rounds brought it up, is the disconnect that a lot of people have with Washington, assuming that you're enemies with every Democrat up there. The fact of the matter is you guys work out together, you go out to eat together. It's part of the fabric of this legislative body. And I wonder if we need to talk about that more.
We need to accept that there should be robust debates on policies, but that doesn't mean you need to be disagreeable as a person, right? You can disagree on the underlying policy. And what we have seen is the rhetoric build, in particular, some of the rhetoric against President Trump, I think, has unquestionably crossed the line, a threat to democracy. People have called him a Nazi, et cetera. And it's that type of rhetoric that I think is really dangerous at a period of time where there are individuals who can be encouraged by others to act in a manner, and in particular to take the life of another. We're going to learn more about the criminal that I hope is apprehended and is held to the full extent of the law responsible. But I do think that we see a lot of people playing a dangerous rhetorical game, and we saw the assassination attempt of Trump, and now we saw the killing of Charlie Kirk.
Yeah, there's a lot of dangerous rhetoric out there. And by the way, I've never heard you engage in any of it. But, you know, ask Nancy Pelosi, who Donald Trump also referred to as an evil person. He's called those of us in the media the enemy of the American people. Is that where we need to to get to, Congressman? Is it the language that's driving this, or is it more complicated than that?
Well, it's not as simple as just the language, but I do think that there is an element that is trying to incite individuals to act. And again, I don't think it's lost on us that President Trump was shot at, and then Charlie Kirk was shot and killed. And again, if we think about what Charlie Kirk was actually doing, he was actually having a policy debate on a college campus. That is actually really core to our democracy. We should be having those types of robust policy debates. And this action where his life was taken is not only frustrating, but it causes a lot of kind of that anger. And you got to look and say, we need to make sure that there is no place for this type of political violence anywhere in our country.
Mm-hmm. You heard what the speaker said in that cut that we played from CNN, that there's a desire, he said, on many people's parts to have more security, that these are the new realities. You chair the admin committee, and you're intimately familiar with this idea. Congressman, every time somebody gets hurt or threatened, or a horrible fatality like this in the political world, it renews the conversation in Washington about whether members like yourself should have security details, or maybe there's another way to secure those who serve in the Capitol. But you also have to go home to the district, and I wonder if it's time to address this new reality.
It was just a couple months ago, following the horrific incident in Minnesota, that we implemented new programs here to provide additional security for members, for staff, and the public at large. But it shouldn't be lost that you can't simply secure your way out of the challenges that we face right now. Again, I'll go back to the President Trump assassination attempt. He had the protection of Secret Service. And so it's not simply security. We do need security. We need to make sure that we're providing that to members, to staff, and to the general public. But there's something deeper going on in our society as well that we have to address.
Well, that's absolutely right. I just wonder, with the enhancements that you made, though, or do you feel they're adequate now, or do you go back to the drawing board after this?
We're continuing to look to make sure that we have the resources that are needed to keep everyone safe here, not only in Washington, D.C., but when they're home in my home state of Wisconsin or across the country. And so we're constantly looking and reviewing our programs, making sure that we're being wise with taxpayer dollars, but to provide that security. And again, it's not just for elected leaders or for public figures. It's also to keep the public safe. The individual who would ultimately lose their life at the president's rally in Pennsylvania was a father who came to attend in his support of President Trump. And so a lot of the security protocols that are in place are not just for the benefit of an elected member or a public figure, but it's the public at large to make sure that these types of events and discourse and conversations are safe for everyone to attend.
Well, yeah, this is a great point that you make. We're spending time with Congressman Brian Stile of Wisconsin, who chairs the Administration Committee. Just learning from the Associated Press, Congressman, that Charlie Kirk's casket will be flown from Utah to Arizona aboard Air Force 2 today. Of course, as we just reported, Vice President J.D. Vance changed his plans to go to Utah to meet with the Kirk family. You know, one of the terrible side effects that we could be talking about here, Congressman, is another conversation you're familiar with. It leads fewer people to want to serve. Do you worry that fewer hands will be raised to run for Congress because of events like this?
Well, it's a challenge. It's a challenge to find individuals of high quality who are interested in stepping up to serve our country. That's true on local school boards. That's true in state houses across the country, and it's true in Capitol Hill as well. It's a challenge. And some of this, right, is the broader challenge that we're having right now as a society to learn how to have a discourse and dialogue with each other about the challenges that we face. I mean, I held a town hall in Wisconsin, and a group, not the whole group, but a group of activist protesters booed the Pledge of Allegiance, to give you a little flavor of how the event started. And so I think there's a moment where we need to be able to reflect and to say, we need to have much more productive dialogues about the policies we need to get this country back on track. And we see time and again really hostile rhetoric, in particular hostile rhetoric directed at President Trump, that I think is not only unproductive, but can also be dangerous.
I don't know if you were on the floor when things got hot yesterday, Congressman. I was just reading about this, emotions boiling over as Representative Lauren Boebert yelled, "Silent prayers get silent results." After a moment of silence, Democrats shouted back about the school shooting in her state. Does that represent the tone up there right now?
I think it represents that there's a lot of raw emotion around the events that we're seeing take place. Like I said, when I received the news, my heart sunk. I was also frustrated as I learned that Charlie Kirk had been shot and killed. I don't think the yelling back and forth is uniquely productive. But what I think we need to do is to sit down and say, how do we have a far more productive conversation? Because there are huge challenges our country faces. We were looking at a spending lapse at the end of the month. National defense is a massive priority with kinetic wars taking place across the globe. And so these are real serious policy challenges in that we need to engage in that productive dialogue to find solutions. And the incident that took place in Utah is, I think, an example of how some people are reacting rather than engaging in productive dialogue, which is what this country so desperately needs.
Well, I appreciate this conversation, and I wonder if you think this is a Congress that can be productive enough to generate a spending plan, either a continuing resolution or some other form to avoid a government shutdown at the end of this month, Congressman. Can we compartmentalize this enough right now to do something good?
Well, we're going to have to. I think it's imperative that we navigate this to make sure that we keep the government open. If we get into that policy side of that, I think there's a lot of false rhetoric going on right now on the left about the spending debate, in particular on the rescission packages that went through. That's no excuse to shut down the federal government. In fact, that received a majority vote in the House and the Senate was signed into law. We should be looking at ways to save money for the American people at a period of time when the debt and deficit is higher. But pulling us together to make sure that we avoid a shutdown at the end of the month is going to be absolutely essential.
Does the extension of Obamacare tax credits help to pave the way, or has that been shelved for now? This was being discussed as at least a point of negotiation with Democrats.
Well, I think there's a lot of things on the table right now, but at a period of time with massive spending, with our debt increasing, I think we should be looking at ways to reduce spending here in Washington. And so the Biden administration put this sunset in place. Why they did that, you can go ask the Democrats why they built the law as they did. But we have an opportunity and a need to make sure that we keep government funding open. At the end of the month, there's going to be a lot of conversations about what it will take in the United States Senate to get 7 Democrats to come on to this legislation. But it would be negative for the American people if we find ourselves in a shutdown because they refuse to keep the government open.
Yeah, it does feel like we've seen this movie before. We'll see how it ends. Congressman, thank you for your candor and for your dialogue today. It's important to us. Brian Stile, the Republican representing Wisconsin's 1st District. He chairs the admin committee here in Washington, which, as you just heard, is going to be having a deep conversation about security going forward. We've got more conversations ahead, including one with Congresswoman Haley Stevens, the Democrat from Michigan, and our panel next here on Bloomberg.
8:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all advancing, all at records. We are close to session highs right now on the S&P. 65.82 is where we stand, up 51. That's a gain of 0.8%. The Dow up 588, now up 1.3%. NASDAQ Composite Index up 143, up 0.7%. The Russell 2000 Index of small cap shares, the outperformer, up 1.5% right now. The 10-year at 4.01%, with a 2-year that's currently yielding 3.51%. Gold lower, little change, down under 0.2%. 36.34 the ounce, and West Texas Intermediate crude oil down 2%, 62.42 for a barrel of WTI. A relatively tame inflation reading combined with more signs of job cooling spurred that rally on Wall Street amid speculation that the Fed will be slashing rates for the first time this year when policymakers meet next week. Delta Airlines is more optimistic for its third quarter revenue after business and premium customers led a rebound in travel this summer. The stock, however, trading lower. Right now we do have Delta down by 2.1%. It says main cabin demand is lagging, and that's why the stock right now is lower. Kroger is raising its full-year sales forecast, illustrating that the grocer is attracting value-seeking consumers who are opting to eat at home. Kroger shares after earnings up by 1.4%. Recapping stocks lower, stocks higher right now with the S&P very close to a record 65.83, very close to an intraday record rate, should add up by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet, as ever, watching Wall Street for us here as we talk politics in Washington, and it is a more challenging conversation today, but we've lined up a number of voices of experience and nuance for you to better understand the context of what we're going through right now in a political world that has been shaken by the assassination of Charlie Kirk against the backdrop today of the 24th anniversary of the 9/11 attacks. Yeah, we're hearing about a lot of anger on Capitol Hill and inside the White House, which is going to happen at times like this, as we just discussed, though, with Brian Stile, the Republican from Wisconsin. Conversations are continuing here as they try to find a way forward on government funding, along with any number of issues. First lawmaker we spoke with after this news broke on the late edition of Balance of Power yesterday was Senator Mike Rounds, a senator from South Dakota, who did not display anger when he spoke with us. In fact, we were struck by his words that everyone should hear. Listen to Mike Rounds and his first reaction to the killing of Charlie Kirk on Bloomberg.
It is an opportunity for us to once again tell the rest of America and the rest of the world that we can have differing points of view and not be violent about it. And so anything that any of us can do to offer as an example the way that we should treat one another with respect, that's a positive thing. I think that's what Charlie Kirk would have wanted to have had happen. And most certainly that's something that I think we should continue to carry on, which is peacefully discuss, have your differing points of view, argue it, debate it. It's healthy for America, but our founding fathers wanted that to be done in such a fashion that we could still be one strong, unified nation, even if we have differing points of view. And there's nothing wrong with having differing points of view.
Well, I appreciate your point of view on that, Senator. We were looking at some polling from Ipsos from back in July that asked voters about political extremism and threats to our democracy. This poll with Reuters showed 27% of Americans ranked political extremism as the most important problem facing the U.S. How about you?
I can just tell you from personal experience here in Washington, we work across some of the most polarized areas in terms of ideas and ideologies. But if you talk to members of the Senate, Republican and Democrat alike, we get along with one another. We have visits with one another. We go to lunch together. We have a prayer breakfast together. We have Bible studies together. We are not enemies. We may have different points of view, but that doesn't get across very often. And so the example that we should be able to offer is one of unity in terms of making America better than what it is today. Our founding fathers said that they wanted to create a more perfect union. They didn't say our union was perfect to begin with. They wanted it more perfect. Well, that's what we should be focused on here. And sometimes in the middle of our strong emotions here, we forget to finish with that particular part of the message, which is regardless of our points of view, we're Americans first. And we treat each other with respect and with dignity. And here in the Capitol, in the offices that we have, I can tell you personally, and that behind closed doors, Republicans and Democrats alike get along. We respect one another. We consider each other as colleagues and friends. And we would hope that across America, whether it's a coffee clutch or whether it's a political meeting, a city council meeting, or a state legislative body, that we remember that we are all Americans and that we have a whole lot more in common than we'll ever disagree on.
I hope everyone hears what Senator Rounds had to say, because I'm pretty sure most Americans do not view Washington that way, frequently projected as a city of enemies. We assemble our political panel for their take on this. Jeannie Shanzano is back with us, Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Republican strategist Greta Joins is with us as well, policy director of Brownstein Hyatt. Great to have both of you with us, and thank you for being willing to talk about such a difficult material here. Greta, do you take heart in the message from Senator Mike Rounds?
Of course. I think every political persuasion here in Washington wants to have a debate that is based in facts, less on emotion, and hopefully, a comfortable disagreement on places where we can ultimately come together. I am encouraged by his statements. I worked on the Hill for 14 years. Some of my best friends were Democrats when I was up there, and the same with my boss. So I am hopeful and appreciate his thoughts and his comments on all of these topics.
That's the point, Greta. You know what goes on Capitol Hill. You probably have a pretty good sense of the relationship with the other end of Pennsylvania Avenue as well. Real people live here, and real people work on Capitol Hill. Whether you're a staffer or a lawmaker, this is just part of life. How do we transmit that to the rest of the country?
Well, I think Charlie is a great example of trying to bring that across the country. Having respectful debate on college campuses should be a cornerstone of our democracy. And that's why this is so tragic, and I think makes so many Republicans so angry and frustrated to go through an election cycle being called Nazis and fascists and all of these comments that have continued to percolate in political discourse in 2025. I think we were all hopeful post-election we would be able to take a breather and move past this, and clearly that hasn't happened yet.
Jeannie, you spent a good chunk of your time and have spent a good chunk of your career on college campuses. You're also, of course, political science professor at Iona University. And I wonder your thoughts about what this means for campuses. There's reporting now that a series of historically black colleges and universities are in lockdown today amid reports of threats to campus safety. We're talking about Virginia State University, Hampton University, Virginia Southern University, and A&M College, Baton Rouge, Alabama State University. What are we in for here? And I don't know if you've been interacting with students yet today. I know this just happened, but what are you hearing?
Yeah, it's a very fraught moment on university and college campuses across the country. To Greta's point, Charlie Kirk was doing what he always did very joyfully, which is engage in heated debate, particularly with people who did not agree with him, on college campuses where we encourage a free flow of communication. Of course, that communication has got to be respectful on both sides. And as we hear threats of violence and colleges and university campuses closing, it is so troubling, because one of the great things for all of us who either went to college, work on college campuses, or alums, is the beauty of a college campus is it is open, it is free, you can go in. They are beautiful, beautiful places, particularly this time of the year, to go and think and talk and debate. And to see that shut down is terribly troubling. And I think what's so troubling to young people about what happened yesterday is whether they liked and agreed with or vehemently disliked and disagreed with Charlie Kirk, they grew up with him on social media. And yesterday, they watched him killed on social media. You could not escape that gruesome video. It was everywhere. And we don't know in 2025 what the impact of that is. Is there a contagion of violence? Is this going to increase the number of copycats, which then brings up what you mentioned, which is university security teams. They aren't as big as, say, a president's team. They are trying to manage thousands and thousands of young people peacefully and safely so they can get educated. And this is what they're contending with. They don't have the resources, and that's why this is so very scary.
I'm glad you pointed out that video, Greta. What is the impact of this? Maybe Jeannie's right. It may be immeasurable. It may be abstract right now. But the fact that Americans of all ages, but of course, we're thinking about the young people in this country, were watching this video within moments of this happening before headlines broke that he had died. I'll be really honest with you. I wasn't sure it was real when I first saw it because it was so quick. Does that desensitize us? Does it inflame more violence? Does it repulse us? Or is it all of them?
I think it's all of them, really. I think that in particular on the Republican side, I don't believe it desensitizes Republicans. I think it really makes Republicans incredibly, incredibly angry to watch a young father and someone who effectively changed the world with his engagement this past election cycle and propelling Donald Trump to victory to be removed doing what he did best. And in my opinion, doing something that was fundamentally American, which is our strength is in debating ideas and not destroying those ultimately you hold, those that you disagree with. I think that this is a turning point in American politics, and particularly in Republican politics. I hope that the temperature dies down, but it is difficult to see past this right now. And I'm hopeful that J.D. Vance and President Trump and others will bring Republicans together in a moment of really reflection on ultimately what Charlie stood for.
I'm really happy that you're both here today. Greta, thank you for your time and your insights. Greta joins Brownstein Hyatt, and of course, Jeannie, you know too well as our Bloomberg Politics contributor and a member of this program every day, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Thank you for your grace and nuance in a very difficult story here, and it's one that continues to develop before our eyes. We'll keep tabs on these colleges that may be in lockdown at this point and what else may be happening here today in Washington. As we add a Democrat to the mix next, Haley Stevens, the Congresswoman from Michigan, will join us as part of our coverage from Washington, only here on Bloomberg TV.
Alrighty, on Wall Street, we do check markets all day long. Here at Bloomberg, we begin with a developing story, a major media merger possibly in the works. Right now, we have got a headline on the Bloomberg Professional Service. Paramount Skydance said to be preparing a bid for Warner Brothers Discovery. That news breaking right now, reported by the Wall Street Journal. Looking at the stock reaction, shares of both companies are surging right now on that report. Paramount Skydance up by 8.2%. Warner Brothers Discovery up now by 21%. Again, Wall Street Journal reporting Paramount Skydance preparing an Ellison-backed bid for Warner Brothers Discovery. Stay with Bloomberg as we follow this story, and we'll bring you the latest developments. But again, worth reporting that Warner Brothers Discovery up by 21%. U.S. stocks higher across the board right now. S&P up 52, close to session highs. A lot of economic data sealing a rate cut. We've got the S&P at 65.84, record there, up by 0.8%. The Dow right now up 598, up 1.3%. NASDAQ up 158, higher by 0.7%. Your 10-year at 4.01% with a 2-year 3.52%. Spot gold is declining 0.1%. West Texas Intermediate crude down 1.8%, 62.54 a barrel. And Bitcoin up 0.9%. Bitcoin right now 114,692 on Bitcoin. So again, repeating that headline, Paramount Skydance preparing a bid for Warner Brothers Discovery. That according to the Wall Street Journal. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, here he is, Joe Matthew.
Charlie Pellet with the breaker. Charlie, thank you. We'll be watching those stocks as we go deeper into the session. And Mr. Pellet will have more live from World Headquarters in New York coming up at the top of the hour, 2 p.m. Eastern Time, as we move into Bloomberg Business Week Daily. There is a photo out, as you may have seen or heard about today, on Balance of Power, and thank you for being with us here on the Thursday edition on Bloomberg TV and radio. There it is on your screen on TV or on YouTube, the FBI Salt Lake City posting the photo of a man wearing a hat and sunglasses, dark, long-sleeve shirt, jeans, and what appear to be sneakers, climbing a stairwell. Picture was taken from above looking down. We are asking for the public's help identifying this person of interest in connection with the fatal shooting of Charlie Kirk at Utah Valley University. Reads the Post. Still at large, although authorities say they have found the weapon. We heard in the most recent FBI update from Bo Mason with the Utah Department of Public Safety. Here's what Commissioner Mason had to say.
That individual appears to be of college age. We are confident in our abilities to track that individual. If we're unsuccessful in identifying them immediately, we will reach out for the public's help and the media's help in pushing those photos. That was a new development overnight, working through the night, studying those cameras. So that's something that's new and that we're working through right now.
Bloomberg News national security reporter Miles Miller joins us with the latest on this investigation. He's at World Headquarters in New York as well. Miles, what do you know?
Yeah, so right now there is an intense manhunt for a suspect in this incident. You saw him there on the screen. And what we know about this suspect as of right now is that he apparently used what's known as a Mauser bolt-action rifle to carry out this attack. We're told by law enforcement sources that he was perched up on that rooftop and that they have recovered a palm print. They're going to be using the bullets and the shell casings left behind, the cartridges, to try to see if they can get a full latent print, which they hope will connect them to this suspect. Now, in incidents like this, you have to hope that a person of interest, a suspect, is in any database or has had their fingerprints run. You saw the picture of this person. They're relatively young, so there's no guarantee that that'll happen. But they have already started to piece together the timeline about how this happened, when he got on the roof. They know that this is the right person, they say, because they are tracking when he jumped off the roof and the track that he took into the woods where that gun was found. We know the ATF did the initial look at that weapon, and then now it's going to go to an FBI lab, and they're going to continue to do that work to try to figure out what the profile is of the shooter and why he would do this, and what the reasoning was behind it. And we've reported this morning about some of the etchings on some of that stuff that was with the bullets and all of that. That'll be investigated as well to see what the meaning behind any of that is, and who the suspect is and why he carried out this attack.
Really interesting, the decision to put this photo out now, Miles. Before we start our conversation with Haley Stevens, does that tell you anything about the nature of this investigation and some of the obstacles they may be facing?
Yeah, this is a difficult operation for them. The FBI's Salt Lake City office, not one of their biggest, but one where Kash Patel has put in, a new person to run that office. And so they're going to need all the help they can. Utah is a huge state, and they're going to need all the help they can. Anybody, there's 3,000 people who were in that crowd. They hope that someone saw something, and that always leads to an arrest in these kind of cases.
Well, it's really great to have you on the story, Miles. Thank you so much. Miles Miller with us live from New York. We spoke earlier with Republican Congressman Brian Stile, who joined us live from Capitol Hill, and we want to reach to the other side of the aisle for the take of Haley Stevens, the Congresswoman representing Michigan's 11th district and a Senate candidate, is with us right now on Bloomberg TV and radio. Congresswoman, thank you so much. We've been specifically reaching out to members with nuance and sensitivity to this topic. You are not a firebrand, which is why we wanted to spend some time with you. There's been a very difficult conversation here politically happening. We don't even have this manhunt resolved, and we're already hearing the blame game get going here. What do you want Americans to know about the way Democrats and Republicans can work together in Washington, or are we beyond that conversation?
Well, what happened yesterday was tragic. It's unacceptable. My heart goes out to the family, the students who were there. Rising political violence is not acceptable, has never been acceptable, and cannot be accepted. And I want to see this temperature in our country get taken down in terms of the political rhetoric and certainly the violence that we're seeing. And I appreciate that. You had a colleague of mine on who is from the other side of the aisle, and someone who I engage in political discourse with, and who I know quite well, who I came into Congress with, and that's what our country's supposed to be about. It is not supposed to be about seeing violence taking place at this type of level. It's just, we just need to find ways to come together and to take the temperature down.
It's been a lot. We remember Minnesota. We remember the Pelosi's. Of course, we remember Donald Trump. Congresswoman, what does it feel like to be a member right now? The point has been made a couple of times, by the way. There's no progressive equivalent to Charlie Kirk. So a lot of folks are looking to Democratic lawmakers to see what the answer is on the other side of the aisle. Do you feel safe when you're out stumping? You're holding campaign events right now. You're stepping in front of crowds of people. You've got to do your business walking around Washington here, and a lot of people know who you are. Do you think about taking that congressional pin off your lapel sometimes?
Well, I'm very proud to serve the people of Michigan, and of course our governor was also threatened by political violence a handful of years ago as well. And I don't think putting our heads in the sand is going to be the answer to this. And we've got, and I'm going to continue to call for the rhetoric and violence to be taken very seriously. Certainly the violence. It's a concerning time. I have a lot of questions about who this person is. I had the same questions when the incident happened in Minnesota. He had a hit list. There was a lot of elected officials on that. And it's not so much about me personally. This is also just about our country. The targeted figures and figureheads is awful, but it's what it means for all of us. all of us who want to, meet constituents or voters, people who want to achieve, an element of the American dream, exercising our democracy, our freedom of speech rights. I've been campaigning all over Michigan, working to meet people where they're at, and that's a beautiful thing. And the minute that starts to get chipped away at, we can't let fear take over. We can't be driven by fear, which leads to anger. And we've got to make sure that everyone hears loud and clear that violence is unacceptable and not to be condoned. And again, our heart goes out to anyone who has been impacted by political violence, the people who were impacted yesterday, and certainly the remaining questions about what happens next.
Well, I've just, I really appreciate the sentiment of your comments, Congresswoman, but the fact of the matter is we do need this to be about you to a certain extent, and Congressman Style and all the rest of your colleagues up there, because if we don't keep you safe, there's no one there to represent the people. There's also fewer people who are going to raise their hand to run for Congress, and we start running into candidate quality problems. The spiral here could be very real. And with that in mind, I wonder, with the couple of weeks ahead, if Democrats and Republicans will be able to get their heads together on a spending plan to keep the government from shutting down. What are you thinking today?
One of the things that I tell people back home who feel confused or let down or questioning what direction our country is going in, I actually tell them to tune in to the floor of the Congress, go to clerk.house.gov and watch the debates, watch the committee hearings, and you'll see the incredible exercise discourse of democracy taking place. I've taken thousands of votes since I've been become a lawmaker, and I know that when I get bills done, they are bipartisan. They have to be, and in terms of how we're going to negotiate this upcoming spending package, we've got to do it in the way that is the rules and the beautiful way in which our democracy operates through discourse, discussion, and also a commitment that everyone, I believe, who puts up their hand to run for office or who gets elected, should have as a North Star, and hopefully very much likely does, which is what's best for this country. And we have a minority party right now that has a viewpoint. I certainly have disagreed with some of the direction that this current administration's policies have taken us down, particularly with cuts to health care. I want to have that discussion. That's why I show up to work every day. That's why I shoot out of bed in the morning, and I remain eager and hungry for that dialogue. And I've seen it now in my 4 terms in Congress, and knowing that there's been some tough moments that have gotten some national attention, there's also been some good moments where we have been able to pass things like the CHIPS and Science Act, where we have been able to put differences aside to fund the government responsibly or protect our security. And look, that's what I'm going to expect to see happen over these next handful of weeks. And I of course, am always going to be standing up for the people of Michigan. I'm eager to tell Michigan's story in this moment.
You have been known to tell Michigan's story right here on Bloomberg. Congresswoman, it's great to have you back. Thank you for your insights today on what I know is a very delicate matter. And I thank you for your service, along with Congressman Style, all the Democrats and Republicans here who have raised their hands to come to Washington to represent the people. We have to remember actually what this is all about. Even though things can frequently devolve into shouting and resentment, we do need smart men and women to come here to Washington to do this work. And we try to give them a safe place to talk about it here on Bloomberg. Haley Stevens, Democrat from Michigan's 11th, thank you and to all the voices, including our panel, who helped us understand more about what was happening today. We're going to learn more over the course of the afternoon. If we get another briefing, if we hear from the president as he makes his way to Yankee Stadium, we'll have more for you on the late edition of Balance of Power. That starts at 5 p.m. Eastern every weekday here on Bloomberg. I'm Joe Matthew. Big thanks to all of our guests, and I'll meet you a bit later here on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Tim and I back here on the East Coast. This is Bloomberg Business Week Daily for this 9/11, the 24th anniversary of 9/11. So there is a lot on our mind on this Thursday. Having said that, we're thinking about that. We're also thinking about what's going on in the markets because, Tim, we've got stocks and bonds both higher today.
Yeah, relatively tame reading on inflation, signs of a cooling job market, investors speculating the Fed are going to cut interest rates for the first time this year. That's the expectation. We'll hear from Jay Powell and co. next Wednesday.
We're going to talk a lot about the economy over the next 60 minutes. We do also want to point out something that's definitely sparked our interest at this hour. Paramount Skydance, the Hollywood studio taken over in August by independent filmmaker David Ellison, is preparing a bid for rival Warner Brothers Discovery. This is according to a person with knowledge of the matter. So we're going to talk a little bit about what's going on when it comes to the world of media, and a story coming from our Lucas Shaw out there on the West Coast. We should point out the Wall Street Journal first putting out a story on that. And then we are going to talk, Tim, a lot about the economy.
Yeah, we'll hear from Citi CEO Jane Fraser weigh in with a Bloomberg exclusive. Also, we're going to hear from Matthew Lazzetti, chief U.S. economist and head of U.S. economic research over at Deutsche Bank. He's going to be joining us in just a few minutes.
And we're talking national security, geopolitics, U.S. economic policy, so much with Democratic Congressman Gabe Amo. So a lot to get to. First up, though, let's get to the trading day on this Thursday here in the program.
Thank you very much, Carol. Tim, welcome back. Indeed, we are trading at records right now. Got to begin with this developing story. Paramount Skydance, that, of course, the Hollywood studio being taken over by independent filmmaker David Ellison, preparing a bid for rival Warner Brothers Discovery. This, according to a person who is familiar with the matter. Right now, we do have shares of both companies are moving higher. Paramount Skydance up 7.3%. Warner Brothers Discovery, though, just about the high of the session right now, up 31.7%. All of this a developing story. Now, the Wall Street Journal reported earlier that the mostly cash offer will be for the entire company. Paramount declined to comment. Our Lucas Shaw writes that Warner did not immediately respond to a request for comment. Again, developing story, major transaction in the works, said to be in the works. And again, Paramount Skydance up now by 7.7%. Warner Brothers Discovery, it is surging now by 32%. Stay with Bloomberg for the latest on this developing story. All of this with U.S. stocks trading at a record, with the S&P up another 54, 65.86. Where we stand right now, that is a gain of 0.8%. We do have the Dow Industrials up 1.4%. NASDAQ Composite Index up by 0.7%. The Russell 2000 Index of small cap shares, it is surging now by 1.7%. After this morning's economic data, consumer prices, jobless claims, we've got the 10-year 4.01%, with the 2-year 3.53%. Gold down 0.1%, 36.35 the ounce, and West Texas Intermediate crude down 2%, 62.43 a barrel. So again, we got merger speculation here. Paramount Skydance up 7.2%. Warner Brothers Discovery up now by 34%. Stay with Bloomberg for the latest on this developing story. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to get an update on the murdering of conservative activist Charlie Kirk. Federal investigators have recovered what they believe is the rifle used to kill him during that campus event in Utah. This is according to FBI officials, Tim, as the manhunt for the shooter entered its second day.
The FBI treating the case as an attack on free speech, with the special agent in charge saying, quote, any attack on the First Amendment is an attack on the very foundation of our democracy. Here with the latest is a Bloomberg News senior reporter who covers Homeland Security and the FBI, Miles Miller. He joins us here in the studio. Miles, as Carol mentioned, investigators have recovered what they believe is the rifle used to kill Charlie Kirk. They've also released several images of somebody they say is connected to this. What is the latest?
That's right. A young gentleman with a American flag T-shirt seen leaving in the minutes after Charlie Kirk was shot. So the type of gun, very important here, high-powered Mauser bolt-action rifle, and you see, just to be 200 yards away and to fire with that kind of accuracy is another one of those clues in this that the investigator is going to look in to figure out who this person is. Was he trained? What was the motive behind this? This is all part of what they're trying to figure out this afternoon.
There's still, I guess, so much to be known. We've talked about this certainly in our planning call, to be very careful about how we characterize this because there are so many unknowns. Is it safe to assume he was acting on his own, or do we still not know that even yet?
Yeah, that's unclear too. You have an incident here where you have a large public event, 3,000 3,000 people on a college campus, where you have 6 police officers protecting this event of so many people, and then you've got a suspect who is relatively unknown in any way. No one saw him get on top of the roof, and no one saw him leave. But what they're working on right now are footwear impressions, palm prints, seeing if they can get a latent print from a cartridge. But that has to be linked to, you know, fingerprints in a system, right? Like, I worked for the city, so my fingerprints are in the system. That doesn't happen for everybody, so it just makes it that much more difficult to figure out who this person is.
The technology available today, the fact that there were people who were taking photos and videos of the event separate from this, obviously, and separate from what we've seen circulate online in the last 22 hours or so. What technology are law enforcement officials able to use from civilians, from people who were there, and also closed-circuit television? This is a college campus. These places are very heavily monitored.
Yeah, well, you know, one thing that's going to be crucial in this is facial recognition, right? You know, they'll be able to put that image into, say, a Clearview AI and figure out, does this match any of the people on social media, any people seen in any public setting? Another thing that they'll do is they'll track the surveillance video from point A to point B. So they'll see him getting up onto that roof. They track him through the woods. What about ring cameras? Did anybody see anything on the ring? You know, did he drive there? I mean, in Utah is very spaced out, so he'll have to have driven there likely, or was he dropped off? You know, did he use a credit card? You know, at a gas station. These are all the things that investigators have to do in a case when it's not as clear cut. And this is about not as clear cut as it gets. One that's definitely going to be puzzling for an FBI office that's not as big as, say, the Denver, Colorado office, or here in New York, one of the smaller offices that just had its special agent in charge swapped out by the current FBI director. And so there's a lot of upheaval happening in Salt Lake City, and you've got this massive case. Again, 6 officers protecting 3,000 people.
What's been the impact on college campuses around the nation? I heard Joe Matthew earlier talking about some security concerns at some universities.
Yeah, I think, you know, HBCUs, so historically black colleges and universities in this country, have gotten some threats, and, you know, those have been investigated, but so far nothing there. There was word of a scare at a university here in New York City, but that's been unconfirmed. So, you know, it remains to be seen how you keep, you know, you have to figure out how you're going to keep a campus full of students safe. But again, this is about much more than that. This is about political violence rearing its head again. We saw it in Minnesota months ago. We saw it in Pennsylvania, and now again happening in Utah, in a place where 3,000 people came to see Charlie Kirk, and if they didn't agree with him, they at least wanted to hear him debate.
Yeah, not to mention the attack on President Trump's life last year in Butler, Pennsylvania. Miles, before we let you go, thinking about this from the perspective not just of security, but also from Kash Patel and the FBI and what we've heard from the FBI over the last day or so. Yesterday, we did hear something about subjects being questioned in custody. Nothing came of that. That's done.
Right. One gentleman who was taken into custody, you know, his family said he was a big supporter of Charlie Kirk, would never be involved in that. Another person was a local rabble-rouser who wasn't involved either. But, you know, this does point at, I think, a point that you're getting at, which was the FBI director being eager to tweet, and then those tweets both, you know, not bearing out being the person responsible. It's something that we haven't seen in the past, but this is a more vocal FBI director. All of President Trump's agency heads are very vocal on social media. That rush definitely hinders the investigation, because then investigators are like, whoa, we have this one, oh, it's not that person, now we've got to move back on. And then you've got social media identifying people incorrectly and then having their families doxxed and all of that. So that plays a big role in this as well.
Which is a reminder, if you think about all other moments of either terrorism or domestic uncertainty that involves shootings, that, you know, investigators and officials have often said, let's wait until we have all the information, be very careful about putting any information out there until it is really confirmed. Miles Miller, thank you so much. Miles is, of course, senior reporter covering Homeland Security and the FBI here at Bloomberg News, joining us in studio. All right, we are keeping a watch on that. And then there's several stories that are going on today that are certainly impacting the markets. At this moment, we are seeing news of Paramount Skydance getting ready to make a bid for rival Warner Brothers Discovery, according to a person with knowledge of the matter. This story initially reported out by the Wall Street Journal, now matched by our own Lucas Shaw. We see shares of Paramount Skydance up about 9% in today's trade, and Warner Brothers Discovery as the target. No surprise, you're looking at this one, Tim, up more than 30%.
Caroline Hyde is the co-host of Bloomberg Technology on Bloomberg TV. She joins us here in the Bloomberg Business Week studio. Caroline, initially, we did see shares of Paramount Skydance lower on this, and then they ended up moving higher. Not typical that we'd see both companies higher with news like this, but I guess, hey, people aren't concerned about the cash source of David Ellison.
So right, because it looks as though the cash source would be family Ellison.
Okay.
And who was at one point the most wealthy person in the world yesterday and then settled just $1 billion below Elon Musk, but Larry Ellison. And that was on the enormous move we saw in Oracle. Now you see a similar plus 30% move on Warner Brother Discovery, which would be the target in this particular area. It's a record move for the stock. But I think so many people feel that fundamentally this is what we need to see in the industry, consolidation. You're seeing David Zaslav over at Warner Brothers Discovery unwinding the deal he did several years ago, because ultimately you've got cable on one side and then you have studios and streaming on the other. You want to split those apart. And the likelihood is Paramount would be interested in the studios and that area.
Well, to that point, we should note Netflix shares hitting a session low, down more than 4% after this report came out. So this is all about...
It all starts to get interesting.
Yeah, I mean, that's what it's all about, though. It's all about Netflix. It's all about streaming.
And it's all about M&A. And I think you'll speak to so many analysts on the street who've just been waiting for this sort of thing to happen. But you did need certain areas to come into force. You needed, of course, Comcast to be starting to split itself in two. You needed Warner Brothers Discovery to be talking about splitting itself in two. The interesting deal is, why is Paramount trying to buy both bits? Most people feel that the value for Paramount as a key studio maker, as a key streaming focus, would be, of course, the areas of growth, like Harry Potter and the DC Comics and the studio side of Warner Brothers Discovery. Why do they want CNN? Why do they want some of the more struggling cable parts of the business? Or maybe they feel that they could get more than some of their parts if they then sold those off in more interesting M&A.
Right, like just buy it all, right, and then figure out like the parts that they don't want. Any chance somebody else comes in? Could there be another interested party? I mean, as we've heard, like the expectations around consolidation in this industry.
Exactly. And look, you talk to some of the new leadership that have been thinking about, when you see Versant that's been splitting off, for example, from the other key areas of Comcast, they've been saying, look, we're not going to be like a dying ember of cable news here and cable sports. We're actually going to be acquisitive. But many feel that they're actually going to be acquisitive more in the area of startups, more in the area of the future of sports growth, the future of news, but perhaps not other cable networks, but they haven't taken their name off the table when it comes to, remember, there's A&E out there. There's so many of these other companies that could be really interesting targets. And I think Bloomberg Intelligence are basically already saying, look, from a Warner Brothers Discovery perspective, you're looking at maybe $17 would be the right sort of price for the whole business as a whole, and you're seeing it move up to that as we speak.
Yeah.
You know, at the beginning of like our careers, this would be a regulatory issue.
Yeah.
The government would get involved and say, we don't want this much media consolidation. Is that not even part of a concern for analysts right now, because the ecosystem has been so beat up?
And the competition just isn't from cable network to cable network, but it's from it's eyeballs.
Yeah.
The competitor to TV now is YouTube. The competitor to the streaming platforms is TikTok. Everyone is fighting for your and my eyeballs. And what is the future growth story? Is it advertising? Well, advertisers are all going to new different platforms. Is there different ways in which you can charge subscription-based driving for this value of the business? I think this is an entire industry that has been upended, and I think most feel to even allow them to sustain themselves going forward, you've got to allow M&A. Otherwise, they just start to die out.
You cover this world. You know, it just feels like media, technology, everything is just kind of merging. I don't know, what are you watching out for? Like, what might be the next kind of shoe to drop here?
In terms
of this story.
Well, I think of this story, it is going to be interesting as to whether we see these purchases happen in cash only, whether you start to see interesting ways in which are financing certain deals. I think a lot of the storytelling for these new businesses, particularly in the cable areas that we're going to be splitting off, is they're saying we're going to be cash rich, actually. We're going to have the balance sheet to be able to put to work. For me, this is just, look, we are at record highs in the stock market. You are seeing people going all in on the artificial intelligence story, but there is still so much optimism in deal making, and I think it's pretty phenomenal that you're seeing these sorts of cash bids come. I don't know how many more billionaires are out there who can start buying all these bids, but Larry Ellison is clearly something different.
Or how many could say, "Hey, Dad, I need a little help here."
Yeah.
I'm just kidding.
So finally, on the streaming side of this for consumers, should we think about this from the context of one option perhaps in the future for Paramount Plus subscribers and HBO Max or whatever it's called now, subscribers? This becomes one thing. It's supercharged, and you can get everything from Warner Brothers Discovery and Paramount Skydance.
I think you're really smart to put it that way, because look how we're seeing Disney trying to interact with its own bundling and the way it's bringing Hulu on a little bit more.
ESPN, Hulu, Disney, $30 a month. I just bought it.
And suddenly it makes more sense. Like, what old is new again? Before we wanted everything to split off, now we want it all once again back in our bundle. And I think that ultimately has to be the way in which they can drive cross-pollination. And you will see people want to be able to just go to a one-stop shop. Look, you're seeing even deals done across the aisle with Amazon being able to offer other rivals. I mean, we will just generally want one go-to button that we can click, and suddenly, voila, we can get all of them.
I think you could do that with a cable subscription. I think you can do that.
Right, exactly.
It's called revolution, not evolution, guys.
Exactly. Incredible story. Bloomberg News and Bloomberg Technology co-host Caroline Hyde. Catch her and Ed Ludlow every day at 11 a.m. Wall Street time. Hey, you know, she talked about, Caroline, about more consolidation, certainly, when it comes to the media world. We heard Jane Fraser in an exclusive interview. Of course, she's the CEO of Citigroup, talking about clients becoming more active on M&A. She did a wide-ranging conversation with our team in Dubai. She also talked a little bit about the economy, the business environment, and the investment backdrop.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing. And they work together as a package. I think the most important piece for a corporate, clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about. And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, you know, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of, you know, what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labor market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
All right, that, of course, was Citigroup CEO Jane Fraser, and exclusive with our team, Bloomberg TV team over in Dubai. So she and her team at Citi are keeping an eye on the labor market. Keep in mind, we are too, and we also got an inflation print this morning that we also were awaiting eagerly. That read... Actually, we got the read on inflation. Forgive me, lost my place. But we also got a read on the U.S. jobs market. Applications for U.S. unemployment benefits jumping last week to the highest level in almost 4 years. So there's a lot coming at investors. What I wanted to say is that the U.S. inflation print that we got, that we were eagerly awaiting, as expected in August, they rose, but it was in line with what the street was expecting. So curious to see what our next guest has to say. Matthew Luzetti is Chief U.S. Economist and Head of U.S. Economic Research at Deutsche Bank, joining us here in studio. Forgive me, there's a lot coming at us.
There's a lot going on.
Do you agree with Jane Fraser that you're not worried about a recession? She doesn't seem to be.
Yeah, I would agree with that. There's a few kind of interesting comments, and as she noted, a robust consumer. You know, in an environment where some of us are worried about the labor market, the robust consumer, strong growth. The Atlanta Fed is actually tracking 3% for GDP growth in Q3. There's a lot of mixed signals on that front. I would watch items like the labor market and the jobless claims data that we see. The loan churn environment that she was talking about in the labor market is absolutely there. And the thing you get worried about is if layoffs begin to pick up, then undermines the consumer, and then we can have recessionary dynamics. I would caution about interpreting this morning's data point as that. There's a weird spike in the Texas jobless claims, which seems to be associated with the floods that you had earlier in July. So I don't think that was actually a real print. I would expect that comes back down.
I have to be honest, I'm really confused about the inflation side of this economic story right now and why we're not seeing tariff price increases pass through on the data. And I can share an anecdote yesterday. Looking at an e-bike battery, for example, went to a shop, an $800 battery that a few months ago was $800 is now $1,100 as a result of tariffs. We're not seeing that 20% increase in the data yet. Why not?
So I think we are actually seeing it. If you were to decompose the consumer price basket between those items that have high import content, those that have low import content, we are seeing a big acceleration in inflation in the high import content items. In past months, we saw household furnishings rise, recreational goods rise. We've now begun to see that in motor vehicle parts, motor vehicle repair. Yeah. Apparel inflation actually rose pretty robustly this month. So it's been a mixed picture. Used cars and trucks, new vehicles have not shown it. In prior months, you had seen some offset from airfares and from services items. But we are seeing it. What has not happened, I think, is the scary large inflation prints that we were all worried about. But inflation's at 3%. And it's been well above the Fed's target for the past 4.5 years. And most of the recent increase is being driven by tariffs.
So you, in your notes that you shared with us, say that there's still scope for the first round of tariffs to have a further impact on inflation in the near term. What kind of impact, Matt?
So I think that comes from our view on PPI data. So earlier this week, yesterday, we got the PPI. And again, that was actually weaker than anticipated when you looked at the headlines and the core. But when you look at the underlying details, there's a lot of pipeline inflation that's coming through with that. And so I would expect that you actually continue to see an acceleration in core goods inflation through the end of this year. Now, for the Fed, and as we look forward to monetary policy next week, a lot of Fed officials have taken the view, look, we're going to look through a lot of this tariff-driven inflation. And as long as it is isolated to items like core goods that we think that it's tariffs, we can still cut rates. And of course, for the Fed, they're a dual mandate central bank. So it's not just the inflation picture. What's happening in the labor market matters a lot there. And so the fact that we got a weak jobs report last Friday, big downward revisions earlier this week, leans them in a dovish direction in the near term.
What I don't understand is, though, if we are in a higher tariff rate environment that's going to exist going forward, why is it we can look forward to it? Because it does mean higher prices, right? And either companies have to eat it or we have to eat it.
So it does, but the theory is that it's
and doesn't that mean inflation ticks higher?
In the near term, yes. But if it's a one-time price increase, it should not be a sustained inflation shock.
Oh, I see what you're saying.
You know, there's a word for that.
Numerically.
There's a word for that.
The word is transitory.
Okay,
I'm not going to. I'm not
just making sure we're
after going through having a forecast in 2020 and 2021. Okay. I'm trying to avoid the transitory language, but yes.
Yeah.
The idea is that it is a one-time price shock. Now it's going to take a while to play out, and I think for the PPI data we see, this is going to last into 2026. And so even if it is one time or quote-unquote transitory, it takes a while to play out.
Hey, on the labor market, going back to fundamental shifts that we've seen in the last few months during this administration, and Carol's mention of that weak jobs report, do we need to think about labor completely differently with immigration shut down in this country?
Yes, and absolutely how we think about those monthly jobs prints has changed dramatically over the past 2 years. I think if you go back 2 years ago when we were having the surge in immigration, 200,000 plus was the norm for payroll gains. Now, some of those have been revised down. But in this current environment, given demographics, given immigration flows, 50,000 is probably a perfectly fine number to keep the unemployment rate steady. And so I think we should revamp how we think about things. But the uncertainty around that suggests that we should focus on other things. The unemployment rate matters more than payroll gains matter. Things like the quits rate, job openings unemployed, these measures of labor market slack are the most important indicators for our assessment of the labor market. And although they haven't weakened a lot, they've started to show some early signs of modest weakening.
Just real quickly, they're going to kill me. 20 seconds, what should the Fed do? Should they be cutting rates?
I think they will cut rates by 25 basis points next week.
Do you think it's right?
I think they should, given the change in the risk assessment. Where I disagree with the market pricing is more next year. The market has the Fed continuing to cut rates below 3% next year. We don't see an economy that necessitates that. Now, if you get a different reaction function because there's a turnover in Fed personnel, we might have to revisit that view.
Great stuff. Matt, thank you so much. Really appreciate it. Matthew Luzetti. He is Chief U.S. Economist and Head of U.S. Economic Research at Deutsche Bank, joining us here in studio.
Hey, let's get an update on everything happening in the markets and the business news world. Standing by in our studio, here he is, Charlie.
Hi, thank you very much indeed. Right now, we are looking at records for stocks, but do want to bring you up to date on a developing story. Source telling Bloomberg, Paramount Skydance, the Hollywood studio taken over in August by David Ellison, is said to be preparing a bid for rival Warner Brothers Discovery. Right now, we have got Warner Brothers Discovery surging by 26%. Shares of Paramount Skydance, they're up by 7%. This on a day as the S&P 500 index pushes higher after the morning's economic data. S&P at 6583. That is a record up 0.8%. The Dow right now up 1.3%. NASDAQ up 0.7%. The 10-year 4.01%. And the 2-year 3.53%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we are, as you know, noting the 24th anniversary of 9/11 today. It's a day when we continue to see geopolitical threats and tensions and unease here at home following the shooting and killing of conservative activist Charlie Kirk during that campus event in Utah. And on a global scale, we see tensions between Poland and Russia. And so NATO certainly watching, and we would assume the U.S. is as well. For a perspective, we want to head to the U.S. House of Representatives. Congressman Gabe Amo, Democrat for Rhode Island's 1st Congressional District. He joins us from the Cannon Rotunda in the nation's capital. Congressman Amo, thank you so much for joining us. It is this,
thanks for having me.
This 24th anniversary of 9/11. It's a reminder that terrorism on a grand scale can and did happen here in the U.S. We've seen other forms of political violence, numerous shootings of political figures and officials, and of course, we're talking about Charlie Kirk today. Your reaction to the shooting and killing of him?
Well, first and foremost, remember all those lost on 9/11 and the brave first responders and civilians who stepped in. And of course, we have another somber note today as we reflect on the killing of Charlie Kirk. And I start from a place of great sympathy, sympathy for his family, his spouse and children, and I turn to political violence that we have seen in this country in a way that we should not be experiencing. And it is not acceptable. We should not disagree and be disagreeable to the extent of taking people's lives away. You can have political divisions, you can have divides, but violent actions, murder, is never, never acceptable.
And yet, it happens, and the attacks have happened quite a bit in the last few years. We heard some of them from Carol, the Minnesota legislators. Steve Scalise, Nancy Pelosi's husband, attacked, of course, the attack on President Trump's life twice last year, including that assassination attempt in Butler, Pennsylvania. What is the right way to turn down the temperature in the United States right now?
I think the right way to turn down the temperature is to treat one another as neighbors. Treat one another as people who belong in the same community. America is great because we have origins that span the globe, but we come here because we can achieve great things, and they always happen when we work together. And so I say that to every person with a platform, a title, a place where you can influence others, to today recommit to moving forward with rhetoric that isn't going to inspire action like violence in our communities. We, yes, have things that we don't agree on, paths ideologically, paths based on our belief that might be different than those of other people in our community. I, as a Democrat, do not need to be mad, to be angry at a Republican. We can disagree on the substance, but at the end of the day, come back and realize we're in the same mission for the same country and advancing leadership in the world. And that's what I'm going to commit to. And I encourage others to look inwardly and see how they can do that today.
But Congressman Amo, with all due respect, that political discourse, that productive conversations, and debates when you don't agree with someone's thoughts on something, it doesn't seem to happen anymore.
Well, we have to do better. I'm not going to, suggest that we have found the way to resolve our conflicts in the best way. But I'll tell you what isn't and will never be acceptable, and that is violence. And so we have an extra burden today to keep trying, to keep working towards meeting the ideals that I know that we share.
So let me ask you about geopolitics, because you are vice-ranking member of the House Committee on Foreign Affairs. We did have a big story today about Poland seeking a consultation with NATO specifically and NATO powers after shooting down drones that crossed into its territory during Russia's latest massive airstrike on Ukraine. They called the incursion an, quote, act of aggression. What are you hearing from U.S. officials and the White House on this?
Well, look, I go back to the president's summit with Vladimir Putin, his deadlines that weren't met. Vladimir Putin is testing limits. He is testing our resolve and our commitment to NATO and to our European allies. And the way we must respond is by recommitting to Ukraine's fight against Vladimir Putin's aggression that has only become harsher, has been more aggressive against civilians, and is seeking to undermine our strength and our alliances in Europe. And so I need to hear from the White House, and we need to see a commitment to Ukraine in an even stronger way.
What does that commitment look like?
Look, that commitment goes to certainly supporting them militarily and continuing to provide the support they need on that end. But beyond that, when you have rhetoric that is uncertain about our commitments to NATO, that helps to fuel Vladimir Putin's test. And he certainly wants us to have uncertainty in our relationship with Ukraine, our relationship with Europe, and continuing to see an inconsistency from this administration provides some of that continued motivation for Putin to try actions like he did in Poland.
All right, so there are definitely geopolitical concerns with everything that's going on overseas. The other thing we think about a lot is security and independence when it comes to energy. You're a member of the House Committee on Science, Space, and Technology, ranking member of the Subcommittee on Environment. Wind power is something that has been singled out several times critically by President Trump. Talk to us about how important offshore wind is to the state of Rhode Island.
It's very important. Offshore wind is incredibly important to Rhode Island. We have a project that received a stop work order, Revolution Wind, that was set to power 350,000 households between Rhode Island and Connecticut. And unfortunately, the stop work order not only imperils our solution to the challenges of climate change, our work to lower energy costs, but it also puts people out of work. Right, you know, we talk about the all of the above strategy. The all of the above strategy has to include wind, and this project was 80% complete. 45 out of 65 turbines in the water, and you're sending people home. That's the president's actions, not creating jobs, taking them away. And so we're continuing to work very aggressively across the aisle with Republican colleagues as well to speak to the wisdom of continuing this project.
Well, let me just ask you something, Congressman. Governors in the U.S. Northeast are considering dropping resistance to natural gas pipelines and other fossil fuel projects in the hopes they can convince the president to allow those offshore wind farms to move forward. Do you agree with that possible trade-off, if that's what needs to be done to save wind farms in your home state?
Well, unfortunately, we've seen this as a seriously, troubling turn. However, when the president has been at the negotiation table, this is something he has impressed upon. And I'm committed to wind, but again, if there is going to be an all of the above strategy, it has to include wind, not exclude it. And so I know that the governors are making very tough decisions. I think in the long term, renewables are going to be the path that achieve our cost objectives and our climate objectives. But this has certainly been part of what the president has put forward when he has engaged these governors alongside members of his administration.
Okay, so let's talk about engagement of those governors. You did say working alongside Republicans here, working across the aisle to come to a resolution here. Has the president actually agreed to discuss offshore wind with the governors of those Northeast states, Rhode Island, Connecticut, and Massachusetts?
I know that there are conversations ongoing with members of the administration. I don't know of a specific commitment from the president, but the facts are clear. We need wind, and I'm hopeful that the president and his cabinet members see the wisdom in continuing a project like Revolution Wind. It is important to my state of Rhode Island, but it's also a linchpin to growing the industry across the eastern seaboard, including in places like Virginia, including in Connecticut and Massachusetts. So I want to continue to see progress here, and I know those governors are working vigorously to get to the table.
All right, so appreciate your time on this Thursday. Congressman Gabe Amo, Democrat for Rhode Island, joining us there from the nation's capital. All right, folks, we are headed for a break. We've got stocks higher across the board, pretty much hovering near their best levels of the session, pretty broad-based rally. When we come back, we're going to talk wearables and the impact on women's health and more. That's coming up on Bloomberg Business Weekend.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. CPI Thursday, a relatively tame inflation reading and signs of a cooling jobs market spurred a rally on Wall Street. The Dow, the S&P, NASDAQ all pushing higher. Could see record closes today. We've got the S&P right now up 52. That is a gain of 0.8%. The Dow up 1.3%. NASDAQ up 0.7%. Russell 2000 index of small cap shares surging by 1.4%. The 10-year 4.01%, with the 2-year 3.53%. Gold down 0.2%, 36.32 the ounce. West Texas Intermediate crude oil down 2.2%, 62.28 a barrel. And Bitcoin right now up 0.6%, 114,273 on Bitcoin. We're keeping an eye on Paramount Skydance, said to be preparing a bid for rival Warner Brothers Discovery with a mostly cash offer for the entire company. Paramount Skydance up now by 10.6%. Warner Brothers Discovery up 27%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, well, this week, Apple introduced its first new AirPods Pro model in 3 years, adding new health tracking features. The new device will feature a heart rate monitor, allowing the earbuds to work with an iPhone to track a wearer's pulse and measure calories burned during exercise. And Tim, our next guest, knows a lot about the relationship between technology and wearables specifically and how it all plays into the health world.
Let's get to the Business Week Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world. We've got with us Rosalind Picard, Doctor of Science, Grover M. Herman Professor of Health Sciences and Technology at the MIT Media Lab, also Director of Effective Computing Research. She joins us from Cambridge, Massachusetts. Effective computing, what is it?
Hi, it's such a pleasure to be here with you. Effective computing with an A is defined as computing that relates to, arises from, or deliberately influences emotion.
Wait, okay, so walk us through that. So it's in use today, and how is it, what is it enabling us to do?
Lots of things. It's an area started here at the MIT Media Lab decades ago. And initially it was about giving computers the skills of emotional intelligence. Then we started learning that a lot of people could use better understanding about emotion also. Working with many people who had difficulty understanding others' emotions as well as their own, we started building wearable technologies that could monitor physiological changes in our body even when we were leaving the lab, not just here hooked up to racks of equipment.
Then those physiological changes were documented, obviously for research, but in terms of helping others understand what a person is feeling or experiencing, how does that work?
Yeah, so obviously emotions are very personal and very private, so we don't do any of that sharing of it without people's fully informed prior consent. However, there are a lot of times when people are confused about their own feelings. For example, a person's heart may be racing and they may think that they have a cardiac condition, but in fact, it may be their fear of a cardiac condition that is causing the heart to race. So the wearables let you collect data in the real world. In fact, we built some of the first wearables here in the Media Lab, at least the first ones I know of, that could monitor the cardiac information and the autonomic nervous system information, like your fight or flight response.
So walk us through, because this is, as you said, wearable computers at MIT. You've been working on this for over 2 decades. Walk us through a little bit of kind of where you guys, or how you were thinking about it a couple of decades ago versus kind of where we are today and the progress you've made and how it's evolved in terms of what wearables can do when it comes to really assessing our health.
In the beginning, we were interested in emotions that could help make people's experiences better, say in a learning experience. Is the learner frustrated or bored? Or usability? Is this software driving users crazy? Or is it a great experience? And automobile driving too. Is this situation on the streets stressing out people? Could we change the situation and have lower driver stress? So we started by building wired systems that could leave the lab. And then later we built versions with small wireless sensors that could go on jewelry and in wrists. We built the first wrist watch that could monitor simultaneously signals like electrodermal activity and PPG, the photoplethysmography that's used to extract heart rate today. And also, you mentioned the Apple thing. We built some of the first earbuds that actually worked with an iPhone that measured heart rate with consumer quality data and published that, I believe it was back in 2009.
Well, you know, I love what you are talking about, and I think about as a woman, as a mother of a daughter, that when it comes to women's health specifically, I feel like there is a lot that's not paid attention to. And obviously there's been studies and research that really bear this out. So I'm curious about how technology or wearables can improve the health and health outcome and knowledge and assessment when it comes to women specifically.
Thanks for asking about that. Women have definitely been left out of a lot of health studies. I learned that it's less than 10 years ago that the National Institute of Health started even requiring scientists to include female mice and rats in their studies. Before, they were sticking with just the males to avoid the complexity of the female system. The opportunities are huge for health with wearables, and especially for women's health. There are so many conditions that are different for women than for men, and they're not only vastly understudied, but the kind of data is very undersampled. It's like asking somebody what they feel or what they experience instead of actually counting the way that the pain each month is affecting their life or the way that the disruptions at night are affecting their sleep. And now we can do those kinds of measurements with wearables.
So what is the right technology, in your view, that people, and specifically women, need to adopt in order to have this better understanding?
Well, I'm not going to be promoting a particular product here today. At the Media Lab, our job is to make possible those future things. We're building the things that are pre-product, that are in some cases decades ahead of what will be out there. Sometimes we're also using commercial systems to gather data. So one example of that is we use a smartwatch that collects autonomic data and movement data, and we're looking at the structure of what is enabling people to sleep better. Sleep is such a huge problem, and it affects women differently than men, and we need to help people fix it.
So let me ask this question in a different way, which is when you look out at the products that are available with the context of what you've been working on for years at the MIT Media Lab, what has been harnessed and sort of what is still in the pipeline? What is still being researched? Like what percentage of the opportunity that you think is out there has actually been achieved with the products that are on the market right now? Where are we in that timeline?
Oh, probably about 1% of it has been achieved.
Okay.
There's so much more we can do. Yeah, there's a huge amount of stuff happening here that is not out there yet. As you saw, just like even from the pulse rate and earbuds, you know, what did that take? You know, 17 years for Apple to get to their announcement. Actually, other companies did it 10 years ago. So I don't know why they're just doing it now. But there are a lot of new innovations. For example, my colleague Janan Dagdevaran is leading a group here to revolutionize the early detection of breast cancer and make it really comfortable and easy to monitor changes to avoid the kinds of nightmares of detecting cancer changing very fast between screens, or people not going to get a mammogram or get screened because it's uncomfortable or it's expensive. So she has built conformable technology that shapes to the breast and allows people to get clinically significant, great data without the discomfort of, being pancaked.
Unbelievable. And it is really interesting to see maybe how technologies, we talked about kind of the health gap when it comes to men versus women, whether or not technology can really help us and wearables. Fascinating stuff. I hope you'll come back and continue to kind of fill our minds with what's going on, especially when it comes to technology and wearables specifically. Rosalind Picard, she's Director of Science, Doctor of Science, I should say, Grover M. Herman, Professor of Health Sciences and Technology at the MIT Media Lab, Director of Affective Computing Research, joining us from Cambridge on this Thursday.
Really cool stuff. 1% in terms of what's available.
Which is exciting to think about what's to come, but I also thought it was fascinating what she said about the AirPods and how long this stuff is taking.
Listen, I monitor my sleep and it's not pretty.
I'll take anything that's going to help me make me sleep better. Hey, when we come back, check on trading and also some of the stocks on the move. You are listening and watching Bloomberg Business Week Daily. Carol Master, Tim Stanovic. This is Bloomberg.